taken over as it has, not because it's so good, but because active management was so bad.
Because a lot of the distressed bonds that you are in, is the chance of a downside zero? So I'll give you a little bit of a background. So most of these are like conversations. The interviews that we do are conversations. They're fairly free-flowing. And the audience we cater to are entrepreneurs of Indian origin who are around the age of 25 to 30. Mm-hmm. Everyone's looking to invest in the market, trade the market, start a business, building something from the bottom up. So we are speaking to them. So most of today is around that. Can we start with a little bit about you and how your own journey began from Queens to Wall Street? Maybe like how do you describe your story in your words? Your story, your origin story.
Well, I was born in Queens, New York, as you know, one of what are called the outer boroughs. Middle class upbringing. Neither parent went to college, but my father was a very intelligent man and an accountant, and I think he did his job well, and so we lived a comfortable middle class existence. I went to the public schools of New York at a time when you could get a good education in the public schools of New York, and I think I got one. And oddly enough, ended up taking courses in business law and then accounting in high school, and really connected with accounting, with the orderliness and the symmetry. It just clicked for me. So I decided to go to business school. I applied to Wharton as the best business school for undergraduates in America. I was told I wouldn't get in, but I did. Went to Wharton as an accounting student, switched my major to finance. Then went on to get an MBA in accounting from the University of Chicago Business School. And between years of business school, I had a job in the investment research department of Citibank. Liked it, went back. That's my background.
Is Wharton, would you say, still one of the better schools?
No, I think I have no reason to believe it's not still the best undergraduate business school. There are other good graduate schools that are very competitive with Wharton. I'm no expert. I'm going to say that 100 times on this tape. But I believe that Wharton is still the best undergraduate business school.
And you studied Japanese literature at Wharton?
Yes. When I went to Wharton, there were two very enlightened requirements. You had to have a semester of the literature of a foreign country, and you had to have a non-business concentration, what we call a minor.
Right.
And, the wonks would take stat or economics or poli-sci.
Sorry, what are the wonks?
Wonks?
Yeah?
Oh, people who just think about making money.
Okay.
Or just think about numbers and business. But for my literature requirement, for some reason I don't remember, I took Japanese studies, Japanese literature. I think perhaps it was the exoticism. And I just fell in love with it. And so I ended up taking a second semester of Japanese literature, and then 2 semesters of Japanese civilization, and then 1 semester of Japanese art.
And what did that teach you?
Well, it taught me a lot, But the main thing I've carried away have been some aspects of the Japanese philosophy. The most important one, the most relevant one, is something called mujo, which literally means the turning of the wheel of the law. And what it means in everyday life is it means the inevitability of change. That change is inevitable, unpredictable, and uncontrollable. And that we have to accommodate to it and make the most of it rather than think we can control it.
Should one expect it?
One should. It's inevitable, yes. Of course, one should expect change. One should not expect a specific change because it's unpredictable.
I once read somewhere that a Western man, if it rains for 5 days, will expect it to rain on the 6th. Whereas an East Asian person, say Japanese for example, if it rains for 5 days, will expect no rain on the 6th because the pendulum, like you say, swings back to the mean. Is that culturally true?
I have no reason to know. I don't know. But what I would say is if the probability of rain is, let's say, 50-50, if some people think 5 days of rain means the 6th will rain because of a continuation of trend, and some people think 5 days of rain means that it won't rain the next day because the rain has all been used up, what I think is on the 6th day it's 50-50.
The previous days do not matter for the 6th day.
Well, I mean, and in weather that may not be precisely true, but I'm a big believer in the independence of events. And I think that that's what mujo is about, independence of events. So, you know, if you flip a coin 10 times, better example, coin than rain, because rain, there are some physical properties at work. But if you flip a coin 10 times and you get 10 heads, the probability of heads on the 11th flip is still 50-50, because the trials are independent.
Do you believe in game theory?
In?
Game theory?
Well, I believe that you can strategize, and you can figure out which action has the highest expected payoff, or the highest maximum potential payoff, or the least probability of a really bad payoff. And you can perhaps even strategize about what your opponent is going to do. I believe in strategy. I don't know if that's exactly the same as game theory, but I think that, you know, as I've suggested in my comments so far, what I really don't believe in is predictions. And I believe that given human nature and the dislike for ambiguity, people pursue predictions so that they can understand what world they're going to be operating in and deal with it accordingly. And if they do this to excess, then they theorize about a world they'll be operating in, which is not as likely to obtain as they think, which means that their predictions can be misleading. And about 20 odd years ago, I wrote a memo called You Can't Predict, You Can Prepare. And that's really the essence. And that you can tell that comes directly from the understanding of mujo. We can't predict the future. We can't control the future. But we can prepare for the future. Now that raises an interesting contradiction in terms. If you can't predict what the future will be, how can you prepare for it? And the answer is you can prepare for a future which is unpredictable. So you can, in investing, you can put together a portfolio rather than one that will produce maximum success if a certain future unfolds. You can put together a portfolio which will do fine if any of several futures unfold, and not too terribly if a bunch of other futures unfold. Now, you can't prepare simultaneously for the positive tail and the negative tail. Mm-hmm. If you prepare for a total disaster, then you're unprepared for a great future. If you prepare for enormous success and you're going to maximize your outcome should this success unfold, then you're probably totally unprepared for a very negative. But you can prepare if you suboptimize for a number of possible outcomes in the middle of the probability distribution.
Isn't that a bit contrarian to the coin example? You said if you toss a coin and it comes heads 10 times,
yes,
and I toss it the 11th time, you still expect the odds to be 50-50. So I can't look at past data to predict the future or prepare for the future. Then how do I prepare?
I think that the difference is that the coin tosses are independent. Mm-hmm. The result of the preceding coin tosses has no impact on the next one. Mm-hmm. That's not true in the areas I work in. Mm-hmm. Most importantly, history, the things that have happened so far, and people's reaction to history have semi-predictable implications for the future.
Not history, but people's reactions of it.
Well, not history itself as much. I mean, if you knew history, but I mean, history is the history of what people did. And what people did in the past by itself has implications for the things that will unfold tomorrow and next month and next year.
So in a way, are you saying the psychology of people, mass mentality in a manner remains the same, and that can be modeled for more so than events can be?
Well, of course, events are largely the things that people do, which is largely the result of their psychology. But I do think that events in the future are somewhat predictable because the implications of past behavior are somewhat predictable, and future behavior is somewhat predictable. The things that have happened, for example, in the economy and the markets, are likely to induce certain behavior in the future. And you can know a little bit about that. But when the history and the past behavior has been extreme, the ability to infer from that rises. In other words, I wrote a book about cycles, mm-hmm. and that's the one where I refer to my experience traveling in India. And cycles are induced primarily by behavior. By, the upcycle is exaggerating, overgeneralizing. The upcycle, there's a trend line. Let's say it's GDP growth. Mm-hmm. There's a trend line. But sometimes the economy grows more than that. Why? Largely, I think, because of optimism. Because people are optimistic, so they spend a lot of money. Producers are optimistic about demand for their products, so they build new factories and hire labor and buy machinery. And the sum of these things produces a period of above-trend growth. Mm-hmm. But then, when producers have more than prepared for the coming growth, and consumers have been sated by consumption, then things will ease off, and maybe it results in a period of below average growth. So, I wrote the book. I was about 2/3 through writing the book, and I've been studying cycles for almost 60 years now, living through cycles. And I said to myself, why do we have cycles? Why doesn't GDP, if the average growth in GDP is 2, why isn't it always 2? Why is it 3 or 4 or 1 or 0 or -1? And the answer is excesses and corrections. And then you go to a negative, which is an excess, and then it corrects back to the trend line. So rather than thinking of cycles as ups and downs, which I think most people do, think of them as excesses and corrections, excesses and corrections. Fluctuations around the trend line. I mean, this is most easily seen in the stock market, for example. You look at the S&P 500. The S&P 500 has returned about 10% a year on average for the last 100 years.
But the constituents of the S&P have changed many times in that period.
But the average rate of return doesn't change.
Average rate of return. I don't know about the S&P. I know in India, the indices. I'm a stock investor.
Yes.
That's my full-time job.
Yes.
We have returned about 11% over the last couple of decades. But we have depreciation of currency, which is about 4-5% a year. So I'm assuming the S&P would have returned 6% if you were to ask me to wager a guess. But I don't think it's a fair benchmark because the companies in the S&P, like the indexes back home, change by virtue of market cap.
They do. But my point is that the S&P, however constituted, has returned an average of 10% a year for the last 100 years. But not steadily. Mm-hmm. In the 90s, it returned 20% a year. And in the aughts, it returned 0 per year. So certainly not steady. And not only is that an interesting phenomenon to think about, but even more so, the fact that the return on the S&P, which averages 10, is almost never between 8 and 12. This is a very interesting datum. Mm-hmm. Why is it that the norm is not the average?
Greed and fear.
Excess and correction.
Excess
of optimism, correction. Excess of pessimism.
Can I ask you a small digression in a question? If humans were no longer in the picture,
yes,
and AI models are trading in the market, mm-hmm. would 10% be 10% every year because there would be no optimism and pessimism?
This is another of those times when I'm going to say I'm not smart enough to know. It stands to reason that it would. If we programmed AI to find the elements and expect the patterns that produced success in the past and left it alone, and since we're told AI does not have greed or fear, or optimism or pessimism, you would think that the returns would be steadier. I think it makes sense to think that.
I heard your interview a year ago with Nikolai from the Norwegian Sovereign Fund. He's a friend of mine. And when he asked you, where are we in the cycle, you said somewhere near the middle.
Well, I think that was 2 years ago.
Okay.
Yes.
Where are we now?
Well, guess what? It's 2 years later. Mm-hmm. That's the only thing I know for sure. But I believe that I believe that interview was April of 24, and the market continued upward from April 24 through, I think it's fair to say, January of 26. So another 21 months, took it considerably higher. And of course, the economy, people, when you look at the economy, people think of the age of the recovery. So the economic recovery is 2 years older. The bull market in stocks went on another almost 2 years. So I would say that you see, first of all, as to the economy, it's very, very hard to date or talk about the age of this cycle because we had the pandemic where we did something unique. We closed the world economy to reduce the spread of the disease. And so that interfered with the normal workings, and it, according to the people who make these decisions, it produced a recession. It was a very unusual recession because it was only one quarter. I always thought a recession was 2 quarters of negative GDP growth. And of course, it didn't occur for the normal reason of excess optimism leading to a correction. It was man-made and was readily corrected. So the second quarter of 2020 was the worst quarter in the history of the world for GDP, and then the third quarter was the best. So was it really a recession in the functional terms of determining cyclicality, or just some noise? And
can I ask another question here? I would say GDP, if I were to consider it the total produce going into the economy, and consumers consume as much as we can, I could argue that a recession is truly when there is more production in an economy and the consumption is organically lesser. So do you think GDP is a good benchmark to figure out when there is a recession or not? Because the consumers went away then artificially.
Well, I think your definition of recession isn't right, because what you said was there's more production, but that's not
less consumption.
Less consumption. That's the main element of a recession, in my opinion. Manufacturers are always happy to produce goods to meet demand. The recession, it means primarily a reduction of demand, so that which discourages manufacturers from producing, and the reduced production is really what causes the recession. Fewer people are at work, etc. Fewer goods are produced and consumed.
So in the pandemic, production went down, but the demand for consumption did not actually go down, but just that the markets were shut for a period of time, because when they opened, people really consumed.
Well, I mean, yes, the underlying demand didn't go down, but people, I mean, in the sense that people would have liked to have parties, they just weren't allowed to have parties. So the demand, the psychological demand for a party was there, but the economic demand for rental halls and bands and food and party dresses and things like that didn't exist. So that's that. So, but this is why I say that GDP was kind of artificially depressed by a decision of government, really. So when we say that, how old is this recovery? Was that a real recession? If that was a recession, then this recovery is now 6 years old. If that wasn't a recession,
28 years old.
Then this recovery is 17 years old, which is the longest in history is 10 years.
Why 17?
Because the last recession was in 2009. So it's 17 years since then.
But can you just tie recessions and cycles down to tenure, time?
You can't, and that's one of the reasons why I don't believe in predictions, but there seems to be a norm. We always said that the average was 8 years for a recovery. And in the 2010s, it went on for 10 plus years. So we called that the longest in history. And normally if we have a recession in year X, we don't expect another recession 2 years later because the recovery goes on for some period of years, which seems to average 8. I can't explain why. I don't think anybody can tell you why. Maybe the answer is on average 8 years is long enough from the last one to permit the next one. So I don't believe you can. I wrote the book about cycles, and somebody in England said, "Oh no, these aren't cycles because they're not predictable." Cycles like radio waves or sine waves or something like that. These are predictable, and I think that patterns in the real world, the non-scientific, non-mechanical world, certainly aren't regular, but they do occur, ups and downs. They do it predictably, but not necessarily predictable in time or predictable in amplitude, but they certainly occur predictably.
So if I can bring you back, Howard, to the question.
What question? Is so long ago.
Where are we in the cycle now?
Well, I think that the recovery is. I think it's gone on a good while, and it's not nascent, it's not adolescent, but it's also not geriatric. I think it's in middle age, and I think the U.S. economy, if that's what you're talking about, is healthy, and doing quite well. If the thing that presages a downturn is excesses to the upside, you don't find too many of those. When I go to a city, I look for construction cranes in the sky to tell me if there's a building boom. Most booms are followed at some point by busts. I don't see it in most of our cities. I don't see inventories growing. Inventory growth is inventories grow for two reasons. In times of weak consumption, because people don't buy the things that manufacturers produce. In times of strong consumption, inventories grow because manufacturers amp up production to get ahead of some anticipated surge in demand, and those often presage downturns when they turn out not to be warranted. I don't see that.
In some sectors, do you?
Well, I mean, maybe I don't look at the data finely enough to tell you that.
In AI, maybe?
Pardon me?
In AI, maybe?
Well, of course, we don't talk about inventory in AI, but there's certainly a boom in capital investment for AI.
One could say hardware, energy, compute is inventory.
Yeah. Well, I mean, look, there's massive construction of infrastructure for AI.
Much like buildings.
Yes. Yes.
And cranes.
Yes. That's right. That is the area that's booming in our economy. And I need people who know more about AI than me to tell me whether it's going to bust. You know, the question is all of this, or is some of this construction unwarranted? I don't think anybody can tell us that. We certainly know that it is an area of boom.
How do you stay so sharp, Howard, at your age? Like, I have watched a whole bunch of your interviews and read a lot of what you have written over the years. As a stock market investor all my life, I think there's so much I can learn from you. But how do you stay this sharp today?
Well, I'm lucky. I have
genetically.
Well, I think I'm very lucky genetically.
Okay.
Yes, because my dad lived to 101, and he was quite sharp at the end. We all face a decline at some point in time. And the only question is, when does it start, and at what rate does it progress? And you look at Warren Buffett, Charlie Munger, some of my role models and friends, and they were or are sharp in their mid-90s and late 90s. So it's just when you say, how do you stay sharp? I don't go to the gym and work. Well, I do a lot of puzzles, and I read in fields that are not my fields. I'm still trying to gain knowledge and broaden myself. And I guess I make some effort to plow new ground. And the question is, when do you stop doing that? At what age? But my last two memos, I hope your audience knows about the memos.
Yeah.
But I wrote one December 9th and one, I think, February 25th about AI. And I had to do a lot of learning.
You changed your mind on AI as well.
I changed my mind, but first I challenged my mind. And, I had, for the second one in particular, I had an extensive conversation with Claude and learned a great deal. It was very exciting to be plowing new ground at almost 80. And
do you think it could be ambition and hunger?
Well, it is definitely a hunger. It's a hunger to learn and to stay relevant, and to stay stimulated. When you say ambition, that usually starts with dollar signs.
Not necessarily.
Yes, well, it's an ambition to stay relevant, and to use your terminology, to stay sharp rather than start to atrophy.
I think staying relevant is the core ambition of everyone. The dollar is a means that people pick in the beginning, not at the end, maybe.
Well, I think that most ambition starts with the dollar sign. In enlightened cases, it transitions to non-dollar. Not every case. People are different. You can't. Mark Twain, I think it was, said all generalizations are flawed, including this one. But you can't generalize.
Like you say very well, I heard you speak about the role luck plays in our lives. Would you say enlightened or lucky? The ones who transition.
Well, now you're really getting deep, because now you're talking about determinism versus intention. And I think there are some of both. Some people these things are hard to parse, Nikhil. But some people, I think, transition naturally. And as they grow, maybe they become wiser. And they start to understand that there are things that are more important than money, or let's say things that are important in addition to money. And so they do it, let's say that naturally, not intentionally. Mm-hmm. I imagine there are people who do it intentionally. People who go to the mountain and meditate and think about it and conclude, you know what, I really should change my focus at this point in my life.
Have you been able to ever pull that off? Like, I've been fascinated with the idea of going to a mountain and arriving at some kind of evolutionary thought in my mind, which makes me actively transition into something. Have you been able to touch that?
Well, I haven't physically gone to the mountain, but I think the key. I've written the first pages of a book. I think the key to all of this, to all of life, is to behave thoughtfully, with your mind engaged, not just let the river take you, but give thought to what's going on, why is it going on, what does it mean, why did it happen, what does it imply for me, what should I do about it? And that is, I think, going through life with your eyes open, and that's how you can intentionally get to a higher stage in life, by doing that. And the image that comes back to me is the image of whether you let the river take you, or whether you try to figure out a better place to get to and then try to get there.
Maybe once or twice in my life, I have felt like I could see the river.
See the river, yes.
Can you actively?
I think at this stage, I am able to think about this progression constructively. When I think about my early decades, not years, decades, and I think about, what I did from, let's say, I would say from the beginning of, let's say, high school, 1960, until starting Oak Tree in 95. So that 35-year period, which took me up to age, let's say 49. I was adrift. I did not make proactive decisions. I let the river take me. I'm very lucky that it took me to some good places in several different aspects of life. But I don't consider, when I look at my behavior, I don't consider it thoughtful or intentional. And so I'm just lucky that I got to a good place despite my own inattention. I think that starting Oak Tree was the biggest and maybe first thing I really did with intention. And I've tried to be more intentional since then. But when I look back and I describe how I selected my career, how I selected my first job, how I decided to go to graduate school, and how I transitioned from the equities department to the bond world in 1978, in time to have the benefit of the birth of high-yield bonds. It was all happenstance, serendipity, coincidence, passivity. I was not making intentional decisions in that period.
What changed? How did you become intentional from being unintentional when you began Oaktree? Because other people can maybe learn from it. Maybe I can learn how to catch it.
Well, the easy answer is that my wife pushed me to think about it more and to independently start Oaktree. My partner, Bruce Karsh, and I did it together. So his participation encouraged mine. But that required a proactive decision. The biggest change I made before that professionally was moving from Citibank to TCW in '85. They approached me. That was not proactive on my part.
Not the act of starting Oaktree, but from being adrift the river to seeing the river.
Well, I think once I made the decision to participate in the starting of Oaktree, I couldn't drift anymore, because now I was the person leading Oaktree. I had to make proactive decisions. I mean, it became my job, and maybe I warmed to it. Maybe having made the proactive decision to start Oaktree and having done it, maybe I said, "Hey, this is good. I think that maybe I like leadership, and leadership is by definition proactive. It seems like an oxymoron to say he led passively. Those two words are in opposition. So I think that thank God I rose to the occasion and left TCW with Bruce and my other partners to start Oaktree. And then I think that it was, I don't think I ever said, well, now I'm going to start taking control of my life. Now I'm going to start acting intentionally. Now I'm going to become a leader. I just think it was inescapable.
That's very interesting, because it sounds like you're saying entrepreneurship and taking risk can trigger the riding the river to seeing the river.
Some people are driven entrepreneurially. I think that entrepreneurship is the epitome of intentionality. It's taking the bull by the horns, as we say, proactively. So I think the entrepreneur naturally, innately, does the opposite of drifting down the river. My inclination was not entrepreneurial. I liked most of what I was doing at TCW, but with encouragement from Bruce Karsh and my wife, and with a little encouragement from TCW to leave, in terms of how I thought I was treated, my inertia was overcome. That's what I would describe. It wasn't a proactive decision. Hey, let's get going. It was the unlikely overcoming of my innate inertia. It's a very different story.
It could be like a chicken and egg thing.
Oh, it's very chicken and egg, yes. But I think the important thing is, for the purposes of your audience, that my departure from TCW did not start with an entrepreneurial spirit. And some people, I know people who were always dreamed of making a lot of money, always dreamed of running their own business, chafed at being an employee, had to get out and start their own, that was never descriptive of me. So I kind of did something that you might call entrepreneurial, despite myself, is the way I would describe it, rather than because of my innate drive.
So Howard, my job for 20 years has been that of a stock investor. You've been a debt person almost all your life. Why would you be in an asset class which has finite upside, and the downside, I guess, is finite because in most cases it's zero, versus equity where you could have exponential upside?
Well, that's a great question. And I haven't really been asked that question much in the past. My answer may take a while.
Yeah.
Settle in.
Yeah.
The question, as you pose it, is an interesting question if you assume rationality and objectivity. But that ignores personal, let's say, kinks. So I'll return to that. But first of all, my decision to move from, I spent 9 years in the equity department, so it wasn't really at the very beginning. It felt like a long time. But my decision to move from the equity department in '69 to the bond department in '78 was not my decision. And it wasn't because I figured out it would be better for me. The Citibank I joined in September of '69 was an investor in what was called the Nifty50. The 50 supposedly best and fastest growing companies in America. Companies where nothing bad could ever happen. There was no price too high for the stock. And if you bought those stocks the day I got to work in September '69, if you held them tenaciously for 5 years, you lost about 95% of your money. 95%. Because for many of them, something did go wrong. And for all of them, the price was too high. The PE ratios, as I recall, were mostly between 60 and 90. So it was so that was a real disaster for the people who invested in the Nifty50, which was most of the money center banks. And I was director of research by the mid-'70s, so I was part of the process. And we hired a new CIO who wanted to have a new head of research. And I helped him hire my successor. And then he said, "What do you want to do next?" I said, "I don't know. I could do this. I could do that." Typically, I didn't think it over very much or assess my strengths and weaknesses very well. And he said, "I'd like you to move to the bond department and start a convertible bond fund," because he had come from a place that had one, and it was very successful. And we didn't have one. And I said yes. So that was the extent of my intentionality, which is almost non-existent. It was, and I say now, and it may be an exaggeration, but I was lucky I didn't get fired. But American companies gave pretty much lifetime employment at that time. Anyway, so number one, my move to the bond department was not voluntary, other than I could have said no. But number two, you talk about the fact that bonds have capped upside and some downside from default. Certainly true. But it fit me because I was brought up to be very conservative. My parents were adults during the Depression. Now, your parents probably weren't alive during the Depression. And most people I know who are old, their parents were children during the Depression. My parents were adults during the Depression, which meant when I grew up, what did I hear? Don't put all your eggs in one basket, save for a rainy day, avoid risk, etc. So
I think Indian parents lived through
एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल, नेचुरल गैस को कल की लेवल है, कुछ चेंज हुआ नहीं है। रेजिस्टेंस एरिया पे था क्रूड ऑयल, थोड़ी बहुत सेलिंग आई, मार्केट फिर रिकवर कर गया था। फॉरेक्स में फिर से सेलिंग आई थी, इसलिए हल्का सा एक गैप डाउन ओपन, वापस सेलिंग आ रही है। देखते हैं कल के टारगेट को जाता है या फिर नहीं। ऊपर याद रखना 9400 450 के ऊपर अगर ये ब्रेकआउट कर गया तो ब्रेकआउट ही हो जाएगा पूरा। फॉरेक्स में 97.40 का लेवल है, इसके ऊपर ब्रेकआउट करता है तो फिर वी कैन एक्सपेक्ट इट एक्सप्लोड अपसाइड, ऑल टाइम हाई की ओर जाने की कोशिश कर सकता है उस केस में अगर प्रॉपरली ब्रेकआउट हुआ तो। अभी फिलहाल यही लेवल है, कंसोलिडेशन हो रहा। मैंने कल ही बताया था कंसोलिडेशन नहीं चाहिए इस लेवल पे, सेलिंग आनी है तो थोड़ा फास्ट आए। जितना कंसोलिडेशन होगा उतना रिस्की है प्राइस के लिए। नेचुरल गैस भी कल रेजिस्टेंस पे था, सेलिंग आई फिर रिकवर करके ऊपर चला गया। ये भी रेजिस्टेंस एरिया पर ही है, देखते हैं अभी क्या करता है। इस एरिया पे वापस सेलिंग का प्लान करेंगे इसी लेवल पे। अभी 12:30 लंदन सेशन ओपन होगा तो वॉल्यूम एक्सपेक्ट करेंगे। एशियन सेशन ओपन है राइट नाउ। इवनिंग पे 5:30 न्यूयॉर्क सेशन। 6 पीएम पे अनएम्प्लॉयमेंट क्लेम्स का डेटा है यूएस का इंपॉर्टेंट। 7 पीएम यूएस मार्केट ओपन एंड नेचुरल गैस की इन्वेंट्री फोरकास्ट देखोगे। नेचुरल गैस का लास्ट टाइम 92 बुलियन था, अभी 99 बुलियन है। लास्ट टाइम से ज़्यादा एक्सपेक्ट कर रहे हैं तो फोरकास्ट के अकॉर्डिंग ज़्यादा है तो इट इज़ बेरिस, तो फोरकास्ट तो बेरिस है नेचुरल गैस की इन्वेंट्री का। लेट्स सी एग्जैक्टली प्राइस कितना आता है। सेंसेक्स एक्सपायरीज टुडे, रिमेंबर सेंसेक्स की एक्सपायरी है आज। क्रूड ऑयल में थोड़ा बहुत हमें पुल बैक देखने के लिए मिल रहा है बिकॉज ईरान सॉरी इसराइल एंड लेबनान में एग्री हुए सीज फायर के लिए। कल का लो में एक्ट लाइक एज अ सपोर्ट इन क्रूड ऑयल नाउ, ठीक है। कल का जो लो बना है ये एक सपोर्ट की तरह काम कर सकता है नाउ, एक्सपेक्टेड ही है। रेंज बन गई है इसमें अब क्रूड ऑयल में। यहाँ तो ये शायद ही आएगा नीचे पॉइंट ऑफ इंटरेस्ट तक। कल का जो लो है फॉरेक्स में यहाँ पर सपोर्ट बन गया एक्चुअली में। एमसीएक्स में देर इज नो सपोर्ट एक्चुअली, बट फॉरेक्स में देर इज अ सपोर्ट अराउंड 9000 लेवल। सो दिस पुल बैक में गिव अप सपोर्ट, लेट्स सी। अब जब तक ये 94 इस ब्लैक कलर की लाइन के नीचे जाता नहीं है, इट इज अ सपोर्ट, इट इज अ रेजिस्टेंस। ठीक है, तो इसको हम एक तरह से पॉइंट ऑफ इंटरेस्ट बोल सकते हैं। इट्स अ काइंड ऑफ अ पॉइंट ऑफ इंटरेस्ट नाउ। नॉर्मली ऐसा होना नहीं चाहिए। अगर ऐसा प्राइस यहाँ पर एक पॉइंट ऑफ इंटरेस्ट बना के गया है, इसका मतलब नाउ प्राइस डेफिनेटली विल ट्राई कि यहाँ पर फाइट कराए और फिर किसी एक साइड पे सपोर्ट या रेजिस्टेंस पे प्राइस को ऊपर या नीचे निकाल दे। सो यू कैन एक्सपेक्ट इसके नीचे शायद ही जाए प्राइस। अब ब्रेकडाउन चाहिए, अदरवाइज रेंज के बाहर नहीं जाएगा। व्हाट वी कैन डू, वी वेट नाउ, क्योंकि अब ऊपर सपोर्ट बहुत पास है। ये रेजिस्टेंस भी बन गया है, ऊपर रेजिस्टेंस तो है ही कल का। ये सपोर्ट ही बन गया। किसी एक साइड पर अगर मार्केट ब्रेक कर दे तो बेटर है, नीचे ब्रेक करे तो बेटर है। नीचे ब्रेक कर देता है एज रीटेस्ट के तौर पे, तो यहाँ पर भी एक ट्रेड बन जाएगा। नहीं तो फिर ये अप साइड पे ब्रेक करेगा एज रीटेस्ट तो बाई करेंगे। अगर नॉर्मल ब्रेकआउट होता है तो फिर ये सपोर्ट बन जाएगा एग्जैक्टली।
Low fees.
Is that the only reason? No. It also, the active management didn't work. They were unsuccessful and charged high fees for it. But even if they had low fees, even if they charged the same fee as the index fund, if the passive decisions are inferior, indexation is still better than active. So it's not the low fees. That exacerbated the problem. It was really, so my answer is that indexation has taken over as it has, not because it's so good, but because active management was so bad. But I believe that people can do some things that AI can't.
Could you also say that indexation and ETFs have taken over because the markets have been in an uptrend largely? In a more volatile time, active might make sense. In a depression, active might make sense.
You know what? The bad times create an opening for active management, but it's still hard. And not many people can do it well. Why do bad times create an opening? Because panic drives down, let's say, stock prices. But the same panic causes most people to panic, which means that most people can't stop up and buy in the panic. And there was a guy named Wally Deemer, who was an old-time trader, who had some great quotes, and he turned them into a little book. But his greatest quote of all is, "When the time comes to buy, you won't want to." So this idea that upheaval creates opportunity is logically correct, but not realistic, because most people's psychological impediments prevent them from taking advantage of the upheaval. You see?
Maybe you mix active plus AI together to try and take emotion out of it.
Well, that could work. That could work. If Claude could call you or send you a message which says, "This is one of those opportunities we talked about. Don't be stupid. Get your ass in gear and buy something. Don't hide in your hole." That could be a good thing. Yes, but I still think, Nikhil, that when you get into areas which are not connected, what I would call mechanically, where physical laws are not everything, that means that human psychology plays a role in developments, and that tells me that people who are superior at dealing with human psychology can get an advantage. And I think that includes investing.
I agree.
But not everybody. It always comes back to not everybody. And there's a phrase in our world, a friend of mine in England used it as the title for a book, simple but not easy. Our job is simple. We got to find the best managers, the best companies, the best ideas, the best products. My son is a venture capitalist, does a great job. He finds the best founders. The task is easy. I just said it to you in 10 seconds. It's just not easy, because what makes you superior at finding founders? What makes the better founders available to you rather than somebody else? And Charlie Munger once said to me, putting together simple but not easy. Charlie, when I finished my first book, The Most Important Thing, I had lunch with Charlie, and as I got up to leave, he said, "Just remember, none of this is easy. Anybody who thinks it's easy is stupid." That was one of the great things anybody ever said to me, because Charlie said it in his typically brusque way. But it can't be easy to be smarter and more disciplined than all the other smart people who are trying. That's what the efficient market hypothesis says. I've never seen it written down that way, but all these smart, highly motivated, educated, numerate, computer literate, interwired people are trying to get rich.
So where is the $10 bill nobody has picked up right now?
Well, I think it's around AI. But everybody's excited about AI. So if your excitement level, and by that I mean your insight level, is average, you don't have an edge. And you get involved in AI, your performance will be average. You will go along with the tide if it works. You'll be schmeist if it doesn't work. Superior, it all comes down, you boil down our conversation to this point, and the things Charlie said and so forth, it all comes down to superior insight. And we have an author in America, a guy named Garrison Keillor, and he wrote a book called Lake Wobegon. And Lake Wobegon was a fictional community in, I think, Wisconsin, if I'm not mistaken. And he said in Lake Wobegon, all the children are above average. Well, we know that there is no place where all the children or all the investors are above average. So I think my own vision of the world, which is not a scientific vision, is that in fields where human nature is involved and the future is unpredictable and things don't operate according to mechanical rules, there is still a place for superior insight, but you will not have success without superior insight.
Howard, most of my investing is in India. I'm 39 years old now. I know you've deployed a certain amount of capital, I think 4 billion to India recently, but you haven't written a memo about it. My assumption is India is growing at, say, 7% or 6%. It will continue to do so for a period of time. GDP per capita will go up, so consumer will do well, energy will do well, energy consumption goes up as GDP per capita goes up, maybe above $5,000. Would I be okay in just staying allocated to equity, say 80% for the next 20, 30 years? And if so, is there a sector that you like?
Well, I've been cautioning you about things I don't know much about. Here I can be more emphatic. I don't have any idea what the best sector in India is.
Right.
I will not hold myself out as knowing anything about the Indian stock market.
Okay. I read that during COVID, you lived with your son Andrew in a house.
Yes.
I'm sure Andrew has learned so much from you. Is there one thing that you learned from Andrew?
Oh, I've learned so much because, and this is how we started the conversation. You said to me, how do you stay sharp?
Yeah.
And speaking with young people, if I speak to my contemporaries, how am I ever going to learn anything? Speaking with young people is how you learn. And they know stuff you don't know because they are still learning and they learned more recently. And hopefully you have something you can give them in exchange, which is experience that they don't have because they haven't lived 80 years. But Andrew is essentially your age. And I wrote a memo after that experience. 3 generations living under one roof was of great value. And I wrote a memo called Something of Value. And the other reason I chose that title is because we mostly talked about something called value investing. But I get so much from him, and he pushes me to see things that I wouldn't otherwise see. And he's also intolerant of my not staying sharp and moving ahead. How do you keep moving ahead at 80? That's really the question. But I don't think it's impossible. But a great example, I mean, the example that immediately comes to mind, and I think it's a great one, is that he observed, and I wrote in the memo was Something of Value, January of 21, as I recall. he pointed out, it was almost revelatory, readily available quantitative information about the present cannot hold the key to success because everybody has it. Success in investing is doing better than others. So investing is a funny field because it's really easy to be average and it's really hard to be above average. But readily available quantitative information about the present is not going to make you above average for the simple reason that everybody has it. And I talk in the memo about that one of the reasons Buffett was able to steal a march on everybody else and become Buffett is because he sought it out and he worked it when nobody else did. And, you know, when I was starting off in this business, in the research world, think about your process. Let's say I said, you know, I went into a store today, I bought a product, I like the product, I think maybe that company has a future, I'd like to learn about it. How would you get information? Think about what you would do if you had that experience this morning here in New York City. What did we do then? You know what we did then? We wrote a letter to the company and asked it for a copy of the annual report. It took a week for them to get that letter. They put it at the bottom of the pile, and they took the letter off the top of the pile, and they sent that person an annual report. It took a week or two to get down to my letter, and then they took an annual report, put it in an envelope, addressed it to me, put a stamp on, put it in the mailbox, and it took a week for it to get to me. Now, I exaggerate, but the point is, it took a month to get an annual report so that I could start studying the company. There was no online. There was no wiki or whatever source you might use. The only alternative was there were books called Moody's manuals, and each book was this thick. Take it off the shelf. It had a paper called onion skin, the thinnest of paper, and it had tiny print. You needed glasses, and they had the financials, the current financials on every company. Not much narrative, nothing, no discussion of the future, but just the financials of every company. That's all you could get until your annual report came in the mail. Then maybe you could start figuring out the business and its potential. So you could, if you were Buffett, and if you sat in your office in Omaha and read the Moody's manual when nobody else was willing because it was stultifying, you could get an advantage.
Is that what he did?
I think, well, that's my illustration of what he did. Maybe he did more. I don't know. But
I'm no one to pay you a compliment, Howard, but if I could.
Yes.
I think
compliments are always good.
I think the nimbleness and the willingness you have to change at 80 is by far the most impressive thing about you. And when I speak to really successful people, I think this trait over all others kind of makes them who they are.
Well, I appreciate that comment. I hope it's true. But it makes sense, doesn't it? Because the ability to change your mind and change your thinking and learn new things is an example or a component of superior insight, which is what you have to be. This is a competitive game. It's like golf. You say, today I shot 74. I tell you I shot 74. You have no idea if I won or lost. The only thing that matters is what did everybody else shoot, right? If I tell you, last year I made 13% in my stock portfolio, is that good or bad? Well, it's pretty good. The average return on the S&P is 10, but of course, the S&P was up 18 last year, so 13 stank. So this is a competitive game. You don't have to, it's not a matter of being right or wrong. It's a matter of being more right than the other person or less wrong.
Are you able to change because you have been able to consciously remove ego?
Well, I think that helps because ego, if you have too much and the wrong ego, would probably, I would imagine, tend to make somebody say, I've always done it this way. It's worked in the past. I'm an enormous success. I'm worth this much money. So why should I change my approach? But you have to keep changing. Innovate or die.
What could trigger it? Like if we were to advise people watching this, if you were to, how can they trigger the realization that they need to constantly change?
Well, it's a funny thing. This has been a theme for me for the last 9 months. I say this every time I get a question like yours, Nikhil. The really hard questions are the ones that start with the word how. How can I learn the need to evolve and grow? How can I learn to see things better, more clearly than other people? How can I learn to be a credit analyst who better understands the default probability than anybody else? How can I become what I call a second level thinker, understanding things at a higher level and better than other people? And all the hows, I can't tell you. How can I remain sharp at 80? I can't tell you. I can tell you what you have to do. You have to do all the things that I mentioned in order to be a superior investor. I just can't tell you how to do it. And in my first book, it's funny when I had the idea for the first book, which is called The Most Important Thing. It has 21 chapters. Each chapter says the most important thing is, and then it's a different thing, because there are so many things that are important. And I told Columbia about the book, and they wanted to publish the book, Columbia University. And so they said, give us a sample chapter. And I wrote out a chapter each chapter says the most important thing is, and this one says second level thinking. And I wrote the chapter about second level. I had never really thought about it before. It just kind of struck me, and I wrote it down. And what it says is it's pretty simple. If you think the same as everybody else, you'll act the same as everybody else. If you act the same as everybody else, your investments will perform the same as everybody else. So to perform better, you have to deviate from the herd. Seems clear.
Do you think...
How do you do it? How do you do it? And I said in the book, asking how to become, I can tell you the importance of second level thinking, but asking me how to become a second level thinker is like in basketball we say, you can't coach height. All the coaching in the world will not make your team taller. So I can tell you that you must become a second level thinker to be successful as an investor. I just can't tell you how.
If I were to draw an extrapolation, that second level thinking is also contrarian thinking in a way. Mm-hmm. Do you think AIs which are predictive in nature can be modeled to be contradictory tomorrow?
But that's the challenge, you see, because second level thinking or contrarian thinking is not just different from the herd. Mm-hmm. That's not enough. Mm-hmm. It has to be different from the herd and better. So you can say, I don't know how to program AI, but I assume you can say to Claude, every answer you give me on every company has to be different from the consensus.
Or the opposite of consensus?
The opposite is pretty categorical. But let's say has to deviate from the consensus. I don't want to, and no consensus thinking is welcome here. You can say that. You can make it be different. Can you make it be better? Because you see, this is the catch. Because the people you compete against in the investment arena are also intelligent, educated, literate, computer able, highly motivated, they're pretty good. Much of the time, they're as close to right as you can get. So if you believe the consensus is as close to right as most people can get, then if you tell Claude, I only want non-consensus thinking, then it has a high probability of being wrong. That's not a good thing.
In a way, AI in investing could work if everyone in investing uses AI.
No, I don't think so. Because if everybody uses AI, and let's assume everybody's AI is the same.
Mm-hmm. Not same, different.
Well, are they? That's the question. If maybe that's what my partner Bruce Karsh, the recovered lawyer, would call a gating question. Are some AI models smarter than others? Since they all have super IQs, computing power, and they all are trained on the same history, are some smarter than others? I don't know. I need somebody to tell me. But if they're all equally smart, and you say to this is an interesting thing. So they're all equally smart. You say, everyone says to all of them, write out a process that will produce investment success. Theoretically, they all write the same one because they are all equally smart and have the same training. And if they all follow it perfectly, they all produce the same result. So there's no superiority.
But then everybody makes 10%, nobody makes 8 or 12.
Right. But then what do you get paid for making 10%?
But AI doesn't need to be paid.
Yeah, but who employs AI? That person wants to get paid. Nobody's employing AI for fun, right? They're employing AI because they want to get rich. And getting rich in investing comes from superiority, not from averageness. How do you get superiority?
I don't want to ask you this question, but
you will.
You can choose not to answer it.
Yes.
Do you think the world is going to socialism and AI is triggering that?
I don't consider myself a futurist. I don't engage in that kind of thinking is what we call blue sky. And I am partial to what Albert Einstein said on the subject. He said something like, I don't think about the future, it'll come soon enough.
But do I think about the past?
I think about the past to learn from it. And I try to, I'm great on these quotes. And my favorite on this subject is from Mark Twain, who supposedly, but I think didn't really say it, supposedly said, history does not repeat, but it does rhyme. There are certain themes that rhyme from instance to instance in history. And they mostly have to do with human nature. And I think human nature doesn't change incredibly slowly. I mean, when we talk about fight or flight, people start talking about the Stone Age man and the watering hole, right? Well, that was millions of years ago. These things are still relevant. So the point is that I think you can learn from history, and what you mostly learn are the lessons of human nature.
Mark Twain said that, and Napoleon said history is written by the winners of tomorrow. So we don't even know how accurate the history we have access to really is.
Well, except for we have the numbers.
Financial history.
Yes, financially. When you have numerical history, it's probably not that subjective.
But maybe not the psychology that led to the numbers.
Right. Well, I mean, I just read Andrew Ross Sorkin's new book, 1929.
I did too. Yeah.
It's a great book.
Yeah, I liked it.
I have a memo coming out this week talking about private credit, and I refer to it in there.
What's happening with private credit?
Let me just finish this thought, okay? So he explains the events that led up, refer to it in there.
What's happening with private?
But let me just finish this thought, okay? So, he explains the events that led up to the great crash rather vividly and gives you a picture. And I think there's a lot to be learned from that. And I try to convey some of the lessons of 1929 in this new memo, which is coming out in 2026. I hope that the history that Andrew describes is the real history, because if not, the lessons will not be that valid. That's all I can say.
Any last words, Howard, to our audience? Any piece of advice?
Well, what I always say to people about investing, Nikhil, is that investing is a puzzle, challenging puzzle. Investing, I define as positioning your capital to take advantage of future developments. But I also say that future developments can't be predicted accurately. So you need superior insight to get it more right than most people. But you're not going to get it right all the time. If you have to be right all the time, if there's something in your makeup that says you're going to be unhappy if you're not right all the time, don't become an investor. Taleb, in his book, Fooled by Randomness, talks about the difference between investing and dentistry. He says if you go to dental school and you learn how to fill a cavity and you fill the cavity that way every time, you'll be successful every time. So if you have to be successful every time, become a dentist or an engineer. A civil engineer, you say, I want to build a bridge from here to there. He does his calculations, how much steel, how much concrete. Every time the bridge stands. But it's not that interesting, in my opinion. And so investing deals with this fascinating puzzle that you're trying to solve to a better degree than others, even though there are no laws that work absolutely. Fascinating. And I love it. It's still a puzzle. It's still a puzzle I'm trying to peel like the onion. But you're never done. And that makes it interesting. And so that's the kind of person who should be engaged in it.
It's interesting that you resonate with Taleb, because somehow when I read your stuff and his stuff, I find you guys on the opposite ends of the spectrum. I think Taleb, when he ran his fund, he was buying way out of the money, call options and put options, hoping for black swan events. And you, in a way, are doing the opposite of that, wherein you're buying debt in distress, hoping that the percentage of things being black swans are lower than what the market perceives.
Right. In that sense, I think we are different. I said earlier, I believe in putting together a portfolio that will do well in the main portion of the probability distribution. He's advocating protection that can be bought cheaply because it only deals with the tail event, which rarely happens. So people underestimate the value of the tail protection. So you can cheaply buy protection against something that is unlikely to happen, which in theory is a good thing. But since it happens so rarely, that the value of that underpriced tail protection doesn't become apparent very often. Even he compares in the book, as I recall, I only read it 22 years ago or something like that.
I've read all his books. I love him.
Yeah, but he says that investing is like Russian roulette, but rather than having a bullet in the 6 chambers, there are 100 chambers in the gun. So the bullet rarely goes off. And I don't think you can, so you could spend 1% of your money to buy tail protection every year, but I think if that's going to be your whole existence, it's going to be a dull existence because the explosion will happen so infrequently.
And he also said that even COVID was not an explosion. He said it's not a black swan event. So if COVID wasn't, the question is what is?
Well, yes, I mean, obviously COVID was not the first pandemic, but it was, I would say it was the first pandemic of the modern era. And it was the first pandemic that encountered the digital economy and many, and globalization, many other things. So it was kind of unique, or certainly innovative in a lot of ways. I would guess we could say some people dealt with it better and worse, which is, to me, the definition of what makes something interesting, the ability to deal with it better or worse.
Thank you, Howard, for taking the time today. This was incredibly interesting, and I feel like I'm learning so much from you.
Well, and I have learned from speaking with you, and I've enjoyed it. And your questions were, in many cases, novel and provocative.
Thank you. Thank you for doing this. Cheers.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Ahmed in Dubai. From the Yom Kippur War to Russia's attack on Ukraine, history shows that major events in the oil and gas markets can drive governments and consumers to look for new, more stable sources of energy. Now, the Iran war is forcing countries across Asia and Europe to speed up their energy transition. We're joined by Bloomberg's Stephen Subchinsky in Singapore to talk to us more about this. Stephen, how hard has the Iran war been for countries in Asia and Europe in terms of energy security? I think Stephen is, we're losing Stephen. He is frozen on that terminal screen. We will We will continue to go on with the show about the energy security when it comes to the Strait of Hormuz and how it's been affecting essentially how countries look at energy. But we want to move on to some of the stories or the other stories that we've been following in the region that has been affected by energy prices and the Strait of Hormuz. And one is Bahrain, which has raised $1 billion from a bond sale just hours after intercepting Iranian missiles. The offering attracted more than $3 billion in orders, highlighting strong investor demand despite the ongoing conflict. The deal marks the first sovereign bond sale from the region since the war began in late February. Zambia's government is heading to the negotiating table after a group of bondholders moved to block its bid to buy back a $1.36 billion bond. A creditor group controls more than 25% of the securities, making it impossible for the government to trigger a cleanup call provision. And the IMF and Ethiopia reached a staff-level agreement on the review of an extended credit facility that will make about $468 million available to Ethiopia if approved. The agreement concludes the fifth review of a 4-year, $3.4 billion extended credit line facility arrangement, which the IMF approved in 2024. Vanguard's VOO ETF, which tracks the S&P 500, has become the first exchange-traded fund to surpass $1 trillion in assets. The fund has benefited from strong inflows as investors continue buying U.S. stocks despite market volatility. The milestone marks a landmark moment for the ETF industry, which has grown rapidly over the past 3 decades. CrowdStrike shares dropped in late trade after its second quarter revenue outlook failed to impress investors who've bid up the price in recent months. The cybersecurity provider met analyst forecasts for projected revenue and adjusted earnings of up to $1.17 per share. CrowdStrike's stock had risen 59% this year. Now, a quick look into markets before we head out. Equity futures still down this morning. Oil prices down slightly as a deal prospect starts to materialize probably between the U.S. and Iran. Now that's it for Horizons Middle East and Africa. I'm Abiyir Abu Omar in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI rally stalls, global stocks losing ground as a disappointing outlook from chipmaker Broadcom hits sentiment. Oil falls as the US says Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. And Bloomberg learns that Germany, the UK and France are working on plans to engage Russia's Vladimir Putin in peace talks. Well, those are your headlines. A very good morning. Welcome to Thursday. The markets look like this. Red across the screen in the equities picture. Asian stocks falling alongside futures as the AI rally loses steam. This, as I say, after that weak forecast from the chipmaker Broadcom. And already we saw the S&P ending its 9-day winning streak in yesterday's Wall Street session. The latest US-Iran clashes damping risk appetite as well. So Nasdaq futures now down about 0.5%. Similar losses expected here for European futures. And flip over cross-asset, because today we actually have oil falling after 3 days of gains. This after Israel and Lebanon agreed that ceasefire on the condition that Hezbollah also stops hostilities, which of course could help to unlock a broader deal between the US and Iran. So gold pushing higher on that. And after all these signs of resilience in the US labour market, lifted Treasury yields yesterday, traders ramping up bets that the Fed's next move will be a hike. Now you have the US 10-year yield dropping slightly. So we're at 4.47 on the 10-year, down 2 basis points. What are the risk events on the agenda today? Well, at 1:30 p.m. London time, we'll get the US initial jobless claims, continuing this run of labour market data stateside this week. At 4:40 p.m, we'll hear from the Bank of England Governor Andrew Bailey. He'll be speaking at an investment association event, and we'll also be treated to a little Fed speak from Mary Daly and Tom Barkin. Let's set you up for the day ahead. We begin with the AI-fueled rally that's powered global equities to record highs, losing momentum in today's Asia session. Let's go straight to Bloomberg's Winnie Su in Hong Kong. Winnie, what are you watching?
Yeah, good morning, Lizzie. We are seeing Asian stocks losing a bit of momentum today, down more than 1%. Now, that is mainly being led by, as you mentioned, the weak results from Broadcom weighing on overall sentiment. And hence, you can see that the tech-heavy gauges in South Korea, Japan, and also Taiwan losing more than 1%. Now, it is really about how this demand seems to be slowing down and potentially weigh on the supply chains in Asia. But you flip the board, we also want to take a look cross-asset at the Japanese yen, because we are seeing, in fact, Japanese yen, which has been weakening for the past 3 sessions, seeing a bit of strengthening today. We are hearing that the Bank of Japan officials are considering discussing a 0.25% rate hike when in the June meeting that is coming up, and also potentially another hike later this year. So that is really supporting the Japanese yen trend here, pulling away from that 160 level that is closely being watched for the intervention risks. Now, also flip the board, I want to show you how Asian markets have really been trending in the past year, because interestingly, we are seeing a divergence in terms of performance when it comes to the markets that have lots of AI exposure. For example, Taiwan, South Korea, and China's tech names versus the ones that don't have as much exposure in Indonesia and India, for example. And in fact, you're looking at the Indonesia market here down about 19% in the past year. And today, it has fallen as much as about 5% to a 6-year low, with currency also at a record low. Now, this is all driven by the higher oil prices, the lack of AI, and further policy uncertainties in these Southeast Asian countries. Back to you, Lizzie.
Winnie, thank you for the update. That's Bloomberg's Winnie Su in Singapore. Well, let's dive more deeply into the tech story, shall we? Broadcom shares slumping in extended trading after the company delivered a disappointing forecast for artificial intelligence chip revenue. The numbers suggest that the firm's efforts to gain ground in the burgeoning industry are going more slowly than anticipated. Let's get some context now. We can speak to Bloomberg senior strategist Neil Campling. Neil, good morning. So are these results actually bad, or are they just not up to the lofty expectations that we have when it comes to AI?
I think you've summed it extremely well in terms of those lofty expectations. Since the end of March, the stock was up 65% into earnings. It's the third biggest contributor to the S&P's 20% rally since that time as well. So great expectations, and slightly below where the expectations were for the full year. It's partly a mix shift in terms of the timing, for sure, but obviously there was a lot of hope. And it's the first kind of negative data point, I suppose, that we've had in the whole AI narrative in recent weeks. So just at the margin, there's a little bit of a sort of a compression in terms of expectations maybe for the AI trade, which is not necessarily a bad thing, and it's not going to change the long-term opportunities for them and others, as we've heard from the likes of Google this week when they were doing their equity raise.
So they're still well priced then? Because, of course, you've got this interlocked web of all of these companies, Broadcom part of a debt financing deal for Anthropic and also delivering chips to OpenAI. So we can't really have too much disappointment from Broadcom when it's relying for so many other things.
Completely true. And I think the other thing they mentioned on the call, the CEO mentioned on the call last night, actually, that in terms of the timing, that they haven't got an exclusivity over, they're a main partner of Google, for example, with their chipsets for AI. But it's not an exclusive arrangement. And clearly, it's likely, they admitted, that Google would look to outsource to other partners as well over time as the technology evolves. But they also mentioned that they would start to deliver the OpenAI and Microsoft chips into next fiscal year. So there are other drivers coming through for other customers. It's a question, I think, partly on the timing side. But the pullback in tech, I think, is a healthy one because we've gone up so far, so fast.
OK, a little rational correction then. Neil, thank you very much. That's Bloomberg senior strategist Neil Campling. Well, as we say, that tech pullback is there already. It's set to continue into the US session. We're looking at Nasdaq futures pointing lower this morning. Currently, we're down 0.5%. Let's bring in Bloomberg MLive strategist David Savage now for more on that. So, David, good morning to you. How much will this news that we've seen out of Broadcom dent the broader AI momentum? Is this a sign that winds are changing or just a little bump in the road?
Good morning, Lizzie. Yeah, I think Neil's summed it up fairly well. We obviously have seen a pass through in terms of the Asian equity benchmarks, which are heavily tilted towards the AI trade, particularly in North Asia, and then of course the pass through in terms of U.S. and European futures. Both Asian equity benchmarks and U.S. futures are off sort of the lows of earlier in the Asia session. And I think, again, the context is that we've just moved, so quickly, higher that this is probably, a good setup for a healthy consolidation of those gains. And again, the read-through is that the guidance is still very strong. Overall guidance kind of came in, basically where the street was expecting. It was just AI-related revenue that was, a little bit below where those expectations had gone. And so, the look-through is still very positive, but probably a healthy consolidation here.
And what do you make of the Bitcoin moves? We're currently trading at $63,876 a token. It's really fluctuating all over the place at the moment, but basically hit by this risk-off trade. And we were under 62K overnight. That's a 4-month low. What do you read into those moves about broader sentiment, if anything?
Yeah. I honestly think there's not much of we can read through in terms of Bitcoin's price action, in terms of the broader risk sentiment. The last 6 months, Bitcoin has traded about 30% lower. Again, it depends where we are at any given minute. Over that period, U.S. semiconductor stocks are up over 90%. Historically, it has traded in line and been correlated with sort of the high beta equity momentum trade. That just hasn't been the case for several weeks. And so part of that could be traced back to weak sentiment as it relates to Bitcoin, some negative headlines as it relates to strategy starting to sell some Bitcoin, weak ETF flows, similar to what we've seen in gold in terms of weak ETF flows, ETF outflows. But again, I think the read-through on the broader market is probably pretty far and few between.
Okay, David, thank you very much. That's our Bloomberg MLive strategist, David Savage. Well, turning now to the geopolitics, the US says that Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. There's been no immediate indication whether Hezbollah has agreed and accepted the terms of that deal. But meanwhile, in the US, the Republican-led House has voted 215 to 208 to halt the war with Iran, reflecting growing concerns stateside within the president's own party ahead of the congressional elections. Let's get more now with Bloomberg's Abir Abu Omar. She joins us from Dubai. So, Abir, how likely is it that this agreement will hold up? And how likely is it that Hezbollah will agree to the terms of the ceasefire?
Yeah, good morning, Lizzie. I mean, look, it's important to note that Hezbollah, which is backed by Iran, has not taken an active part in those negotiations that were hosted by Washington yesterday between Lebanese authorities and Israeli counterparts. Now, what these two parties had agreed to yesterday was that if Hezbollah ceases its attacks against Israel and the northern part of Israel, then Israel will reduce its hostilities. Now, it's important to note the phone call that happened between President Trump and Prime Minister Netanyahu earlier this week that Axios had reported was expletive-laden, where President Trump told Netanyahu to take back troops that were supposed to be heading to the capital of Lebanon, Beirut. Now, Netanyahu said that he agrees to that, but that the hostilities against the southern part of Lebanon, the villages there, that Israel will not stop the attacks there. And currently, it's also important to note that Israel is having its deepest incursion into Lebanon in decades, Lizzie. Now, where that leaves the broader deal, well, President Trump overnight spoke again and says that a deal is near, in theory, that conversations with Iran may continue this weekend, but then he caveated and said, but they may not. And so we've ticked one element from the box, and that is Lebanon. Lebanon is a sticking point for Iran. Iran did not agree to go into further negotiations with the United States unless Israel's actions against Lebanon stop. And so certainly this is a step towards a more positive place. But Iran has not given any response to President Trump since yesterday. So we'll have to wait and see yet again to what the Iranian response is going to be.
OK, so potentially one sticking point a little closer to being solved. Meanwhile, you've got this US House vote putting pressure on President Trump. But how receptive will he be to it? He said he doesn't care about the midterms. He said he doesn't care about the oil price. Is it going to have an impact?
Yeah, and look, he can certainly veto this, right? But it shows just what kind of pressure President Trump is under domestically, with both the House and the Senate putting through this resolution that could make President Trump rethink the war in Iran. Now, I just want to bring back Secretary of State Marco Rubio earlier this week saying that, or defending the U.S. actions against Iran in Iran, as well as Israel's. He did concede that Iran's Iran's military power could still be there because some of the drones that they manufacture are cheap to make. And you could definitely see that translate into real life, Lizzie, right? We've seen attacks against Kuwait and Bahrain. These were the most serious attacks since the initial ceasefire was reached in April, about the beginning of April, with Kuwait's main airport significantly damaged, one person killed there, several others injured. So all in all, yes, President Trump is under pressure domestically. This solidifies the case that Iran is in no rush to come to the table for a deal. The U.S. may be more so. But again, the last answer here is that we have to wait and see what concessions Iran is willing to give and what response they come up with to the United States and to President Trump's claims.
Okay, plenty to watch as we head into the weekend. Abir, thank you for the update. That's Bloomberg's Abir Abu Omar out of Dubai, who'll be back with Horizons Middle East and Africa at 5 a.m. London time. Still ahead, though, on Daybreak Europe, how you may already own more AI in your portfolio than you think. We'll be speaking to eToro's global market analyst, Lale Akona. But first, SpaceX is officially filing for its IPO, aiming to raise $75 billion in an historic debut that could clear the path for more mega listings. We'll get you all the details next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizons Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Well, SpaceX has now officially filed for its IPO, aiming to raise $75 billion in the biggest listing ever. The share sale, set for June the 11th, should open the door to more mega IPOs and propel CEO Elon Musk closer to becoming the world's first trillionaire. Manuel Baigorri, who leads our APAC deals coverage, I'm pleased to say, joins me now. So, Manuel, you've been poring through the details of this. What else did we learn from the filing?
What an exciting, huge IPO, Lizzie. Definitely keeping us busy, and yes, a lot of interesting details, including the fact that they set a fixed price for the IPO at $135 a share. That is quite rare, quite unheard of, especially on big listings in the US, where they usually set a range, and then after they start testing the market with investors and doing the marketing, then they go either at the bottom or towards the top. Here, you go with a fixed price already, probably showing the confidence in the IPO getting done, and also on how much investor demand there is globally for these type of AI-related businesses, right? So more in the horizon as well with Anthropic and with OpenAI also kind of knocking on the door and next to potentially list in what would be also billion plus, multi-billion dollar IPOs. But on this one, SpaceX, definitely all the eyes on this one as is coming as soon as next week. Potentially the next few days will be very, very important to see how it's going to play out and how much real investor demand there is. But the expectations are really, really high. And as you said, it's going to likely make Elon Musk an almost trillionaire, which is kind of remarkable as well.
Truly remarkable, but I feel like we're being drip-fed details here. I'm just ready for liftoff already, Manuel. What's next for SpaceX on the road to this IPO?
Yes, so we'll start, Lizzie, the marketing with investors starts as soon as today, Thursday, and then obviously the next few days will be critical as they gather the momentum and they fill in the books, potentially offering the shares next week and the first the trading debut next week as well. So those are the next key steps. It'll be interesting to see what kind of demand they get, what kind of investors they get into the books as well. I mean, there's more than 20 investment banks working on this. We've also been reporting about the fees and how minimal they're going to be, yet banks will reap more than $500 million possibly in terms of banking fees for this huge offering. So there's a lot of nitty-gritty details that will come to light in the coming days as we have more clarity on the type of investor base for the IPO. But I think we now have a clear sense on the size. We have a clear sense also on the potential value, $1.8 trillion in market value. That is really huge. It's quite remarkable just compared with other companies, some of the biggest in the Standard & Poor's index, for instance. So definitely one. And I think what the main consequences for the rest of the world, not just in the US, which is a really hot ECM market right now, but also the ripple effects in Europe and here in Asia, where we are seeing a lot of AI-related IPOs here in Hong Kong, for instance. It will be interesting to see how they play out as well.
Yep. Really interesting to look at that global read across. Manuel, thank you so much for the analysis. Bloomberg's Manuel Baigorri there. And speaking of all of this, the Goldman Sachs CEO David Solomon's been talking to Bloomberg about how the bank secured its role in the SpaceX IPO and why we're seeing a rush of mega stock market debuts this summer. That's coming up next here on Daybreak Europe. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last two headline reports from NFP have been really, really strong.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, the Goldman Sachs CEO David Solomon's been speaking to Bloomberg's Odd Lots podcast about the bank's role in that SpaceX IPO, the wider macro outlook, as well as how Alphabet is funding its next moves. Let's take a listen.
I think you're going to see, and Alphabet is the first one to make this decision, I think you're going to see a bunch of them fund a bunch of it with debt, but also raise more equity because they're starting to think about, okay, what does this look like? It's one thing, what does it look like this year, but what does it look like over the next 5 years? How much capital do we need? How much debt? If you get it wrong, if you totally rely on debt and you get it wrong, you will really regret if you wind up having a downside scenario that's tougher than you expected. We didn't win this in the last 6 months. We won this over the last 20 years.
Wow.
The decision wasn't made. The decision wasn't made until the last 6 months. And there's a lot of things that the team did over the last 6 months that contributed to the ultimate result, which, by the way, now we have to execute. But this is a cumulative effort of lots and lots of people over 20 years. And we first, as a firm, we first met Elon Musk. And the person that first was responsible for covering him was a guy named Stuart Bernstein, who was doing a bunch of stuff around, kind of green energy. And he and his brother had Solar City. And that's where we first connected with Elon. I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital. It's interesting. I've advised companies for years, and at one point 25 years ago, I actually ran the equity capital markets business at Goldman Sachs. That was a job I had early in my career in Goldman Sachs. And I used to say to companies, there are a few reasons to go public. You need the capital. You need the currency. You have to create liquidity for, early investors. But all the other stuff that people talk about is really not critical. We have a lot of things going on in the macro with the war, with the oil shock, supply chains, inflation getting stickier, that are going to have an effect. And, the market may absorb all that differently than it's absorbing it at the moment. At the moment, it's kind of brushing it aside.
And you can watch that full conversation on the Odd Lots podcast, which will be available from 9 a.m. UK time today. Now, to some other top corporate stories this morning. Bloomberg understands that Goldman Sachs and Morgan Stanley have been picked by Anthropic to lead its IPO. Sources say JP Morgan is also in on the deal. The artificial intelligence company is racing its rival OpenAI to be the first to go public. Anthropic was valued at $965 billion after its latest funding round. And Bloomberg has learned that members of the billionaire Glazer family have been debating whether to sell their stake in the English football giants Manchester United. We understand that the family as a whole has not made a decision as yet to exit, and different members of the family are still discussing the best path forward. Well, coming up on Daybreak Europe, oil dips as the US announces a ceasefire between Israel and Lebanon, while the AI rally loses steam. We'll discuss the market action with eToro's Lale Akona. That conversation coming up next. This is Bloomberg. Good morning from London.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI rally stalls. Global stocks losing ground as a disappointing outlook from chipmaker Broadcom hits sentiment. Oil, meanwhile, falls as the US says that Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. And Bloomberg learns that Germany, the UK and France are working on plans to engage Russia's Vladimir Putin in peace talks. Well, a very good morning. Welcome to the programme if you are just joining us. 6:30 a.m. here in London. This is the picture in markets, read across the screen of the European and Asian and American equities picture right now. Asian stocks falling because of the AI rally losing steam. This after that weak forecast from the chipmaker Broadcom. And already we saw the S&P ending its 9-day winning streak in yesterday's Wall Street session. But Nasdaq futures pointing to even more losses today. We're down about 0.5%. Similar losses expected here in Europe. The flip cross asset, and we have oil falling today. So Brent down 0.7% at $97 a barrel. This on the news that Israel and Lebanon have agreed a ceasefire on the condition that Hezbollah also stops hostilities. So, of course, that could help to unlock a deal between the US and Iran. So oil down after 3 days of gains. Gold pushing higher on the geopol. We're up 0.8% now at $4,472 an ounce. And when we look at the bond space, those signs of resilience, more of them in the US labour market, lifted Treasury yields yesterday. You had traders ramping up bets that the Fed's next move will be a hike. Now we've got a little bit of a reversal of this. So we're on the 10-year down a basis point at 4.48. That's what's happening in your markets. Let's turn now to our front pages this morning. We'll start off with the Financial Times. They feature its own report that the UK Treasury is planning to take control of spending on a multi-billion-pound fighter jet programme, citing sources saying that the department's going to take responsibility away from the Ministry of Defence in a bid to avoid cost overruns. Then let's turn over to the Wall Street Journal. Today they're leading on the US House vote to limit President Trump's Iran war powers, describing the move as just the latest sign that the Republican lawmakers' support for the conflict is eroding. Finally, let's come to Europe. In Germany this morning we have Handelsblatt reporting on what it describes as a last-ditch attempt to save the debt brake reform, with the Commission tasked with reforming the rules said to be on the brink of collapse. So that from Handelsblatt. And you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which terminal subscribers can find by going to D8YB Go. Well, let's get back to the markets now, shall we? Nasdaq futures, as I say, pointing lower as the AI-fueled rally loses momentum from record highs. We can get analysis now with Lale Akona, global market analyst over at eToro. And she joins me in the studio, so good morning.
Good morning, Lizzie.
Nice to have you back.
Thank you so much.
Let's talk about AI. Is it worth hedging around AI?
Look, I mean, as we see, they're priced for perfection. So let's expect more volatility in the next few months. I think the fact that the ceasefire seems to be holding is going to be very positive because of the fact that, you know, oil and rates pretty much driving the market right now. We do think that it will be a good idea to hedge, partly because of the fact that all these diversified ETFs that investors are investing in, they're very much heavily invested in tech. So we always say that, first of all, take a look at your tech exposure.
Yeah.
You're adding on more tech unknowingly, and therefore we're saying that you might be more exposed to tech than you had planned for. So strategies such as low wall, which will be performing well when these crowded trades unwind. Low volatility dividend strategies in general valued. I think these are the areas that pair very well with AI related exposures, right? And a lot of market chatter about comparisons to 1999, 2000. I don't think that these two periods are similar in any way.
Okay.
Long rates are not where they used to be in that area. Certainly EPS growth and operating margins are very strong in the market right now, versus then all these unprofitable companies were driving heavy returns in the market, and therefore that unwinded.
It's a really interesting point you make, that basically every company is a tech company at the moment, so you might be unaware of how exposed you are to AI. Specifically, though, in Europe, how do you play artificial intelligence?
Again, I mean, those companies that are very much spending, those companies that are heavily sort of like their capex is higher, we like that. We do like defense as well, more sort of like, again, tied to the defense expenditures that we're seeing coming from Germany, but other major developed markets as well. Cybersecurity is another area that we like. And of course, AI is one other sector.
It's interesting that you mentioned defence, because I've heard some analysts saying that you turn within defence away from tankers and more towards drones. You know, as the wars have developed around the world, it needs to be a more specific defence strategy. What's yours?
That could be true. I think, again, the fact that the geopolitical environment is getting more and more complex. Again, cybersecurity, drones is another area, monitoring, communications, risk management, all of these are going to be very important in this more fractured geopolitical order.
And when we come to the macro, just going back to AI, can all this AI capex really offset the consumer weakness that we've seen, particularly in the US?
So far, it has been offsetting. I think the market returns that we've seen does point to that. I think that if the ceasefire holds, we will see consumer stocks and bonds coming back again, especially any coming down of pressure on the long end of the curve will help the market broaden further. So far, cyclicals, discretionary, consumer discretionary and consumer staples have not been performing. Healthcare wasn't great. Financials, because of the flattening in the yield curve, have been quite weak. I do expect those to come back again, especially in the second half of the year. Much depends on what the Fed is going to do. We don't think that they are going to hike rates. I think that they're still treating this as a supply-side shock, and therefore temporary increase in prices and pressures on the inflation front. However, we do expect them to have a more hawkish stance and leave it to the market, if you will, to tighten financial conditions a little bit.
I mean, that's quite optimistic. It's really reliant on the idea that this war will wrap up. And yet, day by day, we see headlines that are conflicting. Strikes, you know, encouragement that the talks are progressing, but it seems to be a back and forth. Are we not underestimating how long yields stay elevated?
Look, I think that both sides are under pressure in terms of, you know, spending, right? So in the U.S., we've seen the lawmakers yesterday putting pressure on Trump to finish war. So I do think that there's massive pressure on both sides to make this come to an end as soon as possible. Again, it depends on what the Fed is going to do, but we do think that they are seeing this as a temporary shock and therefore willing to look over this. And we do look at the Fed for guidance on that as well.
Just finally, is tariff risk even really on your radar right now? We had the latest tariff headlines yesterday, but the response from many people seemed to be taco, you know? Just keep an eye out, but we know that Trump always chickens out, not my words, some of the guests.
I think the administration is trying to time these tariff refunds in a way that it will help the midterm elections. that is going to create volatility in the markets. However, again, those sectors that have come under pressure last year might see a boost in their spending for next year, for this year, such as, for instance, auto, right, that have come under pressure last year. So again, I think much volatility is expected on the tariff side as well.
Okay, volatility everywhere, it seems. Lale, good to see you. Lale Akona, global market analyst over at eToro. Thank you very much. We're coming up on Daybreak Europe with the future of UK Prime Minister Keir Starmer hanging in the balance. Former Health Secretary Wes Streeting tells us there shouldn't be a coronation for any new leader. We'll bring you some of our interview with him next. This is Bloomberg.
This is a 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:41 a.m. here in London. Well, following a bruising round of local elections for the Labour Party in the UK, the former Health Secretary Wes Streeting resigned from his cabinet position in order to prepare a possible challenge against Prime Minister Keir Starmer. Streeting sat down with Bloomberg's Francine Lacroix at South by Southwest London, where they discussed the state of British politics. Let's take a listen.
What I find remarkable about those election results is there is next to no discussion, actually, about how bad those results were, not just for the Labour Party, but for the country itself. Because for the first time in Britain's history, we have nationalists in power in every corner of the United Kingdom. Northern Ireland obviously didn't have elections and is a slightly different, to put it mildly, history. But the SNP were re-elected in Scotland, despite a pretty abysmal record over the last 2 decades and being mired in the scandals of salmon and sturgeon. In Wales, we got absolutely smashed. This is a country that has been Labour since the birth of the Labour Party. And although I wouldn't put the SNP implied on the same part of the political spectrum as Reform, we've got a dangerous kind of English nationalism in play now as well. And the common feature in every one of those results and in every part of the country was the unpopularity of the government, and I'm sorry to say, genuinely sorry to say, the unpopularity of the Prime Minister. And it's not just a question of popularity, because let's be honest, in modern politics at the moment, we're just slightly below traffic wardens and estate agents in the popularity stakes, and that's probably not going to improve anytime soon. What I observed up close in government was a lack of vision, direction, and drive. And if there's one thing that I am absolutely certain of, particularly in the wake of the war in Iran and the ongoing crisis in the Strait of Hormuz, it's that the challenges facing us are becoming harder, not easier. The choices and trade-offs are becoming more stark. So you need leadership and grip that is able to make decisions and make those choices and trade-offs and then articulate them to the country so that you take people with you. They understand the national story. They understand the vision and direction of the government. They might not agree with everything we say. They won't agree with everything we do, never will. But they'll go, well, you know, I might not have agreed with this policy or that policy, but I understand where this government is taking us. I understand where this Prime Minister wants us to go. And if we're honest with ourselves as a party, that is not where this country is. That is not how they perceive us.
The former UK Health Secretary Wes Streeting there, who's, of course, expected to challenge Keir Starmer for the Labour leadership and therefore the keys to number 10 Downing Street. Well, this has cast the doors open to a broader debate. The Business Secretary, Peter Kyle, warning his Labour colleagues against pursuing redistribution of wealth without first prioritising economic growth. It comes as the party faces this potential tilt to the left if Starmer's replaced as Prime Minister. Let's get some analysis now. We can speak to Bloomberg opinion columnist Rosa Prince. Morning, Rosa. So you've got Kyle warning against a shift to the left on economic grounds. But also, is it politically expedient to be pulling left when Labour's fending off this threat from Reform UK on the right?
That's such a good question. So we're in this kind of phony war where we're preparing for a leadership contest that hasn't actually begun. And don't forget that the people who take part in any contest are Labour Party members who tend to be on the left. So I think what's happening is that those on the right of the party or the centre of the party are kind of setting out their stall, you know, saying, don't do this, don't drift to the left. The main proponent of that would be Andy Burnham, who is fighting this by-election to try to get back into Parliament so he can challenge Keir Starmer. He's seen as a kind of front runner if this contest ever does actually get going. And I think they're sort of saying to him, you know, be careful, as you say, watch out for the markets, watch out for reform. But there is a very vocal strain in the Labour Party who says, you know what? Our threat doesn't just come from Reform UK. Labour has lost just as many votes to their left, to the Green Party. So this is a conversation that is playing out in these sort of strange early summer days where we're waiting really to see when and how Keir Starmer actually will be kicked out of 10 Downing Street.
Yeah, interesting comments from Streeting also in that conversation that he would fight against Andy Burnham if they went head-to-head in a race. It wouldn't just be a coronation, he said, even if he is a monarchist. But how are they faring against each other when it comes to polls? Is it looking likely that if Burnham can win this by-election, then it is Burnham who takes over from Starmer?
It really is, yeah. All of the polls show not just that Andy Burnham is way more popular among Labour members, but also with the wider public. He has been the mayor of Manchester. He was very popular there. I think one of the reasons that Labour's so desperate to get him in is because the polls suggest he's really the only politician in his party who has that kind of popular appeal, who voters like. He actually has a plus positivity rating, which is a rare thing in British politics these days. So I think Streeting, you know, he sort of has to say this, that he'll be in the race, but I think his best bet is if Andy Burnham actually loses that by-election in a couple of weeks and is therefore ineligible to be in any contest. So I think he wants to be there or thereabouts in the mix in case something happens and he can jump in.
OK, Rosa, thank you very much. That's our Bloomberg opinion columnist, Rosa Prince. And don't miss Rosa's latest column on OPIN Go on the terminal. I believe she'll be looking at Starmer's accusation that Nigel Farage is exploiting the murder of a British teenager for political gain. So more on that on the terminal. Now, Bloomberg also understands that Ukraine's key European allies are working on plans to engage Russia and Ukraine in negotiations to end the war. Sources say that the allies see a shift in momentum, strengthening President Vladimir Zelensky's position. Let's get more now with Bloomberg's team leader for Russian government, Anthony Halpin. Tony, good morning to you. What do we know about this diplomatic effort? Great scoop from the team.
Yes, I mean, it's the big three economies, the UK, Germany and France, as you say, looking for a way, a possible opening to engage with Vladimir Putin alongside Ukraine and basically to bring Europe to the negotiating table. They've been sidelined for years. They've had very little contact with Vladimir Putin throughout the war, and the US has led negotiations such as they've been until now. But the US has stepped back because of what's happening in the Middle East and Iran. And European leaders think, well, there's an opportunity here for us to get to the table, and particularly as there are signs that Vladimir Putin's suffering more now than perhaps last year. The economy is creaking rather louder, and there are signs that the number of casualties that Russia's incurring each month is going up. So they see an opportunity, and they think they can exploit it if they can come together with Kiev to present some kind of opportunity for Putin to engage. As we said, it's not a unanimous view. There are some within those countries who say that, look, this is not the moment to engage with Putin. He is weakening. We should be tightening the pressure. We should be increasing sanctions. We should be making it harder to force him to come to the table rather than giving him an off-ramp.
Yeah, I mean, you told us yesterday or earlier in the week that Putin's somewhat immune to that economic pressure. We'll be hearing from him, we're expecting to, at a summit in St. Petersburg today, hours after Ukraine attacked the city. Do you think that he's likely to engage with this latest peace effort, Tony?
Yeah, it's difficult to know. Putin has said often that, you know, it's not Russia that's broken off contact with Europeans, it's Europe. So on one hand, he should welcome this. But equally, the Kremlin doesn't really take European leaders seriously. They want to engage really only with the US. It's a matter of prestige for them to directly talk to the one big superpower in the world rather than to European leaders. So I think it's not a given that Putin will welcome this and take up the opportunity. He may see it really as a sign of European weakness and decide that, in fact, he should press on.
OK, Bloomberg's Tony Halpin, thank you very much for the Russian angle on that Bloomberg scoop, which, of course, is available on the terminal and Bloomberg.com. We've got plenty more coming up. Stay with us for your charts to frame the day ahead. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At some point, the revenue and the earnings multiples and the cash flow multiples all have to come in sync. And right now, you're in that phase where there's a mass amount of capacity building anticipated of demand. And so when you look at it, one of the ways that we think about is we are a buyer of these services, and a big buyer. $13 billion in technology a year. It was $250 million this year in 26 on AI-related spending. And so the question is, what's the affordability of that? That will be the interesting question, how all this comes together. But right now, it's a heck of a stimulus in the economy, that going on. But the other part of the economy that we see is the small and medium-sized businesses. And it's interesting. As you think about them over the last year we had Liberation Day, and that was confusing for people. And then we had the tax law finally got done, that settled confusion. Then had trade, then you had immigration policy, that confused people. The deregulation, they looked for that. As you watched in the fall, they're pretty sanguine. They said, look, I can see how this all plays out. And then a lot of it got put back on the table. And so I think what you see in the small, medium-sized businesses, there's a lot of uncorked potential there. They can borrow on the lines of credit. They're borrowing a little bit more. The loan growth is solid. They're mid-double digits and things like that, which is good loan growth. But they have so much capacity if they just had a little more certainty. And that's why they really want the war to end. So their input prices will come back down, because we see the gas pump. What really happens longer term is the products made with petroleum products come.
So kind of like
through.
At the gates, ready to go once
they're ready to go, and they just want certainty. Because if you're a big company like ours with 200,000 people, you have lots of people who pay attention to all this and tell you what's going on. Our research team, the best in the world. If you and I owned a business and we were doing something, you have to do all that work yourself. And the easier it is to do that work, the more time you can spend on creating the revenue. So I think there's a little bit of a pop left out there beyond the AI, which is an unbelievable amount of spending and et cetera. There's another pop when general business gets more confident about the future path.
Bank of America Chairman and CEO Brian Moynihan speaking exclusively to Bloomberg's Danny Berger. Well, that S&P rally that we've seen over the past 9 sessions did hit a wall yesterday. It had been driven by the AI trade, but it ran into the Iran tensions and the rate hike fears. So the 9th session streak coming to a close yesterday. Now the question is, can that 9-week streak carry on if we can get a rebound over the next 2 sessions? But flip the board over, and speaking of those rate hike fears, we got more US economic data yesterday in the form of the US ISM services numbers. Pretty much what we saw was the inflation story heating up, so stoking those rate hike bets for the Fed, the chance of a September rate hike, because prices paid were at the highest since 2022. So front-end yields rising, as you can see here. But flip the board one more time, because we've seen all of this macro volatility. Of course, that has been putting pressure on one particular part of the market, private markets. Investors really in this dash for liquidity and transparency. And as you can see in the white line here, Partners Group, the latest to get whacked, capping withdrawals at one of its private equity funds amid all of this heightened redemption pressure. But you can get all of these charts that we've used today and across Bloomberg TV at CHRT TV Go on your terminal. Just a look at the risk events for today. We've got initial jobless claims, BOE Governor Andrew Bailey speaking, and some Fed speak from Mary Daly and Tom Barkin. The opening trade's coming up next, and a guy and Tom will take you all the way to the market open. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move
your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Good morning, everybody. It's Thursday, June the 4th, and here's what's on the agenda. Broadcom weighs on AI sentiment despite talk of insatiable demand. The SpaceX roadshow kicks off. Will anyone worry about governance? And the US says Israel and Lebanon have agreed a ceasefire, but does that move the dial?
Talking of moving the dial, let's talk about that Broadcom effect and what it's having on European futures this morning. We're down by around 0.3%, so not a big effect. It's going to be interesting to see how the US opens a little bit later on. Stocks are certainly under a little bit of pressure. Dollar-yen movement there this morning on the back of some Bloomberg reporting, Anna, talking about the idea that we are locking in this June hike. That looks like it's coming, but it's more coming down the pike from the BOJ. Dollar-yen back just below that 160 level, and I could have talked about oil here, I could have talked about all kinds of assets. Let's focus on Bitcoin. 63.85, 80 is where we are right now. Does it break below 60? What impact will that have? Why is it doing what it's doing? Is it a reaction or is it a tell on what is happening in the wider market? Plenty to discuss there as well. The countdown to the opening trade starts right now.
So, Broadcom taking the wind out of the sails of the AI trade, expecting to ship $56 billion of AI chips in the current fiscal year, below the estimates of 58, close to 58 billion, and just up 180% year on year, just up 180% with that target and that forecast of 56 billion. So this is another question and another reminder of stretched expectations. The stock, of course, have been bid up until the results yesterday, and now in extended trading pointing sharply down, lower, down double digits. But again, beating on the quarter and with a forecast that in other worlds and other times would look pretty robust.
Is there anything useful here? I don't know. The numbers are amazing. The numbers are super strong.
The CEO is talking about insatiable demand. That normally, that normally would be the kind of thing that some kind of computer trading application might latch onto. But no, not in this environment.
What does this tell us about? All it tells us, I think, is that expectations have just run a little bit too far in terms of where the share price is. And we were kicking around some great charts earlier on, looking at kind of token prices versus what semi prices are doing at the moment. Semi prices have rocketed ahead of what token prices, like the stuff that you can ultimately sell the AI kind of compute at, is kind of going up, but it's not going up fast enough to match what we're seeing in terms of the expectations. You're going to get this choppiness, aren't you? So again, I come back to the question: is today's price action useful? In 2 or 3 days' time, does the stock kind of close and fill the gap? Maybe. But certainly you're going to see a lot of this over the next few weeks and months.
Yeah, it's weighing on sentiment, as you said in your data check at the top. It's weighing on European sentiment a little. Nasdaq futures down by 0.5%. So we're looking to see whether that is sort of sustained into the US Open. We've had some big voices giving some quite differing takes on whether we're in bubble territory for the AI trade. And no doubt we will talk. Well, how many weeks and months and years will we talk about this same subject? It's yet to be decided. But Ray Dalio, for example, saying all technological change, creates a bubble. And you see the end of the bubble, or the bubble bursts when you're converting wealth to money. Now, he doesn't link it necessarily to IPOs, but is that what we're seeing? The turning of wealth into money. That's one way of interpreting what he sees in bubble territory here.
And meanwhile, the CEO of TSMC, of course, the key fab when it comes to actually crunching out these chips, saying he continues to see the inability to meet that demand. Supply will not meet demand through 2027, and again reiterating their sales forecast growth of 30% for this year. He's not seeing any slow. He is not able. TSMC is not able to meet the demand right now, and won't, and doesn't expect to be able to do that at least through 2027.
Just before we get on to your point, but he's also saying I'm not using the really high-end ASML kit. He said that we're getting that, but it's too expensive to use. So are we hitting up against some of the cost factors that are relevant in this industry, and will they become more relevant? Sam Altman talking about token costs suddenly becoming a big issue. You talk about converting wealth into money. Elon Musk, he's going to do a little bit of that, not a lot of that. In terms
of selling a lot of the company, is that what you mean?
That's really the point, isn't it? Is that he's holding on to an awful lot of it. 84.4% of the voting rights are going to remain with him when we get the SpaceX IPO, which is going to go out June 11th, 12th into the market. They're planning to raise $75 billion. That gives them a, let's call it, circa $1.8 trillion valuation for this business, which puts it right at the top. You're coming in right at the top.
Top 10, aren't you?
Of I think it's even harder than that in terms of the companies that are coming through. The mechanics are interesting. They're setting the price at 135. You don't normally do that. Normally you have a roadshow. Normally you get some sort of price discovery mechanism. They're not doing that. This is a company that is losing gargantuan quantities of money, which is also a factor in terms of the valuation that you've got to think about. And the other thing I just want to kind of draw attention to as well, very fast lockups expiring. So the extra stock that is currently held under the lockups is going to come to market quite quickly, quicker than it normally would with this kind of scale of IPO.
But some of it's staggered, isn't it? So it's sort of...
it's all staggered.
Yeah.
But in terms of the overall timeline, it is faster than you would normally expect to see.
So Dan Ives of Wedbush put out a note saying that existing shareholders, including Elon Musk, are committing to 366 days in terms of holding after IPO. So 366 days after IPO of holding their allocation.
There are definitely some things around governance that are worth flagging, not necessarily because it's the top concern for everybody, but we're going to talk about this story so many times that maybe, you know, on one of these days we should mention it. So you mentioned Musk having 84% of the voting rights, which isn't much change from now. He's able to appoint 51% of the board, and he can't be fired without his own consent. So, you know, all of those things, you know, maybe there'll be a feature of Jamie Dimon taking this on the road because he is one of the people that is going to be on the JP Morgan roadshow around this. I've been on roadshows before. I don't think the CEO of the bank showed up. But anyway, they were smaller businesses. But this is going to be incredible to watch, isn't it, this one?
Should we talk about what's happening in the Middle East?
Let's talk about it, because it is having a bit of an impact on the oil market, and that's how we gauge whether this is new information, really, around the Strait of Hormuz. But there is a link between what goes on in Lebanon and reopening, as we know. The Iranians have said so. And so oil prices are retreating a little bit on the fact that the US has said that there will be... the US has said that there is a ceasefire. Israel and Lebanon have agreed a ceasefire. What Hezbollah has said on this is not entirely clear.
This is Groundhog Day, isn't it?
It does feel a little bit like that. Maybe that's why we're not seeing more of a movement in the oil price. But Hezbollah has not really spoken out openly about this. Earlier in the week, President Trump assured everybody that he had been in touch with senior representatives of Hezbollah, and they had agreed to stop. But, you know, that's one of the questions, is what is Hezbollah going to do here? And will this hold is another, because the Israeli defense minister is also already out this morning talking about the conditions attached to this and saying it may lead to peace. So it still seems very tentative.
You've got an election coming up, September, October in Israel, and there's plenty of people in Israel who do not believe in this ceasefire. So that is a factor in terms of thinking around this.
Yeah.
What is Hezbollah going to do? What is Iran going to do? What's the Israeli right going to do?
That's really interesting you draw attention to the domestic politics in Israel, because, of course, we got a reminder of the domestic politics on the other side in the US, with the House of Representatives voting to end the war. Now, that's not going to end the war, but the vote in itself is significant. 4 or 5 Republicans joining all Democrats to vote to end the war, because we are 5 months away from the midterms in November, and there is acute political pressure on representatives around high gas prices.
Yeah, maybe those representatives, and particularly the Republican ones, nervous about their own political futures and wanting to distance themselves a little bit. This is
it's an
one way
unpopular
to do
war. Gas prices, petrol prices are up a lot and continue to climb and continue to be a fairly substantial issue. This is not something that a lot of Republicans want to campaign on. So yeah, we're gonna kind of see maybe that degree of separation emerging, but kind of post the midterms, what does it look like? OK, David Zahn's going to be joining us very shortly. Franklin Templeton, Europe Fixed Income Head. Sophie Hoon is going to be joining us, BNP Paribas Asset Management Senior Cross-Asset Strategist. And Christian Rolfe, Boston Consulting Group Partner and Associate, talking about Europe's new legislation surrounding how we source and acquire AI on this side of the Atlantic.
OK, let's look ahead to what else we are watching throughout this Thursday. 10 a.m. UK time, we're going to get Euro-Aero retail sales data. Later today, the EU's trade chief, Maros Šefčovič, is set to meet China's international trade envoy in Paris. Tensions, of course, particularly around the import story into the EU from China at 1:30 p.m. UK time. More jobs data out of the US. So far, the run of jobs data has been pretty strong this week. Weekly jobless claims later today. And the Bank of England's Governor, Andrew Bailey, is due to speak at the Investment Association at 4:40 p.m. UK time. Markets still pricing close to 2 hikes from the BOE this year. Later on the Fed, we're going to hear from Mary Daly and Tom Barkin.
We should talk about central banks a little bit. The pricing around the Fed in September is moving, which is interesting. But over in Japan, we're also watching what is happening there. We had some reporting from some of our colleagues there, people familiar, saying that the BOJ is considering a hike in June. So far, so assumed by the market, it would seem. There was already an 88% chance before this story dropped that would be the case. So that's not new information necessarily. But it is interesting that the story contains the line that these sources see another hike as possible. So, you know, this is floating ideas of other hikes. And the market is already trading around the terminal rate on the BOJ rather than necessarily June. So maybe this plays in a little bit, but it has really not moved the yen all that much. A lot of intervention talk.
Yeah, so we moved a little bit and then we've basically come up to the 160 level once again, which seems to be the line in the sand that everybody's holding around.
Yes. And we saw that. We went through it yesterday, didn't we? And then immediately pulled back. And there was a lot of talk again, people asking, you know, is this more intervention? Is that the line in the sand that is being defended by the finance ministry? We know that they spent a lot of money doing that through, was it April?
Yeah.
So, yeah.
Is this why sources have come to our reporters in Tokyo? Because they kind of want to jawbone the yen higher. They've cited apparently the sources citing persistent inflation, but also, of course, the uncertainty around how the Middle East story unfolds. Also talking about the bond purchase plan as well, and how that will be in focus for the BOJ. But yes, suggesting that possibly at least some officials considering two hikes to 1% at the next meeting.
It's going to be a really interesting week next week, isn't it, with plenty of interest rate decisions to come and in the weeks ahead. Coming up, Remy Cointreau posts better than expected operating profit. We will dig into how it has managed to stabilise demand. Plus, the EU sets out ambitions to cut its reliance on the US and Asia for chips and AI. We will dig into tech sovereignty. How does tech sovereignty run up against tech competitiveness? They're not the same thing, it seems. Let's talk about that later on in the programme. Up next, we'll be joined by Josie Anderson, European economist over at Nomura. So lots to talk about there, about the European economy and where the ECB goes next week. If you have any questions for our guests, please get in touch. IB plus BBTV Go. That is the function to use, or the combination of functions, on the Bloomberg terminal.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Welcome back, everybody. This is the opening trade. 15 minutes past 7 then here in London. So 45 minutes until cash equity trading. And the European picture is a little bit weaker. Is it the Broadcom effect? We certainly see Nasdaq futures down by 0.5%. That is an area of concern for the markets, it would seem. But the European picture a little detached from that, maybe. We will focus on oil prices as well, because oil prices are actually a little bit weaker, which could lift some European stocks. The price of oil is dipping after the US said Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. There's been no immediate indication whether Hezbollah, a militia backed by Iran, of course, has accepted the terms of the deal. For more details, let's bring in Bloomberg's Abir Abu Omar, who is in Dubai. Abir, good morning. So how likely is it that Hezbollah falls into line, if that's the right terminology, and will agree to the terms of this ceasefire?
Good morning, Anna. So, look, I mean, it's worthy to note here that Hezbollah has not taken part in those negotiations between Lebanese officials and their Israeli counterparts hosted by Washington yesterday. But what happened during the talks yesterday was that Lebanon had suggested that, or Israel had suggested that it will stop hostilities against Lebanon if Hezbollah agrees to stop its own hostilities against the northern part of Israel. Now, Hezbollah has not given an answer yet to this. It could very well stop those hostilities, and that could very well again answer the last sticking point between Iran and the United States. We reported earlier this week that Iran's sticking point of Lebanon particularly had hindered the progress of negotiations between Israel, the U.S. and Iran. Earlier in the week, President Trump had also come out overnight and said that a deal, or an interim deal as we've been calling it, that's the one where the Strait of Hormuz opens immediately and the existing ceasefire prolongs for 60 days until other concessions are reached. So if that were to happen, as President Trump had said, by this weekend, he could continue the talks with Iran, suggesting that he's willing to speak to the supreme leader there. He then also said that these talks might not happen, bringing us back to the same sort of back and forth that we've been seeing over the past couple of months, or since the April ceasefire was reached. So until now, we're still in a wait-and-see sort of mode. Worthy to also note that the House and the Senate yesterday or overnight had passed a resolution that would have President Trump rethink the war in Iran. Now, he could very well veto this, but it really just shows you the amount of pressure that's mounting domestically in the United States with these surging oil prices and the repercussions they have on other crude products. Strait of Hormuz effectively still closed. President Trump said that it will immediately open as soon as the MOU is signed. And now this MOU is what we've been calling the interim deal. As I said, that has been in discussions over the past couple of months or so.
Abir, thank you for the update. Greatly appreciate it. Abir Omar joining us out of Dubai. Let's get a take on what this means for the European economy. Oil prices are still elevated, energy costs across the continent, which impact all kinds of industries. What you do in terms of your home, your car, the chemical industry, the car industry. Josie Anderson, European economist at Demira, joining us around the table. Good morning.
Morning.
ECB meets next week. Energy prices are still up. The Strait of Hormuz is still closed. We get a rate hike, right?
Yeah, so we're expecting a rate hike, as is the market. It's essentially fully priced in. And the ECB has been clear that they think this is needed, but we think it's a signalling mechanism, more to ensure that inflation expectations, which are quite important for thinking about how much the energy shock dissipates through the economy, it doesn't want them to de-anchor. So this is not, in the eyes of the ECB currently, necessarily the start of a long hiking cycle, but it's signalling.
So, given that it's a signalling exercise, if the Strait opened next Friday, would we get further hikes?
Yeah, that's an important question. I mean, when we think about something perhaps that Isabel Schnabel said recently, that was ahead of this meeting, but we can also perhaps extrapolate it. She said that a June hike would happen even if we got a deal, because they've already seen the higher energy prices work through other parts of the economy. Now, of course, hikes after June aren't necessarily exactly the same as that scenario, but we do expect a July hike, and that is, again, part of that signalling mechanism. So we don't expect any further hikes after those two we currently expect. Although a peace deal before the July meeting would raise risks that we don't get that July hike that we currently expect. Because especially if expectations around inflation start to soften quickly with that potential news of a deal.
That's interesting, because lots of people are telling us around this table that July, it's done by July, because basically that's when the tank's empty and you start getting oil prices rocketing higher, and therefore you have to get a deal by then.
Right, for sort of inventory reasons that it makes sense to get a deal by then. So we'll see if that comes to pass. What about the expectations around inflation then, Josie? Tell us a bit more about that, because we've obviously seen headline inflation go over 3% in the Eurozone already, but that's not the whole story. It's very much, we used to hear a lot about the five-year, I think, from Mario Draghi back in the day. I mean, what is the inflation expectation that we're absolutely watching that is sort of setting the needle for the ECB, do you think?
There are a number of surveys, and they'll watch all of them. So I wouldn't necessarily pick one of them. I mean, if we aggregate them all together, they have risen significantly in the euro area.
But not like 2022? Important to draw a distinction, is that right?
Yeah. Yes, not as far as 2022, but a notable shift up. There's a consumer expectation survey that the ECB likes to watch, and that came out earlier this year. And actually, there was a marginal fall in three-year expectations in that survey, but it's still very elevated compared to February. So I think it would need to see more of a fall to feel comfortable that expectations aren't becoming de-anchored, thinking further ahead to the rest of the year. Then there's the business side of the economy. There's European Commission survey. Business expectations are important too. Again, that actually did fall back slightly in the latest data, which is good news that expectations aren't continuing to run higher, but at the same time, very elevated compared to prior to the war. And these rising expectations are very important for thinking about those second round effects. So in particular, that wage price spiral channel, if workers can start demanding higher wages because they think inflation is going up, then that is bad news for potential rises in inflation.
Josie, we're not going to see higher wages here in the UK, are we? I mean, the labour market is quite different here versus the Eurozone. Is that right? The weakness here? I mean, the markets are pricing in two hikes as well from the BOE. But are you pushing back on that view when it comes to the Bank of England?
Yeah, so, I mean, if we think back to the latest labour market report, it did look pretty soft. I mean, there was a big fall in payrolls, but Andrew Bailey did say that they'd take that with a pinch of salt. They might get revised. But even the unemployment rate, has been moving higher compared to, say, a year ago. And also wages have started to look fairly soft in terms of the growth rate. So, especially, thinking about heading into the war, it's clear evidence that the labour market market is softening. We think there'll be one hike and not in June. We expect that in July from the Bank of England, similarly as a signalling exercise, but we only expect one in the UK compared to two in the euro area, partly because of the labour market softness, partly because the policy rate is already more restrictive in the UK.
Okay, and if the Bank of England hikes this year, as you expect once, what does that mean for 2027?
So, yeah, as I said, the policy rate in the UK is more restrictive, and actually Bank of England policymakers have said a number of times recently that they see holding as quite active because they were expecting to cut this year. And so now that they're not cutting, that's already more restrictive than the scenario they expected to be in. So we do expect cuts next year following a hike this year to bring the policy rate back to more neutral territory where it's not placing so much downward pressure on demand.
What for the BOE?
They give ranges. Yeah. It's probably somewhere around 3.25, and so it's higher than that at the moment.
Yeah. OK, Josie, thank you very much indeed. Josie Anderson, and Nomura's European economist with views there on the ECB, going twice this year, the BOE once, and possibly cuts from the Bank of England next year.
OK, Thursday the 4th of June. Let's get you up to what else you need to know this morning. DE Shaw is extending the time it will take investors to fully exit its biggest hedge funds. It's raising it up to 4 years. This is it seeks to keep client cash, wow, that's hard to say, for longer. The firm says it's responding to a broader industry trend for tighter liquidity terms that will help protect portfolios and funds. Bloomberg understands that Germany, France and the United Kingdom are working on a plan to engage Russia in talks to end the war in Ukraine. Sources say they see an opportunity to potentially bring Russian President Vladimir Putin to the negotiating table as his forces suffer mounting losses on the battlefield. And Bloomberg has learned that members of the billionaire Glazer family have been debating whether to sell their stake in English football giant Manchester United. We understand the family as a whole has not made a decision to exit, and different family members are still discussing the best path forward. The Glazers' more than 20 years of ownership of the club has often been blighted by fan protests. It didn't go really well from the get-go, to be honest. There was always concern about the leverage and what the Glazers were going to do to this business. You want to talk about football, Tom?
So Jim Ratcliffe owns about 29%.
No. Yeah. Then you have to suggest a different topic of conversation.
We won the Premiership. It's fine. So Jim Ratcliffe. So do they sell to Jim Ratcliffe? I mean, and how does he fund that? Because he has 29%. They've owned this for 2 decades. Yeah, I hadn't realised how long that's been. That ownership.
Jim's got other problems right now. Maybe actually the higher chemical prices right now will maybe give him a better opportunity to be able to do that. But yeah, you're going to have some pretty deep pockets. We need a new ground. We need a new stadium up there, and that's not going to come cheap.
And you say we? I hadn't seen you as a Man U fan.
We as in the greater football.
Yes, the greater footballing family.
Yes, needs a new place to visit when they go and watch Manchester United.
I thought the greater footballing family were just focused on the World Cup this year, or are we not? Because some of the bookings have not been stellar, have they? When does that start? Next week?
Next week.
Yeah.
Yeah. What is it?
Long.
Mexico, South Africa's the first game.
Yes, it is Thursday the 11th.
Scotland fans are paying the most.
Yes,
for accommodation.
Yes, they are absolutely paying up because they haven't been for a long time to a World Cup. So they've been saving up for a long time. Yes, our colleague David Hellier was writing about Scottish enthusiasm for this World Cup,
outstripping everyone
other
else.
fans. Yes,
coming up, we're going to be speaking about the World Cup throughout, of course, the next few days, but also to Franklin Templeton's David Dunn in terms of a view on fixed income and growing financial pressures that we're seeing, of course, inflation. This is Bloomberg.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Minutes to go. It's not going to be particularly pretty this morning. You can blame Broadcom for that. Futures are largely lower on both sides of the Atlantic. The picture over here looking fairly bleak. The Euro Stoxx 50 is down by 0.2, but other markets on the continent are down by a little bit more. Stateside, we are down by 0.5% when it comes to NASDAQ Mini. So we're down a little bit. It could be worse, I think, probably, given the scale of what we're actually seeing in the Broadcom reaction.
Yes. If you wanted a stock market to go up and you're facing a tube strike, maybe that makes your market, your morning worse, if you're wondering whether you should make it into work this morning. But, yeah, futures are down on equity markets. Let's have a look at the bond markets. There we see a little bit of peace and quiet. We have an oil price that is down by 1% this morning on very tentative talk of peace in Lebanon, which we've talked about already. That is having some impact, perhaps, on bond markets. They're pretty flat, but we see yields coming down by a basis point or so.
Yeah. Every day new headlines, and yet the fundamentals remain unchanged, which is that the Strait, of course, remains effectively closed. On that point, let's bring in David Zan, head of European fixed income at Franklin Templeton. And David, the reason I started there was my question for you, as we think about the geopolitics, is if we get to a point mid-July, August, as some are predicting, inventories run dry, what is the bond market reaction to that? How much of that is priced in as a risk into bond markets at this point?
Well, I think we have to look at the longer term of how long it's going to take for everything to reopen, for all the supplies to get through. Even if we do get a peace deal and actually oil starts flowing through quite freely, it's still going to be 3, 6, 9 months before we get back to more normalized markets. And I think some of that is priced into the bond market, but overall, we think inflation could still be more sticky, specifically in Europe and the UK, probably a little bit less so in the US, and that will actually drive bond yields slightly higher.
And will it drive, presumably, expectations of further hikes from central banks? I mean, we were just talking to Nomura. They see two hikes from the ECB, one from the BOE. What are your current expectations as on a view that inflation remains stickier?
Yeah, I think in Europe, for sure, there's 2 hikes. We'll probably get one next week, the first one, and then the other one probably in September. And we see that they need to hike more to kind of cap off that there's any additional inflationary pressures, secondary effects. And they want to do that, I think, more aggressively this time than they did in 22, because then they said it's all transitory, it's all going to feed through. But we know it's probably going to need to be done. And the UK, I think the UK is in a really difficult spot because you have a lot of political risk in the UK at the moment. Well, we probably go into that, or maybe not. And then also you have labor market is really weak. Actually, growth I don't think is that great. Inflation's high. So if you think back where the Bank of England was, they wanted to cut rates at the beginning of this year. And now they're actually facing the need to hike. And so I actually think they're really in let's wait and see and hope we don't have to do anything, but we may have to hike.
Okay, sticking with the let's stick with the politics, but not in the UK. You mentioned your view on the ECB and what they're going to do. How does the political uncertainty of next year factor into your bond market strategy? OATs, for example, in focus. I think you're underweight those because of the volatility that we might see next year. Where does that take us?
Yeah, so we have 3 out of the 4 biggest countries in Europe have elections next year. So we have France, Italy, and Spain. And so France is going to be the big one that everybody's going to be focused on. But I also think you'll see a lot of fiscal easing in Europe just because what do most politicians do before an election? They ease policy. I also think that the French elections will probably kick off in earnest, probably in September, October. So you'll start to see, more narrative about that and who's running and what's going on and what their policies are. And that will probably unnerve the bond market because, France has come back quite nicely to a spread of, I think, 65, 70 over Germany. But that's probably too tight. And we think it should be probably closer to 100 just because fiscal dynamics are quite poor. And also we see that there's a lot of political risk.
There's a lot of political risk. There's also a lot of political risk in gilt markets then.
Yes.
And you were quoted recently as saying that if the 30-year, I think you'd buy at 6%.
Yes.
Was that right? I mean, what's your latest thinking on attractive levels on gilts?
Yeah, I still think that the 30-year is at 6% is probably reasonable for long term. You are going to see continued volatility for the next, I would say, several years, given that we don't really know when this government is going to change. We know we're going to have a leadership election. That's going to be what's the new policy, but I don't think they can drift too much from the original policies are set out for this election. And so from that perspective, I think they're really going to have to think about, what's going to happen in the next election. And nobody's going to know what that's going to be for quite some time. And in that environment, you're going to have this political premium that basically the UK pays, and that will remain. And I don't think that will change, but that actually means that the funding costs of the UK are much higher than they should be, given the fundamentals.
Does the 6% withstand a change of leadership?
Yes, I think it does.
Yeah,
I think around 6, yeah.
Okay.
Why is 6 enough?
As I think if you look at long-term, real yields of, if you believe the Bank of England can keep inflation around 2 to 3%, then that gives you a 3% real yield. That does insulate you to some of these longer-term risks, and I think that's what you want to have.
Are you buying it because of the yield or the credit risk?
It's the yield.
Right.
The credit risk, I don't really see the UK defaulting. No. But you will see continued volatility. But at 6%, I think that's actually good.
But we were talking about this on the show yesterday. We're in a series of sort of step changes where yields go up and then buyers buy them because actually 6% is quite nice and I can do all my liabilities and I get the pensions. Everybody's quite happy. And then we get another kind of political shock and we go up again. And everybody's like, oh, I can buy them at 7% and I'll just buy. Is that the world we're in at the moment?
Well, I think a little bit we are because all bond markets are going up. You have Japan, US, Europe, UK. We're all seeing higher yields. But I think the UK is unique in that it's the highest yielder out of the major developed markets.
And that just makes it so. Does everybody else catch up then?
I do think you'll see compression up to the UK. Not quite to the UK level, but you will see other yields move up in that general direction, yes.
Okay, that's interesting.
Why does the UK have a longer-term political premium led on?
Or inflation premium.
Or inflation? Is it inflation premium? You said political premium.
I think it's a political premium.
Maybe it's both.
Yeah.
They used to call it the moron premium.
So the moron premium remains for a number of years for the UK.
Yes.
But we don't have that in I know you're underweight French sovereign.
We're heavily underweight French. I think it's because France, we have to see who wins and what they actually do. And I think a good example of that would be Italy, where everybody thought we have this new leader coming in. She's going to do all these crazy ideas. And then actually her overall move towards the market was really well done. And actually, Italian yields have come in very much on her. Whereas, what will the new right party in France, if they do get in, will they be more of that ilk, or will they actually do more of the bigger politics that they've talked about?
Is there a Meloni playbook then that you think other European governments might adopt?
I think a lot of people could follow what she's done, and I think the market has rewarded her. It's just whether or not that fits in with their domestic political agendas, and that's, I think, where it's key.
The lessons for Burnham in there?
There definitely is a lesson. It's just the question is he listening?
Do you think he's listening?
I think he is. I think he makes comments on that, the policy should not be directed by the bond market, which is great, but that means you need to run a surplus. And the UK is not running a surplus, and it does need to refinance. So I think from that perspective, the bond market still can have quite a bit of direction on policy.
Yep.
And I think that from Burnham, really looking at the key policies he wants to get done, he will do that. But overall, he won't be able to spend as much. And I think Truss has actually really demonstrated that if you try to do too much, that won't work.
Yeah, if Burnham doesn't win the by-election, this is getting really micro. But,
that's going to get very exciting.
Right, but if he doesn't win, and then we've got Keir Starmer for as long as we have Keir Starmer, what does the bond market do in the interim? Is that a setup for volatility as well? Is it sort of volatile with either result in the UK?
I think so, yes, because I think what's going to happen if, let's say, Burnham does not win the leadership election, it just means Starmer goes further left. And so whoever's in charge is going to be going further to the left, more tax, more spend. But remember, the UK is already at the same tax level as we were back right before, after World War II. And it really is not that much more you can do without hitting growth quite substantially. And so they're kind of at that level where they actually have to do something to reduce spending. But nobody wants to do that. They just want to spend more.
Yeah, we need a kind of back of a napkin, write out a curve, maybe tell us what happens on taxes and things like that.
Exactly.
Okay. David, nice to see you.
Good to see you.
Thank you for stopping by. David Zahn, Head of European Fixed Income at Franklin Templeton. Do all good things have to come to an end? Is the AI bubble sustainable? Is it about to burst? Ray Dallier's got some views.
A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues, and how do you do it? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Eventually, being the key word there. We'll have more on the AI rally. Losing a little bit of momentum this morning. Broadcom disappointing overnight. Stay with us. More on that story next. This is Bloomberg.
A cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We are a little over 15 minutes from the opening trade. Good morning, happy Thursday. Checking in on European markets then. Futures pointing very modestly lower, essentially flatlining after losses of about 7 tenths across the benchmark yesterday. You're seeing a little bit more downside pressure in the UK. FTSE 100 futures called lower by 0.3%. But again, some concern about what's happening in the AI trade and geopolitics remaining front and centre. Of course, US futures pointing low on the S&P E-minis by 0.3% after some losses yesterday. On tech, Broadcom shares then slumping in extended trading after the company delivered a disappointing forecast for AI chip revenue, at least for some. We're joined now by Bloomberg Intelligence tech analyst Matt Bloxham. Matt, what did Broadcom say that led to the angst? Extended trading down 14%, and yet on the quarter, they beat.
Yeah, they did, and actually they gave a pretty rosy outlook for the business as a whole. I think, it's just kind of just a slight difference in perspective between what's great growth and what isn't. You know, the market had got a little bit ahead of itself in terms of how quickly this pivot to AI is happening. Now, if you kind of look at the numbers in black and white in the quarter that they reported, their AI revenue, which is really what people are focused on, was up something like 140%, a bit more, and they're guiding to 200% or more growth in the next quarter, which is incredible growth. I think, in isolation, and you're doing really well at that pivot, but the market just kind of gone a little bit ahead of that. So, for example, for the next quarter coming, the company talks about $16 billion of AI revenue, and the market was looking for over $17 billion. So, and I think inevitably you always get kind of some of these kind of expectations mismatch when a company's making a big pivot into such a market that's growing at a really incredible pace. So I think for me, in aggregate, it's actually a positive data point about the AI momentum, and it kind of adds to what we've seen recently from Hewlett-Packard Enterprise and from Dell. There's a huge amount of demand for AI. The momentum is still there. It's just that you get these kind of odd differences in where the market's positioned and what the company reports. Obviously, earlier this week, or was it last week, we saw Hewlett-Packard Enterprise, kind of do better than the market expected. The market just taking its time to kind of get a bit more precise about where the momentum is.
Yes, and on the AI theme, we're obviously watching SpaceX, and that listing expected next week. Let's just play a clip, actually, of the Goldman Sachs CEO, David Solomon, talking about SpaceX and talking about why it's important for this kind of business to come to market and to list right now.
We didn't win this in the last 6 months. We won this over the last 20 years. The decision wasn't made. The decision wasn't made until the last 6 months. And there's a lot of things that the team did over the last 6 months that contributed to the ultimate result, which, by the way, now we have to execute.
So they were talking about the role they're playing and the win they've got there, but also we went on to say that it's about having currency. So they need to come to market. It's prudent to come to market. You can't just do it all in the debt markets, can't do it all in private markets. It's a good thing to come to public markets and do this. Talk us through some of the details that we've learned then about the IPO, Matt.
Yeah, I mean, obviously, when the filing came out a week or so back, there's a lot of anticipation about finding more about the actual numbers. Since then, we didn't really know much about how much revenue they're making, how much profit they're making, where that revenue and profit was sitting within the business, what actually the overall strategy of the company was. And I think, I think most people have been surprised about the expansiveness of the strategy. Everybody thought it was going to be pretty ambitious, but I think it's even more ambitious than people thought. And my own personal perspective is you can't really look at SpaceX as a sum of its parts. The rocket business, the connectivity business, the space business, they're all interconnected, and they all play a role in tapping into this $28 trillion addressable market that they're going for. And actually, this is really is an AI company.
Yeah, that's interesting. So you're the second person in 2 days who said that, and I was wondering if that were the case, if this was the right story to be watching for sentiment around AI.
I think it is. It's potentially quite disruptive. Obviously, there's a lot of things that need to happen, but if they do create this massive orbital data center capability, then it could be incredibly disruptive to the whole AI ecosystem that we see today, and particularly in terms of the economics of delivering AI. And so I think, I'll say you're going to have to watch very closely what happens with Starship, what happens very closely with the Terafab chip business, because those two things are critical in delivering on this kind of broader ambition they have.
Matt, thank you very much. Bloomberg Intelligence analyst Matt Bloxham on all things tech. And you were listening there to David Solomon, who was in conversation with the Odd Lots podcast, and you can watch the rest of that from 9 a.m. UK London time. I say watch, listen. You can do both these days with podcasts, obviously. Let's turn now to today's markets in 3 minutes on the opening trade with Markets Live executive editor Mark Cudmore with us on set once again. Mark, we have a lot to talk about when it comes to tech, it would seem. A little wobble in the tech narrative. Nasdaq futures down on that Broadcom story.
Yeah, obviously it is all about the Broadcom story in the short term. And I'm not going to add much more, specific detail on the company than Matt has just done. But I do think an interesting tidbit there was that, the reasons their gross margins are lower is because they're focusing more on their business on AI. And I think that's just a trend we're seeing everywhere, like both on the user side and the business side. And then he talked about SpaceX, it's really an AI company as well. Basically, the whole world is just going all in on this, and it becomes more problematic when it eventually falls down. That the emperor has no clothes becomes a problem.
Why has the emperor got no clothes?
Well, for example, you got with SpaceX, you're going to get a 5% float that's going to go to market really rapidly. More is going to retail, which means that with only 5% float and it's being allowed to join the indexes in super short time, the amount of passive money that has to flow in. So we know it's going to pop extraordinarily. Now, why else would you do that? I mean, it's a 1.8 trillion company. I don't know how it's going to trade. So I have no idea. But it wouldn't shock me if it suddenly goes another 50% or 100% in no time at all. Or it becomes because there's so little float out there that people have to buy. And to me, this just sounds like just some extraordinary moment in markets that's going to kind of absorb capital and make everyone realize, wait a sec, this company is based on just extremely ambitious projections that would be wonderful for humanity if they come through. But we're talking a very long time span here. And the revenues right now are tiny. So, it's an extreme case. I hope. I don't know if it's the most extreme case. We've got some more IPOs coming this year. It is one of the extreme cases of kind of just the euphoria and froth in the AI market. But I said the SpaceX IPO will probably go brilliantly because of how it's structured.
Do you think it's a broader catalyst for markets? And does that focus on the IPOs, whether it's SpaceX or Anthropic or OpenAI later this year, keep the markets sidelining what's happening in the Middle East?
Yes, absolutely. I think it's a very big point for markets. As you know, I've become much more cynical about the AI bubble inflation, and it's hard to know, when it's going to pop. But this is another company that its projections are it's going to completely dominate the AI revenue space. And then we're going to have OpenAI go to market that's going to dominate the revenue space. And we're going to have Anthropic come to market that's going to dominate the revenue space. They can't all win this. They've all got competing products. They're pretty, commoditized products. And at the moment, people are just suddenly realizing that, hey, wait a sec, how much real value are we getting? Yeah, I can build some lovely, nice new dashboard. But do I need the dashboard? Does it help me do more work? Does it help me produce more goods? So, look, obviously AI technology is phenomenal. I use a lot of it. How much actual real value does it add is much harder to quantify.
Yeah, we're watching oil prices come a little lower today. FTSE futures called lower. That might or might not be linked. The market is still moving. The bond markets are still watching what happens with oil.
Completely. So bond markets, dollar, so US rates markets, I should say, and the dollar are completely correlated with oil to, I think, the most extreme ever. The inverse correlation with the S&P 500 is very large. So, yeah, AI has distracted us. It is the most dominant theme. It is going to continue to distract us. But there's real-world damage being done in the conflict, and that does have real matters for markets.
OK. We have to talk about your event as well. Our event. We're all going to be there. But it's really good timing, though. AI excitement in these markets, followed by a host of interest rate decisions. The first for Kevin Walsh at the Fed next week. It's a really interesting time in markets to be holding this event.
I think it's before Walsh's first Fed is really important, and I think the whole debate now about. It's not even an exact signal of whether he's hawkish, dovish. It's what you get that mix between yields and dollar, which way they kind of go is going to be really relevant. And as you know, the AI theme is can Asia keep on dominating? Is Europe going to continue becoming irrelevant? So it is a great time, apart from the tube strike. But otherwise, it's a great time.
You can tell Anna's doing the bond market panel.
It's all about the war. We don't care about AI, do we? Yeah.
That's the signal from Anna. So that event is later today. I think we're live streaming in it.
Live go.
So you can watch in, particularly if you are a subscriber, of course. Before that, though, let's get your stocks to watch with Chloe Melley standing by this Thursday with a check on some of the individual names that could be on the move. Chloe.
To you. And also,
this morning. This is Thursday. We've got Rémy Cointreau, which makes a cognac and is doing a little better than expected. This is a company that had been struggling because of a slump in demand in Europe and China and kind of weaker consumer spending globally. But it seems that it is doing better, that things are stabilizing, and it is now targeting sustainable sales growth going forward. So we've seen the shares go up and down quite a bit, but this update from Rémy Cointreau could be seen as reassuring, and it could potentially lift those shares, and also we'll be watching out for any impact on that broader alcohol sector as well. Moving on to chips, and there we could see a bit of weakness because, of course, Broadcom over in the US had this disappointing outlook on AI revenue, and with this sector, because expectations are so high, any kind of sign of a slowdown is taken very badly by the market usually, and we've seen Broadcom shares plunging as a result, and so we could be watching out for any weakness there for those AI related names here in Europe. It is worth noting that some of this might be a slight overreaction. We have Bloomberg intelligence analysts saying that this misreflects expectations that were really high rather than any meaningful change in underlying demand. So that is worth keeping in mind. And finally, let's go over to Universal, which could be on the move today as Bill Ackman is looking to sell his stake in that company just a few days after Universal rejected a takeover bid. And Ackman has been looking into Universal for a while. He first acquired a stake in 2021, but this latest deal that he had proposed had been seen as very complex, perhaps too complex to actually implement, and so it seems that now he is moving on, so we'll be watching out for any impact on the stock for Universal this morning as a result of that.
Chloe, thank you. Chloe Melly, as always, with that look at some of the stocks on the move. Bitcoin also on the move. Still wonder if it's linked to the SpaceX IPO, the listing of all of these other AI-related companies that is coming. It's certainly sucking a lot of the air out of other parts of the market and the news coverage.
It's struggled, though, for a while. Yeah. And it's been going down for a while. So there's a series of factors, it feels like, there's
it got down to 62,000 earlier in the Asian sessions, right now at 64, but it is close to those levels pre-war. So those are the losses for Bitcoin. Coming up is the opening trade. Futures pointing modestly lower this morning.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Thursday morning, good morning. A couple of minutes to go until the start of equity trading here in Europe. Let's talk about yesterday's session. European equities are down. US equities were a little lower as well. They went lower after hours. There's a Broadcom. We'll come on to that in just a moment. Europe went out here. We finished down over there, so there's a little bit to price in to that story. But we continue to get quite interesting data, and the AI trades, the AI narrative just whipping us around on a day-to-day basis, Tom.
Yeah, so the handle for Europe today hasn't been great, has it? There is no fear and loathing in the markets, but there is certainly caution across the benchmark. Then you're seeing futures pointing lower by about 0.1%. Here in the UK, FTSE 100 futures pointing to a slightly deeper loss of around 0.3%. Oil prices are slightly softer today. Copper and iron ore also weaker, though gold and silver are currently up. DAX futures currently flat. Yesterday, autos amongst the sectors under the most pressure. Energy was on the top side in terms of your sectors yesterday, again on a day of modest losses. In terms of individual names to watch, Anna, what are you looking at?
Yeah, individual names and one sector in focus, of course, and that is tech. We have Nasdaq futures down. They've been down through much of the morning, and they're down around 0.3%, so pulling back a little from earlier losses. But what does that mean for European tech? Could we see tech stocks on the move as a result of the Broadcom numbers? ASML will be watched as well for other tech reasons. Remy Cointreau in focus as we have earnings through from that business. Slightly better than expected operating profit for the year through to March. The cognac maker trying to stem losses from a decline in demand in critical markets. So there's a focus on that particular business. We'll get a briefing in a moment. And Bill Ackman's Pershing Square is selling roughly 80 million shares in Universal Music Group, UMG. We've seen that overnight placing taking place. And so Guy will watch that one as well.
Yep, we'll certainly watch all of those. Let's get an idea of what the headline numbers look like. A quick look around Europe to tell us what is going on. Here we go, market open time. We are open across Europe. The FTSE 100, little flat this morning. We're expecting it to be one of maybe the underperformers as we work our way through this session. Keep an eye on the AEX, though, this morning. It could be interesting to see how ASML deals with what we've seen overnight from Broadcom, despite the fact it's now Europe's most valuable company. So we'll see what happens when that opens. But in so far, early indications is we're not going anywhere in a particular hurry. We have obviously rallied hard when it comes to the tech sector recently. Europe hasn't had all of that. Does that mean it doesn't get quite the downside when it comes to what we are going to see coming off Broadcom? CAC's absolutely flat. DAX is up by 0.2%. The IBEX is up by 0.1%. At a headline level, I'm not sure there's much to take away from what we see on the screen in front of us, Tom.
Yeah, do you know what? On a sector-by-sector basis as well, it's hard to find anything thrilling in terms of narratives. Energy is your sector that's seeing the biggest losses right now on lower oil prices, of course. Currently down 0.8%. Retail is your best performer across sectors, up 0.5%. Consumer products also gaining 0.3%. Travel and leisure, modest gains there, just shy of 0.2. Tech is on the downside, down 0.3%. And you mentioned ASML. Currently, that company's down 0.5%. Anna.
Yeah. So yes, absolutely. At an overall index level, not really moving very far. The London market then underperforms, down 0.2% on energy to some degree. Let us talk about where we are in these markets then. Joining us for further analysis, Sophie Wynn, Senior Cross-Asset Strategist over at BNP Paribas Asset Management, with us on set this Thursday morning. Sophie, nice to have you on the programme, on the opening trade. Let me ask you about your overall sense of where we are in these markets, because in your notes you talk about sentiment starting to look exuberant. That's an interesting choice of words. Is it too exuberant?
So I think compared to last time we spoke, sentiment has fully recovered. Positioning is starting to look, I think, on the bullish side. And if you look at surveys about potential of hard landing, the priority is very low. So I think the hopes of a Strait of Hormuz reopening on top of the AI trade pushed investors to be much more bullish at this point. when the tail risks are not taken into account.
And thinking about those tail risks, does that include a bursting of the AI bubble, if it is a bubble? We've heard conflicting views from some very wealthy investors overnight talking about their views on AI and whether we're in a bubble. We were talking to our colleague Mark from the MLive blog earlier on, and he was quite sceptical about whether all of these companies that are going after this big data center addressable market can really get the revenues that they're hoping for. Are you looking for this quote-unquote bubble to burst, or is that not your focus?
I think it's something to look at. I think on the AI trade, what I'm looking at is much more on the tokens rationing. There's anecdotes here and there that we're consuming so much tokens at this point that there's not going to be enough. And the divergence and bifurcation between enterprises and retail users. But I think more importantly, it's going to be hanging on the timing of the Strait of Hormuz reopening, I think. And also the consensual view that once the Strait of Hormuz reopens, it's going to be a smooth process and we're all going to get barrels of oil. But what if you're going to have an initial dip, but then you're going to start doing the math, inventories are very low, and you're going to have a period where actually it's going to take time for the oil to get to you. Refineries are not going to start immediately in the Middle East, and you're going to have some period of shortage, which I think is not priced.
So on that point then, is that the rude awakening for the equity markets? It's that acknowledgement that we may get to a point where physical crude inventories actually run out. And is that what finally derails, or is it a reaction function to over-exuberance more generally and a concern about frothiness and an IPO not going well? What derails the equity market? Is it the geopolitics ultimately?
I think it could be a combination of factors, as in like central banks reacting not the right way when we're facing a supply energy shortage shock. The fact that you could have an energy shortage, like for now we're looking at inventories, they're dipping lower. That's saving us. The fact that China is also net importing less. US dipping into SPR to net export to the rest of the world. And also there's like some demand destruction, which permanent or not permanent remains to be seen. But I think the fact that at this point, positioning and also hopes on economic outlook is skewed one way. There's some worries on Europe, I think. But when you have these talks about, the breadth in the equity market has been very weak. So hope for a broadening out, which means, like buy Europe or buy like sectors that have been hurt. And I think if you look at smart consensus, is very troubling is if you look at sectors like retail, autos, so that have been sensitive to potential energy shortage, you start to have smart consensus upgrading the earnings outlook, which is not in line with what's happening at the moment.
You're not ready to buy European luxury, European airlines at this point?
At this point, no. I think if you want to identify laggards, it's basically laggards where you have a fundamental story that makes sense. And that's why in our portfolio, we're still long semis, we're still long utilities, we're still long, biotech. So sectors and regions that will outperform in the long term. But then, like from a tactical perspective, if you want to identify laggards, we think that, for example, China Internet makes much more sense, where you have better China property news. The capital control news flow could be hurting sentiment in the short term, but it's supportive in the medium term. So it's more identifying laggards that are good from that perspective.
So Chinese tech is an uncorrelated asset to US tech. Is that right?
So if you look at China tech, they are much more internet. So they have been hurt because they haven't been so prevalent in terms of AI adoption. But that's changing. So their cash flow has been hurt by their food subsidies. But if you look at Tencent, for example, or the news flow we're having over the past couple of months, they are shifting towards AI adoption, which is something new.
A lot of people out there are trying to figure out that I've got all this tech in my portfolio. I'm about to get even more because of what is happening with SpaceX and these other IPOs that are going to arrive. I don't want that exposure. I don't want that concentration, but I don't know what else to buy. You give me a whole kind of what do I buy if I'm worried about what is happening in the tech landscape? do I just go to cash and wait for that to come down? You talk about other assets that might come up over in the long term, but presumably that's a relative trade. They're going to get hit. If tech comes down, everything's coming down. So how do I manage tech? If I fundamentally believe that tech is going to come lower, how do I manage that process?
So I think it's two things. So if you're worried about tech, what if tech continues to go up? So I think the fact that AI had 3 phases, the first one has been more on the hardware side. Sure. Second, physical AI. Okay. And third is more going to be this unicorn sectors that will benefit from AI, but that's not priced yet. So we can talk about the auto sector that could potentially shift the supply chain and respond to AI needs. So identifying these unicorn sectors that are cheap. Yeah. And then on the other side,
the auto sector is a unicorn sector.
We're still looking into that, but it's more identifying these potential sectors that can shift the supply chain easily to respond to AI or start producing drones, like redirecting towards defense or like AI. But I think the other angle is, fine, if you have a bubble, what is not being reflecting the broad economic outlook at this point is, I think, gold.
Right.
Gold has been hurt because ETF are not buying. Yep. EM central banks are using gold as a support for their currency. And if you look at your broad portfolio where it's been one way, AI, and potentially broadening out, gold has been cast on the side, underloved, and that could be your portfolio diversifier.
And so gold could still be attractive. How does that rub up against all the big IPOs that we're going to see and the focus on AI there? Are they going after the same investor, or does the same investor... I'm thinking about retail, I suppose. Retail got very excited about gold and silver. Now retail is excited about AI.
So, like, retail investors, I think they are quite momentum players. So I think in terms of, like, investing, if you look at... I think you're right. The fact that there's been the shift towards, like, gold, silver into AI. But what if the Strait of Hormuz doesn't reopening is not as smooth as we expect? We start to have to price an economic slowdown and potentially, like, deeper than an economic slowdown. I think gold is going to be back in the forefront where even post-Iran, there's going to be this wake-up call where you're going to need more in terms of portfolio out of the dollar. And I think that's why the ongoing negative correlation between equities and dollar is super interesting, because it's not a sign that the dollar is back as a risk-on, risk-off hedge, but the fact that the dollar at this point is hurt more when dollar is up than dollar up when equity are down.
Sophie, great to catch up. Thanks for joining us this morning. Really appreciate it. Sophie Nguyen, Senior Cross Asset Strategist, joining us from BNP Paribas Asset Management. Core 6 looks like this. A big focus on tech this morning post Broadcom, and as you can see, it is having an effect. ASML is a little softer this morning. Some of the defence names are also giving back some of their gains recently. More of a defensive bias in the market, certainly. Names like Nestle are doing reasonably well. Let's stay in the food and drink sector. Let's hand things over to Chloe Mele. That's where she's starting as well.
Good morning, Gay. Indeed, we have the cognac maker Rémy Cointreau doing very well this morning, with shares up more than 9% after doing slightly better than expected and reporting slightly better than expected operating profits. So those are not blowout results by any means, but there had been so much weakness for Rémy Cointreau recently and for that broader alcohol sector that any indication that things are picking up, are getting better, or even just stabilizing, that is seen as very positive and very encouraging. And that's why we've got this big boost in the shares this morning for that company. On the tech sector, however, we are seeing a little bit of weakness. We are in the red across the board, especially with Nokia this morning, and that is due to the Broadcom outlook, which was seen as disappointing. And of course, the problem here is that the expectations for those companies are so high, and so any sign of a slowdown is taken very badly and really dents this AI sentiment. And so this explained so much of that weakness this morning. Moving on to Universal, which was halted earlier, it is down now about 7% after Bill Ackman's Pershing Square is selling its stake in the company, and that is just a few days after Universal rejected a takeover offer from Pershing Square. It was a deal that was seen as very complex, and now it seems that Bill Ackman is moving on from Universal after first acquiring a stake in the company in 2021. And so we are seeing that really drag down those shares this morning. And finally, Puma is doing well after being upgraded by Citi analysts, which have mentioned and highlighted a very positive opportunity in China after Antasports became the biggest shareholder in Puma. And so it seems that we've got a positive outlook there, and we're up more than 4% for Puma this morning.
Chloe Millet with some of the stocks on the move this Thursday. Thank you. Coming up, we're going to get more details on that Remy Cointreau story, more analysis as the cognac maker stems losses.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last two headline reports from NFP have been really, really strong.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, Friday on Bloomberg.
Welcome back to the opening trade. 16 minutes into Thursday, the 4th of June session, and actually things looking much more positive than anticipated. Up by just 0.1%, but the DAX and the CAC not doing too badly, even if the FTSE 100 underperforms. But it's dragged itself out of negative territory, which isn't bad. We haven't seen a huge move in the Nasdaq to go alongside that, but one of the things that's been weighing on European stocks has been sentiment around, or weighing on stocks broadly, has been sentiment around tech, and that from the Broadcom earnings was weighing on the Nasdaq, and that still is the case. Oil prices are still down by 1%, but the European landscape not looking as bad as it did first thing 16 minutes ago, Tom.
Yes, though tech is under pressure, as we expected, as a result of the disappointment around Broadcom, with all the caveats that, in fact, the quarter was very strong. It was the forecast that disappointed some of the analysts. And so you do have that reader, Chris, because, of course, in extended trading, Broadcom was down pretty heavily, double digits. And so Infineon is down 3.4%. You're getting likes of ST Micro down 2.9%. Logitech is lower by a little over 2%. BE Semiconductor softer as well by 1.7%. ASML. The list goes on. There is caution returning to the European tech space. After some decent run-up higher, Nokia is also falling pretty significantly as well, and that has been dusted off as a new kind of AI darling recently. The move then coming after disappointing results, as I mentioned, from Broadcom. The company delivering a lower-than-expected forecast for AI chip revenue. The numbers suggest the firm's efforts to gain ground in the burgeoning industry are going more slowly than anticipated. They are very much going, though. With us is Bloomberg's senior strategist. You have to put a context around this, don't you? Neil Campling, who will add that context, because they're still saying, 180% growth year on year for some of their AI products, Neil. Just why the disappointment around Broadcom, given that on some metrics it seems to be performing pretty well?
Yeah, Tom, as you were talking there in the intro about the setup into the print, and actually we take a step back and look at where the stock and the market was at the end of March. Since that time, Broadcom has risen 60%. We've also had the S&P up 20%. Broadcom, the third biggest contributor to the S&P gains over that time period. Massive, massive gains. The SOX index, the semiconductor benchmark index, up 95% year to date. AI winners basket up 65% year to date. So they've been massive, massive moves. So it's really a case of the print, the anticipation into the numbers. So you'd have to deliver a significant beat to justify ongoing momentum. And I think if you looked at what they actually said on the conference call, they were saying that, in terms of the guidance for the full year, whilst it may be a little bit below some analyst estimates, the guidance for the further out year is higher because of the timing of when the chips get delivered. But it's I think it's quite a healthy, to be honest, price reaction because momentum has been so quick for the entire AI space that we need to get a sense check.
There's been a lot of momentum behind the AI story, for sure, and so we ask whether Broadcom means anything in that context. Let's take a moment to think about whether we are in a bubble then, Neil, around AI themes, and we'll play you a clip of the CEO of Cerberus talking about the bubble, or the opposite, actually, of a bubble. Let's listen.
I think historically bubbles were characterized by a notion of if you build it, they will come. What is unusual about AI right now is the builders are so far behind the demand, it's absurd. We have a backlog of more than $25 billion of demand. That there are none of us, not AMD, not NVIDIA, that can keep up with the demand that your employees are driving. And that's sort of, in a lot of ways, the opposite of a bubble.
So that's his view, the opposite of a bubble then. And we heard from Sophie Wynne, our guest in the first part of this programme, Neil, other reasons why we might be seeing the opposite of the bubble. Supply just can't keep up with the demand, which at the moment seems to outweigh it. What's your thinking? We heard the same from Taiwan Semiconductor's CEO overnight as well. If we look at the earnings momentum in terms of the market PE multiple, it's still very healthy. We're not at extremes. And the reason for that is because of the earnings growth. So the huge earnings growth for the pockets of the market. Estimated or rear view? Both in terms of rear view, in terms of delivered results, and in terms of the outlooks. And if an investor can potentially buy a leader like an NVIDIA, growing 70% year-on-year revenues outlook, on a 25 times price earnings multiple, good old-fashioned price earnings to growth and those kind of metrics, it's actually very cheap, and it's actually at minus 1.5 standard deviations to trend. So the valuations are supportive. There is a lot of hype. There are winners and losers. Another discussion at some point about the IPO valuations of certain of these stocks, SpaceX, etc. But
and those IPOs are largely coming to market being loss-making, quite significantly loss-making. And what that tells you is that basically the AI story is being subsidised at the moment in a fairly substantial way. Are we, though, getting now to the point, and Sam Altman was talking about this earlier on this week, where we're starting to talk about token costs? We're starting to talk about kind of this becoming a utility. You have a meter on the wall, and it tells you how many tokens you're using and what the cost ultimately looks like.
Totally. It's a great point, because we mentioned it in Before the Bell yesterday that the token costs have doubled in the last 6 months. We also mentioned that Uber have actually stopped their employees from using certain AI tools because it's so expensive. So there is definitely a mix shift in terms of who the winners are, the cost of this AI spend. And, of course, in technology, leadership changes so quickly. So 6 months ago, we were talking about OpenAI as being the leader.
Yeah.
Today, we're talking about Anthropic overtaking OpenAI in terms of revenues and growth. So, there is...
Per unit of compute, that has gone down dramatically.
As it should do, because tech should, by its very nature, be deflationary.
We're just using a lot more of it.
We're using
Javon's paradox, right?
Absolutely true. But the problem that we also have is that there are certain components. We talked before about memory pricing. Memory pricing is up 600% in 6 months. So there is still a disconnect in terms of certain parts of the compute network. So certain things are getting much more expensive. In terms of the general long-term trend, tech should be deflationary. Otherwise, the iPhones in our pocket, which today cost $1,000, would actually, if you look at compute power, should be costing $50,000 based on the tech inside.
Another paradox. Neil, thank you very much. Neil Campling joining us, Bloomberg senior strategist, talking all things tech this morning. Guy.
Remy's up a lot, like a lot, 10.5% right now. Stemming losses, the company declining despite declining demand in critical markets. But it's stable. The market's happy with stabilisation here. Maddie Parker joins us, Bloomberg consumer reporter. This is good enough. Like, stabilisation is good enough. The market, 10%, that's a decent bounce.
Yeah, no, exactly. I think people are, relieved, really, in the market to see how Remy have done this morning. As you say, operating profits come through slightly ahead of expectations. They've beaten what analysts expected. That is still down 11.5%, as you say, in the year through March. The kind of really big picture here, really, is that they've had pretty solid demand in the American markets. But that's kind of being persistently quite offset by quite sluggish demand in China and in Europe for their products, like cognac, obviously, being the most famous one. It's true that a lot of the alcohol companies have seen pretty poor stock performance this year. So I think, as you say, markets are just relieved to see that things are doing OK at Remy at the moment.
Yeah, what about global events, war in the Middle East? Is that sort of news flow and situation impacting a business like Remy?
Yeah, definitely. I think Remy have been they've been slightly less forthcoming, I think, about the kind of impact in the Middle East. Obviously, they're globally exposed. So we know what happens to consumer demand when the Middle East conflict began and how consumers rein in spending on fuel prices and the supply chain impact as well. Having said that, they're obviously not immune to all the geopolitical events. They've had the tariff spat last year between the EU and China, which restricted some of that duty-free cognac. They're also, obviously, the fallout from the US-China tariffs as well last year, which they blamed for uncertainty in those markets. So it's good to see them kind of bouncing back over there.
So, Maddie, what are you and the team going to be watching for from Remy in the quarters, maybe the months and quarters ahead?
Yeah, well, their CEO this morning said that obviously their main aim is to try and kind of stabilise the cognac, the brand, and to kind of keep that momentum going. I think what's important kind of across the board for alcohol companies at the moment, that's Remy, that's the same with their rivals like Diageo and Pernod Ricard as well, is that alcohol consumption across the board has been sliding a little bit. That's because of cost of living and, of course, the kind of shift to a slightly healthier lifestyle maybe. But it'd be good to see kind of how they're able to combat that and kind of stabilise their momentum.
OK, the stock is currently up just shy of 11%. Maddie, thank you very much indeed, breaking down the Remy Cointreau results for us. Bloomberg consumer reporter Maddie Parker. We're checking more broadly in on European stocks currently across the benchmark. A little bit of a turnaround in sentiment, up 0.2%.
We are up 0.2%. The Dutch market, though, does underperform, which takes you to technology, doesn't it? And you can see that some of the tech names listed in the Netherlands are a little weaker, and that is not helping there. And the London market underperforms a bit, but the CAC are on up by 0.5%.
Well, so what's interesting is that Abivax is the biggest percentage gain, and it is up quite strongly. But the pharma space more broadly is up quite strongly. Abivax got smashed the other day and is bouncing back a little bit today. But there's definitely a kind of defensive bias broadly in the mix when it comes to the points gains, except for SAP, which is topping the points gains this morning.
Well,
so
that
we are
is
seeing,
interesting.
yeah.
That is interesting because it ties into our next conversation, actually, about what European tech names can do around European tech sovereignty and competitiveness. Coming up on the programme, the EU has unveiled its sweeping plan to claim sovereignty over chips and AI. We'll talk to Boston Consulting Group's Kirsten Rolfe. What have we heard from the EU? We'll get a briefing first on what it is that they have decided. Where does that leave Europe in terms of its tech sovereignty around cloud, around data centres and all the rest? And will the resulting European push be competitive with global?
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade. Happy Thursday. We're 30 minutes into today's session, and sentiment has turned a little bit more constructive. You're seeing bonds bid, yields are down, and you're seeing equities on the front foot modestly, but the gains are there after losses across the benchmark yesterday of about 0.7%. Today you're seeing gains, at least so far, of 0.3%. That is an adjustment from the futures picture that we saw. DAX markets currently up 0.5%. Puma is playing a role. Guy's going to give more details in terms of some of the individual names. The CAC current is currently up 0.5% over in France, and here in the UK, the FTSE 100 putting in modest gains of around 15 points. Guy, what are you seeing?
3-4 to 1 on the upside. That's the interesting thing. 423 up, 144 down. So definitely a bias on the upside for European equities. That was not what futures told us coming into the market open first thing this morning. Volume seems to be consistently down. Anyway, so let's move on and talk a little bit about some of the gainers. Remy, stabilisation. That's enough. That's good enough to lift the stock. Remy's up by 12, nearly 13% this morning. Abivax got hit hard the other day. It is coming back a little bit this morning. We're up by 10.53%. So a little bit of a bounce in that stock. Puma also So a note out, I think it's from Citi, talking about the potential in China. That stock is up by 4.7% this morning. On the downside, we've got an unloading of... I'll go to the middle. Universal Music's stock. Nokia is down, unsurprisingly, given what we've seen overnight from Broadcom. And Pirelli, I think one of the short sellers that has been targeting this stock, has some information out on that. I think the short seller's called Grizzly. Anyway, we'll come back and maybe provide more information on that. But that, I'm not going to talk about the note, but I'm just going to talk about the market reaction. The market reaction is that the stock is down by nearly 5%, Anna.
Here's what else you need to know then this morning, Guy. The US says Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. The White House said the agreement was contingent on a, quote, complete cessation of attacks by Hezbollah, adding in a statement that the group must evacuate all operatives from Lebanese territory south of the Litani River near the border with Israel. There's been no immediate indication whether Hezbollah has accepted the terms of this suggested deal. Bloomberg has learned that the Bank of Japan officials are set to consider a quarter-point rate increase this month and see the possibility of a further rate hike later this year. The central bank is also set to unveil its latest bond buying plans at the meeting, with officials seeing little need to maintain the current pace of reductions in the fiscal year beginning in April. And TSMC's CEO says the company's global chip supply will fall short of AI-fueled demand for years to come, sustaining revenue growth for the firm. Even with new manufacturing capacity in the United States, the CEO says that the chipmaker can't fulfill demand led by American customers and reiterated the company's forecast for sales growth of more than 30% for this year. Tom.
Let's get to what's happening in Brussels around technology, because the EU has unveiled sweeping plans to expand its domestic tech supply chain and decouple from US and Chinese dependencies. The measures range from semiconductors to AI and come as the bloc struggles to keep up with competition. Joining us now is Tamlin Basin, European tech policy analyst at Bloomberg Intelligence. Tamlin, what is the EU hoping to achieve and what is realistic?
Yeah, and I think realistic is the key question. So it is part of a decoupling, but really the EU is trying to do two things. One, it's trying to gradually reduce reliance on foreign partners for things that it views as critical infrastructure. And this is, again, cloud, AI, and semiconductors. Simultaneously, it's trying to lift its own domestic capacity to be able to sort of service some of that incoming demand. So I don't think that global decoupling is possible, given the supply chains in the technology space. But I think the EU policymakers are trying to build a little bit of more options for European businesses to thrive in this area.
Can Europe do what it wants to do without creating tech giants? Because that strikes me as being quite a challenge.
Yeah, and I think that's absolutely the key question. We're not going to see hyperscalers of the size of AWS, Microsoft, and Google pop up overnight in Europe. And I don't think that's necessarily what they're really trying to do. What they're trying to do, if you look at it on the cloud side, is they're trying to say, okay, these are some workloads that carry sensitive data. Think of things like defense, things like healthcare. We want to create an opportunity for European businesses to be able to service this demand. And that's really what a lot of this package is about, is building some of the capacity so that you can see some players compete in niche areas like this. And I think that's the more realistic near-term goal of these policies.
Yeah. So they want European businesses to stand up to this competition a bit better, I suppose, and are going to help them do that. Are we seeing innovative ways whereby big tech US companies are trying to be more European and assure that the data is in Europe and it's controlled in Europe and all of that sort of way of getting around this new kind of regulation?
Absolutely. Now, I think this goes back to the scale that these large players in the U.S. have. They have massive R&D budgets. They are not caught flat-footed by this. If you look at over the past 18 months, they have all been touting their own sovereignty options. They have been partnering with domestic European providers, hoping to sort of be in the window for some of these workloads. They might not be able to get all of them, but they want to remain in the discussion for procurement in all of these areas. And I think that's an interesting thing to watch, how that develops going forward.
Okay. Bloomberg Intelligence Analyst Tamlin Basin, thank you very much indeed. Sets us up really nicely for our next guest in terms of a conversation that expands on this topic, because for more on what we can expect then from that EU plan and the wider impact of AI in Europe, we're joined now by Kirsten Rulf, partner at the Boston Consulting Group. Kirsten, thank you for your time. What do you make of the EU's plan? Is the prescription correct, and can they get it done?
That's a really interesting question, Tom. Yesterday, I saw a few Commission officials actually post that it was Tech Liberation Day, sort of reminiscent a bit of Liberation Day of President Trump about a year ago about tariffs. So certainly the expectations in the European Commission are high. The voices that have now read the proposal, including myself, are a bit more cautious because there's a lot in the proposal that still, yes, has to be realized in terms of the financing still needs to be there. That big shift from the supply side to creating the demand side on chips, but also on data centers, but also on frontier AI, that is still a big bet into the future. And I'm really curious to see how the European Commission is going to act on that, because they've also made a big bet on member states being in line with their sovereignty definition and with their sovereignty plans.
Yes, and I think you've been talking, and you pointed out that the definition of sovereignty is different for different jurisdictions, possibly different companies as well. Kirsten, does sovereignty come at the expense of competitiveness for European companies?
Currently, that's actually the feeling in most of the companies that we work with. Our clients are global clients, and they're actually facing two problems. First, that so far very, very fuzzy definition of sovereignty in the European Union. Some of our clients actually prepared for disrupted supply chains. Others just felt that sovereignty from the European Commission meant decoupling. A third kind of definition that was surrounding and circling in the last few months was, okay, something just needs to be European controlled to count as sovereign in the European Union. And that really caused a lot of confusion with big companies. The second thing is that most of the big companies are global. So they're facing the problem that the US will have a certain tech stack that they want in place, compliant with all of their laws. Then China will have a certain tech stack in place, compliant to their laws and ideologies. And then now Europe is coming up with its own cloud rules and what you need to fulfill to be a cloud provider in Europe and what you need to have in place to be a cloud consumer in Europe by some of these hyperscalers. And I think businesses are really confused. And this package now brings a lot more clarity. That's great. But also let's not forget that there is a long time for implementation. There is still a long debating coming up. The European Commission is expecting this to actually go in force in Q4 2027. That's almost 1.5 years from now. So a lot of action can still happen on the ground.
Okay, so there's a lot of challenge then in getting this to be something that's competitive for global businesses doing business in Europe. Kirsten, what about opportunities here then? Are there parts of the tech stack within Europe that to this point have been done by non-European businesses that now will come with a lot more protection, and therefore European businesses might be able to scale up if they seize this opportunity? Where does that opportunity lie?
Yeah, absolutely. So, I mean, the package has two major parts. The one is the CHIPS Act 2.0, and the other one is, like you already talked about, the Cloud and AI Development Act. And both basically aim at scaling European capabilities, both in the semiconductor area, but also in the frontier AI area, an area where Europe is lagging years behind the big labs in the US and China, something that we don't have in the continent at all. And there is now a huge bet and investment in the grand challenges that this proposal lays out to finance frontier AI labs in Europe, to have that capability in Europe. At the same time, also for cloud providers, European cloud providers, this is basically a subsidy package. The levels that were defined by the European Commission clearly indicate that as of definitely level 3, but even in some areas level 2 of the 4 levels, you cannot be an American hyperscaler or Chinese hyperscaler. You have to be European based, controlled, and even work with European personnel that has European citizenship. So that's a big subsidy package. All of that is based on the European Competitiveness Fund that's still under negotiation, and it's supposed to enable and level also a lot of private capital. So yes, there are lots of opportunities here for startups. There's lots of opportunities for smaller players to scale up, but as I said, the European Competitiveness Fund is still under construction, so there's checks being written here that may not be covered.
Right, and this could be expensive then, Kirsten, because it's a time of huge competition to scale up AI, scale up data centres, scale up all kinds of tech all over the world. I mean, the cost of memory, we've been talking about a lot on this programme about how that's been seriously on the rise. So the bill for this sits with European taxation, I suppose. How is it all going to be paid for?
That's a great question. I think it will be expensive for several players. First, it will be expensive for the players that are big cloud consumers, because these sovereign products usually come with a price premium of up to 25%. If you buy a European sovereign cloud, it is more expensive than a hyperscaler right now. It also can be very expensive to push the demand side on the chips level. So so far, the European Commission's strategy was to subsidize fabs. Now they want to really build chips at the cutting edge of the AI frontier in Europe. That will cost a lot of money, and also drawing investors in will cost a lot of tax money and will cost a lot of political promises. And then, of course, consumers will also deal with higher prices, given that some of these products then also will be a lot more costly for people on the high street.
Kirsten, the call from the US tech industry is going to be that this is unfair. How do you think Trump is going to respond?
That's the great question. I was really surprised by how bold this package was and how bold it was also framed yesterday in Brussels. So I think the European Commission has gone a step further than their current rhetoric, and that was always very cautious, that was always very balanced. However, really looking at the language of the package, it is relatively nuanced. It could have been a lot worse for American incumbents, and I think that is because all European businesses know that they're currently very much dependent on American innovation, and they will continue to depend on American innovation for a long time to come. These frontier AI labs, they won't be here tomorrow. They won't be here maybe not even until 2030. So the rhetoric may be, from a political side, quite harsh. But I think from a business side, everybody knows that America needs to be a partner and will be a partner for a long time to come. Having said that, our latest research shows that already there's a little bit of a shifting away from US tech, and there's a little bit of a broadening of this sort of European partner landscape. So curious to see how the US will react. I can imagine that there will be a lot of rhetoric, but even the US knows that Europe is a big market for them and for their companies, and that they need it.
Kirsten, great to catch up. Thank you for the insight. Really appreciate it. Kirsten Rolfe, Boston Consulting Group partner on the new legislation coming out of Brussels. Coming up, oil lower following 3 days of gains. This after Israel and Lebanon agree to a ceasefire if Hezbollah also stops hostilities. Big if. Latest from the region next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome back to the opening trade, 47 minutes into our show, and European equity markets are higher than they were at the start of the trading day. US equity market futures have not budged. It's not that that's driving things, but things have turned around a little bit here in Europe. So we're up by 0.3%. The CAC and the DAX doing okay this morning, it would seem. Let's talk about oil, though, and that's the oil price weakness is weighing on some energy names. Oil is lower following 3 days of gains after Israel and Lebanon agreed to a ceasefire. The agreement hinges on a complete cessation of fire from Iran-backed Hezbollah. Bloomberg's Ona Ant is in Dubai. Can bring us up to speed on what we've learned here. Ona, good morning. So this ceasefire seems to rest on what Hezbollah decides to do. President Trump earlier this week said he had the backing of Hezbollah, but it's not clear whether he has it right now in this moment. What is it worth if we see Lebanon and Israel agree a ceasefire and Hezbollah has not said anything?
Well, that's the key question that will determine how feasible and sustainable this so-called ceasefire will be, Anna. To be clear, the militant group Hezbollah was not a party to the agreement reached between the governments of Israel and Lebanon, and that was declared by the U.S. overnight. And if anything, before that declaration was made, Hezbollah said that it would continue to protect its land, which it said was its duty. Now, having said that, there has been no indication that there has been a flare-up in fighting between Hezbollah and Israel overnight since the agreement has been announced. In fact, there has been no reported firing by Hezbollah into Israel's north, which is a red line for the Israeli government. But going forward, I think the unspoken consensus that is not in the letter of the agreement is that some level of fighting, especially in the south of Lebanon, is expected, and it's kind of acceptable to the parties as a part of the current ceasefire arrangement. Whether or not Hezbollah fires into Israel's north and whether or not Israel retaliates by attacks on Beirut, the Lebanese capital, is going to decide whether or not this ceasefire arrangement, we can call it that, will hold going into the future, Anna.
Okay, so we know how Lebanon and Israel, the Israeli governments, kind of feel about this. We're waiting for Hezbollah. We've already heard as well from the Israeli right, who are not happy with this deal. That just leaves Iran, Ona. Iran's reaction to this strikes me as being really critical. What's happened in Lebanon has been a big part of what Iran has been saying over the last few weeks. If it accepts this as being enough, could this push us towards a peace deal that could open the Strait of Hormuz?
Possibly. I mean, yes, Iran has repeatedly said that Lebanon, or fighting in Lebanon, is a red line. It's not going to agree to any extension of the current fragile ceasefire with the U.S. with fighting in Lebanon going on between Hezbollah and Israel. It just does not want that conflict to be treated on a different, separate diplomatic track than the current one that's going on between the U.S. and Iran. So, yes, it is a very important part of those negotiations, and we know that Iran will not agree to an extension to the current ceasefire without the fighting in Lebanon Iran coming to a status where that Tehran sees as acceptable, but we cannot also treat it as the sole point that will decide the future of the talks between Iran and the US. There are other issues at play, from frozen Iranian funds to the future management of Hormuz. Lebanon is definitely a huge part of the discussions. If there is no real ceasefire there, we can argue that there's not going to be a progress in talks between the U.S. and Iran, which was indicated by Arakchi, Iranian foreign minister, just last night again. But we cannot expect that to solve the entire situation on its own either.
Onur, thanks for the update. Comprehensive as ever. We really appreciate it. Onur Ant joining us out of Dubai. Let's get back to the markets more broadly and talk about what is happening. I think there's some really interesting things happening. You've got Europe up this morning. You've got NASDAQ futures down this morning. Now, Broadcom was a big part of that. But is Europe the anti-AI bubble trade now? Is that maybe what we're seeing in the market this morning? What is the beta here? What would happen if we saw tech unwinding in a more substantial way stateside? How would Europe react? I'm going to ask that question now to Mark Cranfield, who's joining us.
We've tried everything else. Europe's the only thing left. So
precisely. It does kind of feel like that. But is there some? How do you? If you're worried about the AI bubble story, is Europe your destination of choice?
I think this month is a big rotation story. And we're at the early stages of it. I think SpaceX confirmation they're definitely going to go ahead with the IPO is the beginning of that rotation. And Europe will benefit from the sense that they left so far behind. When there was the rush into all things AI and they didn't have an AI narrative of their own, Europe got left behind. And now it will benefit as people start to move money away from some of the overdone AI themes and they start to look for other places to put their money. So that is where... further down the road, if we get a resurgence of the AI story, then Europe's in trouble again. But for now, they're in a good situation where they're going to pick up some of the pieces that fall out of this.
Okay. We're watching oil prices. We just got that great update from Onur Ant about what's happening in the Middle East, Mark. I mean, is there anything new here? We're watching for how low the inventory levels get. And when this starts to get either physically really difficult or politically really difficult or price-wise really difficult for President Trump and co., is that what we watch to put pressure on the situation?
I think, yes, it certainly will. When there's headline stories that people really can't get the diesel and the jet fuel that they need, that certainly will be. But if you look at the Brent futures curve, if you look at for the end of this year, pricing has been between $85 and $90 for ages. Hasn't really moved at all. So traders in the oil market are pretty sure that whether Hormuz opens now or opens in a few months' time, there's going to be difficulty in supplies for quite a long time. They are not optimistic. They haven't. Otherwise, they'll be pricing oil at $70 or lower. They're not. They're pricing it pretty much at $90, and they have been for ages. So they're suggesting there's going to be a problem for ages.
But $90 doesn't sound extreme if we run down inventories. So is that pricing in a complete rundown of inventories, but a reopening of the Strait?
It is pricing a kind of a hybrid situation, but with room to go higher. If things don't work out well, then it'll go back above 100.
Is it so? I know Couple's got some views on this. But is there a view that actually what the commodities market is pricing is an economic rollover? That actually we're not going up because we're worried within the time spread that actually we're going to get a significant economic contraction?
Not yet. We're edging towards it. We haven't tipped over. The key to that will be the yield curve, the bond yield curve. It will flatten substantially. Because already short-term yields have been pushed up a lot. We do expect the European Central Bank to move. Maybe even the Fed's going to go towards a tightening as well. Other people as well. That will start to hurt the economies later in the year, maybe, or early next year. And then you'll have people grabbing long-term yields because they see the risk of maybe a recession at some stage or a big slowdown.
But are we not going up as much on oil at the moment because we're worried about that further down the road?
Probably. It's probably got a part of it,
And does that growth story in the States, though, lots of the signs at the moment seem to be pretty resilient, don't they? And AI is making up for the fact that we are, or more than compensating for the fact that we're worried about higher energy prices, and maybe that slows down things in the States. I mean, how do you balance that and think clearly about the growth story out of the US?
That is absolutely true. But if you look at some of the recent jobs data, if you look under the hood, there's some cracks appearing in there, particularly for young people who can't find jobs. They're being pushed out because of AI to some extent as well. So that wouldn't take much for the jobs numbers to deteriorate quite quickly. They seem to be on the cusp of any time the unemployment rate could go up to 4.5 or higher. And then alarm bells will be going all over the place that things are not looking so good.
Help me understand what's happening with staying on tech, okay. So the King Kospi, and yet the Korean won has fallen to its lowest since 2009 versus the dollar. With all the inflows, are there inflows into the Korean markets? Presumably, does that not support the currency? Why is the won at such weak levels?
Okay, a lot of moving parts with the Korean won. Number one is competition with Japan. The exchange rate between the Korean won and the Japanese yen is very, very important to Korean exporters. And if with dollar yen at 160, they can't afford the Korean won.
So the authorities are engineering this lower?
It's benign neglect. Pretty much the same as we're seeing in Japan. They're just standing back and allowing the market to push it. At the same time, some foreigners have to reduce their holdings of Samsung and SK Hynix because they've hit the 10% barrier. So they need to sell some Korean won to get back inside. Not everybody, but there's enough to move the market in that direction. So you're seeing some of that as well. Also, Bank of Korea, very slow, hinting at raising interest rates, but at a very slow pace.
The reason why Mark is here is because we've got an MLive event, which is going to be taking place this afternoon. If you're a Bloomberg Terminal subscriber, you will be able to watch it on Live Go. Please do. It's going to be great. We're all looking forward to it. Hope you have a good day. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Mega IPOs in focus. Elon Musk's SpaceX aims to raise $75 billion in the biggest stock market debut in history. Bloomberg also learns that Anthropic has lined up banks to lead work on its IPO. The AI rally stalls. A disappointing outlook from chipmaker Broadcom hits sentiment. Plus, the U.S. says Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. Now, also coming up, we put the spotlight on private markets. We'll be joined by Blair Jacobson, co-president of Ares, who joins me here in the studio. Now, first thing is first, there is quite a lot going on in public markets. I mean, this is what we follow day in, day out. We're seeing U.S. stocks actually retreating after a disappointing outlook from Broadcom, and that seems to be triggering doubts that the rally in technology stocks maybe, just maybe, has gone too far. Now, the downturn seems to be extending to other pockets of the tech trade, with cybersecurity firm CrowdStrike also dropping some 11% last night in the U.S. The picture for the moment, you can see S&P futures down some 0.2%. I look at euro dollar 116.04, and then of course we follow everything that's happening in the Middle East. Brent 97.30. Now, if you look at some of the downturn that we see in U.S. equities, it'll be interesting to see whether that translates into European stocks. Look, a lot of these indices are not that rich on technology stocks, maybe with the exception of the DAX, and again, that's maybe a bit of a stretch, but the DAX, the CAC, and the FTSE gaining between 0.7 and 0.1%. So I would just talk about Broadcom. Look, those shares reacting in pre-market trade today after the company delivered those disappointing forecasts for AI chip revenue. Broadcom down 11%. So CrowdStrike's, that's also the other thing that we were talking about. A projected second quarter revenue failed to impress investors, and that's also down 7.3%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, SpaceX has officially filed for its IPO, aiming to raise $75 billion in the biggest listing ever. The mega IPO race is just getting started, as Bloomberg also understands that Anthropic has picked Morgan Stanley and Goldman Sachs to lead its IPO after filing confidentially for its own listing. Now, in a moment, we'll be joined by Aaron Captain, Global Head of Economics and Strategy Research at UBS Investment Bank. But first, Matt Bloxham from Bloomberg Intelligence joins us. Matt, every day we talk about SpaceX. Every day we talk about these mega IPOs. I mean, is this a battle actually of the mega IPOs, SpaceX and Anthropic? Does it make a meaningful difference on who comes out first?
It does, although I think probably SpaceX a little bit of a different bucket to Anthropic and OpenAI. I think there definitely is more of a battle between OpenAI and Anthropic, and clearly Anthropic is winning that right now. I think it does make sense to kind of be out there asking for money sooner rather than later, because you never quite know what the market's going to do. You know, we're seeing this huge volatility, particularly in AI-related names, and I think if things don't go well with the SpaceX IPO and or the Anthropic IPO, then maybe that for OpenAI that means they either have to accept a much lower multiple than they wanted, or kind of shrink the amount of capital they're raising. And as we know, these companies are all desperately hungry for capital to keep funding their midterm growth.
So, I mean, Broadcom, and this is kind of having an impact on markets at large. Broadcom results disappointed investors. What does that mean for the broader AI momentum?
Yeah, I mean, I actually think that the print itself in isolation was a good one, and it's positive for the AI story. You know, when in isolation, their AI revenues are up 143% year on year, and their guide for the next quarter is up over 200% year on year. So actually, in terms of executing against their AI pivot, they're doing really well. It's just that market expectations got a bit ahead of where they're going to come out. And if you look at it, it's about $1 billion of revenue we're talking about next quarter. They're guiding to $16 billion of AI revenue. The market was looking for a bit over 17. And who knows, they may well actually end up hitting 17 or more. But they're just trying to give a realistic expectation of where growth is. But it's a very healthy growth number. And I think it does underpin the fact that there's a huge amount of demand for AI chips out there.
Matt, I mean, indulge me, because I'm a little bit obsessed with SpaceX, and I've been going through, some of the prospectus. I mean, it's incredible, like 1 million people on Mars, and that gives them an extra bonus. I mean, is there any chance that the IPO is not successful because some of the metrics are, frankly, a little bit weird?
Yeah. I guess it depends how you measure success. Clearly, the banks are going to be very sensitive to making sure that there's enough left on the table for incremental demand. I think the fact that you're seeing the relaxation in the index inclusion rules probably gives you that kind of demand tailwind once it's listed. My personal view is that the next data points we see are going to be positive in terms of this kind of mid to long term story for the business. You know, it is almost kind of fantastical, you know, what they're planning to do on a kind of multi-decade view. Yeah. And there's clearly lots of engineering and commercial challenges they need to address to get there. But I think in the short term, the data points we get are going to be positive against that story.
So fascinating, and I can't take my eyes off it. Matt, thank you so much. Matt Bloxham from Bloomberg Intelligence. Now we're joined by Aaron Captain from UBS Investment Bank. Aaron, I mean, it feels like we're having these two conversations, which is one on AI and these big IPOs. And I know AI has been largely supporting a lot of the markets. But then there's inflation, there's, you know, concerns about the Strait of Hormuz. Like, when do the two worlds collide?
Yeah, so it looks like for now at these oil price levels, they're sort of canceling out almost perfectly, right? So, and in fact, what's sort of surprising to me is that the stress we saw in March is actually less severe in May when you look at Asia, supply chain disruption, et cetera. And so now part of that is because the tailwind from AI, it's not only large, but it's quite recent, right? So if you look at sort of the run up in what's happening in sort of Asia, export data, et cetera, I mean, the charts are just completely parabolic, right? And so when you start to sort of add up all the countries that are in the AI supply chain, you get to more than half of global GDP. And when you look at the trade in AI, it's about double the energy trade. And when you look at the memory prices versus oil prices, they've gone up 8 times faster than oil prices. So you start to sort of see the contours of, you know, why we have this big offset. Of course, what that hides is then sort of the distribution. So you're getting this aggregate strength in the U.S., Korea, Taiwan, and in equity markets. But you still, I think, are also seeing the pain from the higher energy prices, the supply chain disruption, et cetera. So we have sort of, I think, just distributional stress, but aggregate sort of resilience. I think that's sort of how I characterize it for now, right? And then we have to sort of see where the Middle East goes. So, you know, we're still depleting these inventories at alarming rates. I think the conviction levels have gone down on when that becomes sort of binding, when you start to sort of see these prices respond to that. I think as a function of time and what you're seeing, you know, governments say, for instance, in Asia, is, you know, next month is the month we run out. And then, you know, a month later, it's like, no, next month it's the month they run out, right? And so I think that the cliff effect is sort of getting pushed out. The data is not behaving in a way that suggests we're about to see some material deterioration. Right? And so that, I think, is enhancing confidence in the markets that, OK, that means we have more time to come to some kind of ceasefire agreement.
Aaron, I mean, on AI, do you believe in the power transformation at this level? So we're spending billions and trillions. What if the technology needs new data centers with new equipment? I mean, we're kind of throwing everything at it now in a technology that's still advancing very quickly. Yeah, so
what I find fascinating is that, so last year, you know, did 500 billion, 550 or so in the U.S. on CapEx. Let's say we're at, you know, 800-900 this year, so a delta 400. That 400 delta is sort of driving everything in the world, right? So the 400 billion, which is about 1.25% of GDP, is giving you about, you know, 20% of GDP in extra equity valuations, which is then driving the bulk of U.S. consumption, is giving you now, I think, the bulk of sort of the delta in global trade growth, which is 80% AI now. So it's all the same dollar, right? So it's amazing the multiplier effect of, I think, that CapEx build-out. Now, when you look at the projections of how much more that has to go, we have several years of that to come, right? Now, I think there's a difference then between markets and sort of national accounts in the way, you know, the economy is measured. So it will become hard to sustain what we're currently seeing in the growth contribution, because it's not about the levels, but about the change. So if we sort of flatline at $1 trillion a year, then over time, that means we get less GDP contribution. Now, I still think that'll, you know, be confirmation that this is progressing and we're, you know, technology is improving, and I think the markets will be fine. But the tailwinds we're seeing now are probably pretty close to a peak in terms of the deltas that it's generating.
Aaron, so Odd Lots, which is one of my favorite podcasts, actually also spoke to Goldman Sachs chief executive David Solomon, and they were asking whether these big mega IPOs, what they meant, because there are so many coming all at once. Take a listen.
I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital.
Well, you can watch the full conversation on the Odd Lots podcast. And Aaron, I think for our conversation is that if they have to, does it change fundamentally our economies?
You mean the amount of borrowing that they need to do? Or
I mean, the markets, I mean, these big IPOs, we've never really lived through it. I don't know how that translates into your world.
Yeah, so I mean, that's the equity side. Of course, they're also going to borrow $250 billion, right? I think there's plenty of appetite to actually fund it, right? I think the markets would not be going up if there was no appetite, I think, to fund it. So I'm not sort of concerned about it. I am concerned about the distributional sort of the skew or the narrowness we now have, particularly in U.S. growth. I mean, that does create a vulnerability. But the funny thing is, like, it also makes it really hard right now for the U.S. to go into recession. So if you try to sort of, we're running our models, trying to figure out, at what level of energy disruption would the economy break. And basically, the economy cannot break if the equity market doesn't go down, right? So, and if 90% of the equity market is AI, and that is driving, basically, 80, 90% of your consumption of the top 20%, and you have AI capex, then you're really sort of disrupting what's left, and what's left is really small. So now that is not good if you're an average citizen, or you're worried about your job, or you're at the bottom end of the income distribution, and you're becoming delinquent. But at least for the market in aggregate, there's just an incredible level of resilience, I think, that comes with that AI build-out. So the risk then is that, something unexpected happens, that there's suddenly competition out of China where, things are much cheaper, potentially, equally good models, and then you start to question the sustainability of the profit margins, and you have a rethink about the valuations. But you would really need to do damage. You would need the market to correct on sort of a sustained basis by quite a lot, right? It's not enough to have a wobble where the market goes down, goes straight back up. That doesn't do anything. So, and I don't think anybody I speak to on the client side sort of believes that that's that likely right now, right? So there's always nervousness, but I don't think people think we're in the closing or end innings of this build-out. I think we're sort of the early, middle innings, and so this is more to run. And
Aaron, you were talking about the Strait of Hormuz and actually the price of oil. You're not that worried about inflation because you're pushing back expectations for a Fed cut to what next year, 27? Yeah. So what we're actually, we had it in December. We've now pushed it to March, and that is a function of inflation. So we're a bit like the frog that's getting boiled. Like every month, the inflation kept going higher because you're just rolling this backward-dated oil curve is just rolling into our forecast. So every month there's no resolution. We add another month of sort of elevated gasoline prices. And so that is, if you put that into the Fed models, what that's telling them to do right now is to hike. Now, they don't want to do that. I think they want to look through that. But if you look at the same models, by the time you get to March next year, the model's telling them to cut. And so basically what we're saying is, look, provided that inflation doesn't get materially worse from here, and provided that the labor market sort of goes sideways, then they just do nothing. And then they get to March next year. And then the window opens up for Kevin Warsh, I think, to start arguing for some easing. But that's, for now, I think that's very clearly off the table. So you wouldn't see one or two hikes and then cut quickly after that? That makes no sense to me. I think the only scenario in which you would hike is one where unemployment starts to sort of drift lower, despite the fact that we have all this distributional weakness, and so then it's very uncomfortable, because then basically you're starting to miss on both sides of your mandate potentially, right? And then you have to sort of respond. Now, when I look at the labor market data, it's still a bit of a mixed bag, and it really doesn't look that great, right? If you had not had the 20 basis point decline in labor force participation, unemployment would be at 4.7. I look at the beige book. Basically, there's no improvement in the employment data. Even the job openings report we had a couple of days ago, sort of weird, where vacancies go up, but then the quits are low, and then the hiring rate is super low, and so this is not a labor market that is looking very healthy. And so, provided it stays that way, or is it really the functionality?
I think it's so. If you look at the Challenger data, which has layoff announcement data, a quarter of all the layoffs is now attributed to AI. That was 0 a year ago. Okay, so there's definitely an element, I think, of AI creeping. I think certainly into wage formation, confidence. You see it in the Michigan survey. But, the Challenger data is like 5% of the overall labor flow. So I don't think we really know. I think we're seeing the beginnings of it. I don't yet think it is driving sort of the flows, which are, much, much larger.
Aaron, I don't know whether, the ECB, look, we're pricing in something happening this month. Is the Bank of England much trickier?
I think they're going to be much slower to respond, right? So the ECB now looks baked in. I think the tricky thing with all these central bank curves is that I think you have clarity about, I think, the next meeting, right? And then everything beyond that is completely energy dependent, right? So right now I look at these curves and I say, look, there's really, I don't think the Bank of England is anywhere close to hiking, right? So we think the next move is a cut. We think it's February of next year. But of course, that could all change if we see some sudden escalation in energy prices. The shock becomes bigger. They start to worry about second round effects. But for now, if you mark to market, I think where the economy is and where they are, I think we are multiple meetings away from them doing anything, right? So I think the Bank of England wants to be patient. Their economy is in a weaker position, I think, going into this than the Eurozone was. Whereas the ECB, I think, is just starting from a different starting point, and I think they're running more of a 2022 playbook, I think, than the Bank of England wants to run right now. And so, so it looks like June is certainly baked in, and then beyond that, if they can go in September, we'll have to wait and see what happens in the Middle East.
Aaron, thank you so much for joining us. Aaron Captain, they're a global head of economics and strategy research at UBS Investment Bank. Now, coming up, the U.S. says Israel and Lebanon have agreed to a conditional ceasefire. We'll have all of the details next, and this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Well, the former UK Health Secretary, Wes Streeting, says he's not enthusiastic about a quote coronation if there's a change of leadership in the Labour Party. Now, he's indicated that he would go head-to-head with the Mayor of Greater Manchester, Andy Burnham, in a race which could see the UK with another new Prime Minister. Well, I sat down with Streeting at South by Southwest London.
I think Andy will win in Makerfield. When none of us, Andy included, taking it for granted. I think it comes back to this fundamental point, though, which is I can see Andy's strengths. I think he needs to be tested. I think his ideas need to be tested, and so do mine. And I'm probably a rare thing in the Labour Party. I'm a monarchist, but this is one coronation that I'm not enthusiastic about. I think you need a debate. I think you need a battle of ideas. He needs to set out his stall. I need to set out mine. There may be other people. There may be women. God forbid the Labour Party might have a woman leader for the first time in our history, and we've got any number of brilliant women in the cabinet, outside the cabinet, who might want to put themselves forward. And that's the sort of debate we should have.
So if you're not stepping aside, is there anything that you would find wrong with what Andy Burnham is offering the country?
I understand why Andy talks about a north-south divide in this country. And I think that there are real challenges of place and geography. There's no doubt about that. And there is a concentration of power and wealth and opportunity in London and the southeast. The big divide in this country is not north and south. It is rich and poor. It is those who have opportunity and those who do not. It is the haves and the have-nots. That is what is fueling so much of the rising tide of populism we're seeing. And one of the things that the voters that we've lost to both Reform and the Greens have in common is that sense of economic insecurity.
Well, that was the former UK Health Secretary, Wes Streeting, who resigned from his cabinet position last month and is now expected to challenge Keir Starmer for the Labour leadership. Now, the US says Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. Now, there's been no immediate indication whether Hezbollah has accepted the terms of the deal. Meanwhile, the Republican-led House has voted to halt the war with Iran, reflecting growing concerns within the president's own party ahead of congressional elections. Now, for more, Bloomberg's Abir Abu Omar joins us from Dubai. Abir, thank you for joining us. So, first of all, how likely is it that Hezbollah will agree to the terms of the ceasefire?
Good morning, Fran. So, look, I mean, it's worthy to note that Hezbollah has not taken an active part in the negotiations yesterday between Lebanese officials and their Israeli counterparts. Now, those negotiations happened brokered by Washington. And what we came out of that with was that Lebanon had said that, and Israel also had said, that it will stop hostilities with the condition that Hezbollah stops its attacks against northern Israel. Now, earlier in the week, President Trump had said that he'd spoken to high representative from the Iran-backed militia in Lebanon, and they had indicated to him that they were willing to stop the hostilities with Israel. So we tend to believe that Hezbollah has the incentive to stop the hostilities, especially if we're talking about a broader agreement between Iran, the U.S. and Israel to reach that interim deal that we've been talking about over the past couple of months that would enable the unblocking of the Strait of Hormuz, the extension of the ceasefire for 60 days, and then reaching the other concessions. Now, Lebanon, Fran, has emerged as one of the sticking points that Iran was not willing to compromise on. So yesterday proved a little bit of a tilt in a positive direction, but no indication, no response yet from Hezbollah as of today.
Abir, what's the impact of the U.S. House vote for President Trump?
Look, I mean, he's under a lot of pressure domestically. Obviously, we saw a resolution that was passed by both the House and the Senate that would have President Trump rethink the war in Iran. He could obviously veto that, but it just shows the amount of pressure he's under in the United States with surging oil prices, crude products, gasoline prices in the United States. So the U.S. also is incentivized to put an end to this and open the Strait of Hormuz, Francine.
Abir, thank you so much, Abir Abu Omar there in Dubai. Now, Bloomberg also understands that Ukraine's key European allies are working on plans to engage Russia and Ukraine in negotiations to end the war. Now, sources say the allies see a shift in momentum, strengthening President Volodymyr Zelensky's position. Well, let's bring in Bloomberg's Anthony Halpin. Anthony, what do we know about this diplomatic effort?
Yes, it's the big three, as you say, the US, UK, France and Germany, deciding that there may well be a window of opportunity for them to join with Ukraine and try and engage with Vladimir Putin in negotiations to look for a way out of this war. I think they're assessing that perhaps Russia's position is weaker now than it was a few months ago. And at the same time, the US has stepped back because of what's going on in the Middle East. And that's creating an opportunity for Europe perhaps to fill the vacuum and step in and try to find a way out. It has to be said that they haven't had their place at the negotiating table for years. They've been sidelined, particularly by the Trump-led negotiations in the last 16 months or so. And they're looking for a way really that makes them more relevant and to get them into the negotiating table and to find a way that helps Kiev to reach an agreement with Putin.
Anthony, Ukraine has carried out a significant drone attack on St. Petersburg just before President Putin is due to appear. So is he likely to engage with this latest peace effort?
That's something we'll be watching for today. He's due to meet with foreign media chiefs later today in St. Petersburg. As you say, Ukraine made clear that life is not going on as normal in Russia, despite the Kremlin's efforts to present it that way to foreign investors. The drone attack got a lot of attention in St. Petersburg yesterday. Putin himself has said that it's not Europe that is refusing, it's not Russia that's refusing to engage with Europe, but Europe in the past hasn't been willing to engage with Russia. It's not clear that he's ready to take up this new initiative, but that's one key thing that we'll be watching for today.
Anthony, where's China in all of this? I remember one of my highlights actually in the last 6 months was speaking to the U.S. NATO ambassador. And he told me at the time, like 5 months ago, that with one phone call, China could stop Russia's invasion of Ukraine.
Yes, it's certainly the case that Russia is increasingly dependent on China economically because of the sanctions that the West have imposed on Russia. And China has certainly been unwilling to step back from that support. At the same time, they don't want to be cast as the country that's the deciding factor in the outcome of this war. So I don't think we can expect too much change in the Russia-China relationship. China says it wants to see this war brought to an end. It's certainly stood on terms like territorial integrity and national sovereignty. It hasn't backed Russia's claims on territory that is internationally recognized as Ukraine. But it also in some ways serves China's interest for the West to be consumed by the conflict in Ukraine because it distracts from paying attention to what might be going on with Taiwan.
Anthony, thank you so much. Anthony Halpin there with the very latest, of course, on Russia, Ukraine. Coming up, jitters on private credit markets after a big redemption warning. Well, Blair Jacobson, co-president of Ares Management, joins us next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Mega IPOs in focus. Elon Musk's SpaceX aims to raise $75 billion in the biggest stock market debut in history. Bloomberg also learns that Anthropic has lined up banks to lead work on its IPO. The AI rally stalls. A disappointing outlook from chipmaker Broadcom hits sentiment. Plus, the U.S. says Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. Now, there are renewed jitters in private credit markets after a big redemption warning. Shares of the big alternative asset managers fell yesterday after Cliffwater's flagship private credit fund reported even larger requests than in the first quarter. Now, let's discuss the markets and, of course, the future with Blair Jacobson. He's co-president of Ares Management. Blair, thank you so much for joining us. Look, I know there's a lot in private equities and private markets and private credit. What do you think is the pain threshold that we're seeing now and that we'll see in the next couple of quarters?
Well, thanks, Francine. It's great to be here with you. We're seeing a real disconnect between many of the headlines that are being reported and what we're actually seeing in our portfolios. If you think about it, we get signals from 3,000 companies around the world. And what are they telling us? They're growing 8 to 12% per year. We're credit investors, so we look very closely at their statistics. They're trending in the right direction. And there's a lot of discussion and anxiety about distress. We're not seeing it. In fact, when we look at non-accrual rates, which is a prelude for potential defaults and losses, it's lower than what we've seen historically.
But Blair, so why is that? Again, if you have a mismatch into, is it the quality of certain firms or the quality of investment in certain private markets compared to what you're invested in? Because there's something that's going on. You can't tell me that, it's all rosy.
What I would say is if you think about the broader backdrop, the macro situation, yes, there's volatility. We're thinking a lot about inflation, oil prices, and rates. But overall, GDP is growing. We'll grow 2% in the U.S. Europe, UK will grow 0.5% to 1% this year. We're not seeing major distress in the liquid markets for loans and bonds. Even if you look at the big bank earnings, they've telegraphed that charge-off rates for consumer loans, credit cards, C&I loans are actually going down. So I think the broader macro picture is a tailwind for many of these businesses, and it's probably better than what the headlines would suggest.
So there's a large amount of dry powder in the industry, and it's dry powder that's been built up over time. I mean, at some point, does it have to be started to be handed back to LPs, or having some of the tough conversations about what happens next?
So for institutional funds, usually dry powder is available for 4 or 5 years, which tends to be the right amount of time to put it to work. And most managers can then invest through the cycle. What we're seeing today is actually our deployment has been strong. Okay. Again, we have a positive macroeconomic backdrop. And in fact, some of the trends that you speak a lot about on your show around what's going on in the wealth channel, the retail channel, means that less capital is coming into the industry, which means less competition. And when there's less competition, we can actually charge higher interest rates, have slightly more conservative loans and conservative documentation. So we've seen globally deployment has been pretty positive. And there are also some counter-cyclical elements to deployment. When there's nervousness in the markets, that can be good for our special situations business, which had a big fundraise this year, and our secondaries business.
Where do you expect the most deals to come from, sector-wise, but also in terms of countries?
Sure. What we've seen is that U.S. is always the fundamental backdrop to most global markets. It's motoring ahead. It's the biggest market. Europe's a bit patchy, geography by geography. Again, growth is a bit slower. It's more highly regulated. We're seeing Asia pick up also in a meaningful way.
Are data centers overdone?
So let's spend a minute on the digital trend. It's something I personally spend a lot of time with as well. Firstly, we're big believers in this trend. We're all using more data each and every day in our personal lives and our corporate lives. The hyperscalers keep increasing their CapEx projections, $600 billion this year, and now it's $700 billion. All of that will require more data. When you look at data centers today, the demand is actually exceeding supply, and that's a great dynamic. So industry forecasts that $2 trillion of investment will be needed in the next 5 years for data centers. But that's the broad trend, and we don't invest in the broad trend. What we're looking for are specific assets. And we have a view that if you invest in data centers from a development perspective in major metropolitan areas that are more focused on cloud than AI learning models, and also have very significant 15, 20-year contracts and leases with investment-grade hyperscaler clients, that's a great place to be.
And this is what, across the world? Or again, I mean, it seems that everything that happens in the U.S. and gets rolled out.
So it's interesting, if we look at our platform, we actually started investing in Japan first.
Okay.
In Tokyo and Osaka, great markets. We're now active in East London in the Docklands. We have assets just south of Washington, D.C. in Northern Virginia, in Sao Paulo in Brazil. Again, we like to focus on primary markets where the supply demand is favorable rather than secondary or tertiary markets.
We spent a lot of time there on this show and actually on Bloomberg TV at large talking about these mega IPOs. I'm a little bit obsessed with SpaceX to try and understand exactly what happens next. Then we have Anthropic. I mean, does that change the nature of the public markets? Does it also kind of matter to your world?
Yeah, it's a great question. I think we're seeing this opening of the floodgates to these very large mega IPOs that'll take place in the coming weeks and months. But when we look at the overall trend and take a step back at most businesses, there's a definite trend for businesses to be private. The number of companies on the major stock exchanges in the world keeps declining. The number of companies that are private to begin with also are tending to want to stay private for longer. There's so much capital available to fund their business plans through private equity, private credit, infrastructure, et cetera, that I think they want to invest for the long term, which, as you know, is difficult when you're a public company.
So do you see, with these mega IPOs, does it move some of the smaller IPOs to secondary markets? And so would they think actually of going private? Or
It certainly could. So, for example, some of the smaller public companies that are listed, maybe they don't trade much, maybe they don't have much float, maybe it's hard for them to get additional equity capital to fulfill their growth ambitions. That's why focusing more on private markets for them could be a great option.
So we talk a lot about, these inflationary pressures. And at the moment, especially in the U.S., they seem to be canceled out thanks to the boom on AI. Do you worry about rates going up?
So you have to think about where we are. So rates are down around 200 basis points from their highs. And even when we talk about higher for longer, we're still at what we believe is a mathematically comfortable position for our companies. By the way, we just saw how our companies behaved when rates were a lot higher. They made it through. The other thing I would say for most of private credit is we invest in floating rate assets, which means if rates are a little bit higher, our investors make a higher return.
We're starting to see, some of the second quarter requests to exit semi-liquid private credit funds coming in. I guess managers are also imposing some of the new rules or lower withdrawal, limits. How worried are you about the sustained retail investor retreat for private credit firms?
So this is another topic that's very much in the news. Our firm's view is that wealth is not broken.
Okay.
In fact, our wealth business will grow this year. We've said this publicly. We have 8 products, 2 of which are focused on private credit in the U.S. Those are the ones that are under the microscope. But our non-traded REITs are growing, infrastructure growing rapidly. European private credit hasn't really come over those concerns. That's growing, sports, entertainment, et cetera. And I've probably had dozens of meetings with these types of investors. They understand that in order to gain access to institutional quality loans and investments that are illiquid, they need to be in a structure that reflects that. So I think their viewpoint is they are performing well. Again, these underlying funds are meeting what we guided investors to expect. That's high single-digit, double-digit returns, similar levels of yield. And as long as that continues, we think that there's going to be a very bright future for wealth products.
Rating agencies start to now review some of the credit worthiness of BDCs. I mean, is that something that institutional investors, will it make them more risk averse?
So when we think about institutional investors, and again, I spend so much of my time speaking to them around the globe from sitting here in London, I would say they're a lot less concerned about how private credit is moving. They're more looking at what's the next opportunity to focus on. And rating agencies will take their view based on the data that they have. That might impact borrowing costs here and there a little bit. But again, I would encourage you and your viewers to really focus on the fundamentals of how the companies are doing. That's certainly what the institutions are doing. They're continuing to back these types of funds. We're seeing in our own fundraising results too.
I mean, is there something that will change in terms of that relationship, in the next couple of years?
I think when we look at what institutions need, whether they are corporate pension plans, public pension plans, sovereign wealth funds, insurance companies, they have growing liabilities that need asset returns. And if we can continue to generate these types of returns in the future, again, we think that the fundraising will continue. And it's been very, very stable despite a lot of disruption in the world over the past few years. Our firms had record fundraising for 2 years in a row. We had a great first quarter. We said we think this year will be another record for us. And a lot of that is based on institutional support.
Thank you so much for joining us. That was Blair Jacobson. They're the co-president of Ares Management, with a thoughtful and good interview on where the market goes next in private. Coming up, why regulators are also increasingly scrutinizing ties between insurers and private markets. We'll speak to the head of Europe's insurance watchdog. That's coming up next, and this is Bloomberg. From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
I think you're going to see, and Alphabet is the first one to make this decision, I think you're going to see a bunch of them fund a bunch of it with debt, but also raise more equity, because they're starting to think about, okay, what does this look like? It's one thing, what does it look like this year, but what does it look like over the next 5 years? How much capital do we need? How much debt? If you get it wrong, if you totally rely on debt and you get it wrong, you will really regret if you wind up having a downside scenario that's tougher than you expected. We didn't win this in the last 6 months. We won this over the last 20 years.
Wow.
The decision wasn't made. The decision wasn't made until the last 6 months. And there's a lot of things that the team did over the last 6 months that contributed to the ultimate result, which, by the way, now we have to execute. But this is a cumulative effort of lots and lots of people over 20 years. And we first, as a firm, we first met Elon Musk. And the person that first was responsible for covering him was a guy named Stuart Bernstein, who was doing a bunch of stuff around, kind of green energy. And he and his brother had Solar City. And that's where we first connected with Elon. I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital. It's interesting. I've advised companies for years, and at one point 25 years ago, I actually ran the equity capital markets business at Goldman Sachs. That was a job I had early in my career in Goldman Sachs. And I used to say to companies, there are a few reasons to go public. You need the capital. You need the currency. You have to create liquidity for, early investors. But all the other stuff that people talk about is really not critical. We have a lot of things going on in the macro with the war, with the oil shock, supply chains, inflation getting stickier, that are going to have an effect. And, the market may absorb all that differently than it's absorbing it at the moment. At the moment, it's kind of brushing it aside.
And a reminder, you can watch the full conversation on one of my favorite podcasts, Odd Lots. Now, increasingly complex ties between insurers and private markets have led to more regulatory scrutiny. In the U.S., Treasury Secretary Scott Bessent recently met with insurance regulators to talk about their exposure to private credit. It's also something that Europe's insurance watchdog, EIOPA, is looking into. Now, the body says that over the past decade, private equity firms have shown a growing interest in acquiring European insurance firms. Now, we're joined by Petra Hilkuma, the chairperson of the European Insurance and Occupational Pensions Authority. Thank you so much for joining us. I mean, for me, this is the Apollo model, which actually has been doing really well since it started. And so other companies are saying, well, I want to do the same. Could you, with private equity firms increasingly interested in buying insurers, why are you wary of such deals? And good morning. Thank you for joining us.
Well, thank you for having me, Francine. It's a pleasure to be here. And I hope you can see, as a good supervisor, I don't look worried. I look at risk. And what are the risks? What do we see happening in the EU market? And let's make that distinction between, on the one hand, ownership by private equity of insurance firms, and then investment in equity, private equity by insurers. Now, the ownership has come up since the last decades. In the last decade, we've seen ownership going to now 27 firms, which frankly is only 2.4% of the total market, which in itself is not worrying. It's 260 billion assets under management, which is not material. Yeah. But we should not stop there. We need to also think of EU as 27 member states. And if we look in that way, we see that a few member states actually have a representation, have private equity funded ownerships of over 10%. And this is indeed where supervisors need to scrutinize a bit more.
But is it fair to say that this is definitely a trend that started in the U.S. and that's now permeating or creeping more into Europe? And why do you see that?
I would say that, first of all, it's definitely a trend that started in the US and to a certain extent in UK. That has now caught the eye of many. So what can we do next? EU is not that developed, so why not EU? So fair question. In the numbers, we do not yet see that happening. So it's a very steady state already for the last 2 years. And I think there are several reasons for that. But first of all, if you want to move into an EU market with that model, there's two differences you need to consider. One important difference is that you need to match to the life portfolio in EU, which is mostly life with guarantee, with a certain lapse risk, whereas the business so far is based on annuities. And so that is something I would say you need to manage. It's not impossible, but it's something to consider. So,
no, go ahead.
No, and so the other differences we currently see is that most of the investments then made also by private equity backed insurance firms in more private credit is still in mortgages and real estate. Whereas we see also in the US that it is part of financing the AI boom that we currently see. So I think these are two considerations that you need to take on board. But for sure, we're monitoring this because we do see a lot of interest, explorations in the market. Shall we come to EU? And I think it will.
So what's been the feedback from the industry so far? I guess there's a lot more clarity at the moment on how you're thinking of this. So does it entice more buyers or actually does it scare private equity off?
I would say that currently it's really in the exploration phase. What are the possibilities in the EU market? And that is welcome. I think private credit can bring innovation. It brings access to new capital. We need that in the EU. but it should come, I think, with a reasonable understanding of the new risks that it brings, be it liquidity risk, be it credit risk, be it simply the opacity that comes often with it, and the need for transparency and clear valuation to understand not so much who's the owner of the insurer, but who's the owner of the risk.
So studies, I understand, have shown that insurers actually owned by private equity also tend to invest more in private credit. So how much is too much private credit for an insurer?
Well, I would say there is not per se a certain limit that we have, but we have a lot of tools within the toolbox of supervision, which is Solvency II in EU. And the most important one, I would say, is the prudent person principle. And the prudent person principle says, first of all, if you invest in assets, you need to be able to identify, measure, manage, and report the risks. Yeah. So this is where transparency data is essential. And the second is that you need to do that in a way that you take on board the interest of the people you invest for, which is the individual citizens, and we're often talking about pensions here.
Do you think there's an understanding, a sufficient grasp of the risks that they're taking, and how are, I guess, losses in this asset class evolving?
I would say it depends. Credit was bank business, let's be honest. And so if you start to move into this business, you need to step up your knowledge. You need to be able to probability given default, loss given default, and the probability of default. These models you need to develop. You need to have the data for that. You need to have the competence for that. At the same time, you need to have a clear understanding of how your liabilities, the liquidity risk, the liquidity of those liabilities, the needs there, but also the credit risk that you run, the liquidity risk that you run, how that matches with the liabilities. Why? Because if the markets become volatile, and they tend to do that these days, you want to be sure that liabilities and assets move in a matched way, and there is not an increased response in the market because matching wasn't done properly. And this is precisely why we as supervisors are monitoring that very carefully.
Are there any specific insurers that give you cause for concern because of their risk exposure or their involvement with private markets?
Well, let's say that, I mean, I can never discuss individual insurers, but we have individual markets where we see the concentration already of this type of activity being larger than the EU average. And here, for sure, as the EU supervisor, we talk to the national supervisors to make sure they understand. Meanwhile, I would say we're not reacting, we're preventing in a way by publishing a supervisory statement, explaining also to other EU member states, supervisors, what they need to do when this activity starts to happen in their market, what to look for, how to address it, learning from the others that already have more experience.
But is it, I mean, we talk a lot about software companies and
yes.
the fact that they could actually be disrupted by AI in a very meaningful way. Mm-hmm. Is this your biggest concern right now? So that companies invested in that space?
Yeah. So currently, if you look at total assets in EU, 10.5 trillion, of that 5% is private credit at the moment, only 5%. And within that 5%, 80% is real estate and mortgages. Mm-hmm. So my answer is no. We do not see that in that way currently in EU market today. So we're really saying we need to be ready for the future much more, looking at other markets than being concerned about the risks today manifesting itself.
But how difficult is it for a regulator or a supervisor to look at the disruption from AI and actually the risks there that could be, in certain cases, I imagine, systemic?
Well, it keeps us on our toes, first of all, and which is good, and we need to work with it as well. And so I think a lot is about coordination, international and within EU, on what we see and how we deal with that knowledge. And mostly, and this is where systemic risk happens, it's understanding the interconnectedness and through the opaqueness. So less opaqueness helps to understand the connections that are possibly there. Systemic risk often comes up by slowly interconnection growing, not everyone seeing it, and then when risks happen, everyone moving in the same direction, which is not a good direction. So we need to be on top of that.
Thank you so much for joining us today. That was, of course, Petra Hilkuma, the chairperson of the European Insurance and Occupational Pensions Authority. Now, Bloomberg understands some members of the Glazer family, we're talking football, are debating whether to sell their stake in Manchester United Football Club after more than 20 years of ownership. Now, with more details, Bloomberg's Tiwa Adebayo is here. Tiwa, we're all obsessed. We're all football mad because of the World Cup. So there are, we understand, so Bloomberg Scoop, there are internal discussions. What do we actually know about the Glazer family?
Well, that's right, Francine. A Bloomberg exclusive today. There are these initial talks about whether or not to exit from Manchester United for the Glazer family. In terms of the family itself, they're worth about $10 billion. They've got interest in other sports teams like the Tampa Bay Buccaneers. But these are just initial talks, and there are said to be some members of the family that are against this, and you'd need their support if a sale were to take place. But this is really crucial because that 20-year tenure for the Glazer family at Manchester United is one of the longest in English football history. This is also quite a crucial time for Manchester United. There's talks about upgrading the famous Old Trafford Stadium. That could cost billions of dollars, but it's also something that a big football club needs. We've seen that happen with the likes of Tottenham Hotspur recently. And, of course, we should mention, sorry to any Man United fans, they've had some mixed performances recently, got rid of a manager this season. So a crucial time for the club and for the company as well.
So how much interest would there be if these shares are offered for sale?
Well, the last time that there was a sale like this talked about in 1998, we had the likes of Rupert Murdoch interested in Manchester United. So there's likely to be a lot of interest both on the Middle Eastern side. We've seen the success of the Qatari sports investment arm of their sovereign wealth fund with PSG. They've had great success. Wealthy US families. The Kroenkes at Arsenal have had, again, good success there. So we'll see quite a lot of interest, but it's likely to come at quite a steep price. Interest in M&As like these has been growing recently. So whoever gets to own this club, if there is indeed a sale, will have to pay quite a lot of money for it.
Tio, thank you so much. Great reporting there. And, of course, the Bloomberg Scoop, Tio Adebayo, on the latest with the Glazers. Now, if you're a terminal user, you can also watch Bloomberg MLive's Money and Macro event at 5 p.m. London time. I'm not going to miss it because it's going to be really good. And this is under the umbrella of finding value in an AI world. So that's the theme. Of course, it features the anchors from the opening trade. So that's a definite bonus for me as well. Use the function LiveGo, L-I-V-Go, to tune in. Up next, Bloomberg Brief, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks, record rally, losing steam as earnings forecasts from Broadcom and CrowdStrike fail to impress. J.P. Morgan's Jamie Dimon kicking off an unprecedented nationwide marketing push for the SpaceX IPO, even though he's not on the lead left. And Iran says there has been no progress in peace deal talks with the U.S. Let's get a check on the markets around the world. We go to Winnie Su in Singapore for the latest from Asia. Winnie?
Good morning, Matt. We are seeing Asian stocks pulling back today with these concerns around the AI demand slowdown, especially following disappointment from the results from Broadcom. And that's also raising some uncertainty in terms of the demand visibility for the AI supply chain. And hence, you can see that the tech-heavy gauges in Asia, including South Korea's Kospi Index and Japan's Nikkei 225, both falling more than 1%. Now you flip aboard, we take a quick look at cross-asset picture because we have the Japanese yen here strengthening just a bit after we've heard that the Bank of Japan's officials are considering to discuss a quarter percentage point rate hike in June, following another potential rate hike later this year. Now, otherwise, we are looking at some weakness across the Asia FX, with the Korean won hitting its weakest level since 2009 against the dollar, despite officials sounding some intervention risks as well. And also we have the Indonesian rupiah hitting another record low.
All right, Winnie, thanks very much. Let's go to London now for a look at what's going on in Europe. For that, we go to Justina Lee. Justina?
Good morning, Matt. Now, there might be no progress in the U.S.-Iran talks, but we are seeing kind of a little bit of a move down for oil, and that's kind of being reflected across markets today. I mean, the stocks Euro 600 down a little bit, but kind of it was up a little bit earlier, but generally trading in the range. Same with short and bond yields. Now, I can bring to you two inflation reports from outside the Eurozone ahead of the ECB meeting next week. Now, first off, we kind of got the CPI from Sweden, which is showing kind of less of a gain than a lot of economists expected, and that's being reflected today in the Swedish krona kind of strengthening a bit kind of against the euro, and with economists kind of also not really expecting the need of a move from the central bank over in Sweden. Now, another place where you might not really need a hike is also Switzerland. So we flip the board here. We can see that all year long we've seen some strength from the Swiss franc, and that's probably helping counteract some of those inflation pressures coming from the oil move. And that's also why we're not seeing kind of a big move up in inflation also kind of in Switzerland. And so maybe over there we might not get a rate hike, but of course the focus will also be on what the ECB does next week, Matt.
All right, Justina, thanks very much for that. Let's take a look at what's going on in U.S. futures. We're looking at a 0.5% drop here after we fell in the cash trade yesterday. NASDAQ futures down more than 1% on the disappointment from, let's be clear, the beats that came out of Broadcom, the increase that came from CrowdStrike. It just wasn't enough to meet expectations. The small caps gaining a little bit. In terms of what's going on with treasuries, let's look at U.S. yields right now. You can see we're looking at a drop on the 2-year of 2 basis points to 4.0617. The 10-year coming down 1 to 4.04828, and the long bond still holding under 5% at 4.9867. In terms of what's going on with oil, as we get really conflicting messages out of the White House and the Middle East, you see NYMEX crude coming down $1.39, but still at 94.62. Brent crude off 151 to 96.30. And by the way, Bitcoin is still well under 70,000 at 63,368. Just continues to lose ground, and that may be a risk-off signal as well. For some of the single stock stories that we're following, let's get out to Chloe Melee in London. Chloe?
Good morning, Matt. Let's start with two stories of big tech companies failing to meet sky-high expectations. We've got shares plunging for both Broadcom and CrowdStrike this morning after their respective outlook failed to meet expectations, disappointed investors, and essentially put a stop to a blistering rally for both of those companies. The Broadcom story in particular is actually dragging down some of the other AI-related names in Europe and Asia as well. So that's really a key story to keep an eye on. Moving on to PVH, the owner of Calvin Klein and Tommy Hilfiger, which is seeing a lot of weakness this morning, down more than 21% after guidance missed expectations. This seems to signal that the company is really being hit by this weaker consumer spending, especially in Europe, where that was really the weakest region. And finally, let's end with Universal Music Group, which is also in the red this morning after Bill Ackman sold his stake in the company. This comes just a few days after Universal rejected a bid from Ackman's Pershing Square, saying that the deal was not in the interest of shareholders or the artists that it represents. And so we are seeing Ackman now moving on from the company and Universal down on the back of that.
All right, Chloe, thanks very much. Chloe Melee out in London with the single stock stories for you. Coming up this hour, Sharon Bell of Goldman Sachs and Rhonda Vansay Sharp, president and founder of the Women's Institute for Science, Equity, and Race. But first, the U.S. says that Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. Israel and Lebanon reaffirmed that they have no hostile intent toward one another and committed to continuing direct negotiations to build confidence and work toward a comprehensive agreement. I'm reading a direct quote there. I assume that's from President Trump, but we'll find out in just one second. Iran has said, though, that there had been no recent progress in talks with the U.S., despite Lebanon being a major sticking point. Joining us now is Bloomberg's Abir Abu Omar. So, Abir, what do we know about this? President Trump insists that there will be a ceasefire, and yet the fighting continues in southern Lebanon.
The fighting continues in southern Lebanon, Matt, and also we heard from the Iranian side through Foreign Minister Abbas Araghchi saying that there's no real tangible progress in the broader talks towards an interim agreement. But perhaps something positive that happened yesterday was that Israel and Lebanon met in Washington to discuss ending the hostilities, and Israel said that it will end the hostilities if Hezbollah, which is backed by Iran, stops its attacks against northern Israel. Now, what we saw over the past 40 minutes or so is that Israel has been continuing its attacks against the southern part of Lebanon, close to the Zahrani River that is close to the borders of between Lebanon and Israel, and close to Nabatea, which is where Israel has its deepest incursion in about 25 years. So we saw those attacks continuing. We've had attacks against Gulf countries over in this week. We spoke yesterday about the attack against Kuwait and the airport there, the main airport there, that led it to suspend flights because of some significant infrastructure damage. One person was killed, several others were injured, Kuwait reported. Iran said that the leaders there have to take responsibility for those attacks. So what we know is that the talks towards a broader agreement where Lebanon was a sticking point are still lagging. President Trump did come out overnight and say that a deal in theory is imminent. He said that talks could continue this weekend, but then he went ahead and said, but they may not. And so we go back to this back and forth between Iran and the United States that has been going on for about 2 months now. President Trump did say, however, that once an interim deal is approved or reached, that MOU that we've been talking about that would lead to the opening of the Strait of Hormuz and then an extension of the ceasefire for 60 days, he said that that MOU, as soon as it is signed, the Strait of Hormuz would open imminently. And look, both sides are incentivized at this point to reopen the Strait of Hormuz. Iran for the economic damages that it's been suffering. The U.S., I mean, you would know better about this, but the House and the Senate yesterday approved a resolution that would have President Trump rethink his actions in Iran. Now, obviously, he could veto this and not act upon it, but it just goes to show how much pressure he's facing domestically to end the war in Iran by both Democrats and some Republicans.
All right, Abir, thanks very much. Abir Abu Omar keeping us updated on the latest out of Dubai. That statement that I read, by the way, was a joint statement, apparently, between the U.S., Lebanon, and Israel. Of course, the missing link there is Hezbollah. Meanwhile, over in Washington, the House voted to stop the Iran war, with 4 Republicans joining all the Democrats present to pass the resolution, the most GOP support so far, or rather opposition. Joining us from Washington is Bloomberg Government's Mika Solner. So, Mika, what does this actually accomplish, this resolution? Because it still has to go to the Senate, and of course, President Trump would have to sign it, right?
Yeah, so this is a significant bipartisan rebuke against President Trump when it comes to the Iran war and his efforts abroad there that seems to continue to have no end in sight right now and is continuing to drive up costs. And the four Republicans are very interesting because we saw Congressman Brian Fitzpatrick, who Trump has continuously criticized online, Thomas Massie, no surprise there. But we also saw members like Tom Barrett, a vulnerable Republican from Michigan who's running for re-election, as well as Warren Davidson, who's increasingly taken some votes to break against the administration as well. So these four votes were interesting, but I think it shows a growing frustration on Capitol Hill with the way that the president has approached the military operation in Iran.
So what result will we see from this? I mean, I know the Senate also had some legislation written that it still needs to take action on. How does this hamper or help the president?
Yeah, I think it's going to be interesting to see what exactly the Senate does. We know that there are also Republicans on the Senate side who are growing increasingly frustrated with the war as well, and who have been not afraid to be critical of the way that Trump has handled, have raised public questions about what exactly the administration's objectives are in Iran. So if the Senate does pass the resolution, it will be a defining moment, I think, that if this goes to President Trump's desk for a signature. But we should expect to hear from the president later today. And, you know, it's very possible that he may comment on this, but we have yet to really directly hear much from the White House on, you know, the latest.
Got it. Mika, thanks so much for joining us. Bloomberg Government's Mika Solner talking about that War Powers Resolution Act, and we'll watch for comment from the president. That's half of the disappointment in the market today. The other half, of course, the tech story. Stock futures lower after the S&P 500 snapped a 9-day winning streak as Broadcom slips on, I guess, disappointing guidance on its AI chip revenue. For more, Matt Bloxham at Bloomberg Intelligence joins us. And Matt, I'm a little bit I guess, astounded, because Broadcom is essentially saying we're looking at 200% revenue growth for our AI chip business, and that's not enough for Wall Street.
Yeah, exactly. It's quite staggering, isn't it? And I think it just shows you where expectations have got, specifically for Broadcom, but also, you know, for the wider AI market. But yeah, you know, as you say, in isolation, 200% year-on-year growth, you know, after a quarter print, which was 143% growth. So it's an accelerating rate of growth. Yeah, I think in isolation is actually a good demonstration that they are executing pretty well on their transition to a much more AI-focused business. And just like, you know, a kind of realignment of where market expectations have got to. Yeah, they're talking about $16 billion of AI revenue in the next quarter. The market's at just over $17 billion. It's still entirely possible that they could hit that $17 billion. So, you know, I think we're just we're in a phase where there's a lot of volatility around that AI trade. You know, some prints get accepted well, some not so well. But, you know, overall the momentum is pretty positive right now.
Yeah, and I guess the 5 trading days previous, they had added $270 billion in market caps, and the shares in 5 sessions had added an IBM or had added a Salesforce. It's pretty amazing, these numbers. Also, CrowdStrike, it's getting hit in the pre-market trading after it raised its revenue forecast.
Yeah, and again, I think this is just an expectations management situation. I'd say they were kind of slightly better results for the quarter. I think the guidance range just essentially brought the company up to where the market already was. So I think, as ever, the market's looking for a beat and raise. We had the beat, but not the raise, or at least not the raise above where the market already was. So I think, again, just a kind of a recalibration of market expectations there.
All right, Matt, thanks so much for joining us. Matt Bloxham of Bloomberg Intelligence talking to us about the other half of disappointment you're looking at in equities today. Let's get to some of the top stories trending on the terminal this morning. Partners Group says it's ready to gate other evergreen funds. According to the Swiss firm, 3 other mature evergreen funds with a total fund size of $9.7 billion are also estimated to see redemptions between 3.5% and 5% in the second quarter. The announcement comes a day after the firm capped withdrawals from one of its PE funds on Wednesday. Of course, we talked to the CEO in this program yesterday. Bloomberg sources say Bank of Japan officials are set to consider a quarter percentage point rate hike this month when they meet on June 16th. This would raise the policy rate to 1% flat. Officials see more hikes beyond that, citing persistent upside risks to inflation and still low real interest rates, though they have yet to act so far, as we discussed also yesterday on this program. And some members of the billionaire Glazer family are debating whether to sell their stake in Manchester United, the soccer team, after more than 20 years of ownership. Sources tell Bloomberg that some family members raised the idea and are now trying to convince others to join them. Any potential sale could attract interest from suitors, which include Middle Eastern parties and wealthy individuals in the U.S., as well as apparently Rupert Murdoch. Coming up, Jamie Dimon gearing up to pitch SpaceX, the SpaceX IPO, to JP Morgan's ultra-rich clients, even though they're not on the lead left. More on that next. This is Bloomberg.
We have liftoff. Go Super Heavy. Go Starship. Thanks for all the historic flights, Bad One.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. JP Morgan CEO Jamie Dimon getting ready to host a live interactive discussion today to pitch SpaceX's upcoming IPO with high net worth clients, with thousands of them. Joining us now is Bloomberg's Benedict Campbell. And Benny, this is, to me, fascinating on so many levels. He's probably the most respected bank CEO in the world. He's going to talk directly to thousands of his own private wealth clients to sell these shares, even though JP Morgan's not on the lead left, right? Goldman Sachs and Morgan Stanley are running this IPO.
Yeah, you're right. But this gives you a sense of just how everyone is scrambling to get a piece of this pie, and it's a huge pie. We got the price yesterday, $135. The listing, $75 billion. Retail investors obviously will be allocated a fair size of this. We're hearing about 30%, which is above what would normally be allocated to retail investors. So this is an important part of the story, and Jamie Dimon obviously trying to sort of play an important role in this. As you said, they're not the lead bank on this. That's a glory that went to Morgan Stanley and to Goldman Sachs, importantly. But yet again, this is such a big story that everyone wants to be part of this, and clearly Jamie Dimon wants to be part of that as well.
I think it's worth repeating how unique this is in terms of an IPO, in terms of book running. You and I have worked together for 25 years now, Benny, and I've never seen a company just come out with a price. There's always a range, and that hasn't happened here.
Yeah, this is one of the more unusual elements in a very unusual listing to begin with. I mean, a lot of things, starting with the listing that came out last week and some of those really mind-boggling numbers that we saw. So this sort of trend continues, and it shows us that Musk is doing things his way. He's doing things the way he prefers. He's obviously got very tight control of the company. He'll retain control over the shares. He can really nominate the board at will. And this is one more step the way he's going about it. There might yet be some movement on the shares, but unlikely. So we're settling on this 135 number, and that gives us the valuation just shy of 1.8 trillion. And importantly, if the stock bounces on the first day, and at this point it feels like that's going to happen, we will see the first trillionaire in Elon Musk because of his stock holdings and because of just the high demand for this offering.
All right, Benny, thanks very much. Bloomberg's Benedict Campbell covers aerospace for us out of Berlin. You can see the Brandenburg Gate there behind him. And we're expecting, by the way, these shares to start trading at the end of next week. Coming up, Meta may have taken on more AI investment than it can realistically handle. By the way, SpaceX's valuation will already put it at a higher market cap than Meta. More on that and a look at what else is making headlines on your front page next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital.
That was Goldman Sachs CEO David Solomon speaking on Bloomberg's Odd Lots podcast about the IPO boom. Be sure to check out that full podcast interview, and all of their episodes is one of my absolute favorite podcasts. It's time now for your front page news. First up, the New York Times leading with the House reining in the White House and President Trump on the Iran war. A measure to direct an end to the U.S. engagement in Iran passed with 4 Republicans in support. The Senate now needs to vote on that measure. Next up on the Washington Post, President Trump's plans to nominate acting Attorney General Todd Blanche to a full term. The Post said Blanche's Senate confirmation process could face tough headwinds. Some Republican senators have expressed hesitation about Blanche, specifically questioning comments he made that appeared to excuse violence committed against the police on January 6th in the attack on the Capitol. This is Bloomberg.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything. And he ended up paying for the production costs.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. Stocks, record rally losing steam as earnings forecasts from Broadcom and CrowdStrike fail to impress. JP Morgan's Jamie Dimon kicking off an unprecedented nationwide marketing push for SpaceX shares, and Iran says there has been no progress in peace deal talks with the U.S. a day after the White House said Israel and Lebanon will stop fighting. Now, in terms of what we're looking at on futures, S&P futures down 0.4%, and this after the S&P yesterday closed down 0.75% in the cash trade. You can see that NASDAQ futures are down more than 1%, and Russell futures are actually slightly higher right now. We do see yields coming down across the curve. The 2-year yield down 2 basis points to 4.06. The 10-year at 4.48 off 1 basis point, and the long bond down under 5, still at 4.9877. Take a look at what's going on with oil, because although it is down, it's still holding around the same levels we saw yesterday, with NYMEX crude trading at 94.91, off 1% and change. Brent crude down 1.5% to 96.36 a barrel, and Bitcoin now trading at $62,674 a piece. Let's get a look at some of the individual stock stories we're following for you this morning. For that, we go to London and Chloe Melee. Good morning, Chloe.
Good morning, Matt. We've got two big tech companies, Broadcom and CrowdStrike, disappointing investors, and we have their respective outlooks coming in below what were sky-high expectations. And so we're seeing that really drag down those shares, but also drag down the rest of that tech hardware sector in US, Europe, and Asia. And so this is really denting sentiment around AI. And so it will be a big story to keep following throughout the day. Moving on to PVH, which is a retailer that owns both Calvin Klein and Tommy Hilfiger, and we are seeing a huge drop in the shares this morning, down almost 23% in pre-market trading after guidance disappointed estimates there as well. And so it seems that the company is dealing with that pressure from weaker consumer spending because of the Iran war, and in particular Europe was a region that was struggling for that company, and so we're down massively there this morning. And finally, let's end by going over to Europe, where Universal Music Group is also seeing some weakness after Bill Ackman sold his stake in the company, and that comes just a few days after Universal rejected a takeover offer from Bill Ackman's Pershing Square, saying that it undervalued the company. And so we are down about 7% in Amsterdam this morning for the record label.
Got it. Chloe, thanks very much. Chloe Melee with some of your stock mover stories out of London. We are looking, by the way, at some economic data this morning. We're getting challenger job cuts for the month of May across the ticker, and they've risen 3.4%. So more job cuts in the month of May than the same month last year. The total number of job cuts as recorded by Challenger is 97,006. So we will watch. Right now, I'm just looking at U.S. 2-year Treasuries to see not a lot of reaction in the Treasury market, and it's something that we're going to take into account in a week of labor data. Now, let's take a closer look at Broadcom. As you just heard Chloe say, its chip sales growth forecast of 180% failed to impress investors, I guess, even loftier expectations. They want to sell, I think, $56 billion of AI chips in the full year. That's incredible growth, but the shares have already risen so much so fast. In fact, over the past 5 years, Broadcom shares with reinvested dividends are up over 1,000%. So they're down 12.8% in the pre-market. Matt Bloxham of Bloomberg Intelligence joins us now to talk about, this incredible run-up, Matt, and expectations obviously match that. So I guess 180% growth isn't enough to meet those expectations for now.
Yeah, that's right. I think the market was looking for even stronger growth. So if you look at the forward quarter, they guided to about $16 billion of AI-related revenue. The market was looking for over 17. Now, the momentum is improving quarter on quarter, so I think there's still a chance they could kind of get close to that 17 billion. But it just kind of shows you, where expectations have got to on this company. I think if you look in isolation, the company's doing a great job at this transition towards an AI-oriented business. They've got big and expanding deals with all of the major AI players. So I think the outlook's pretty rosy. It's just, the shares have ramped up a lot, and the market expectations were just perhaps a little bit too frothy.
CrowdStrike shares also had done really well coming into earnings. I mean, just a major spike. Year to date, I'm looking at a gain for CrowdStrike of already 60%. So when it raises its forecast after a beat only by, let's say, 30, 40, 50 million dollars, it's just not enough to meet expectations, is it?
Yeah, that's right. And I think it's a similar story to Broadcom that the market had already penciled in fairly optimistic expectations for growth for this year and beyond. And the guidance raise essentially brings the market up to a level where analysts were already sitting. So no encouragement to kind of raise consensus estimates ahead. So, people are always looking for the beat and raise. We had the beat on the quarter, but we didn't have a big enough raise to kind of really push the stock higher.
All right, Matt, thanks very much for joining us. Matt Bloxham covers the tech stories for us on the Bloomberg Intelligence side. You can follow his research by typing BIGO on your terminal. Joining us now is Sharon Bell, Senior European Equity Strategist for Goldman Sachs. And Sharon, let me get first your reaction to this market. I mean, when Broadcom comes out and says we're going to grow our AI chip sales 180%, and that's not enough for investors, what does that tell you?
I think it does tell you that the market's been very concentrated recently. It's been very much driven by the thematic of AI and all the expectations related to it. You can see the growth is coming through. I mean, the companies that are reported in the first quarter, that are reporting now, are still making numbers, if not beating numbers. But there is an awful lot of expectation embedded in there as well. And you see that in the valuations. You see that in the recent share price performance.
We have seen, AI stocks, especially in the U.S., where obviously they're most concentrated, I guess outside of South Korea, drive the S&P 500 to a gain of already more than 10% this year. We don't see those kind of gains in European stocks. And I guess it's mainly because, Sharon, you just don't have the same kind of tech presence in European indexes, right?
No, we don't. We don't have the same concentration across Europe. I mean, there are tech companies, and they have, in general, been doing very well. But you've also got other companies which are, in some senses, related to the tech story. You've got the industrials. You're going to need a lot of asset-heavy capital investment, driven by data centers in particular, but not just data centers, energy demand, defense, things which governments are spending on too. So there are themes in Europe that are doing well. It's not just an AI-driven story in Europe. But yeah, you're right. I mean, the US market's up 10%, Europe's up about 5%, and I do think that's the difference in sector exposures.
Do you expect that to continue? Because last year we saw European indexes for the first time in recent memory outperform the U.S., really trouncing U.S. performance. And it seems to be an outlier if you look at the performance of those two markets versus each other over the last, say, 10 or 15 years.
Completely. I mean, the US had, since the financial crisis, really, almost every year, very unusual years for Europe to outperform. Almost every year, the US market outperformed Europe. And not only that, the dollar was generally rising during that time. So investing in the S&P, you may have gained from a stronger dollar, and you gain from stronger equity prices relative to Europe. I think it's been more mixed recently. In the last year and a half, you've seen periods of European outperformance, periods of US outperformance. I do think it depends a little bit on the tech trade. Obviously, Europe has a much smaller weight in tech than the US. But it depends on other things as well. Europe is a less expensive market than the US. It's a market which a lot of investors globally, including US investors, are looking to diversify into. They're buying global ex-US funds, for example. This is a route to diversifying away from extremely expensive and concentrated exposure in the US. Now, that exposure has done well, and the earnings growth, as we just discussed, have been great. But you can also pick up some good value plus earnings growth in Europe as well.
What does the AI trade or really the infrastructure build-out, Sharon, look like in Europe? Because on this program a couple days ago, we were talking about major investment by SoftBank and Samsung into France. They have a wealth of power due to their reliance on nuclear. Meanwhile, Germany has been caught out by relying on Russian gas for so many decades, and they really are looking at a shortage in terms of their power needs.
I agree. Look, generally speaking, Europe does not have energy independence. Different countries differ, but overall, Europe does not have energy independence. That being said, Europe has been quite resilient over these last couple of months with the Straits of Hormuz being closed. Europe gets energy from North Africa, it gets energy from America, it's ramped up renewable energy supply over time and will continue to do so. As you say, France has got nuclear. So there's a bit of a diversified portfolio of energy for sure in Europe, but doesn't have the energy independence that, say, the US market has. And that may be a factor in curtailing the big growth in data centers. But what I actually think is probably going to be more of a factor is regulation, planning permission, just getting through the bureaucracy that you often see. So I do think Europe will be behind when it comes to the rollout of those things. But European companies, the listed companies on the stock market, tend to be quite global. So they've got access to growth in these areas across the world.
So what is an investor to do, Sharon? I mean, sitting in the middle, say a pound investor, where should she put her money?
I think it's a good idea to diversify. I mean, you definitely want some money in the US, you want some money in tech, you want some money in all those growth areas, although in lots of cases they're now quite heavily priced as well. So I would recommend diversifying. This is something we've been arguing for the last 18 months or so. You want to have exposure to Asia, to the US, to Europe. I think they've all got different characteristics. You've got tech exposure, obviously, very concentrated in certain companies in Asia and in the US. In Europe, you've got a lot of exposure to what we call halo assets, which is heavy assets, low obsolescence. These are types of companies like energy, utilities, telecoms, industrials, which we're going to need to build out all the infrastructure we need in the next few years.
So how much does the war in the Middle East, the U.S. war in Iran, matter? I mean, I guess you watch, like us, the headlines day by day, but does it change your investment thesis?
I'm actually being surprised at how resilient Europe has been so far, but it's certainly a negative, and it's particularly negative for the consumer discretionary areas in the market. And Europe is very vulnerable. Europe doesn't have energy independence. We are reliant on getting energy from the rest of the world. That has pushed up prices. That is hitting the consumer in Europe. Now, from a stock market perspective, consumer discretionary stocks are small versus, say, the energy sector, which is a big sector. So we've still seen earnings rise for Europe, and that's largely been driven by energy and tech and a little bit of financials with higher interest rates helping there. But there is a group of companies, consumer discretionary names, which are going to be much more vulnerable. So yes, it's certainly a negative. And I think, obviously, Europe will be one of the biggest beneficiaries if and when we see the Straits of Hormuz open again.
Sharon, great to talk to you this morning. Thanks so much for joining us. Sharon Bell there of Goldman Sachs out of London. Let's get to some of the other top stories trending on the terminal for you this morning. Lebanese President Joseph Aoun says the ceasefire with Israel could begin within 24 hours after the parties involved got approval. U.S. mediators will decide on the time and mechanism of the truce. Aoun's remarks come just after Hezbollah said it fired missiles at Israeli troops in Lebanon. Partners Group says it's ready to gate other evergreen funds. According to the Swiss firm, 3 other mature evergreen funds with a total fund size of $9.7 billion are estimated to see redemptions between 3.5% and 5% in the second quarter. The announcement comes a day after the firm capped withdrawals from one of its PE funds on Wednesday. And D.E. Shaw is extending the time it will take investors to fully exit 2 of its biggest hedge funds. The firm joins Millennium and Citadel among firms trying to keep client cash for longer. According to Bloomberg sources, D.E. Shaw will also shut down 2 smaller multi-strat funds managing less than $10 billion. Coming up, the tech sector in the U.S. announcing the most job cuts in nearly 2 years, according to Challenger data. We'll discuss more on the labor market with Rhonda Vance Sharp, president of the Women's Institute for Science, Equity, and Race. Next, this is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Challenger job cuts data say May job cuts were up 16% versus April. Tech leading the U.S. in layoffs with over 38,000 cuts. Companies citing AI as the leading reason. Rhonda Vance Sharp is the president and founder of the Women's Institute for Science, Equity, and Race, where she exposes economic inequalities by breaking down data by race and sex. Her work informed former President Biden's executive order on advancing racial equity. Rhonda Vance Sharp joins us now. So, Rhonda, when we look at these job cuts, companies using AI as an excuse to cut jobs, or maybe they are actually replacing some functions with artificial intelligence, who does it affect the most?
So that's a twofold question. I think it's going to impact folks who are coders. If you'll remember, we've had this huge push in getting people to be coders, computer programmers. I think they're going to be impacted, especially at the junior level. We are using AI in my organization to help us through some coding. I think it's what we already know. It's just going to affect new entrants into the job market because AI, I'm going to put in quotations, is cheaper than bringing on a new employer. And then I think it's going to affect some of the older workers who don't have the skill set or willingness to learn AI technology.
Yeah,
I don't think it's a single story. I think
I was going to ask about that. But because I wonder what the data shows. In my experience, anecdotally, I see my parents both in their late 70s. My father has absolutely no idea what artificial intelligence is. My mother uses it like oxygen. So are older people left behind, or are they using this technology?
I think they are. I think they are behind, but that's not a surprise to us, right?
No.
I think many of us come to technology as we are required, right? As everything moves towards it and you have no choice. But I also think the important thing to realize is, what are we talking about when we're talking about AI? Many of us have had AI and been using it for years. The spell correct on your phone. AI is powered behind Word documents when we're looking at spell correct. So I think it's important to differentiate what we mean by AI And in many instances, we're talking about using some of the AI agentics like Claude, my favorite, ChatGPT, Gemini. We are talking about those tools, Magnus and some others, not AI, right? Because many of us have been using that for years and just not unaware that we were using AI.
How about, using these, Claude or ChatGPT specifically? In my experience, in this office, as far as I can tell, women really lead that charge. But I've seen stories that say more broadly, women fear being left behind with this technology.
And that's rightfully so, because if we think about the conversation, it has suggested that women are not in tech space, that women haven't been receiving the degrees in computer science, information science, mathematics. I think I recently looked at some numbers, and those are the areas where, depending on the racial and ethnic demographic, men earn degrees in those fields 2 to 1 pretty much to women. So I'm not surprised that women are concerned, nor am I surprised that women are leaning into using AI, because if we don't have coding skills, many of us may see this as our equalizer.
What about young people? We've heard so much during, it's graduation season, and so many speeches focused on the evils of AI. I saw a Gallup poll that said people ages 14 to 29 feel hopeful. 18%, I should say, just 18% feel hopeful. That's down from 27% in 2025. So a dwindling number of young people are optimistic about this technology.
And I think that's rightfully so. I think we have this assumption that they're not listening to the news, but I suspect that they are hearing the ways in which AI is making the job market tougher for recent graduates. So if you factor that in, and the fact that the younger generation seems to be more environmentally conscious, it doesn't surprise me that they have concerns about AI, both from the standpoint of what it means for their economic security, but also what it means for their independence in terms of being able to get a job.
Rhonda, great to spend some time with you. Thanks so much for joining us. Rhonda Vance-Sharp there of the Women's Institute for Science, Equity, and Race. Coming up, more jobs market data on deck in your day ahead. And, of course, we get the all-important non-farm payrolls number out tomorrow. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead today. First up, jobless claims coming at 8:30 a.m. Eastern, like they do every single Thursday ever for your entire life. Then a marathon of Fed speak this afternoon from Barkin, Bowman, and Schmidt. Plus, don't miss our interview with San Francisco Fed President Mary Daly. That's at 11:40 a.m. And all eyes on SpaceX. Formal marketing for their record-breaking IPO expected to kick off today. Jamie Dimon himself going to sell shares to high-net-worth investors at J.P. Morgan. In terms of the movers we're watching, Broadcom is one of the big ones, down 12%, although it's added $270 billion in market cap over the past 5 trading sessions. CrowdStrike down more than 10% after not raising its outlook enough. And you can see PVH also losing almost a quarter of its value, the owner of Calvin Klein and Tommy Hilfiger, with a weak outlook. In terms of futures, we're looking at losses. In terms of crude, also down 2% to 95.84. And you can see the 10-year yield losing 2 basis points to 4.4729. That does it for Bloomberg Brief. Surveillance is ahead. And, of course, my program, Open Interest, today like every weekday from 9 a.m. to 11. This is Bloomberg.
What did you do in New York before the Martin Escobar riots?
I caught up with some kids from Columbia University. Eclectic kids, some from Brazil, some from a bunch of really interesting different places. Next question. What scares you today about the future?
I love this question.
Would you like to take it?
Yeah. I mean, for me, again, the uncertainty is something that I am very scared of. Like, as of today, I think I have a stable job after my school, and like, touch wood, probably I'll pay my tuition fee back. But again, I don't know whether the space that I'm going in is the right space, because I don't exactly know what's changing in the future. So that's one thing that I'm scared about.
I would say I'm scared of a world where countries are less friendly to each other. I think that I'm from South Africa, as I said before, and you know, we were just in South Africa recently on a trip meeting with business leaders, and they were telling us all these collaborations they have with American companies. So I really think that that kind of collaboration is what makes the world a better place. It's what makes all of us better off. So I'm really afraid of where the world is going, where countries are becoming more insular.
Would you like to go next?
Yeah, I mean, I think for me, I worry most about climate change and I worry about rising inequality. I think the sentiments you're expressing, I'm very worried about. But to me, part of the root cause is rising inequality, and those two things, coming from a society that had really extreme inequality, your social health, your quality of life in some ways is much, much worse as a result of living in a society where people have a small minority has a lot and the majority has very little. It makes me concerned about how well I can live here in the long term.
No, what scares me the most, and I think everyone said very similar things, is that our current leaders do not have a moral compass. And our leaders should collectively be pushing back on some of the things that have happened in the past years, and that there is no moral obligation, it seems like, anymore. And I find that to be a real disappointment, not only in this country, but globally. And we should look to our current leaders and say, and hold them accountable. Like, what are you doing? And so that's kind of what I'm scared of.
With Nikhil, what are you scared of?
I think the world feels like it's breaking. Two hot wars, trade is collapsing. The rules that held the world together for 80 years are being rewritten. This is a conversation about survival, not the survival of a startup, but the survival of an entire generation. Martin Escobari knows what chaos looks like. He grew up in Bolivia in the 1980s. 35,000% inflation, 11 presidents in 10 years. His family lost everything in a revolution. He moved to Brazil, built through crisis, studied what separates great companies from the ones that don't make it. Martin is the co-president of General Atlantic, one of the largest growth equity funds in the world. Later, I bring in Aryan. He's 21, grew up in Mumbai, cold emailed Sam Altman, got a meeting, moved to SF, started a company. I wanted to put them together and ask two questions. Let's start with the most important question. One, personal. What does it take to survive chaos? Can it be taught? And one for India. We have 1.5 billion people, more engineers than anywhere, more capital than before. Why have we never produced a true How do I say your name? Is it Martin or Martin?
Martin.
Martin.
In India, they call me Martin, but you should call me Martin.
Have you ever gotten into trouble for your last name through an airport, maybe?
Oh, many a time.
Yeah?
No. So it's Escobar and Escobari are different last names. One time when an immigration officer of a country that I will not disclose said, "Are you related to Pablo?" And I corrected him that it's a completely different person. Right. He didn't think that was funny. So he sent me to the little room. 2 hours later, I was fine.
How are you such a happy person? What is going on?
How am I such a happy person? Life is too short. So I don't take myself too seriously. I take my work very seriously. I take my family life very seriously, but I don't take myself very seriously. And I try to enjoy every second. We have so few.
Has this been the case for a long time, or is this a revelation you had at some point in time?
It's gotten better over time, and I have to credit my wife. She's a happy person. Very happy.
I heard or read a very interesting story of how you met your wife. Would you like to start with that?
I'm Bolivian. I was at Harvard getting my business school degree, and I decided I wanted to go work outside the US. The US felt too competitive. It's large, but very competitive. And I said, I want a country that's large. I want there not to be a lot of competition. And I want there to be beautiful people. Because I wanted to get married.
Right.
Brazil, top of the list. So I get a job offer with the #1 private equity group in Brazil. The 3G guys. They own Anheuser-Busch. They own Burger King. They're an amazing group of people. Yes. But they made a condition for my hiring, which is I learned Portuguese. And I said, will you pay for it? And they said, of course. So I called my Brazilian friends and said, find me a beautiful, smart Brazilian PhD or master's student and tell her I will pay her to talk to me.
Wow.
And that first class, it actually wasn't an environment like this. It was a well-lit environment. We looked in each eyes. I was like smitten. I get home. My best friend is Danish. His name's Lars. He looks at me and he says, what's going on? And I said, I met a really beautiful person. And he says, you're going to marry her. And I said, no way. I was leaving. She was here. And we made a bet. We bet $10,000 whether I was going to marry her. And after we shook hands, he says, I changed my mind. If you marry her, I don't want $10,000. I want your firstborn to be named after me. Lars Escobari. Not a good combination. So my daughter Lara is named after Lars and how I met my wife. And my wife is a delightful person and a happy person.
How is Bolivia, Martin, to live in? How is Brazil? How is Bolivia? I've never been to either of these countries. How is life like there?
Very different. So Bolivia in the 80s, Santa Cruz de la Sierra in the 80s, was a tough place. I mean, America is freaking out about 5% inflation. In the 80s, we had 35,000% inflation. We had, in a 10-year period, we had 11 presidents. We had 3 coups d'etats, drug violence. It was a very, very tough place to grow up. Bolivia is a divided country, very unequal country, but one with natural beauty, gorgeous people. But my experience growing up in the 80s was an experience of living in chaos. Brazil, which I arrived in my 20s, soon followed my beautiful Portuguese teacher, who became eventually my wife 3 years later, is a happy place. Maybe that also has to do with me becoming happy. It's not just Daniela. Brazil has a happy vibe. I like to say United States is like a salad bowl. They're all here, but they are Irish American, Indian American. In Brazilian, where we, and I say we because I identify as Brazilian. I became a Brazilian citizen. I dream in Portuguese. It's more of a soup. All the vegetables kind of fused together.
What is Brazil's GDP per capita? I know India is about $3,000.
I'm going to get it wrong, but $7,000 to $8,000.
Right. I was going to come to this question later, but because you've been investing for as long as you have, what changes in an economy when GDP per capita crosses 3? And then what changes when it crosses $5,000 per capita?
First, in the 3 to 5, consumption explodes. And I know you're big on consumption and you've got your incubator, and I love that. Right on. We're there with you. Where consumer is a big part. From 5 to 10, healthcare and education explodes. Because once you've got your refrigerator, once you've got your basic necessities done, once you're eating the foods you want to eat, the ultimate luxury is to not have to go to the public system of healthcare. The ultimate luxury is to afford your kid a better chance at becoming an entrepreneur, getting a better education. So you'll see those products rise further.
And what determines the scale at which this change happens?
Good governance. India has it. Heavy investments in infrastructure. The last 10 years have been amazing for India. Domestic savings, an equity culture. People want to own equity, not a fixed income culture. And
how do you inculcate that?
Role models. People who come from the bottom without cutting corners, build amazing businesses and build wonderful lives, and they're not afraid to talk about it. And they come on your podcast and they share that story, and that motivates a whole generation of kids that says, no, I don't want to go work for a multinational. I don't want to go work for the government. I want to take risk because I will be rewarded with a wonderful life and have the pride of having built something that impacts the world in a positive way. So it's beautiful to see. It's happening in India, it's happening in Indonesia, it's happening in Mexico, it's happening in Brazil.
I think there's something similar between an entrepreneur and a gangster. So few of them make it. So many die early. The odds of success are so low. Gangsters are celebrated via Hollywood, Bollywood in my case, and entrepreneurs via podcasts like mine.
So you're the Bollywood of entrepreneurship. Now I understand your business model.
I wish it was a bit more of a business, not yet, but maybe someday.
Maybe it doesn't need to be a business.
Yeah, I think so.
The best things are not businesses. Oh, thank you very much.
I agree with that. I think the most fun things in life cannot start out with the sole intent of making money.
Yeah. That's a question I always ask my entrepreneurs. Why are you doing this? Why is this meaningful to you? If the answer is, I want to be rich, that's a lot less satisfying question than, I want to change healthcare in India. I want to bring affordable products to households in third-tier cities. I want to bring efficiency to the financial sector and digital inclusion. Those answers, a lot more resilient.
And what if I were to ask why again? Why do you want to bring healthcare? Why do you want to do that?
Then you get to the foundational story.
Which is?
Your trauma.
Everyone seeking validation and attention in one way or another?
No, not necessarily. This is a controversial position that I have based entirely on empirical evidence. Through my work and through my not-for-profit activities, met thousands of entrepreneurs, thousands that are successful. The journey of an entrepreneur is so hard because like the gangsters, so many die.
Yeah.
And I know you're going to agree because I've heard you agree. So I'm preaching to the converted. That's a disadvantage of having a podcast. It's so hard. And the odds are so low. And you have to get up and fight nature every day for years. And only those that have done it know how hard it is. You've done it. I've done it. You have to want it abnormally high. And my experience, the people who have the endurance are the people that have a chip on their shoulder, something happened along their journey, that they're wounded, traumatized, and they want to fix it. And the cure is through creation of something that didn't exist.
Are they wounded and do they want to fix it, or something happened that created shame in their minds and they want to overcome that shame by suddenly being more validated than their peer groups?
I don't think it's about validation and recognition.
What is fixing a trauma? Like, how does one fix a trauma? I get recognizing a trauma, but can you fix a trauma?
So a trauma can be anything.
Yeah.
Your family lost everything.
Yeah.
Your mom died. You lost a brother to a disease. You were debanked, flooding. Or
and you couldn't do anything about it as a child.
It created a deep wound in your psyche. It can be something that you and I may say it's frivolous. I was snubbed by the beautiful girl who liked the rich boy and I didn't have a car and he had a car. That's trauma too. So trauma is in the eye of the beholder. If it hurt you, who am I to say your hurt is less deep than mine? Because hurt is hurt. So trauma is, there was pain.
Can you recognize what yours was? Exactly.
Yes. Yes. Part of it is intergenerational. You inherit the trauma of your parents because you see the pain in their lives and you feel it. The family relationship. So my family and my father's side lost everything in the 1952 revolution of violently. There was a peasant uprising. My father was in the farm. 10,000 sheep are slaughtered. The house is burned. He has to flee for his life. And he goes from being extremely rich to dirt poor. And the rest of his life is hurt by the sense of paradise lost. And commits to being a public service doctor in his life in rural Bolivia, his entire life. But that is hurt. And my mom, on my mom's side, they're Jewish refugees of Europe, fleeing the Tsar through centuries and experiencing anti-Semitism in Argentina, then moving to Bolivia. So loss and persecution in the case of my parents. My own upbringing as a teen, seeing chaos and shifting sands. You don't know where you stand. And a third one is I have a genetic condition that I bleed. That is extreme fragility. What may be a casual bruise to you could land me in a hospital or could kill me. Now there's medication, so I have it controlled, but not when I was a kid. So these three things impact me in a way that it would be impossible not to have been affected.
How do you think you overcame it? Through professional success?
Action and analysis. Action is you see you can change a trajectory, you see motion, you see, you feel a sense of empowerment through small successes, whatever they may be. You get your first job, you get your first promotion, you get your first couple dollars, you build something, and you plant a tree and it grows. There's a sense of satisfaction and empowerment that you are capable of changing the world. And if you can change the world, you can change yourself.
Right.
Because we're all matter. We're just atoms floating in this giant universe at speeds that we can't feel. The other one, Arthur Brooks has this concept. He says, for self-knowledge, you have to do 2 of 3 things. Keep a journal, do therapy, or meditate.
Do you keep a journal?
Yes.
And you write into it every day?
When I need to. There are periods of time I write multiple times a day, and then I don't write for 3 months. But I've done it since I'm 11. It's a beautiful record of a life. I highly recommend it. Very private. No one has ever read it. No one will ever read it. No one should read it. It's me being authentic with myself.
Your dying wish would be to convert it into a book?
No, that no. Though I did write one book already.
What was it about?
So, when my internet company almost died, because the internet, you're too young.
I was alive in the 2000s, I would say.
But you weren't an entrepreneur at the time.
Yeah.
So in the valley of death, in the moment of disbelief, I lost faith in my ability to create in the emerging markets. I thought Brazil is too hard. And I thought about giving up. But I'm a nerd at heart. And I said, how about I study this? Because if I look around, there are some people that have made it in Brazil. I go jogging in the jardins. There are beautiful houses with very nice, happy-looking people that have done very well for themselves. So I partnered with my tutor from Winthrop House at Harvard, and we wrote a book, which it's called Paired Company Analysis. It's a little bit like genetics, when the question of is it biology or is it the environment? You look at twins separated at birth that lived separate lives. And
what do you think?
Huh?
What do you think? Nature or nurture?
It's both, 50-50, of course. So we chose 10 companies who did extremely well in the 90s in Brazil, which were crazy. Not as crazy as the 80s in Bolivia, but pretty crazy. change of currencies, coup d'etats, takeover of the banking system. People lost their savings. Very, very traumatic. In these 10 companies multiplied value for 5 to 10 times. And we chose 10 other companies that were competing with them. And at the beginning of the decade, they were similar. But at the end of the decade, one was 5 times more valuable. And we tried to draw insights of what the built for turbulence companies did really well that the other ones did not. And the insights are two. The winners were more fit. They didn't necessarily do different strategies. The strategies were very similar. They executed better. So they were more profitable, financially more healthy. Their teams were more agile. But at the margin, that wouldn't explain a 5x difference. That would explain the difference between 20% margin and 30% margin. That's a 50% difference, not 500%. The second component, I use the term spearfishing. They waited for a big opportunity, once in a generation opportunity that typically only happens at the peak of the storm. Volatility has one advantage. It's a storm that shakes everything. And if you're not as scared, and if you're fit, and you're waiting for the big fish, it is at the peak of the storm that the best transformative opportunities to pivot your business or to buy a competitor or to do some other change creates the once in a generation 10x opportunity.
Is this such a time?
Yes.
You think we're in the peak of the storm?
The reason I think this is an interesting time, a funny anecdote. So growing up in Brazil, I saw Brazil progress. And then Brazil had good 20 years when I was there. And I dreamed of convergence between the US and Brazil. Both countries are made of immigrants, same landmass, rich in natural resources, and I thought they would converge. Convergence has happened, but in the opposite direction than I hoped. The US has become a lot more volatile than it used to be. If you look at the VIX, it's at 3 times. The VIX is the volatility index, 3 times the average. There's another index which I look a lot, which is the policy uncertainty index. What's the level of uncertainty of the rules of the game? The US is at an all-time high. So we live in a moment of extreme turbulence with 2 hot wars, one in Europe, one in the Middle East.
I think we are inevitably heading towards some kind of cataclysmic change because
1,000%.
I think most people in the world, if you ask them, are very disillusioned. And whenever you have a large population that's disillusioned, people don't buy into the social order as it is.
You spoke about multipolarity earlier. Is the world becoming a more fragmented place? You think that's the future?
I mean, I don't know if that's the future, but multipolarity, yes. India, for example, if India sees that one country is not being the same with them, they would try to look for plan B and plan C. So, I mean, yes, multipolarity is gonna be a massive discussion in the future, but if it's gonna give out a China-esque system where everyone's have their own Google, etc., I don't think so, because eventually the best will stand, and as you mentioned, like nationalizing that might be a case. So I don't know.
Then why is America as expensive as it is?
There's very good reasons to buy America.
Which is?
It's the most innovative economy in the world, self-sufficient. Pax Americana has produced a system of world trade and finance where the US is the captain. And it still attracts the world's brightest and most ambitious people in the world. Half the unicorn founders are foreign-born, but choose this country because in this country, they believe they can be successful. International applications to the elite universities in the United States are down 20%. That is a leading indicator of losing some of what made you great. I think it's temporary. I think we're living through a moment of adjustment. Some of the adjustments hopefully will lead to fairer trade, a safer Europe, more balanced and diverse viewpoints in universities. But this moment of adjustment is one of great angst and anxiety.
Because you guys are from different places, has the attractiveness of America gone down in the last 3 months or up?
I think totally. I think that I know a lot of my friends from South Africa who were very excited to come and study in the United States. And I think there's an uncertainty that exists in the air right now that makes it really difficult to invest your entire future in a country where not only you're unsure what is going to happen in terms of your own outcomes post your degree, but there's almost a certain sense that perhaps you're unwanted. And that's difficult, right? And in a world that is still competitive for international talent, I think a lot of my friends are thinking, what if I go and study in Canada? What if I go and study in the UK?
You gave me a book earlier today about Chuck Feeney. Tell us a bit about him.
So Chuck was a Navy man. He served in the U.S. Navy. And while serving, I think, the Korea War, he observed something very unusual, which is very rich commerce happening at the Navy bases of the U.S. and the Pacific. Because these bases were not Philippines or Vietnam, but they were not America either. So there was tax-free trade. And he says, we can do this in airports. And he's one of the pioneers of the duty-free industry. He creates a business called World Duty Free, which he sells to Louis Vuitton Group for a couple billion. And he's confronted with wealth that he never thought. I'm sure you went through this. And he's like, what is the purpose of my wealth? And his answer is a beautiful answer. He says, the purpose of my wealth is to improve the human condition today, not tomorrow. I'm not creating some foundation for perpetual giving. I'm going to give it away, 100% of it, in life, because I want to see the fruits of my gifts. And the net present value of pain avoided is infinite, of misery avoided is infinite. And my aspiration is that my last check bounces. And my ambition is, as I do less work over time, is to spend more of my time multiplying my wealth to philanthropic causes where I combine my wealth and my time and multiply it that way. What percent I give out, I haven't thought it through.
But most people don't come to terms with mortality in a way. Like, maybe I'm wrong, I'm 39 now. At my age, it almost feels like it's not a debate I'm having in my mind. I think I will live forever. So if my units of energy, like you said, are expended too early, like the person who started GA did, how do you make up your mind to give it away while you're alive, not knowing what happens tomorrow?
Confucius has a saying that says, every man, he was politically incorrect. He should have said every person, but he said every man. Every man has two lives. The second one starts when he realizes he only has one. I came to that realization at 13.
At 13?
In a near-death experience I had, which I don't want to go into. But so the finitude of life hits you one day, and life will change. Not when you think of it, you feel it. Then you say, okay, this is not forever. It happens to every person. The sooner it happens, I think the richer your life can be.
Ironically enough, I'm reading a book right now, which talks about the transition between Mao and Deng Xiaoping and how the Cultural Revolution came just after Confucius. There's a very interesting story. Often, when Confucius is cited in society, we're on the precipice of changing from a capitalistic world to some form of socialism and communism. And like you spoke about Bolivia earlier, unequal divided societies like we see today also very often lead to some form of socialism or communism. You think the world is there now?
I think...
And we all have amnesia. We didn't grow up in Bolivia. We've never seen it. We've read about it in books.
Yeah. My crystal ball is not perfect, but Extreme inequality, in my book, leads to either revolution or taxation.
Extreme taxation in turn also leads to revolution?
Potentially. We're not there yet. So I think we do face that dilemma. And by taxation, there are different, trust busting by Roosevelt was a form of taxation. It's major restructuring of the rules of the game for leveling a little bit.
I would say I'm scared of a world where countries are less friendly to each other.
Who do you blame that on, if you had to?
I think it has to
Doesn't have to be a person, it could be an idea.
Yeah, I'd say it's a phenomenon. I think it's a phenomenon to do with just like economic instability and inequality. I think that people are looking for someone to blame as they've been seeing kind of other people get richer and themselves being left out. Technology particularly has left out a lot of people. And so as a result, people are kind of like, is it immigration? Is it all these other countries? And so as a result, they're rebuking, and I think that they're electing leaders who kind of know and recognize that.
Yeah, I mean, I think the pushback part is why I think a turn towards something medieval or feudalistic is just as likely as a turn towards something socialist, because there are interests that have a lot of power. There are corporations and there are people that are very invested in the system continuing to be as it is or escalating to an even more unequal place. And I think it's very hard to overcome that. So I personally really, I really worry about the direction it will take.
Just out of curiosity, what was the debate you did with your parents when they voiced their belief in communism? What was your argument? What did a young Martin argue?
I did not debate it because I knew no better. And their arguments around what's the point of having money when most people in your country are in misery? How fair is a system where children are dying because they can't afford $2 of medicine, which is what their reality. I mean, they had meager salaries and they were buying medicines for the kids in the bus. So against that level of misery, socialism seems like a better system for a country like that as a teenager. Then I studied economics at Harvard.
So as a winner of capitalism, you changed your mind about communism?
I think empirically, we saw communist societies fall apart.
100%. People flirting with the notion that communism or socialism could work seems inevitable for many of the reasons we covered up until now. Also because people don't remember anything. Humans are like goldfish.
We forget.
Yeah. If I were to state, this might be a far extrapolated thought. If there are many pseudo-autocratic states in the world that are invariably channelizing conformity in society, why should the colleges not be the same? Are they not just following the politics around them?
The number one thing you learn in college is the capacity to critical thinking.
Critical of?
Critical thinking, to having an opinion that is not necessarily the consensus opinion. To look at an issue and be able to analyze it. But the best class I took at Harvard is a class on the Cuban Revolution.
And which era is this?
The revolution they describe is the revolution of 58.
Right.
Fidel Castro. And what was amazing about this class, it's not explicit, and the students that took it, it's taught every 2 years, are asked, please don't tell other students about the structure of the class. But the structure of the class is, you show up to first class on Tuesday, and you hear the story of some rebel terrorists who attack a military cartel in a little city, butchering and trying to overthrow the democratically elected leader of Cuba. And you're like, this seems awful. These are savages. Thursday, he comes in and talks about the revolutionaries, the idealists, who are trying to unseat the illegitimate, cruel torturous dictator, and he convinces you both days of his perspective without changing the facts. What happened, the number of people, the chronology was exactly the same, but it's two perspectives on something that happened. That thought process of there's two perspectives to every reality, and at the end of it, you need to choose what's your perspective, is one of the most important things you learn in a university that's trying to create the critical thinkers of tomorrow.
So Harvard happened, and then?
Spent 2 years in New York working in consulting. Then I went to business school, also at Harvard, and decided I wanted to go into investing and in Brazil. And that's how I landed in Brazil with my girlfriend at the time.
Is it the Spanish teacher still?
Portuguese teacher.
Portuguese teacher still?
Yes.
Okay.
28 years together.
How long did you date before you were married?
3 years.
Okay.
I know you're not married.
Yeah.
I'm a voice from the future.
Yeah. Maybe I need to learn Spanish. You know someone?
I recommend Portuguese, but you can also learn Spanish. Let me give you the case for marriage.
Yeah.
Let's say your life is an adventure, and you decide to make your life an adventure.
Yeah.
And as you get further and further in that adventure, and it's a rich adventure. It's full of danger, surprise. It's full of rewards and joys and discoveries. And if you took someone along, that journey is so much more meaningful. Because there was someone right next to you that saw the same things as you did. And as you mature in life, that adventure wasn't just yours to see. You took someone along for the ride.
I agree. Someone said this to me recently. A very young Indian lady. She said, you would have scattered memories, nor would you have anyone to remind you of them, because you then won't know who you made that memory with. Which kind of appealed to me. Yeah.
I would go to dinner with her again. If you end up marrying her, your firstborn, Martin.
Done. Because the odds are very low.
I know. I thought the same.
So tell us about your first entrepreneurial journey. You started this company before GA. You want to talk to us a little bit about that?
Sure. So it's the beginning of the internet. We think that the e-commerce opportunity in Brazil could be bigger than the States because the retail infrastructure, much like Flipkart in India, the retail infrastructure isn't there, so you can leapfrog, and assortment is really hard. So we decided to create the Amazon of Brazil, and within first year, we've opened in 5 countries. We've opened in Argentina, we opened in Mexico, Portugal, Spain, and we filed to go public. The market crashes 3 weeks before our IPO. And we can't raise any more money. We almost ran out of money. We shut down all the international operations. We fire a third of the Brazilian force. We have a near-death experience. Our biggest competitor, which was the Walmart of Brazil, almost buys us for $25 million. We were worth $500 million pre-IPO, $25 million 6 months later. And at the altar, they say, you're worth more dead than alive to us, so we're walking away from the term sheet. And they leave us to die. And we decide not to die. We slid down to profitability, growth returns, we go public, and raise a lot of money. I go to the board and I say, hey, now, we're doing well, we're profitable. I think we should go international again. And what we learned the first time we went international is that small countries and big countries are equally hard. Every country is hard. Let's go big. India. 2003, 4 years before Flipkart was founded. I said, I will go run it. Give me $200 million. So I go to India, and I'm committed. Dani, my wife, says, let's go to India. She's as crazy as I am.
What year was this?
This is 2003, 2004.
Okay.
And as I'm getting ready, I'm looking for an apartment in Mumbai. Our competitor comes back and offers to buy us. And we say no. And then they increase the price by 50%, and we say no. And then they increase the price by another 25%, and my board says, we're saying yes. So we sold our business. And that was a 7-year journey from early success to the valley of death to rebirth, almost going to India. Could have been great.
Would have been a good time to come to India.
4 years before Flipkart.
Yeah.
We would have been so early.
Yeah.
Could have died.
Yeah.
I don't think we would have died.
Yeah.
In a parallel world, I think what could have been if we hadn't sold.
And I want to tell you a story.
Please do.
This is about a young friend of mine called Aryan. He's here. I think he was about 18 or 19 when I met him. Very bright young kid from India, moved to the valley, started a company in AI. And I thought you could teach both of us together. So he will ask you what makes sense from the lens of a 20-year-old. And I'll ask you what makes sense from a 39, because I still don't want to say 40. I have a few months left.
Enjoy them.
Another thing about Aryan, this is my personal agenda coming in again. And Aryan has an issue. He told me the last time I saw him, he's finding it hard to communicate with girls. I think it's a problem with society today because everybody is so hooked onto their devices. And I thought, why not make Aryan popular and see what changes in his personal life? So this would be interesting. So I'm going to call Aryan in, and then you teach both of us, and we will ask you questions from a 20-year-old and a 40-year-old's lens.
Hi Aryan. Nice to meet you.
So Aryan, let's start with the most important question. Since the last time we spoke, what has happened to your dating life?
And this is all going to be public now.
Yeah. You're building a strategy back then, right? Like how to approach it.
I'll start with the problems.
Yeah.
And it's not huge problems, but these are what I feel are problems. And this is also, if it goes public, then I've never spoken to my parents about this, so this is how everyone finds out. I think, and this is partly a San Francisco problem. I think New York is a little bit different. But like, and this is a controversy too, people debate this a lot, but I feel like people around me, plus minus 2 years.
You're 21 now.
Yeah. Are not, like in San Francisco specifically, I think the culture of doing things and like going out and being like open to being approached and open to approaching is not what it used to be, at least from what I hear. And so even if you want to go approach people, or if you are interested in dating or like engaging in like a social life, it's not very easy to do it in that part of the world. I think it helps when you don't think. I think that the biggest thing is just the 8 seconds of courage thing. You just do it when you think of it. If you think more than 8 seconds, you're not going to do it. And so,
where do you read this?
I more. This was somewhere. and then like I actually went to Brazil, which is there. I did not have that
Really? What is about Brazil? Like I've never been
there. I think it's the exact opposite, which is everyone is open to being approached. Everyone expects you to approach. It's maybe even weird if you don't approach if you've made eye contact with someone for a while. And so I think that was actually very useful. That was a transformational experience because I lost the fear and I realized that there's a different part of the world where this is normal. And if it can exist there, then you can make it exist here. It'll just take a lot of work and effort. but I still have a long. I know that I have a long time, so I'm not in a rush.
Don't over intellectualize this.
Yeah,
it's a simple thing.
No,
right, Martin? What advice would you give him?
Well, I've been out of the dating scene for 28 years. I'm kind of rusty.
The other reason outside of his dating life, which I hope this episode will solve to a large degree, is I think Aryan is particularly bright. And I feel at different instances, I have learned something from him that I didn't expect. You know, often in life, people surprise you and you're like, why did I not think of it that way? And I think the age gap that we have between us, which is a lot, 18 years, is a couple of generations away.
It's not just the age gap. Clearly smart. But he experienced COVID in a way that very different from us. Your generation got educated on YouTube.
Yes.
Like no other generation because you were home.
And prime time, like 9th grade to senior year.
And that's when you were doing your dating. You skipped that.
Yeah.
So you were not distracted by dating and you're learning about the most obscure things in the world. And then AI comes and you grow up with AI and you have all this time because you're not dating and you learn AI. So it's not just the age gap.
Yeah.
It's a very unique generation that experienced something that people that are 17 did not, or people that are 23 did not. So you're very privileged of being deeply traumatized in very unique ways.
Why don't you give us like a 2-minute background of yourself so everybody has context for people who don't know you?
Yeah, so I grew up in Bombay. I was there for most of my high school until 11th grade. And the last 2 years of that were in COVID. In that time, because I had a bunch of free time, I got interested in computers and tech. And so computers were just a fun thing. I used to play games on it and stuff. And I started writing code in 6th, 7th grade. And then the first serious thing I did was in that COVID phase when I was in 10th grade, I worked for someone who used to be like a CTO of a tech company, more as an intern, but it was my first real job where I did some real work. And so I just went in, like, committed to a bunch of stuff that I didn't know how to do, but just figured it out on the job. And I used to go to school in the day, come back and just work for this guy. And that went on for maybe about a year.
What age is this?
This is when I was 15 and 16. When I worked for this guy and when I built these projects, my influence or my understanding of the startup world was mostly media that I consumed from the outside. Like I saw The Social Network, I saw Silicon Valley, the HBO show like 6 times. I used to see it it was the only thing I saw. And it was just it was cool to see that there's a place in the world where nerding out about this stuff and being in a house with people like thinking about doing crazy things is appreciated and encouraged. And so I wanted to find a way to come there, which is why even applying for the scholarship was motivation to come to the US, because it felt like it was the right place to be. I used to cold email a lot of people, even back when I was in India, and mostly rejected. Once in a while I got lucky. And one of those like cold outreaches was to the early OpenAI team and Sam Altman and a few other like founders. And I met them when I went to SF this was 2022. So this was before they were like...
So you cold emailed Sam Altman and he said what?
I think the first message was just like I sent something like this, I'm 16 or 17, this is what I am interested in. I like all the stuff you've done at YC. I use GPT-3, it's really cool. And like, here's 3 bullet like points of projects that I've built. And if there's anything that I can work on with you, like I would love to. And I think he took some time, but then he responded, I'm busy, but let's keep in touch. And so nothing happened out of it, but a line of communication was open. And so when I went there, again, I had to follow up multiple times, but I think he agreed to meet me because I was just persistent. And it went long, like a little bit longer than we had planned for and very random. Like we spoke a little bit about work, a little bit about OpenAI, and he gave me a bunch of advice around SF and how to live here and what to do, who to talk to, etc.
Nice. So you are my co-host today. We are both going to ask Martin questions. You from your lens, me from mine. So if you had 100 billion and you had a blank slate, Martin is starting afresh. Okay, no baggage from anything you did historically. Where the world sits today, at the valuations of today, you have to allocate the 100 billion and you can only pick 3 industries. What would they be and why?
The Martin Vision Fund.
The Martin Vision, not the Vision. Listen, I think there are 4 major waves transforming our world. Transition to a digital economy, turbocharged by AI. Okay. This is the biggest tsunami. The transition to digital is a 25-year wave. AI is a 5-year wave. They're one building on each other, and that is fantastic. The second way is the transformation of the healthcare sector. Increasing capacity in the South and healthcare innovation to contain cost and treat the untreatable diseases in the West.
Also like export healthcare in a way.
The third is energy transition away from fossil fuels. And if we needed a reminder of how fragile our dependence on fossil fuels, forget global warming, think Suez. And the fourth one is the rise of the new consumer in the South. I think for the next 10, 20 years, these 4 forces will generate tremendous opportunity for anybody who wants to be an entrepreneur.
When you say new consumer in the global South,
it's your question of what happens to consumption from 3,000 GDP to 5,000 GDP and 8,000 GDP.
Do you suspect those new consumers will buy American products or native to their own countries?
It will be very, very specific, but the cost of launching a new brand has never been lower. The cost of distributing a new brand has never been lower. So the chances that local champions win have never been higher.
Would you say geopolitical tensions from a multipolar world will have inflation present at a rate higher than our historical past, which in turn leads to different kind of opportunities? The geopolitics will remain complicated for the next 10 years?
I think geopolitics will remain complicated.
And who will benefit from that? Which industry?
It goes back to what I learned with volatility in Brazil in my book. If you're fit, if you have access to capital, and you can move with agility, all this volatility becomes your friend. And your friends at 3G are experts at this. Whenever there's fear, they are not fearful. And they mobilize capital and resources and smart young people to capture opportunities.
And they kind of go all in, right?
They go all in.
They don't do much, but they go all in each time they do.
They're very focused, concentrated bets.
You're also concentrated, but not as much as them.
Much less. Very different business.
So amongst the trends that you mentioned, Martin, which would you rank as the biggest opportunity if the biggest one were to be 1, the second biggest one were to be 2, and then 3 and 4?
So listen, for your age, AI is a blue moon that happens every 25 years. Probably longer. AI is the biggest thing since electricity. So yes, you're absolutely right to be playing with AI, and God knows where you're going to end up, but it's moving at a rate of change that you are learning so much and you're reinventing, and by the time you're 35, you will have the experience of a 100-year-old. So you're absolutely in the number one tsunami.
So when you say AI, out of the 100 billion you have now to start afresh, how much goes there and how would you pick which companies to allocate it to?
If you think about the internet as a proxy, it did create some amazing companies.
Not right away.
Not right away. And there was exuberance, irrationality, and valuations that were completely detached from reality. Our approach as our GA, in the internet, there was a little bit of spray and pray and chasing the shiny objects. Didn't work out so well from us. Our approach for us today, given our scale, experience, and risk aperture, is to be intensive users of AI in the portfolio and in ourselves, and to wait until the unit economics and the leadership is a little more established before we pound. What have we learned? AI for coding productivity? Check. AI for marketing productivity? Check. AI for customer service? Check. AI for automating repetitive rules-based process? Check.
Do services fall in that?
To the extent they're repetitive rules-based processes? Check. Amazing. 30, 50, 70% productivity gains. Agentic services embedded to payments or software. Check. You can monetize. All that is working. Among the LLMs, we waited, and then we saw Anthropic inflect. We're betting in a world model that does text to video called Runway. So AI is fascinating. I wish I was 21.
So how much of the $100 you have will go to AI?
It will go up in time.
But today?
Today, about 10% of our, I think 15% of our capital is in AI.
So 15 billion to AI.
Yeah.
Aryan, what would you do? Same question from a 20-year-old's perspective. You have 100 billion to allocate. How much money does AI get? Is that your top industry?
I don't know as much about other industries to be able to have a wide perspective, but I think in broad buckets, and this is a little personalized too, I would do maybe a little bit of healthcare, partly because I grew up in a family of doctors. I appreciate how hard it is, how important it is.
But how much would you do to AI alone?
I think healthcare is also AI. Like, I think it'll be like healthcare AI, a new frontier, because I think all these net new drug discovery bets where models are being used to like come up with drugs or test them more efficiently, create these labs that the model comes up with something, but then you have a lab to run an experiment and do like physical RL. I think those kinds of healthcare bets are interesting.
Give me a number. Healthcare AI, how much? I'm going to like pull this up 2 years from now and make this a competition. I'll be like, which portfolio did how much?
If I have to pick 3 buckets, I would maybe combine the healthcare into just, if it's 30-30-30 or something like that, I would maybe combine the healthcare thing with more just physical, hard sciences, yeah, like which includes, it could include robots.
I
think
humanoids are coming.
Humanoids are coming.
No, unfortunately, I think the manufacturing skills in this country need a huge upgrade to be able to compete with China. In software, the US, I've bet in the US a million times.
And your flats are building humanoid companies,
yeah,
right?
So my
Which one?
It's called 1X.
And what do you see? What is your flatmate telling you? What stage are they at?
I think the hardware has gotten a lot better in the time that we've been living together almost 2 years now. I think it's gotten a lot better in that time frame. I think the software is improving with it, but the software will have a step function improvement once they actually deploy it, because the best data is, I would assume, real usage data, where it comes from homes, real feedback. A lot of it is teleoperated right now because they need to get it functioning and deployed into rooms. But I think a lot of them will start going into real homes end of this year. It will be remote controlled, but that's how Waymo started.
I believe, having grown up with doctor parents too, to transform human health, it's a wonderful objective.
And how much would you allocate to that today, at today's valuation?
Oh, a lot, a third.
33?
Yeah.
Do you guys buy into the AI valuations of today? Because I know GA does a lot of AI. If you had $100,000, which were your savings, how much would you allocate? I know you have more because you're from real estate. But how much would you allocate to AI-related stuff today at current valuations?
I would go all in.
Really?
Yeah.
Even today?
Even today, yeah. I mean, I'm pretty bullish about the technology because I feel like this is not just technology. I feel like this is also more geopolitical, because I feel like any country that would get a hold on AI in the next few years, I think would have their next 5-6 decades sorted. The valuations are inflated, but they will get corrected. But this is a space that is here to stay.
What do you guys think? You didn't agree?
I think for me also, I wouldn't be looking at AI specifically. I'd be trying to think about like what are the resources and things that are being used by AI the most. So I personally would probably invest more of that in things like energy and energy transition, because even if the AI bubble is disrupted, there will be a need for that afterwards. So I'm more interested in that. I know more about the space. I believe in its longevity more. So that's where
I would say I'd keep it in cash or in like a high yield, high yield savings interest bank account, and I would hold on to it until valuations go down. I think we're in for a market correction.
I'm going to come to the burning question of today. Something relevant for India is we have 1.5 billion people. We have more engineers than anywhere in the world. Because you've looked at India so closely, why do we not have a global company that has come out of India?
Infosys, potentially, you could say, is a...
That's services.
A global tech company. I believe...
Actually, a global any kind of company.
I believe it takes a pioneer to create the role model effect. It can be done. There's access to capital, unfair access to human capital that's AI trained at the right time. You need the courage to do what has never done before.
Why hasn't it happened though? We've had this for a long time.
I think in business services, I think the BPO companies are relatively global.
They're more like a labor arbitrage industry, which...
It's global. Your capital markets are ready. I really believe in the role model effect. If you have one company that does it, it gives courage to others.
Like you have New Bank.
It's a multi-country.
Yeah, why haven't we had that?
Well, you have Flipkart, you have PhonePe.
They all sell in India only.
Well, India is also 1.3 billion people. You have the curse of a domestic market, the blessing of a humongous domestic market.
Do you think that's what it is? Because
it starts with that. If I asked the same question about Brazil, there are very few global. I'm actually very proud that we have a company called WellHub, which has become a global leader. It's a wellness benefits, corporate plan, app based. You can go to any gym in the world if you should see him in your travel. I'll hook you up. He had the courage to move to New York. He had the courage to hire a multi-country team. He had the courage to invest heavily in this international expansion. And I think when it goes public, hopefully, it will be an example that it can be done. It is uncomfortable. It is uncomfortable to go to a new country and to build a multi-country team and to get out of the comfort zone of, though I must say conquering India is not a single country. The diversity in your country is beyond comprehension to anyone who hasn't traveled your country. I mean, it's not one country. It's an amalgamation of civilizations.
I'm trying to find a solution to the problem that not too much foreign capital has found its way into India in the last year or year and a half. Why is that? And what can we change? Because we really need that to happen. You're a capital allocator in the West. What would you need to park a lot more money into India?
So listen, we have allocated a lot of capital to India, north of $5 billion. We believe in India. India, over the last 10 years, with the help of someone you interviewed, has advanced.
I'm asking more from the lens of what can Aryan do, what can I do? What can we do to get even Aryan to come back home?
So the best thing you can do is be role models of hyper-successful people that took no shortcuts, that built partnerships, that played the long game, and that are not shy to talk about it.
Then do you think India justifies the 20 multiple it sits at?
Yes.
Because?
The potential. When I look at when I first went to China in 2000.
China is cheaper than India, even today.
Well, China it has its own set of issues. They're coming out of its own set of issues. But when I look at the transformation of China and what they've accomplished since 2000 in 25 years, it's breathtaking. It's interesting because I told you about my dilemma of coming out of business school. I wanted a big country, not a lot of competition. I thought of China. I actually visited China. At the time, the GDP of China was 20% bigger than that of Brazil. Today, it's 14 times bigger.
What did
years.
China get right?
Listen, they industrialized. They built the infrastructure. They embraced digital. They embraced manufacturing. They led export-led manufacturing, as they're calling CARD.
They have another advantage that if you don't have an election every 5 years, you don't make 4-year plans, you make 40-year plans.
I think your solution is going to have to be more nuanced and more custom-made for India and the unique richness and traditions and complexities of your country. Now, I think you're in the right direction when I look at 8% growth for the last and for the next.
Yeah.
It's 8% is a lot. 8% compounded over 10 years. So be patient with your country.
When I allocate money, because I'm all in on India, also because I made whatever little money I have from that country, I draw the extrapolation that at some point will be a $10 trillion economy. It might not happen in 5 years, it might not happen in 8, it might not happen in 10. And I'm kind of rebalancing my portfolio to reflect that in a manner where, strangely enough, my biggest allocation soon will be IT services and banking because of the moats these industries sit on. It's the most counterintuitive thing to invest in an AI first world, but for India, I feel like it makes sense. And I can buy these companies at like 12 times, 14, 15 times. Very well
Makes
run,
sense.
large.
Very defensible. Very defensible.
Aryan, how would you look at the same problem?
I think a fair system where you know if you work hard and do what you're supposed to do, you can have the prize that was promised. And
is that true here?
I think it's more true here than most other places. I'm less worried about like corruption or someone unduly getting access to something that they're not supposed to get access to because they paid their way through, or it still happens, but I think it's
like
less
crony capitalism.
Yeah, I think it's less. I experience it less here. I think that's one. Second, I think these waves, like with all this AI stuff, one of the reasons I like being here is because everybody else is here, and so your access to other smart people or knowing when things are happening and acting on them, that time it's the shortest that it can be relative to anywhere else. And that I think is hard to recreate. Especially because if it is so concentrated and it's 6 companies that are funding all of this and 4 labs that are doing most of the work, then the areas around those labs, people who are living there, it will just by design all circulate in that small little bubble.
What could that wave be for India that can attract people?
I think manufacturing maybe is interesting as a way, at least that's what I thought from the little bit that I looked into. I don't know what else, especially like global things. I think these global tech waves are not, they happen very rarely, and this one is happening here, so it's hard to say which one will happen. Maybe pharma and biology, like happens there. India has a lead in pharma. We do a pretty good job. There's the next revolution that happens there.
Okay. Some things I find very intriguing about GA is its perpetual capital.
So we have an unusual fundraising structure where we have standard funds and that we launch every 2-3 years. Then we have managed accounts that invest alongside these funds that are fundraising at any time. And then part of these managed accounts are evergreen, so they're always renewing, so they can go forever. The evergreen is innovation because these are people that want to hold things for longer and are constantly renewing. But this idea of having standard funds and simultaneously have managed accounts have the great advantage of smoothing out the fundraising cyclicality.
And you have a common pool where all the partners get paid?
Yeah, that's a big thing. So we're the most global of funds. Most of our peers have regional or sectoral funds that are rather independent. We allocate everything through a central pool. That's super valuable in a volatile world because you can change your mind and you're not fixed to your boxes. Part of making that work is pooled economics. So when I was running Brazil, my comp wasn't based on what I produced in Brazil. My comp was a percent of the global production that over time, if Brazil did well, the percent would go higher, but I'd have no incentive to push Brazil at the expense of other things that were very good.
I interviewed the Anthropic guy last month.
He said that.
Dario.
Dario is one of my favorite people in the world.
Really?
Yeah, I
Why
really
is
like
that?
Dario. He's a biologist.
Yeah.
He's idealist. He's built an amazing company. And if he does things right, I think history will remember him. And he's such a humble, idealistic person. And young, he's 41, he's your age. And it's, I feel very privileged to have met him.
39. So quickly, we have two new friends on the table. I'm going to give you guys some time to introduce yourself. Maybe, Florian, you would like to go first?
Sure. So first of all, thank you for inviting me for dinner. I'm Florian Brandt. Started out as an entrepreneur, I guess many moons ago, or like 15 years ago. And due to, I guess, very personal experiences with seeing friends and family members developing very severe mental health disorders and not finding the help or healing that they were looking for, started a mental health drug development company, a biotech company, Atai Life Sciences in 2017, 2018, with a goal to really make a true leap forward for mental health patients that often to today's medication that is available or also therapy don't respond very well.
I'm going to ask you a tough question.
Please.
Summarize what you do in one line.
I'm a drug developer.
Why do you smile when you say that?
Because I guess you could read into this some controversial things if you want to.
Elaborate with another line.
So my passion is really to bring better options, better treatment options to mental health patients.
What I've learned about you in the little time we've spent together is you look unreasonably happy.
Mm-hmm.
Like even right now. So Andy is a new friend of mine. And what I have learned so far is he asks even more questions than I do. And he gets his jollies off by meeting new people, trying to like screw with their own minds. So at the end of the night, after a dinner with Andy, you're questioning, are you depressed? What is the point of life? Where is your ego? Are you satisfied? Are you chasing validation? Are you seeking attention like everyone? Are you a narcissist? All of these questions. That's how I know Andy, whose real name is Anirudh. But maybe Andy can introduce himself now.
Thanks for that, Nikhil. So my name's Anirudh, physician by education, had my own health tech companies during COVID, sold 2 of them, wasn't sure what I wanted to do next, and then started Karma Global Enterprise, which is named after my kids. Today we are a venture capital group where we have 2 funds. Our first fund at 60 million, deploying in biotech, health tech, agnostic of specificities in biotech. And then we have our second fund at 120 million that we're raising.
3 days ago, he asked me, are you wearing lipstick?
So you were
We were outside. Yeah, we got very intimate.
And then I asked him why, and he said, your lips are looking pink today.
Yeah. And that's going to be viral.
Not necessarily.
So where are you? Or where are you?
No, of course not.
Last year I was reading a lot of Jung's work around synchronicity, and you feel like everything's aligning and things are working out. And then when things start falling in place, similar to what you said, Nikhil, around the fact that now the next worry, once things fall in place, is to hold it all in place. So then you start to believe in faith.
Because?
Because should you not, like we talked about in our conversation, should you not, then you worry that it may be taken away from you.
By that logic, very successful people should be the most religious of people? That's not often the case though, right?
True, but then you can also, one can argue if this is correlation or causal.
What do you think is synchronicity according to Jung?
According to Jung, synchronicity is, in the spiritual sense, it's when things line up. Like, for example, I really want to meet some great private market guy who can give me great advice on how to build a fund. And then I'm walking down the street and I see him. And I'm like, are you Martine? And then he's like, yeah, let's have a coffee. That would be synchronicity.
Manifestation.
Do you believe in that?
I do believe the power of manifestation. In that if you visualize what you want, you're deciding that what you want. And is more effective than the 8-second rule. You go for it.
What's the 8-second rule?
No, we were talking about cold approaching and just saying the most useful framework that I've found is just go do it when you think about it instead of thinking so much.
Yep.
The honest answer is I still don't do it as much. So
Why not? Is it ego?
No, I think that there's a part of it which is I'm shy, which in certain social situations. I think these settings I'm very open to talking.
That's a generational problem.
No, it's a him problem.
I think it's his generation problem.
I think you got to make peace with your odds. Like, not just your odds, for all men, me, him. Not him, because he's married for a long time.
No odds.
Also married.
Yeah.
Also married.
We're all...
Just you too. There's the reason you're seated at the points of the table.
Martine, I believe you guys, I don't know yet. When you say married, what do you mean? But I think the odds of a guy like yourself going up to a girl in a bar and trying to talk to her, the odds of success are as low as 1:10, I think. Or as any of us, the four of us. So if you truly make peace with that fact, then you start playing the maths, right? You're like, if I want to talk to 5 women, I need to ask 50 people out. You let that thought like kind of sit in your brain, I think then this exercise might become better.
So
everyone watching this right now is wondering, what is the checklist for companies then?
Okay, here's the checklist. Now, the interesting thing about the checklist is that when I asked the co-founders of GA, one said checklist, the other one said do not use a checklist. And my answer, my conciliation, I'm shortening the story, is the checklist is great for filtering noise, but at the end of the day, after you've done the work, the intuition overrides the checklist. In our checklist were things that that in our experience has been correlated with a lot of success, is aim for huge markets. That's the number one predictor. Try to solve a humongous problem. That's the size of your ceiling. That's the size of your dream. 2, have a business model that creates economic value, and that value is defensible. It's not a temporary thing. So one of the problems with your idea of the service roll-ups is you reinvent tax filing accountants, and initially you have a huge advantage, but over time, 5 years, everybody has automated the process and it gets eroded. Now, if you create network effects and you have a data advantage, your early lead leads to sustainable advantage because you use that first mover to create moat. So moat's number 2. And number 3 is assemble a team. You have a team that has the right capabilities for the company you want to become 5 years from now. And you do that early. So those 3 things are correlated with breakouts.
When on the second point that you said, like, as an investor, you can wait a cycle to see how defensibility plays out, right? You watch a few, you can pick the horse that wins. When you're building a thing, you are all in on one thing. You have one And a lot of times that defensibility might not be clear early on in the cycle, right? And so from...
Two thoughts. You first of all, you have a lot more time than you think. And that eagerness to get going. God, you're 21. You have so much time. So you can afford to explore and experiment. So don't rush. But two, the best laid plans of men change when confronted with reality. Once you've chosen a lane, give it a full couple of years because you're going to learn so much. So it's a little bit like be patient, but then don't give up. You were going to ask.
Yeah. There's no case to fail early, just to finish that, then you.
That's fine.
Oh, if you hit a dead end? Yeah.
How do you recognize a dead end?
Oh, it's really hard. It's obvious in retrospect. But you feel it. You keep hitting your head against the wall, and
it's hard. It feels hard.
It feels hard. You've been through some dead ends. Eventually, it hurts, right? And you're like, okay, enough. It hurts too much.
Yeah.
But when you reach that dead end, there is the emotional baggage of the people you have hired. I was just speaking to a friend about this today. He's like, what happens to these 20 people, 30 people? I promised them this. So much money is already gone. What will my investor say? How do you cope with that?
It's a great question. And one of the toughest conversations is when you have to talk to people about you're in the dead end. But honestly is they're wasting their life energy in that dead end as well.
And I do think, we've all, in my previous companies, we've gotten close. I do think it takes a separate level of integrity to hang the hat and say, it didn't work. And the market will cycle. Yeah. It'll cycle. You might think it's the end of the world. What happened to these 20 people? My investors? It's going to be my reputation in the market. It'll cycle. You just have to be patient. I think one of the things when I was talking with Chamath when we were there was sometimes the game is just you have to stay long enough in the game. It's not about running fast and sprinting. You just have to keep being in the game long enough that it'll weed out all the noise, and then you might be that signal.
Once a founder fails, an entrepreneur fails, culturally in India, it's a bad thing. Culturally in, say, Israel, for example, they like the fact that somebody tried and failed, or maybe in the US.
Same holds true for Germany, by the way.
Yeah.
I think that is currently in Europe, but also in Germany, a big thing that holds Europe back. The willingness to start and fail, try again. There's a huge cultural stigma. I didn't know that actually about India, that this is actually very, very true there.
Do you think that's true, Marty? Are you more likely to fund a founder who has failed 3 times versus someone who has never tried?
Listen, the failure creates scars, learnings. How you fail and what you learned determines the answer to your question.
They have
like if you fail because you cheated on the taxes that is a line that's very hard.
Correct.
There are some mistakes that it's very hard as an investor to forgive. And it goes back to how do we create this positive dynamic. Now, how do we change this? Is when people like you talk about your failures.
Mm-hmm.
Successful people who talk on the road to success.
Yeah.
There were failures.
Very easy. I have so many.
Exactly. So you should start. You have 20 million people listening right now.
No, I have a theory. If I want the youth of India to change one thing, just one thing, is they need to stop thinking that changing their mind is some kind of hypocrisy.
Agreed.
Oh.
Agreed.
Like hypocrisy has to move from a bad word to a good word.
I have a great phrase. When confronted with new facts, I change my mind. Correct. Don't you?
Mm-hmm.
When confronted with new facts.
Correct.
Yeah.
It's not you just change your mind because today I like strawberry and next day I like lemon. It's I figured something out
and
it led to a change in posture. This is an alternative view. change is born only out of pain. And it goes back to the deeply traumatized people. And you see the growth of China coming out of the Cultural Revolution like a rocket, because that was a dramatic, painful experience. But eventually that fades over generations. This country, unusually for this scale, gets a new wave of traumatized immigrants every year. And you look at time and time again, it is that generation of people that shakes things up and keep this society vibrant and fresh. And I think it's critical to their continued success is that you keep bringing fresh blood. And in India, I think the urbanization, bringing rural people into the cities, and they come hungry and they come with dreams and they come wanting to strive, has been an engine of development as well. How do you sustain that once you're done urbanization? That's another challenge.
I'm looking at a lot of this from India's lens because I'm selfish again. I'm thinking how to bring more GA money into India, how to get Aryan to come back into India, how to get, in this case, more people with foundational trauma to come into India. That's interesting. So shouldn't you let in, say...
So maybe if GE puts $2 billion in India, maybe
it's more than it's more than just capital, right? But I think you're doing a great job in your public profile. And I know being public is people think it's easy.
No, it isn't.
It is a huge price you pay.
Yeah.
The end of privacy is a one-way street. But you are being a role model. You are now with your international audience talking about India, bringing the issues. I think you're doing your part, and that's part of it. And it takes time.
My ego is getting fed now. The narcissist me.
Thank you for validating.
If Aryan were to start a company today, and he comes to Andy, you put a certain amount of money, you buy 20% of Aryan's company. Then you take Aryan to private equity. Martin puts in a little bit more money and takes 30% of the company. Now Aryan is left with less. This happens a couple of times over and over again. And when you all are done making money, you come to my market, the public market, and you offload really expensive price to market equity on unsuspecting people like me and colleagues of mine who are in the retail ecosystems and public markets. Do you think that's fair? I think it's happening with AI right now. That's why I'm asking.
I don't know if it's fair, but from a venture side, I took the deal first. I trusted Aryan to say, I think that kid has something in him. I'm ready to bet on that horse. By the time the horse comes to you, it's won a couple races. Of course, the price is going to be a little jacked up. Whether it's going to perform again might be the 10th race that breaks the horse. That's my point of view.
Fair is a tricky word because we have free will. And the further along Aryan is on his journey, the less risk we have. There's more we know, there's more data. And if he's gone public, yes, for the successful companies, a little less return, but a lot less risk. Now, it's very important in any market to have a combination of retail investors and very sophisticated institutional investors who have more resources to just make sure he's doing what he's supposed to be doing.
No, I presented my question in a certain manner just for effect. I think we need 100 times more risk capital in India.
Yes.
From people like Martin, from people like Andy.
Yes.
Florian can bring in German money and Aryan can move back.
And then is Nikhil, what is Nikhil doing in all this?
He's collecting a small commission through all this.
And then the news reads, Nikhil Kamath brings investment back to India.
He wins in every transaction.
What else, guys? Anyone have an interesting idea they'd like to share?
I was going to say something on the public piece, which is like, now you don't have to go public, right? Because there's enough money in the private markets. I think that's maybe net negative versus this like there is a little bit of this dump effect where sometimes companies go public at whatever crazy price and then over time it'll correct down and then maybe they build back up, maybe they never go back. Like the 2021 wave was mostly like that. And but there's also like a lot of people who would like Stripe, but they probably will never get Stripe. And that trade-off is not like, I think it's that's maybe I don't know what the right answer to that is, but it seems that it's net not great for normal people to not have access to things like Stripe. And
I agree. Waiting till you're $1 trillion like SpaceX to go public seems like a long time. Your friend Elon Musk.
But I think I worry about so much accumulation of wealth is happening in between 10 companies.
Yes.
I think if it happens to a degree of 10 from here, it is but a matter of time before people get so angry that these companies have to be nationalized.
The greatest antidote against monopolists is young revolutionaries that take on the monopolists.
Young colleague.
I'm kind of done with questions.
Yeah, I think we're good.
A lot of very insightful stuff.
This was really fun. I love this format.
Yeah?
I love the intergenerational, intercultural.
Yeah. Can we end by answering the most important question of the day? How will Aryan find his girlfriend? What have you learned? You've had 3 wise men give you great advice.
yeah, very different, combined. I think the only actionable one that I took over was I'm still doing things wrong and I should just go approach more and not worry about the odds are what they are and then just let the math play out, which doesn't sound like it's not very comforting.
That was my advice.
Yeah, but it's not very comforting.
But thank you guys. Thank you everyone for doing this.
Thank you for the meal.
Thank you.
Appreciate it.
This was
so nice
lovely.
to meet you all.
Yeah.
Thank you. Cut. Thank you, Ajay, for taking the time to do this.
Pleasure to be here.
I think we've been planning to catch up for a while now, but we've always missed each other by a short margin.
Yeah.
I know you're a very busy man. Maybe we can start today by giving our audience is largely Indian origin, trying to be entrepreneur, the young person under the age of 30, around 25, I would say on average.
Just like you.
I wish I was that young, not anymore, unfortunately, but they all want to figure out what to build, how to start something.
Yeah.
Like you were telling me about your daughters, a lot of them have a job right now. They want to transition into owning a business. There is a lot of uncertainty about AI and which job will remain, which will not. You speak a lot about jobs. So maybe we start with you and you tell us a bit about your career. I mean, I know a lot about you, but for the few people in our audience who might not, could you start by giving us a couple of minutes on your life, how it began, context?
Sure. So I'm 66, so it began a long time ago compared to the audience you're talking to.
Right.
But my dad was in the army and we kind of moved every 2-3 years. And, what you would call an army brat in that sense, living a relatively sheltered upbringing because of that surrounding of being in a cantonment with the people who came from a similar background of some type. And then there was an elder sister. She's the eldest, an older brother who was 5 years older than me. So 10, 5, 0, kind of three of us.
Which city was this?
I'm sorry?
Which part of India?
Oh, all over the place. I was born in Pune. And my sister and brother were born, 10 years and 5 years. Earlier, my brother was born in Simla. My sister was born in Delhi. And so they've kind of been all over the place. And then we moved every couple of years. So I started schooling in, my early days in Jhansi, then Jalandhar, and then came to Delhi, and then went to Hyderabad. Then from Hyderabad, went to Simla and finished schooling in Simla. And then did a college in Delhi at the economics in St. Stephen's College.
Right.
And then went to Ahmedabad to do my MBA, which is where I met my wife. And we were classmates in business school. And then joined Nestle and worked in Nestle for the better part of 13, 14 years in India, all over the place. Moved from Delhi to Mumbai to Calcutta. And then joined PepsiCo to start KFC and Pizza Hut in India at that time. And then left and joined Citibank and spent 14 years with them, starting in India, London, Brussels, London, New York, Hong Kong.
Right.
And then back to New York.
Right.
And then joined MasterCard as CEO and spent 14 years there and then now here. I've got there were three of us. My wife also has 2 siblings in one. So they're all girls in her case. And then we've got 2 kids and my kids have kids. So now I got 3 grandkids. So.
You spent a fair amount of time at Nestle. Do you see that business model of a large FMCG company selling across the world? Do you think that's breaking? You see a lot of the multiples companies in FMCG are coming down. They've been historically very expensive. Is the consumer moving to independent brands from large conglomerates?
Not really.
No?
I think you see that movement began quite some time ago. It started for value at a point of time when it moved to these private labels in the case of some of the larger locations. But in the case of India, for example, Amul was a big breakthrough in milk, right? So you got brands that came up locally, but it's not as though the multinational brands aren't strong and high quality with high perceived advantages. The only difference is in the emerging markets years back, if you were a global multinational brand, you had a halo of which you didn't feel you could get domestically. That certainly has changed. And Amul is an example of that. High quality product, whether it's powder or yogurt or desserts or ghee or anything else today, Amul has a product that is as good as anybody else's. And I think that change definitely leads to a lower dominance level for multinationals. But otherwise, the idea of a global company which has global standards but locally executed with great delivery, it's still a very popular model. The issue of earning multiples and share pricing coming down, that's a whole other thing. I think there's a lot going on in the markets where people are putting money into new technologies, new industries, AI, finance. There's a lot of stuff going on and rotating out of certain. What happens invariably in these markets is when there's, friction or volatility or instability, you find people rotating back into predictable earning streams. And so industries go through ups and downs in their PE multiples, and part of that you'll see in what you just asked.
Do you think consumer behavior and consumption, if I were to say a big part of American consumption is, say, QSR, for example, in India, the same thing could be grocery. A lot of us are betting on the fact that grocery, as GDP per capita goes up, will convert into eating out in restaurants and QSR and the likes. Do you think the pace of consumption is going to continue to grow like it has in the last decade?
In India in particular?
Yeah.
Yeah, I think so. I think what happens typically with the growth of the middle class, and you can define the middle class on all kinds of ways, but with the growth of increased, let's say, prosperity or a better spread of prosperity in the system, you do get consumption. It's the old story of you have a scooter, you buy a car. You buy a car, you buy a bigger car. You get a bigger car, you buy a second one. That consumption has to play out. When it stops playing out is when you get a concentration of wealth at a certain level, and you'll find if you've already got 4 cars, there isn't going to be a 5th car bought. If you've already got 4 TVs in your house, you're unlikely to buy a 5th one. So there is a change in consumption patterns as incomes increase beyond a point. But till you get to that point, and India is still on that journey, till you get to that point, you'll get pretty good expansion of consumption. The nature of things consumed may change. The perceived advantages of a luxury good may change. The willingness to pay more for quality and pricing may change, which you've already seen in India in the last 20 years. That, I think, could keep happening, but I don't think consumption won't keep growing for a while. The one thing that could impact consumption is insecurity. So if you create, if people get insecure about jobs or insecure about savings or insecure about their future, then that leads to a inward turn on consumption. That's got nothing to do with prosperity and growth. It's got to do with, the topic you started with about how do you feel about your future. So long as you're optimistic, you tend to be willing to spend.
When you're no longer optimistic, does the nature of consumption change, or do you stop consuming?
A little bit of both. You might downtrade in prices. You might downtrade in some things. You may leave certain things that you feel were luxuries that you don't need to consume. Now, I'll give you a crazy example, but here in New York City, the day the stock market does well, if you go to the average upmarket restaurant here, you will find the price of wine purchased that day at dinner goes up. It's the same day.
Really?
And now if it goes down, you will find it has an impact. It's how people feel. Consumption is not just about your material need. That is true when you're at a lower income level. When you're at a higher income level, consumption is also about how you feel in your head. And that's very different.
So in times of uncertainty like today, by virtue of what's happening in geopolitics and stock markets having corrected, if I were to correlate that not just in America and wine prices, do you think...
I gave you that to show you how crazy it can be.
Do you think in India, for example, the real estate market will follow the stock market? Will purchase of high-end cars go down?
Yeah, no, I don't think so. I think that India is still at a stage where the optimism of its population in terms of the future of India, in terms of its growth potential, and therefore their belief that they will have a better life than their parents. I still think India is going through that growth phase. And so you may have ups and downs. I cannot predict either stock or real estate prices anywhere. I gave up that long back. If I could do that, I would be doing something completely different.
Right.
But I think you can't predict short-term changes or even medium-term. But if you look at the trajectory, I don't think India has reached that point yet where its trajectory needs to be doubted in that sense. And if you look at the way India is building infrastructure, right, whether it's bridges, roads, airports, fixing up its port system, power, water systems, and so on. It's not that there isn't work to do. And it's not that there isn't more work to do, but it is very different from 25 years ago, 20 years ago. And without infrastructure, without healthcare, education, and skilling, you can't create the first foundational pillar of prosperity. Then you need the right governance and policies and rules and laws and regulations and transparency and all that. And then you need the financing for the private sector, small new entrepreneurs all the way to large companies. And then that's the process by which prosperity comes. And I think India is still doing pretty well on that trajectory.
So coming to what is the World Bank, Ajay? I'm a little bit of a fan of history. When I was younger, I spent a lot of time on the Second World War and German history. If one were to say that the World Bank was created post-World War II because rich, developed countries arrived at the conclusion that instability is generally a symptom of things not working well in economics, and giving money to poorer country makes the world more stable, which in turn prevents war. Would you say that's why the World Bank in a way was created?
So the original creation was the International Bank of Reconstruction and Development, IBRD.
Right.
And that's the Bretton Woods thing you hear about. That actually got created to help rebuild Europe and Japan after the Second World War. And so it was a way to they weren't really thinking about the developing world at that time, because remember at that time, these areas of Europe and Japan had been decimated by the war.
Right.
And so this started for that. In fact, interestingly enough, the bullet trains of Japan were financed by the World Bank. Nuclear power plants in France were financed by the World Bank early on. By the time 15, 20 years went away from the end of the war, so you're in the early 60s, it became pretty clear that Europe and Japan were back into a rebuilding and growth phase. And attention began to focus into the rest of the world, in the so-called emerging world at that time. And more parts of the bank got created, one called the International Development Association, IDA, which caters for what is the poorest countries on the planet. Today, 78 countries are in that category. And essentially the difference between that and the IBRD is that those countries get 1/3 roughly of the money we give is free, no repayment of interest or principal. Whereas IBRD is closer to commercial market terms, but the concessionality of IBRD comes from the fact that you give long-term loans, longer than what you could get from a bank or from markets in your country. The third thing that got created was the International Finance Corporation. That goes to the private sector and enables the private sector to invest by de-risking in emerging market stuff. India is a classic example of that. Most people don't know, but HDFC originally started with an IFC investment.
Right.
And today is your largest private bank and has got an enormous footprint both in mortgages and helped to create the mortgage market in some ways in India, but also did a great job on the private banking side of financial services. And then the fourth part that got created was MIGA, the Multilateral Insurance Guarantee Agency. And the idea there is to provide political risk insurance to a company or an entrepreneur, that even if a government makes you a commitment that they don't live by it, could you go for an arbitration and get settlement? So we do both insurance guarantees through MIGA and then the arbitration through ICSID, which is our settlement of investor disputes on the fifth part, which settles between sovereigns and investors. So think about the bank as having 5 parts. And only the first part started soon after the Second World War.
Right.
Then came these add-ons over time. And today, when you step back and look at the totality, it's $120 billion that gets put into the marketplace every year. There's about 25,000, 30,000 people working across the world on this. And it runs the full gamut from the poorest countries getting 1/3 of money as grants, all the way to the middle income countries like IBRD, like India. India was an IDA country once upon a time, and now is a donor to IDA. Right. Turkey, China, South Korea were all IDA countries, now donors. IBRD is still what India does get, but India is pivoting more and more towards the private sector with IFC and MIGA. And so you could see the evolution of growth in countries through the manner in which the bank deals with them. It's quite interesting.
So if I were to say the biggest chunk of the money flowing through World Bank, does it go to IFC? I have some numbers saying 70 billion to IFC, 40 billion to IDA.
No, so the way it goes every year, you got that, you're counting private sector capitalism, mobilization. You look at the 120 I talked about, about 35 to 40 comes from IBRD.
Okay.
About 35 comes from IDA. Now it depends on the year, right? So let's say 70 to 80 is coming from the public sector part of the institution. About 30 comes from 25 to 30 comes from IFC. MEGA has 15 odd billion that it mobilizes. That's your 120. But if you also add private capital mobilization, like last year we mobilized 70 billion almost of private capital, up from say 40 billion 2-3 years ago. That's not in this number.
Is this private capital chasing a return?
Yes, it is. So the real issue is it's a risk-reward relationship. Like in my old job at MasterCard, I took decisions to invest capital in a country or an economy based on my risk-reward calculation, right? So does every investor, whether you're a hedge fund or you're a...
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Stocks pulling back here. We're down by 0.5 on the S&P. You'll notice Broadcom in the pre-market new session lows down by more than 15%. The Nasdaq is down by 1.3%. Let's talk about geopolitics. Under surveillance this morning, still waiting on a deal.
The Hormuz Strait will open immediately upon signing. Now, that's subject to a couple of areas being cleaned out also of mines, which we don't think there are any. So it'll happen very quickly, and we'll take the southern route anyway. But immediately upon signing, we open up the Hormuz Strait.
So here's the latest this morning. The president reiterating an agreement with Tehran is imminent as the House voted in favour of a war powers resolution to halt further action against Iran. The former White House senior advisor Amos Hochstein writing in the Financial Times, there is one solution to all of this. It's not military, it's diplomatic. And the clock is running. Amos joins us now for more. Amos, good morning.
Good morning.
How do you think this one ends up?
Well, I was trying to figure out when you showed the video just now of him saying the straits will open immediately upon the deal, and I was looking for a date because I thought that that's what he said 2 weeks ago or 5 weeks ago or yesterday.
April 17th, the strait was reopening.
So, look, we're in this. If I were anyone watching this, I would say ignore all videos and all news because it's all BS. There's no real talks towards. There are real talks, but you won't know that you're there until you're there. And so this is just market management and so on. And I actually think the market should just ignore it. Ignore the war. We've had a ceasefire. It's been in place for weeks. The straits have not opened, despite the fact that we have a ceasefire. We have flare-ups every once in a while. I mean, think about it. Iran fired at the Kuwait airport.
The pictures are shocking.
Our ally, where we have military presence in Kuwait near the airport. We have the U.S. military presence. They shot at Bahrain. And we're saying, no, the ceasefire is still intact because ceasefire definition is that we shoot at lower volumes, I think he said.
I thought that was fair, Amos, so I don't know about you.
I've negotiated a number of ceasefires in my life. We've never accepted, but you can still shoot. That's sort of the tenet of seize the fire. But so I think it's all fine because we have about 4 weeks or so still of buffers for the economy. Then they go away. So this is sort of, it's very binary.
I think the president's point on the ceasefire is that given the region you're in and the neighborhood, the shooting in a more moderate manner is what he's meant. It basically suffices for how they feel right now. But I'm totally with you. It's not clear to me what would it take for this administration to say Iran has crossed our red line in terms of a ceasefire. But when it comes to this summer, the president to the New York Post said potentially the strait won't open, the blockade won't lift until September.
Yeah, I don't think that's real because we're acting as though the crisis is not affecting the energy market because we have enough, which is true. We actually do. The market's working the way it's supposed to. After the 1970s crisis, we said we need a lot of inventories. So we created the SPR in the United States and Japan. We created commercial stocks. But those are all drawing at historically high levels, and they're not renewable, okay? They are finite. When they run out, they don't exist anymore. And so we know we have a roadmap of when that will happen. Some of that will happen at the end of June, early July, and the SPR probably mid-July. That's the timeline that the administration has to reach a deal. After that, they can't. After that, the leverage is gone.
You worked for Biden, and you were really the energy czar for the Biden administration, and we had the highest gas prices this country has ever seen, north of $5 a gallon. Will Trump now own that, you think, this summer? Will he surpass that?
I mean, look at his polling numbers. He owns it now, not this summer. It's $5.03, June 14, was the highest price in 2022.
Well, we're not there yet.
We're not, but we reached $4.50.
They deployed the strategic midterm reserve. Do you remember?
Yes.
Do you remember?
And I expect that to happen
I'm
with
sorry,
this
are
administration.
we now in June and it's the midterm? Here's the difference. When we deployed it, it brought down the prices to below $4 by August. So we already knew where the solution was because we didn't have a disruption. Now, if you continue this for a few more weeks, what do you do when the SPR is not available to you anymore?
What are they going to do?
Well, I think at some point they'll probably look at restricting exports. They'll look at all the things that we
But that
talked
won't
about.
actually work.
It will work on to some degree if they do not banning export, restricting. But again, this is if they don't reach a deal. I think they will reach the deal before the timeline. I said that the president says September it won't happen because he'll have to reach a deal before because that's when you're near the energy cliff. And it is a cliff, guys. It's not a, this is not a we think. We know if you reach the tank bottoms and you can't take out. So we're not living on an increased production. The United States has not increased oil production at all in this war. Because every day you tell them, oh guys, put $1 billion in the ground, but the war is about to end in the next 24 hours and your $1 billion is wasted.
We talked about this with Chevron. They're increasing production as much as they can currently, and they're exporting a lot of it to European allies. Do you think there'll become a time where they'll stop exporting to international allies?
Why would they? You're getting a higher price. Remember, Brent price that you see on your screens here on Bloomberg are not real. Those are fake prices. That's computer screen prices. You can't buy a barrel for that price. Brent is not selling.
Well, how much can you
at
buy a
95.
barrel for now?
Probably 120. So in the physical market, to get those barrels, it's much more expensive. So if Chevron sees I can sell a barrel for more, why would I sell it domestically? That's why they're exporting. But also increasing as much as they can. They're right, as much as they can, without increasing capex. That is going to be risked by the war ending. So if you tell producers the war is about to end, why would they increase production? We have only increased production 300,000 barrels in the last year. So we haven't actually seen any increased production. So what are we living on? We're living on inventories, on a buffer. And the buffer gets smaller. And the market's right to say, okay, but I don't need it to be a crisis right now because I have the buffer.
Yeah. And then you get this non-linear move and things change. And I imagine the negotiations will change pretty quickly too, Bramo.
Yeah, which is the reason why Amos says it's not realistic to get to Labor Day.
Do you not like that, the strategic midterm reserve? It was a good name for it at the time. No, it didn't work for you.
But the same people who called it that at the time, I don't know, we're again in a midterm year. So I'm a bit confused by the 2022, May, June. Now we're in May,
Politics
June
is unfair.
2026.
You know?
It's not fair, I'm just confused.
One day Biden was coherent and now people say he wasn't. You know, people figure things out. Alex, it's good to see you.
Yeah.
Out of Togstein. From New York, this is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Since March, we haven't seen anything that resembles anything sort of a pullback.
Demand is showing no signs of slowing down.
Records will be broke over the coming weeks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. In your price action, your scores look like this. Equity futures pulling back by 1/3% on the Nasdaq, down by more than 1 percentage point. One single name in focus, Broadcom, in the pre-market down negative by 15%. Following earnings.
Yeah, people point to the fact that revenues and the projected sales didn't come in as high as some of the highest projections on the street. Still, they did improve their estimate for the full year. This just highlights how much we've baked into some of these names. Outperformance needs to be met by incredible beats in the earnings, and if they're not, the punishment comes.
Look at this from Jim Reed over at Deutsche Bank. 2-month change in the S&P 500 since World War II. He put out a chart. Contact Jim, get hold of it. Fantastic picture. We've only seen gains like this rapid, coming out of recession or before the big market crash of 1987. Moves this big, like we've seen off the lows of March, are pretty rare to almost unheard of over the last few decades.
We were talking yesterday about how if you made it day 10 in terms of the daily winning streak, it would be the longest streak in the S&P 500 going back to 1995 or 1996, that kind of era. That's the reason why it is rare, is because it tends not to be continued, considering the fact that people start to get worried about elevated valuations. This is different in the sense that the earnings have been there, and that's the reason why the one thing that would make Max Kettner over at HSBC bearish is if you do see earnings start to roll over or the supply of chips start to exceed demand once more.
It was also CrowdStrike yesterday. CEO sounding so optimistic. The worlds of cybersecurity and frontier AI collided. This was the mythos moment, he said in the press release. AI security infrastructure, critical to success of AI adoption. You are talking about the need for this type of technology everywhere, and yet, disappointment.
So stocks are a bit softer this morning off the back of that. We're down by 0.4% on the S&P 500. This hour, we shift towards the economic data at 8:30 Eastern Time. We get US jobless claims, and it follows a string of better than expected economic data through the week so far. Manufacturing, the ISM at the headline level, good. Job openings exceeding all estimates on Wall Street. The ADP in line north of 100K just yesterday. And claims have been a snooze for all the right reasons now for more than a year.
Yeah, this has been the low hire, low fire dynamic. That said, all of those metrics that you just mentioned, including ISM services that came out yesterday, there's some hair on them. And this is what people keep talking about. You take a look at the employment component of all of these metrics, not great. When you take a look at the JOLTS number, it looks fantastic on the headline number. It looks fantastic in the ratio of unemployed Americans. And then when you take a look at the number of people who feel free enough to quit their jobs, typically a metric people look at, that actually went down or came in beneath expectations. So again, it goes to the confusion of what actually is happening under the hood.
We can do our part to foster confidence, to get people to feel good about the labour market so that they do think about switching jobs for...
And asking.
That's the data point I always look for. Nita Richardson joins us later. Always ask about job switches and the pay bump that you get from switching jobs. Decent sign of just how hot this labour market might be, or not.
Yeah, and you have seen that tick up in certain sectors. You also have seen people who stay get some wage growth. So, you know, there are lots of different
things.
things.
Some good news, Bramo.
Yeah, this is great.
Get a pickup in wages.
And you always say that economists are the worst. Because who's rooting for people who do not get...
Economists are the only people on the planet who worry about hotter wages.
Well,
right?
Yeah, well, yes. But they're doing it because of what Betsy Stevenson said, which is that workers have to pay the prices on the other side, too. And if the prices are going up faster than their wages, that becomes a problem.
Prices paid in the ISM yesterday, the highest since August 22.
There you go.
Prices paid pretty hot on both the manufacturing side and the service side as well.
Yeah, and understandably, if people can keep up with those prices, that's a good thing. You want people to be able to afford their lives. But if they can keep up with the prices, those prices can keep climbing. And that is the concern by economists. Not to defend them, but that's exactly what people...
Wage price spirals are scary things.
Exactly. Frightening.
To nobody else.
Exactly.
But economists. Coming up, Tracy McMillan of Wells Fargo. With stocks pulling back from all-time highs, Andrew Expirry of BNP Paribas as CrowdStrike misses the high bar for software. Nita Richardson of ADP joins us a little bit later. I'm right there with you, of course I am.
No, you're not.
Come on, of course I am. We begin this hour with stocks edging lower after Broadcom results call off the record-breaking run for chip makers. Tracy McMillan of Wells Fargo with a year-end target on the S&P of 7,500, expecting no Fed rate moves, a better economy and increased M&A activity through to year-end. Tracy joins us now for more. Tracy, a wrinkle this morning, and good to see you. And that wrinkle comes from Broadcom. What's the lesson from the price action this morning?
Good morning, John. So the lesson is that after such amazing run like we've seen in the AI names, there is still some room for disappointment. So we have overweighted information technology, but we're telling investors not to chase those names at these prices right now, and that there are probably better opportunities in some other sectors like industrials or utilities or even financials.
Well, you've liked financials. That's been a high conviction call, and Tracy, it hasn't been working. Why hasn't it been working, and why would that change?
Yeah, so it hasn't been working because of the steepening yield, the flattening yield curve and the private credit issues. And we think that going forward, we are going to start to see that yield curve steepen some. Right now, there are a couple of rate hikes priced into the markets. We think those are going to come out by the end of the year. And we also see some additional potential upside in rates on the long end. M&A activity, you mentioned that as well. IPO activity, both really good for investment banking. So all of those things we think support financials.
We were talking about concerns around private credit. We're getting another headline this morning that Blackstone Private Credit Fund plans to cap investor redemptions at 5%. This comes amid a slew of different information that we've been hearing, including from the Swiss Partners Capital we were talking about earlier this morning. Does this give you pause, or do you think that this is noise, given a duration mismatch and not necessarily a broader signal about the market?
Yeah, so we think that that is not necessarily a broader signal about the market. We're watching spreads in the public markets that are at near record tights. And so we don't see broad concern in the fixed income markets. That said, there are some pockets in the private credit market that obviously investors are starting to worry about. And so we would tell investors that it's important to keep that diversification within a fixed income portfolio, with some potentially in private credit if that fits their risk profile. But in the public markets, we are just not seeing that strain.
There's also an issue of consumer spending with their wages not really keeping pace. We just saw credit card balances hit a record $1.28 trillion on the margins, delinquencies picking up. Do you see signs the consumer is getting tired? Does that give you pause?
Yeah, so definitely there is a component, a segment of the consumer that is starting to get stretched, get tired, if you will. We've talked about, the higher prices that they are experiencing. And so they continue to spend, but some of that spending is now coming from savings. Some of it's going onto credit cards. And I think the positive here is that it's not all consumers, and we are continuing to see, some firming in the labor market. And as long as consumers have jobs, they can continue to spend. And really all we're expecting from the consumption part of GDP this year is maybe a modest improvement, because most of our GDP expectation is coming from CapEx.
Tracy, what do you think about the energy space right now? I noticed in your note you said you want your investors' portfolios to trim energy equities and commodities, but we just heard from Amos Hochstein, who basically said we're living right now globally on a buffer. And when that dries up, we could see tremendous upside when it comes to energy prices.
Mm-hmm. Yeah, so we are telling our investors that it is a source of funds for some other areas of the market where we see better valuation. So we're not necessarily disputing the fact that, almost 1 billion barrels of oil have been lost through this conflict, and that there are going to be some pockets of the global economy that are going to start to experience severe shortages if we don't get oil flowing again. That said, though, we do think that when oil spikes, that it is an opportunity for investors to reposition, because we don't think this is a long-term supply issue. It's a supply shock.
Is this basically investors needing some capital to allocate elsewhere, maybe with some upcoming IPOs? Where else do you see investors moving money around to make sure that they are getting in on the AI race?
Mm-hmm. Yeah, so we definitely think we see that happening. We have seen the Mag 7 starting to underperform. We've seen crypto underperforming. And so we think it's some of those higher beta areas of the market where investors are pulling funds, raising cash, so they will have that cash available as these big IPOs come to market through the summer.
Tracy McMillan of Wells Fargo. Tracy, thank you. Appreciate it. Still constructive on this equity market. Financials not working really at all. There's lots of reason for the bank's trade to work. Hasn't really picked up. It's been a stop-start story through the year so far. And this story for the broader financials, from the private credit players, that story's not getting better.
No.
For the names, at least, for the individual stocks, they've struggled to get off the mat.
Yeah, and investors still have a desire to withdraw more than potentially the funds can handle without affecting their other shareholders. This particular Blackstone private credit fund saying that repurchase requests exceeded about 10%, or were about 10% of shares outstanding, and they will only fulfill about 5% of that. And we've seen this practice pretty much across the private credit retail-focused sector.
Just a cloud hanging over the stocks through the year so far. Equity futures on the S&P pulling back by just 0.4%. With an update on stories worldwide with your Bloomberg Brief, Isabel Lee has more. Hey, Isabel.
Hi, John. Dallas Fed President Lori Logan says the central bank may need to raise interest rates later this year to bring inflation back to its 2% target. Logan joins a symphony of Fed officials highlighting inflationary concerns and raising the prospect of rate hikes. Broadcom shares falling in pre-market trading. The company delivered a disappointing forecast for AI chip revenue. Broadcom says it's making progress with AI customers, including Alphabet, Anthropic, and Meta. And some members of the Glazer family are debating whether to sell their stake in English football club Manchester United. After more than 20 years of ownership, some family members are trying to convince others it's time to sell. That's your Bloomberg Brief. John?
Isabel, appreciate it. Thanks for the update. Up next on the programme, the Morning Calls Plus, Andrew de Gasperi of BNP Paribas as CrowdStrike fails to meet sky-high expectations. That name down in the pre-market by 10%.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The demand environment looks extremely good still. Valuations actually still look pretty good, especially on Broadcom's side. They remain very entrenched in the key players out there within the AI ecosystem. And as a result, I think this is a place you still want to be, acknowledging, though, that there are risks that are heightening.
That was Angelo Zeno of CFRA. Equity futures this morning look like this. On the S&P 500, down by about 0.4%. On the S&P, on the Nasdaq, we're down by 1.2%. Broadcom weighing on this equity market this morning. More on that a little bit later. In the bond market, Treasury yields shaping up as follows. 2s, 10s and 30s, yields down across the curve. We're down 4 basis points at the front end of the curve. Heading into jobless claims, 15 minutes away.
And jobless claims have been basically a straight line. It sort of looks like what you would see on Scrubs if someone did pass. It seems like we haven't gotten a real signal here. Do we start to see anything in terms of either tightening or potentially loosening ahead of tomorrow's key employment report?
Looking forward to that. Payroll's just around the corner. Looking for something around 80 to 90K. 80 to 90K, we've said that a few times already this morning. Break-even rate for this economy. Some debate about the estimate around that, but closer to 0 than 100. So anything north of 50 right now is going to be taken pretty well.
Yeah, I really do think that people are going to ultimately look at the unemployment rate and the wage growth figures, because those are going to be the biggest tells about how much inflationary pressure, the wage price spiral that only economists care about, and me, by the way, in terms of perpetuating any kind of inflationary pressure.
I'd love to see a wage price spiral.
Same. I was like, I'm excited.
Right,
Hope it happens. Yeah.
Bring it on. Let's get you some morning calls. First up, Brammo doesn't want one, just for the record. Macquarie, downgrading Broadcom to neutral, expecting market share to decline meaningfully as Google moves to insource its chips. Their stock is down by 15%. Your second call from Citi, raising its price target on Oracle to $330, expecting the company's cloud strength to continue. And your third and final call from Citizens, hiking its price target on CrowdStrike to $780 from $550, saying it's a retail opportunity for a household name in cybersecurity. We appreciate that you're doing your part.
She's like the adult in the room.
Yes, I think, thank you.
I personally don't want to see prices go to pandemic levels. I don't want to see my toilet paper
so you're going to do your bit
and be $15 for two rolls. I think that's not necessary.
Where are you paying $15 for 2 rolls?
I'm saying I don't want that to happen.
Oh, right, okay. Your year-end eval must be fun. Must be so easy for management.
All right, okay.
Okay.
It's just like positive for me, negative
Let's
for me.
get to CrowdStrike. Andrew Gaspari of BNP Paribas has a neutral rating on the stock with a $400 price target. He writes AI should be a catalyst to cyber demand, but the stock is not attractive on current growth expectations. Andrew joins us now for more. Andrew, good morning.
Good morning.
Good to see you, sir. Let's just start with this massive rip off the low before we even get into today's declines. We're talking about a name that's up 100% from the lows of the year.
That's right.
Why has this become the sweet spot for software?
Well, I think at the beginning of the year, we had a lot of the kind of leaks in terms of the AI companies, the AI labs, essentially saying that they'd be disrupting certain segments of software. And cybersecurity actually was one of those that were flagged and leaked into the press. What was interesting is that after the announcement that essentially Anthropic was going to partner with the leading cybersecurity companies, that completely changed the entire narrative, because prior to that point, cybersecurity was considered a disruptible sector. After that, I think it was viewed as one of the key sectors in order to protect all of us from potential bad actors in terms of disrupting the economy or anything in that regard, with tools that are essentially very advanced when it comes to how to hack organizations.
So the narrative improves, the stock gets squeezed because it was beaten up so much, and now you've got this spread between the narrative and growth expectations and growth. How do we close that spread? What are you expecting to see from the company?
Yeah, so at the end of March, there was a completely change in terms of tenor from customers. I think the CEO of CrowdStrike has mentioned that as well on the earnings call last night, saying that he saw a massive inflection point in terms of tools that could protect against AI, essentially. So in order for companies to deploy AI internally, they would need to adopt a lot of tools like CrowdStrike. So what happened is essentially the company is now, and this is probably ties into the improved optimism on their part in terms of the pipeline, is that a lot of customers are essentially asking for the tools that CrowdStrike offers, among others like Palo and others. But I would say CrowdStrike in particular last night was vocal about it.
At this point, how do you gauge whether we've already priced in all potential growth and versus still have more room to go, and this is just a temporary blip as people are used to a much bigger outperformance from other tech-related names?
Right. No, that's a good question. And I think one of the issues is right now the stock is baking in a lot more than what is currently the street estimates for growth, right? And I think part of that is the enthusiasm behind the potential demand that would come from what's called AI detection and response. And I think we believe more like, look, we need to see the actual revenue coming in before we would get excited about the growth trajectory. Right now, and this was the title of my of BNP's note this morning, was mythos moment or aggressive guide, mainly essentially saying, look, like you have to either believe or you're going to have to wait and see. And we're more of the wait and see camp before we kind of get excited. And essentially, you have to really put some of the most aggressive multiples on software on this stock in order to be really optimistic in terms of the performance. And that's where we need to obviously have more proof before we go there.
What does it say about the amount of leverage being built into some of these names? And I'm not just talking about borrowing money, but I'm talking about levering up the expected returns over the next 5 to 10 years when there's very little visibility? Is it getting to a place that's getting a little too heady for investors?
Right. So at BNP, we essentially looked at several stocks that we considered a kind of AI winners, right? And some of them cover chip design, some cover cybersecurity, very few in software. You guys just talked about Broadcom, for example. Like all these stocks have kind of been moving in one direction, while a lot of the other software stocks, for example, have not. So I think when you look at how does that shift, a lot of it is going to be outside of these companies' like own strategy and control. A lot of it is going to be what happens, for example, with the hardware versus software trade. I think a lot of it is going to also depend on what the AI labs do, particularly as they go public. So we think that a lot of the expectations versus actual results will be different versus how these stocks perform. I think the valuation versus fundamental dislocation is widened, frankly. And so when it comes to how this sort of how does the gap narrow over time, that's the question.
Is that why you have a $400 price target?
Well,
on
we did
CrowdStrike?
upgrade it last night a bit to over 500, so we're not.
At 675, I think,
Yeah.
even with the stock down 10%.
Right. So again, when we talked about valuation multiples, right, we're applying an 18 times sales, which is again one of the more higher multiples we apply in software land. But like I said earlier, a lot I think investors are looking at this incremental revenue that is likely to materialize over time from these security products. And that obviously hasn't materialized yet, so it's obviously the valuation is leading the potential adoption of these tools.
I'm sure you don't want to make headlines about this becoming a bubble, so I'm not going to put you on the spot.
That's outside of my scope.
Of course, of course. But as an analyst who's seen a lot of things and been in the market for a while, how unusual is this moment to see this market get away from analyst expectations in the way it has done in the past few months?
It doesn't happen that often, but I think in this case, some people are considering AI similar to how like the cloud companies emerged like 10, 15 years ago and what happened to the industry at that point. So it's definitely an inflection in terms of change and from a technology standpoint. And so a lot of investors are struggling to understand how does this play out, of course, right? But I would say it's unusual. It happens maybe once every 10 years. So I would say how this plays out, I don't know, and I won't give you a forecast of where if it's a bubble or not. But that's where we are.
What if for CrowdStrike this is a mythos moment? What's the upside potential?
Well, I mean, the TAM would be, I think, look, this is CrowdStrike's management team in terms of how they explained it. They think it could be as big as the endpoint detection and response market, which is a pretty massive TAM. I mean, if you look at CrowdStrike's revenue, that's still the majority of their revenue today. I think they're planning to get to, give or take, $6.5 billion of revenue this year. So if you see how, if you apply what they're saying, that this could be bigger than that, I mean, we're looking at a few $1 billion of incremental revenue for CrowdStrike. And the reason why companies like CrowdStrike or Palo Alto Networks or Zscaler are playing that role is because AI labs can't detect these threats in real time. You need to have very accurate way to detect them. You can't just take probabilities or you're in trouble. So they're considered critical tools in that process. But to give you a sense of like in terms of how big it could be, could it be 10 billion? Could it be 20 billion? Who knows? One of the things is that they also said is that the market for AI security is going to be meaningfully bigger because we're not just talking about mobile devices and workstations, which is what CrowdStrike is famous for. We're talking about data. We're talking about models that you need to protect against, prompts, right? Browsers. This is where users like you and I essentially engage with AI algorithms is through these devices. So it's a lot wider, what I call threat footprint that you need to protect against.
Andrew, this was smart. Appreciate your time. Thank you, buddy.
Thank you, John.
Thanks for coming in. I'm sure you've got a busy morning ahead of you with this name. CrowdStrike down in the pre-market following a major rally, a massive rally off the lows earlier this year.
I love that, John. I don't want to put you on the spot and ask you if it's a bubble, but is it a bubble?
Well, no. I think for analysts right now, this has been somewhat frustrating. It's not something they're used to. Usually, the median target on a stock like this is above where the stock is trading. And for so many of these names, it's below. And that's a massive switch because the markets move so quickly.
How do you price in an industrial revolution? I sound like Dan Ives. I'm not meaning to, but that's essentially what increasingly people are saying. No
Second innings?
Yeah. It's 10 p.m.
Do you want to pick a basketball player, something like that?
You know, going
Jalen
like
Brunson.
Running.
The Jalen Brunson of cybersecurity.
With the leather jacket. Yeah.
There you go.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The opening bout just around the corner, 60 minutes away. Equity futures on the S&P 500 pulling back by 0.4%, on the Nasdaq down by 1.2%. Lots of coverage of Broadcom down in the pre-market by around 15% through much of this morning. The next stop for this market is the economic data. Jobless claims just seconds away. In the bond market, 2s, 10s and 30s shaping up as follows. Yields look like this morning, down by 4 or 5 basis points at the front end of the curve on 2s, at 4.03%, on 10s down to 4.44. Let's get you some jobs data, some claims and some unit labour costs in the mix as well. Jobless claims coming in at 225. That's the wrong kind of upside surprise. The median estimate in our survey was 215. One number just caught my eye, crossing the Bloomberg terminal very quickly. Unit labour costs for the first quarter coming in at 1.8%. That is a downside surprise. The estimate was 2.4. So that's a big downside surprise in many ways, Bramo. And that's taken some heat, I would suggest, out of this conversation about a Federal Reserve that might need to hike sometime soon. Yields down to the front end of the curve now by some 5 basis points.
If you're worried about a wage price spiral, theoretically, well, this would actually dampen some of those fears because it's not necessarily picking up at the same pace that many people expected. The expectation was 2.4% for those unit labor costs. It came in at 1.8%. You also had a slight upside surprise in the initial jobless claims. So again, that is not the right kind of move if you're looking for some sort of heat or growing strength in the U.S. labor market. So, well, this isn't screaming some sort of crisis. It definitely is dampening some of the potential inflationary pressure.
Yeah, I'm not going to freak out about claims just yet. 3-month average still around 215.
Yeah.
Anything close to 200K, things are okay. Look the other way. But the unit labour cost does catch your eye. And I know it's the first quarter and somewhat backward looking, and maybe things have changed in the last few months. I don't know. But that sets the stage for a conversation with the Federal Reserve to say, this is the data we've got. At the moment, unemployment is still north of 4%. Wage growth and labour costs don't look like they're getting away from us right now. Maybe we've got time to figure this out through the summer. So when it comes to urgency, the ECB is looking to move in the next week, maybe the BOJ as well. The Federal Reserve's just not there yet, and this market's not screaming at them. This jobs market is not screaming at them to make a move.
You see consumers still spending, but they're spending from their savings. They're not seeing their wages grow at a commensurate pace in many cases. And as a result, that is one reason why people are using the T word once again. They might call it transient, but it's essentially the same word, which is transitory. And essentially, that has been the theme. This would lead maybe more into that camp.
Can you imagine if Walsh uses that word?
That would be
first news conference out the gate.
That would be a bad thing.
T word out of the gate.
No, don't do it.
What if it turns out to be right?
But just pick a different word. You know, like honestly, a moving experience of inflation.
A moving experience. Okay. Looking forward to this speech that Lisa's writing for Kevin Walsh.
I hope he's not watching.
Mr. Chairman, if you're watching this morning, good morning. Making some edits, courtesy of Bramo this morning ahead of that meeting 2 weeks away. Looking forward to that. Jobless claims 225, the estimate 215. Unit labour costs for the first quarter coming in at 1.8%. The estimate was 2.4. To discuss, Anna Wong, Chief US Economist at Bloomberg Economics, joins us now for more. Anna, welcome to the programme. Just take stock of this labour market for us heading into payrolls. What kind of labour market do we have?
It's a good labor. It's an improving labour market. And with this upside surprise in jobless claims, I would say that most of it is due to seasonal factors. the seasonal factors expect about 5-something decline in jobs claims. And in fact, we have seen a little bit tick up in layoffs and hence the seasonal adjusted jobless claims surprise on the upside. But all in all, we are seeing decline in unemployment flows, which precedes a decline in continuing claims flows. So we're expecting in the next 6 months, unemployment and continuing claims would continue to go down.
That would be good news. One way we're trying to measure the heat, the tightness in this labour market, Anna, is just to look to wage costs, labour unit costs. Walk us through where we are right now and how much weight you would put on unit labour costs for the first quarter going into the next Fed meeting.
Yes, so first of all, unit labor cost is a very important concept. At the Federal Reserve, where I used to work, they would track the underlying pace of inflation by looking at unit labor cost adjusted for productivity trends. And the fact that it's running below 2%, and this is something that economists could have predicted, because coming into the year, we are seeing that firms don't have pricing power, and therefore the hiring power is also not very strong. But now, using the latest earning data, we are seeing renewed wage pressure growth, just a little bit, not as strong as 2021. But nonetheless, I think we can take a little bit of signal from Q1 unit labor costs that, in fact, the underlying pace of inflation was on track to fall below 3% this year.
Anna, what's your base case for rates now with the team over at Bloomberg Economics?
We're expecting a 25 basis point cut in fourth quarter of this year.
OK. Anna Wong there of Bloomberg Economics. Anna, good to see you. As always, great to have you in New York as well. Anna Wong of Bloomberg Economics, looking for better momentum in this economy, but ultimately a rate reduction at some point, maybe in 4Q later this year.
In part because of the labor pressures, because ultimately this might be a moving price increase, or it might be a mercurial price increase that we're seeing right now. Impermanent price increases, shifting price increases is one person suggested.
Who is this courtesy of? ChatGPT, Gemini? Who have we got going? A nice thesaurus on the
AI
desk?
of Bramo's brain. No, one person did suggest shifting. Please keep it coming. We're going to have a new vocabulary.
You're getting Bloomberg subscribers to weigh in on this too.
Please do.
Nice.
If you have a suggestion, please send it my way.
Nice. Nita Richardson of ADP is waiting very patiently to weigh in on this. Nita, good morning. Good to see you.
Good morning.
I'll give you a pass on that particular debate. Let's talk about this labour market. How tight are things? What do you see? We had a really decent ADP print early this week.
In fact, when I saw the number, I thought immediately of Lisa, because she has been asking me for several months now, is this employment picture broadening out? Is the hiring pattern broadening past healthcare? And yes, this month it did.
Good.
This was the first month we've seen in years with this broad of a hiring pattern across 8 out of 10 super sectors. Even manufacturing, for the first time in over 2 years, saw positive job gains, and we saw gains on all size fronts in terms of the establishment sizes. But to your question on tightness, if you look at the wage data, it ain't tight yet. And so the quality of the new jobs, different beast than the quality of jobs 2 years ago. That means lower pay growth, not higher. And so when we look at job changer pay growth and we can match them with each individual for each cohort, it's down a bit from last month, 6.5%. That's not bad, but it's not something that bends in any way toward a wage price spiral.
You talk about changing in the composition of the types of jobs that are getting created. Can you give some color around that? Which jobs are being created and which aren't, that would lead to more robust wage growth?
So because we're tracking paychecks, we actually know how many hours people are working. And from that, we can calculate the part-time share of new jobs and the existing headcount for all jobs. And what we're seeing is that before the pandemic, part-time share was about 37%. It's gone up 5 percentage points. It's now 42% of all the jobs we're seeing in the payroll data are part-time. And then if you look at healthcare, the jobs that are being produced there, remember healthcare is the stalwart, is producing still the bulk of job gains. Those jobs are tending towards home healthcare aides and lower paying healthcare jobs for the sector. And then if you look at the size cohort, it's the young, the smaller firms that are creating the bulk of jobs. Over half of the jobs created in the ADP report were for firms with under 50 in headcount, and they tend to have slower pay growth. So all in all, this is a lower wage dynamic than we saw before the pandemic.
You know, you talk about part-time jobs, and it's something that people talk about when we get these jobs numbers, the job growth numbers, and they say that they're overly inflated because they reflect people getting multiple jobs. They reflect someone having to work 3 different jobs to support their family. How much is that what we're seeing in the headline numbers, and frankly, even from some of the job creation?
Well, if you look at the part-time share, that suggests that it's more than one job if you're thinking about supporting a full life, right? So I think that multiple jobs, gig work is really important. And it's not just young people who are doing multiple jobs. It's older workers. It's workers who are at retirement age and now have a 1099, a side business. We used to say back in the day, a side hustle. That's something New Yorkers are very familiar with. That is common and growing in the retirement age, older age workers. So this is not going to be an unusual aspect in a very expensive economy. Affordability is a factor, and it's leading to a lot more multiple jobs.
You know, I met
a
lot of Uber drivers in this age cohort that are picking up this second job. They actually are retired. Some of them are retirees, and they're finding other ways to make means. What does this say about where we are right now in the economy and inflation?
Well, it says a lot about the structural foundation of the labor market. Yes, people are working longer, but as you work longer, that labor force participation drops. And so you have this mixed bag of, yes, people have to work longer because they're living longer, and maybe you're spending 30 years in retirement. You're either bored or broke, and you need to go back and get that second, maybe even that third job or a different career.
Shouldn't people be asking for higher wages at their primary job instead of picking up a second or third?
Maybe some can, but workers lack that kind of leadership and being in the driver's seat that they had during the Great Resignation. Remember, this is still a low-hire environment. If you look at those jobless claims, if you look at the JOLTS numbers, yes, jobs openings were up in April, but hiring and quits stayed basically where they have been. People are not quitting their job. And if you ask why early career are not finding a foothold, maybe it's because their older brothers and sisters who got jobs in 2022 aren't leaving those jobs. They're not being promoted. They're not seeking new opportunities. And so that entry-level job just isn't vacant yet.
What a labour market they walked into out of that pandemic. I know they were super upset about not having big parties and stuff because everyone was locked inside, but they walked into one heck of a labour market in this country.
Yeah, although they now have a reputation that isn't great. I mean,
Tell us more, Bremo.
Well, I mean, this is the question. How many people sort of blame that generation for the quiet quitting, for not necessarily understanding work ethics, and that was part of the reason why certain people were cutting back or not hiring certain entry-level people, and they were using AI as an excuse.
They were saying paid so much money.
Yeah, they made so much money.
Decent case study of that, right?
Okay, please.
New York City. Okay, for those of you that don't live in New York City.
I know where you're going with this.
Where am I going with this?
West Village.
There you go. Good. You used to go and live in Murray Hill, right? You'd do an apartment share, and now they all live in the West Village. Second-year grads on Wall Street living in the West Village, which is like, what? When did that happen?
Kind of ruining it, to be honest. I mean, maybe that's
Is that how you feel? Tell us how you really feel about the situation.
They kind of are.
That's how I'm gauging how much people are getting paid.
If they're worth it, great. I hope they set a good example for future generations that will be going into the workforce in 4 years.
In defense of Gen Z. It's hard to learn the skills of work without being onboarded. And a lot of them are onboarded in a remote hybrid work environment, and they don't get the peer and the older peer mentorship that leads to good work habits.
Drew Mattis shared research from the New York Fed this week that said youth unemployment has risen dramatically since the pandemic, and it's not about AI. It's because they're at home and they're working from home and they're not getting the mentorship as you described, and that's why there's a rise of youth unemployment.
But is that because they want to work at home or because their superiors don't want to work in the office?
It's probably a mixed bag, but I think maybe, I mean, I don't know. I hear a lot of Gen Zs that love the idea of scheduling their schedule to them, not their employer.
Nita, it's good to see you. It always is. Thank you. Nita Richardson there of ADP, just holding on to a better jobs market, just a bit of momentum there, some broadening out.
I liked her defense of Gen Z. I'm going to run with that. The idea that they weren't mentored, they weren't brought into something. They were psychologically devastated from the pandemic of graduating into a social void where you really couldn't experience one another. And then they were foisted into work environments where you didn't get the normal discussion. You didn't get the vibes of an office, of the water cooler. That's hard.
Yeah. Thank you. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Recapping the data we just got, jobless claims coming in at 225,000 of 215,000. Continuing claims coming in at 1.77 million, ticking down slightly from the previous week. Another setback in U.S.-Iran peace talks, the Hezbollah chief saying the Iranian-backed military group rejected the ceasefire deal between Lebanon and Israel. He says the agreement must include all of Lebanon. And Blackstone Private Credit Fund hitting its quarterly redemption gate in the second quarter. It's now capping withdrawals at 5%, despite investor exit requests hitting 10%. The news comes after Partners Group announced it will curb investor redemptions in more of its private equity funds. That's your Bloomberg brief. John?
Isabel, thank you. I guess I've got to come back to it.
Oh, no, really?
I've just got to squeeze it in a little bit.
Okay.
A generation that won't pick up the phone, and you think they've been starved of the conversation in the office.
Part of it is because they haven't been forced to engage in social circumstances. I can't talk in abstractions. I know that it's not quite the difference. That I see a different Gen Z at home.
Okay.
It's not
Things
as
are
stunted. I see the friends. I'm optimistic. There's some wonderful, wonderful people coming to the workforce.
That I totally agree with. I completely agree with. We're talking about a very specific cohort that graduated
the
at a very
music is still
specific
playing.
time. I know, because I've got to go. I know, I've got to go.
Okay, let's go.
Just explaining myself. Set you up for the day ahead. We'll do that next. We'll catch up with Kelly Kowalski of MassMutual on the further risks to the chip rally.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The question that I'm trying to figure out, are the impaired stocks or the impaired groups, are they weak because they're truly impaired, or are they weak because they're just not AI stocks? And I think that's the big question of the moment, because we've been in this highly rotational market. I think that continues, but you do have to just be aware of some of these little cracks around the edge.
That was Chris Verone of Strategas weighing in on the equity market a little bit earlier. Got this message from Kevin Gordon of Schwab moments ago. I'm Gen Z and I come in peace. I don't consider Kevin Gordon part of that generation, do you?
No, he is absolved from any Gen Z associations after the conversation.
We're talking about this very specific class of Wall Street. Do you remember that presentation at Goldman by that first-year analyst?
Yes, I know you're talking about.
They put a deck together for partners at Goldman about how they were overworked.
There is an issue, and I will just say, it might be a generational thing of people who grew up on Instagram doing things and believing themselves to be more inflated, and sort of the vision that you can craft for yourself online being similar to the amount of work that has to go into it.
I also think it's a massive opportunity for anyone of that generation to separate themselves from the pack, because you just have to act.
The bar's low.
Right? A certain way, turn up to work first, stay late, be in the office all the time, meet with that old school manager, that boss that's always there, never takes vacation. You know what I'm talking about?
I do.
Right.
I think, what I love about this is you're clearly talking about someone. Who are you talking about?
Futures are negative by 1/3 of 1%. Let's get you some single names. Some stock movers this morning. Yahara has more. Hey, Yahara.
Hi, John. Well, the AI trade is under pressure this morning, and at the center of it is Broadcom. Those shares down 15% in the pre-market as investors zero in on an AI chip revenue outlook that just did not meet the lofty expectations. That's because investors added some $270 billion in market value on this stock in just the past 5 sessions, leaving little room for error. And that weakness is dragging down the entire chip trade. We're seeing names like Intel, SanDisk, and ARM down in the pre-market. And remember, these are the names that not just helped us, that lifted us in this 9-day rally that ended yesterday, but also lifted us from the lows of March. And we end on CrowdStrike. Those shares also falling in the pre-market 10% after its outlook failed to impress investors. The outlook largely matched, but it failed to justify a stock that has surged nearly 60% year to date. John?
Yahara, thank you. Appreciate it. One final point. Can I make one final point? It's actually in support of that generation.
Oh, good.
This, I think, is the strongest argument. I don't think the upside potential exists for them in the way that it used to, and at least that's how they perceive the jobs market right now. Let's take Wall Street as an example. The years of the crazy bonuses kind of in the rearview mirror. I think back in the day, if you did that hard work, there was a path there that you could see with visibility to some real gains. You could accumulate that wealth through the stock market. I think that they feel like that's beyond them, that they have to take these other risks elsewhere, crypto, YOLO names, meme stocks, all of those kind of things. That's kind of what I'm getting at that point. And I understand where that comes from.
Companies don't have commitment to them in their careers. They don't think they're going to have one career their whole life. They think they're going to have lots of different careers. They aren't getting jobs. I mean, how many graduates are moving back home with their parents and have no options for anything? So I don't know. I haven't seen that level of, badness.
That's why I have a lot of sympathy. Jim Bianco just writes in, when did you guys become the get off my lawn complaining boomers? Hey, Jim, don't get me started on the boomers.
Yeah.
So I've got strong feelings about that too.
So do I. All right.
As we count you down to the opening bell, let's check in on the AI rally. Grinding to a halt, the chip makers coming under pressure. Kelly Kowalski of MassMutual writing, investors should stay the course, but FOMO behaviour, bottlenecks, capex discipline and efficiency gains are risks that should be monitored. Kelly joins us now for more. Kelly, good morning, good to see you.
Good morning.
We'll avoid all of that. Are there cracks emerging in this trade?
I don't think there's cracks. I think this is more about too high of expectations versus the fundamental long-term story. We've been accustomed to revisions of 50%. If you look at sort of the Gartner forecast for memory chips for this year, for revenue, it's 3x. Next year, that's expected to slow to a 20% growth rate. So we're kind of in the joyful part of the parabola, but I think this sort of, this modest sell-off we're seeing is a bit healthy because it's kind of resetting some of these expectations.
Is it enough to get back into some of these names?
We wouldn't recommend chasing the parabolas, but we think you have to stay in the market, stay diversified. The risk is really being underweight this long-term secular macro trend.
How concerned are some of your investors, or some of your clients, about just how quickly things have shifted and their inability to keep up, their inability to sort of wrap their heads around some of the numbers that we're seeing coming out of IPOs or even just the debt raises?
There are some signs of froths, a little bit of signs of euphoria that we're seeing. If you look at retail call buying, maybe some of that is Gen Z trying to get in on that trade. You're seeing some of that, but at the same time, you've got the fundamentals that are supporting it through the earnings side. So I don't think we're at peak growth or peak euphoria yet, but there are bubble-ish things coming up. We don't think AI itself is a bubble. It's a wave that's going to crest and fall. But we should be on the lookout for overexuberance.
How excited are people about space?
Well, I think if you look at sort of the SpaceX IPO and how much the valuation is, there's a lot of excitement out there. You look at the ETF flows into some of these new space ETFs, there's excitement. But again, going into the IPO, excitement. Look back decades ago to Facebook. You had some negative returns post that IPO. So it just really enforces for us the importance of taking a long-term view and really looking at the broader trend versus sort of the immediate excitement.
Kelly, are there some things about this particular moment for SpaceX that remind you of that moment for Facebook?
Perhaps.
What stands out to you?
I think it's hard when Facebook IPO'd, it's hard to really just wrap your mind around the future and, the trillions of dollars of market cap that they would capture, right? I think if you look back at that moment, no one sort of saw how much ad revenue they would capture and how dominant they would be with billions of users. And I think you kind of have that same paradigm with when we're talking about data centers in space, for example. None of us can wrap our minds around that, right? That sounds very far-fetched, and perhaps right now it is. But looking into the future, a decade or two, maybe it's possible. Again, it really comes back to the long-term view and thinking about it in that way.
Kelly, it's good to see you. Thanks for being here. Thank you. Kelly Kowalski there of MassMutual. The failure to imagine. If we were doing this in the 90s and we were talking about Amazon, there's no way that I would have imagined what Amazon would ultimately be in 25, 26 years' time.
Yeah, books. You thought that it was a really easy way to get books.
Why can a bookseller have a market cap this large? It makes no sense to me, because it wasn't about books.
And I remember being really skeptical of Netflix. Who's going to want to buy rent a subscription to get a CD, a DVD shipped to you in permanence? And guess what? They totally transformed themselves with debt issuance. They used the capital markets to really create a behemoth. This is why you're seeing analysts fail to get ahead of the earnings growth that we've been seeing again and again.
This was fun. Appreciate it. No doubt the conversation will continue after the show's finished. All right?
I think I'll be remote tomorrow.
Coming up tomorrow, Jonathan Goll of Seaport, Priya Misra of JP Morgan, Nadia Lovell of UBS, Jeff Rosenberg of BlackRock. From New York City this morning, good morning. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for 300,000. It's going to be 650,000. But eventually, then they raised the price again. And they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Taking a little bit of a breather after a drop yesterday as well. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a disappointing outlook from chipmaker Broadcom revives fears that the AI rally may have gone too far.
Banking bonanza, JP Morgan, Goldman, Morgan Stanley, they are pulling out all of the stops, including an in-office rocket ahead of SpaceX's blockbuster IPO.
And a rare rebuke for President Trump. The Republican-led House votes to stop the war with Iran as peace talks falter.
So a few stocks on our mind this morning. I'm looking at Blackstone because about an hour ago we got the redemption numbers.
Because of course you are.
When am I not, I guess? I always am. But today I'm also showing it to you all. That's usually the difference. So about an hour ago, we got Blackstone redemption numbers, and they were higher than last quarter, and they are gating at this time. Last time around, you'll recall that they gave back all of their money. But a couple important things to note, Matt. It was 10% redemption requests. Compared to Cliffwater, it was something like 17 for them, so much better than feared. So you're seeing the shares rally 1.6%. They emphasize we have ample liquidity. We're doing okay.
I also think, like, it's just 10%, right?
Yeah.
And a lot of people just want to get out before somebody else.
And, you know, like, we've looked at all the numbers. For a lot of these funds, it's only a couple of investors that are the ones that are trying to redeem everything. So you had 10%, but maybe it's only a handful that are actually asking for their money back.
And they're going to plow that money back into a new vintage anyway. Broadcom's strong outlook isn't enough to impress investors, despite being above estimates. This is, to me, the story of the day. This company had added $270 billion in market cap over the past 5 trading sessions. So it added an IBM, it added a Salesforce, and it says it's going to have 180% revenue growth for its AI chips. That's already pretty good, right? 180% growth. That's like at least double the kind of growth that NVIDIA puts up. But it just wasn't enough for markets. And we see that, Danny, really across the spectrum. CrowdStrike, for example, beat estimates and raised its forecast, but still is falling today.
I mean, it's not just falling. It's down 15.33%. Let's talk about that with Bloomberg Equities reporter Carmen Reinecke. Carmen, what do you make of that? Because numbers are strong. Yeah, expectations are high, but 15, that's pretty brutal for a drop.
It is, and I think the thing that we're seeing really is that that forward outlook just wasn't enough to really excite investors, especially after the stock saw such a huge run up. I mean, $270 billion in 5 days is incredible, and that was only the last 5 days. It was up through yesterday's close, more than 60% from a March 30th low. We've seen this extended rally in the semiconductor space overall, and so it makes sense that especially if expectations sort of fell short, investors might want to be taking some off the table, especially I've heard from a few sources that
you might want to take some off the table with some huge upcoming IPOs.
That's exactly what I was going to ask you. You know, if we're going to see a $2 trillion almost SpaceX IPO, if we're going to see a $1 trillion Anthropic IPO, OpenAI as well, that money for a lot of investors needs to come from somewhere else, right? And we see it for sure coming out of Bitcoin. But is it going to come out of more adjacent stocks, more sort of industry adjacent stocks?
I think it's definitely possible. And I mean, and it's something we're seeing even this morning. There's really broad selling sort of across the semi space. Nothing is down quite as much as Broadcom, but people are taking some of the money off the table. And I think especially some of the companies that investors have been going for exposure to things like Anthropic and OpenAI are maybe top of mind.
You know, it's an interesting point on this idea of like adjacent sectors, because for a while, all of the space stocks were rallying really hard on this idea that we'd get a SpaceX IPO. But presumably, the indexes, when they absorb this, it's going to be a lot of industry indexes, right, that like have to put this in. So other things get sold. So how are you and the team thinking about
ETFs,
that?
for example,
Yeah,
right?
yeah, yeah.
If you have a space ETF and they put all of a sudden 15%
and it's market cap weighted,
then Rocket Labs is...
Yeah. Virgin Rockets, whatever. So is the team really looking at that, kind of like what specific industries might come under fire?
100%. I mean, you have to. These are huge IPOs, and they have a lot of enthusiasm and demand around them. People have been waiting for these for a few years now at this point. So indexing is going to be really interesting. I'm definitely thinking a lot about, you know, if SpaceX is added to NASDAQ 100 or, you know, some of these bigger indexes very quickly, how is that going to change some of the volatility that we see in first-year IPOs? You know, they can trade very choppily in that first year, but if you have that big index support, will that be different this time?
By the way, you know, Vanguard's ETF just crossed $1 trillion for the first ETF that's ever done that, and I wonder how many people are just front-running the IPO, saying if I'm in this index, I'm going to get my hands on SpaceX. So I'm going to rush in.
I also think it's important to think about the first-year volatility. Keith Lerner put together a list of the 30. You saw that? The 30 biggest IPOs. And the year one max drawdown average was like 55%. So these things can swing. Carmen, thanks so much for joining us. Carmen Reinecke covers equities for us on the BN side of the building. Now, today, JP Morgan CEO Jamie Dimon will discuss the upcoming SpaceX IPO with the bank's ultra-rich clients alongside SpaceX's president and CFO. So basically, Jamie Dimon, the most respected bank CEO in the world, is going to pitch SpaceX shares to thousands of clients, and they're not even the lead left on this IPO. To me, this is really unique. Sri Natarajan covers Wall Street for us. He joins us on this story. I'm kind of freaking out about this a little bit. Is it too much? Is my reaction too much, do you think?
Yes, it is too much. I don't think there's any reason for you to freak out just because Jamie Dimon is talking to his clients. But the fact is, this is unlike any other IPO. You're not looking at a typical IPO roadshow where you're going to just the biggest institutional investors in New York and Boston and
London.
Was
there a roadshow? They just said you're paying $135 and that's it. There wasn't even a range, dude. When was the last time you covered an IPO with no range?
It clearly tells you that the bankers are confident, that they know that there will be demand, and that's the starting point, and they'll probably hope to go up from there.
Wait, so this isn't a pitch from Jamie Dimon then, right? Like, why does he need to convince any of the wealth clients to buy this thing?
No, he brings a little bit of sparkle. He is the star of the show today because you're not trying to sell investors on the value prospect and the growth prospect. You're trying to sell them on a grand vision. And short of Elon Musk, I think if you look at all the banks in the lineup, whether it's David Solomon at Goldman Sachs, Ted Pick at Morgan Stanley, Jamie Dimon at JP Morgan, of the three, one stands out really tall. And it's really smart of the JP Morgan bankers to bring him out to talk about this deal with their ultra high net worth clients. And in some ways, that is the beauty of a franchise like that, right? When you have the really wealthy clients, you want to be able to bring something special to them. One way to do that is to tell them you would get an allocation in a SpaceX IPO, which is a really big draw. The other way is to tell them you will get FaceTime with Jamie Dimon.
Maybe they don't want that IPO right away. We had someone on recently who basically is like, for wealth clients, maybe it's good that they don't really get access to this because they won't be in that like period of volatility that retail will be in.
Right. Also, did you see Matt Levine's recent column saying like they should make an IPO or an ETF, I'm sorry, that's X SpaceX, like X Anthropic, X OpenAI, because so many people are crying about the index inclusions. Shri, thank you very much for calming me down a little bit. Shri Natarajan, our chief Wall Street correspondent.
No, I like excited, Matt.
You
should never calm down.
Like, there's so much. Ed Ludlow has gotten me so pumped up about this. The fact that it's so unique and the fact that it's so unusual.
No, we should be. There's so many aspects of this which are groundbreaking.
All right, let's get to, speaking of groundbreaking, the Republican-led House voted to halt the war with Iran, breaking with President Trump on an unpopular conflict that is taking a mounting economic toll. The president blasted the move, calling it a meaningless vote in a social media post. Joining us now is Anne-Marie Hordern, Bloomberg's chief political correspondent, co-host of Surveillance. So this is a rare rebuke. I mean, normally, Speaker Johnson wouldn't even let this vote come to the floor, right? Somehow that happened. Well, he canceled it last time, right?
Right. And
because people were sick?
And 4 Republicans decided to vote with these Democrats, yes. To Trump's point, though, it's meaningless in the sense that the Senate would have to take this up, and the president's not going to stop this engagement, this conflict right now, and the Senate likely would not follow through on what the House did. But it's an important signal about where, especially members of the Republican Party, we have an election coming up in November. It's the midterms, especially if you see gas prices continue to rise. The president telling the New York Post the blockade might stay until September. Amos Hochstein, which was the Biden energy czar, he's an individual who dealt with north of $5 a gallon gasoline, and he's saying right now we're basically living on the bottom levels of inventories. What happens when that runs out and the Strait of Hormuz and the blockade still remain? You're going to see a tremendous amount of upside to the energy prices, which is why so many people think Trump in the end will have to concede something and take a deal.
Well, in the day-to-day volatility, we're looking at Brent crude falling about 3% this morning, and maybe that's optimism with the U.S. saying that Lebanon and Israel have agreed to some sort of ceasefire, but we've seen a lot of back and forth between the president and a lot of contradiction between the president of the United States and Benjamin Netanyahu.
Well, yeah, but for Iran, and the reason why they probably tried to really push this through in terms of Israel and Lebanon, and obviously I'm sure you've seen the reporting about the president's frustrations with Bibi Netanyahu, but for Iran, it's all one war. It includes Hezbollah as well for them. This is a major proxy of the Iranian regime. So they view this as one war. And that is why when you see more incursions from Israel or strikes in Israel on Hezbollah, the Iranians will start in terms of their strikes on U.S. allies. This past week, we saw really hostile acts from the regime. Did you see the airport terminal in Kuwait?
Yeah.
Did you see what is happening to the ballistic missiles and drones towards Bahrain as well? And right now, this administration is saying this is defensive. We spoke to the State Department spokesperson earlier this morning. He said this is clearly defensive. The question I have is, at what point will there be such a red line where you're no longer hanging on to the ceasefire? And the Wall Street Journal overnight said that President Trump, this is their reporting, told aides that he would consider ending the ceasefire with Iran if Tehran kills American troops. And we've actually already seen some American troops die. But you can see that the president...
But that's clear. I mean, if they do something that kills that takes American lives, he's going to have to strike back in a manner that extends beyond a ceasefire, right?
But I think that gives you a sense of where the president is right now in terms of clinging on to this ceasefire and trying to get some sort of negotiated deal across the finish line.
And take any deal that's no longer the unconditional surrender that he beat his chest about on March 6th. So Anne-Marie Hordern is our chief political correspondent. She also co-anchors Surveillance, an excellent program. I recommend checking it out. Pushing for a wage price spiral, I saw this morning.
Well, I mean, the whole debate is like, why not ask for a raise?
Yeah, no, I thought it was fantastic. Check on markets right now. They're not supporting that, right? We're down 0.3%, but we were off 0.75% yesterday at the close. 75.48 is your level on S&P futures. We're also looking at a bigger drop for tech futures, down more than 1%. Even as yields come in, the 10-year at 4.45, 4.46, and Brent crude comes down. Brent down 2.65 right now to 95.17. So those signs should point to a rally. We'll see if this turns around at the open. Let's get a look at some of the other single stock stories on our radar. Five Below tumbling after earnings that blew past estimates, but analysts are concerned the growth rate may be peaking.
Bad for them because Dollar General and all those other discount stores did well. Calvin Klein and Tommy Hilfiger owner PVH is falling after it lowered its outlook due to the war
losing a full quarter
in Iran
of their value. That's.
I guess we're
are
not.
Those still hot? No, they're not.
No, Anne Marie is like this. This ain't the war in Iran.
Yeah, but
this is nobody wants Calvin Klein anymore.
I mean, just talking about for the man on the street. Networking software firm Ciena raised its revenue outlook, but not enough to impress investors. That's the theme for today. You've got to beat the beat. We're going to talk to the CEO of Ciena, Gary Smith, in the next hour.
Coming up first, though, a major Blackstone fund now capping withdrawals after it saw a surge about 10% in withdrawal requests. We're going to talk more about that coming up next, right here on Bloomberg Open Interest.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Let's get now to high interest. Look what's making headlines around the world. PIMCO CIO Dan Ivascyn says the first sustained credit default cycle in years is already underway. He is warning investors to expect higher losses even as credit spreads remain near record tights. He points to looming debt maturities, risky 2021 and 2022 leveraged buyouts, and uncertainty around massive AI infrastructure spending as key threats to the market. And speaking of that, Partners Group says it may cap withdrawals across more evergreen funds as investors seek liquidity. A $15.8 billion U.S. private equity fund is expected to hit redemption limits after requests topped 5% of assets. The move follows restrictions on its global value fund and highlights growing pressure across private markets. I spoke with the CEO, David Layton, earlier this week about some of the pressures he's seeing.
I think that there are some idiosyncratic factors for this fund in particular, but indeed, you do see that investors broadly, after having redemption pressure within private credit for a number of quarters, are now starting to redeem other asset classes.
Meanwhile, Blackstone's private credit fund is putting the brakes on investor withdrawals after more people wanted their money back than the fund was willing to pay out all at once. Investors asked to cash out about 10% of the fund, but Blackstone will allow withdrawals on only 5% this quarter. The company says the fund still has plenty of cash coming in from loan repayments and new investments, and its debt levels remain low, Danny.
Let's talk more about this. We're joined now by Silas Brown, Bloomberg senior private credit reporter in London. Silas, it's probably notable that Blackstone shares are higher after this because we've seen a lot of these redemption flows come out, and usually the stocks are hit. What is maybe different this time for Blackstone?
Well, I think, look, I mean, you know, this is the second series of the private credit BDC angst story. And so I think maybe quite a lot of the pressure on share prices may have been kind of priced through the first quarter. And I think with Blackstone, I mean, we'll see how the day plays out. But I mean, the redemptions that they had were at 10%, which is kind of lower than a lot of the other industry peers that they have. I mean, Cliffwater came in at 17% earlier this week. It's a few more reporting over the course of the next few weeks. So that may give some indication as to why. But I mean, yeah, let's see how the day progresses.
I wonder about, for one thing, Silas, it seems to me that there's some prisoner's dilemma at work here. Danny has pointed out, you know, some...
I should just say that's Scott Goodwin of Diameters for thinking that there's a...
And I know it's Scott Goodwin as well.
Yeah. I don't want to take credit for it. This is
but I mean, the point is, some people are going to want out just because they think others will want out, and they want to get ahead of it. And I wonder if also a lot of the money that's taken out is still earmarked for private credit. So it's just going to go back into maybe a newer, better vintage. Is that the case, or are people actually lowering their allocations are institutions lowering their allocations to private credit?
Yeah, I mean, it was actually one of my favourite lines from yesterday's credit forum when Danny interviewed Scott Goodwin, and he spoke about the prisoner's dilemma, aka, you know, this problem for retail investors, which is like, if I don't redeem and everyone else redeems, then I'm the one kind of left holding the bag. And I do think that is, you know, having spoken to a few retail-ish investors, that is something that they kind of they think about. Look, private credit performance, despite all of the the kind of clear difficulties that are going on in the market, private credit performance by and large has still remained pretty solid. And I think, you know, as long as that maintains itself, Blair Jacobson was on earlier today, and that was his point, that, like, you know, they need to demonstrate their kind of resilience through performance, and if that carries on, then I would suggest that, you know, in the next quarter they may see a bit of an easing off of retail redemptions.
And as fate would have it, I also spoke to Mike Arangetti of Ares yesterday, who said a very similar thing to his colleague Blair. Silas, thank you so much. You're brilliant, and also because you complimented me, and, you know, flattery will buy you everything. Silas, thank you so much. Silas Brown from our credit team. Coming up on this show, Nancy Tengler joins us as we see some weakness in the AI trade after Broadcom's earnings this morning. This is Bloomberg Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues, and how do you do it? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Just on my conversation with Ray Dalio yesterday.
No big deal.
No big deal. Let's bring in Laffer Tangler CEO and CIO Nancy Tangler. Nancy, so wonderful to see you. I mean, Ray Dalio's, on this sort of kick right now, basically saying like the AI bubble will burst at some point. It's going to happen when people start not just wanting paper wealth, but actual wealth and convert it. And we're about to see a lot of paper wealth created around SpaceX. In the meantime, it's a market that feels jumpy. I mean, Broadcom falling 15%. I just wonder, are we kind of vulnerable for volatility at these highs after such a big run up really built on this pillar of, chip makers?
Yeah, good to see you too, Danny. And that was a great interview. I think a couple things. So note, that was a compliment. So. I think, of course, he's ultimately right. I mean, if it is a bubble, then it will pop. I'm just not convinced we're in bubble territory. There's still a tremendous amount of skepticism. That's a good thing if you're an investor because you want to climb that wall of worry. But also, you can juxtapose his comments against John Durr from Kleiner Perkins, who said, this is one of the great tech tsunamis ever. And so I think what we have to think about is in the short term, you get the flight to what's next. All of these stocks, CrowdStrike, Broadcom, have run up pretty heady levels ahead of earnings. And so I'm not surprised to see, in each case, triple plays, that the short-term traders are turning their attention to what's next. This becomes a source of funds. Do I want SpaceX? Do I want Anthropic in my portfolio? Yes, I'm going to raise the cash now.
Yes. I mean, we can't talk about that enough today, Nancy. Broadcom added $270 billion in market cap in the last 5 sessions. Of course, they're down today. Even 200% AI chip growth isn't going to save them. We're going to keep you around because we love you. Nancy Tangler stays with us through the opening bell. We have stocks down 1/3%, almost on futures, I should say. This is after 0.75% drop yesterday. But remember, it was all-time high after all-time high after all-time high. I think 6 sessions in a row, 9 weeks in a row of gains. So we're still up at these very high levels, and we're looking at 10-year yields and oil that are coming in a little bit. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are down just a little bit. We could see, if this holds, a second day of declines, which would feel so unusual in this climate. Right now, off 0.3. NASDAQ futures off so much more. It's been a while since I've seen a spread like this. I mean, the delta is almost a full percent, right? NASDAQ futures off 1.2%. You hear the opening bell at the New York Stock Exchange. SSMR ringing the opening bell. Sunshine Silver Mining and Refining. And you can see the little silver bars that they make. A lot of people think silver will be the currency of choice, post-apocalypse.
Wait, why over gold?
Because gold, you're not going to buy breakfast for a piece of gold. That's way too much money, right? True. So what preppers do is they buy rolls of 1965 and older diamonds. I mean, dimes.
Interesting.
Because those are
silver.
So that's worth about one breakfast post-apocalypse, apparently.
Okay, good to know.
INEO ringing the opening bell. The NASDAQ, they're doing an IPO. They make the Gensbacher engines out of Austria. Interestingly, Gensbacher Werke was actually bought by General Electric in 2003. Then it became INEO when they put it together with Waukesha gas engines and diesel engines.
But do they play music at these things? Because they're decidedly dancing. There's a guy tapping his foot in the front, and I was not aware that music was being played.
I don't know, but they are all clapping to a beat. Each, it looks like to his own. And there's the confetti cannon as well.
Rhythm is tough. It's hard to have rhythm.
This company was originally, way back in the Austrian Tyrolean days, started by the Fugger family.
Interesting.
Of Germany.
Good
German Fuggers started this company.
I'm going to leave that there and show you what Blackstone shares are doing this morning at the open. We are up 1.6% for Blackstone. They've limited withdrawals from its flagship private credit fund, BCRED, for the first time. Investors sought to pull 10% of shares last time. It was more than 7%. They met all those redemptions. So a couple things. One, it's not as bad as some of their peers saw in terms of redemptions. They said they have plenty of liquidity, so shares are up 2%. But I should also just note they fell about 4% yesterday. There are those fears over what Partners Group was doing. It's a little bit of a rebound from yesterday and a little bit of, it's not as bad as it could have been.
Yeah, for sure. Broadcom's strong outlook also is not as good as it could have been. It wasn't enough to impress investors despite being way above estimates. Shares down the most in a year, even with revenue growth overall due to jump 84% year over year. This quarter, the full year AI chip sales are expected to grow 180%, which is at least double what NVIDIA. I think NVIDIA is looking at like 60, 70% growth, but of course at a much higher level. They sell about 4 times as much stuff as Broadcom. We're back with Laffer Tengler, CEO and CIO, Nancy Tengler. Nancy, how do you, as an investor, I mean, if you're going to allocate some capital to SpaceX, if you're going to allocate some capital to OpenAI, if you're going to allocate some capital to Anthropic, that money has to come from somewhere, right? I imagine you would have to sell other stuff to do that. And there's so much money that's going to be sucked into those IPOs. Do you think it's going to have a visible effect on markets?
It could, Matt, for sure. And then let's not forget that most of Wall Street's heading out to the Hamptons shortly. So volumes will be a little bit muted, and that will exacerbate volatility. I think this summer is an opportunity. We are likely to get a correction. What we've been doing is trimming our winners, not selling them, but trimming them. So think Lam Research, Micron, to some extent AMD. We had been trimming Broadcom, and we will continue to do that as a source of funds because we want to be long this trade for a while. And to your point, the Broadcom report was excellent. And it's not trading at a lofty valuation. If you look at it on a price earnings to growth basis, it's trading at a PEG of 0.7 times. So it's not even at 1 time. And that is a benchmark for us. So we'll continue to hold it. And when it appreciates further, we'll trim back with new money. We'll buy some. But we're not adding to our positions here simply because we're at full positions.
Nancy, so can you just clarify? So you trimmed these positions, and what are you using that capital to deploy into newly?
We have been shifting, and I think I've talked about with you guys, we've been shifting for the last couple of months to software. And I feel like that was a good move because we've seen software run. We didn't believe the SaaS apocalypse, I can never say it, story. For some names, yes, and we are not in those names, we don't think. But for the winners, and we think there will be winners in the software space, and we were adding to cyber. So not just CrowdStrike, but Palo Alto Networks. And I think the CrowdStrike report, though you didn't ask, was also excellent. And the CEO said something very smart, George Kurtz. He said, look, cybersecurity is now a foundational AI infrastructure. And I think that is something that the market is underestimating because as we add to agentic AI around the enterprise, you have to be exposed to cybersecurity. I mean, you have to utilize cybersecurity, and you have to increase your exposure as a CIO at an enterprise company.
By the way, you were talking about John Doerr earlier. I see in your notes you quote him as saying AI is the biggest tech tsunami ever. The AI revolution is underhyped.
Right.
Where do you, I mean, I don't think we could hype it much more, but where do you see the underappreciation? You know, what is underpriced? Because you mentioned the valuation of Broadcom, and it's not terribly high. NVIDIA trading at a forward PE that's even lower, right? And then these companies like Micron, which are up 1,000% in the past 12 months, are trading at way lower valuations. I'm just looking at PEs. Obviously, you might have a different measure that you prefer for different companies. But where do you see the most value?
Well, I think interestingly, NVIDIA is a name that we recently added to our value portfolio. And before I hear the audible gasps, I mean, if you look at what they did with the capital allocation strategy, increase the dividend, and it's trading at a silly multiple compared to growth. So we did the same thing with Google about 2 years ago. And by the way, Google, I think Amazon, I think AMD were in the Russell 1000 value index. So while it seems counterintuitive because these names are still growing, we view them as fallen angel growth stocks. So I think NVIDIA is being overlooked and that the market will return its attention to it at some point. But beyond that, I mean, I didn't say it's underhyped, but I do think we're in the early stages of adoption. And we saw that today, I think, to some extent in the unit labor costs. Productivity continues to be strong, and unit labor costs came in or came down, if you will. And so I think that is going to be the driver. People are still working. The JOLTS numbers showed us that companies are still hiring. That the estimate was 800,000 jobs light of the actual number. none of these numbers are set in stone, as you both know. They'll be revised, but I think the trend is moving in the right direction. So companies are still hiring. We're not seeing unit labor costs driving inflation. So I think this is a pretty perfect environment to allow technology to continue to drive productivity and therefore economic growth.
I'm just wondering, you're in Scottsdale. Are you in Scottsdale?
I'm in Tahoe right now.
You're in Tahoe. I was going to ask, where's the Hamptons of Arizona? But I guess you've answered the question already. Alafra Tangler, CEO and CIO, Nancy Tangler, talking to us from somewhere in America. Let's get a check on the stock market. Right now, we're looking at losses in the cash trade. The NASDAQ down almost 1%, Danny, but the S&P is little changed.
It's little changed. We did have a drop yesterday. We had 9 consecutive days of gains, so we'll add to a second consecutive day of losses at this pace. As you point out, Matt, it's not a lot, because the thing that's really dragging us down was the only thing that outperformed yesterday, and it was chip makers. So in the positive column, you have all the big tech names, the Mag 7s, which had a poor day yesterday too, so they bounced back. Eli Lilly, so you just have a who's who of the really large companies. And again, to the downside, it will be no surprise that Broadcom is at the top of the pile, down 14.5%, but we should just note it's run up a lot, but all the chip makers getting dragged down again after running up a lot. So not too much to see here. Sienna Corp, they're falling about 16%. We're going to be speaking to the CEO a little later in the next hour. Let's look at some of the sectors, though. Infotech, again, this is all the chip makers that's dragging it down, despite the fact you have some of the Mag 7 doing well today. Energy falls as the price of crude falls, too. At the top of the pile, you have some decidedly safety stocks, healthcare, staples, comms, again, that's Amazon, Meta, the other Mag 7s that are helping to lead us higher. And financials rebound after dropping yesterday, too, for an index that's just slightly lower this morning, Matt.
I think I would go to Flagstaff. I think Flagstaff.
Oh, is the Hamptons of Arizona?
It would be for me, I think, if I lived in Phoenix. You know,
I don't know the area well enough, so I'm going to have to trust you on this one.
We should explore it. We should look into it.
Sure, why not?
Coming up, Liftoff Mobile, a Blackstone-backed company, is set to make its trading debut today. CEO Jeremy Bondi joins us next. This is Open Interest.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Time now for our top calls. Some of the analyst action that we are watching this morning. First up, the sell side is weighing in on Broadcom's disappointing AI outlook. Citi sees a buying opportunity. JP Morgan sees longer-term growth prospects. But Baird does highlight that customer-related headwinds do remain for the company. Next up, Five Below, they crushed first quarter expectations and raised its full-year forecast. But Jefferies and Citi say that the bigger question is whether that growth can last. Jefferies sees momentum starting to peak as comparisons get tougher. And finally, Bank of America upgrading United Health, saying healthcare costs are improving and setting the company up for a strong second quarter. They believe that lower costs could help profits recover faster and say that United Health is positioned well to keep earnings growing over the next several years, Matt.
All right, today, JP Morgan CEO Jamie Dimon will discuss the upcoming SpaceX IPO with the bank's ultra-rich clients alongside SpaceX's president and CFO. To me, this reads like Jamie Dimon is going to pitch SpaceX shares to his wealthiest clients. Let's get details about the live interactive discussion with Bloomberg's Bailey Lipschultz, fresh out of Lake Como. So, did you go to Villa d'Este?
I did. Okay, have you been?
No, I have not been to. I've been to Lake Como, but I've not been to the car show.
All I'm gonna say about Lake Como is it's beautiful.
Yeah.
Way too many tourists, and some of the villas, women are wearing, I'm not joking, dresses that you would wear to a wedding, and just for the Instagram photos. It blew my mind. I've never seen that before.
Interesting.
Cool.
I have been on like very rainy and no one was doing cool Instagram stuff. Anyway.
All right, let's get to the
What
story
we're here to
that
talk about?
The story that I was so jazzed about this morning, and Sri Natarajan kind of tamped it down a little bit. But to me, it's interesting to see this CEO who's so highly respected putting it on the line to sell SpaceX shares to clients when he's not even leading the IPO, right?
Well, it's part of the pitch, right? And the whole vision from the start from Elon Musk was leaning into retail. Again, whether that's high net worth individual retail or people who are buying and selling zero DTEs on Robinhood. And part of this pitch from Jamie Dimon, part of this event is really to lean into the JP Morgan brand. We also need to call out the fact that Bank of America is having their own conversations with both Gwen and Brett as well today. So it really is just part of the broader push to try to get retail and get as much retail capital and interest as they can in this IPO.
And Wall Street seems so jazzed about this. There's this story about Goldman putting up a rocket in their lobby, which I don't know if we have the pictures. It's not as big as
Is it a real rocket?
I don't know. It doesn't look that big.
If you're so I'm from the great state of Ohio, right? We have the Central Ohio Science and Industry Museum, COSI, that every kid goes to. They have an actual rocket.
And it's big. But I don't think
this looks like just a picture of a rocket. Did they not just put up a screen with a picture of a rocket?
I think that's a small rocket in front of a screen. It's very confusing for our audience because they literally cannot see what we're talking about. But anyway, it's not the biggest of rocket. Anyway, it just feels like there's just so much hype and excitement, Bailey. I mean, like, I don't know. It just feels like in the IPO world, considering this is the biggest ever, that we don't really have anything to compare this to, and we're maybe venturing, in a space pun, into the unknown.
We are venturing into the unknown, and I want to call out this morning's roadshow that's dedicated or really focused for retail. Brett Johnson was talking about, the company CFO was talking about mining asteroids and kind of these other futuristic technologies that they want to lean into. As you can see there, there's the photo of the picture of the rocket.
I think it looks like it's a screen of a rocket, but I think it's just that rocket's in front of a screen on a platform.
I don't.
Right? It's on a platform. Look, you can kind of tell.
Maybe. Then they chose a very small rocket for the world's biggest IPO. Like, they could have gone bigger. Right?
Well, it'll be interesting.
What are they making in fees on this? They could afford a bigger rocket.
The thing that's going to be interesting is the marketing around NASDAQ and Times Square and what we do see potentially next week when it does price, because we have seen NYSE and NASDAQ both kind of go full send, if you will, with different things. We saw that with some other IPOs as well.
Bailey, thank you very much. Bloomberg's Bailey Lipschultz. By the way, I had kind of heard, so, Goldman puts up this rocket. And Goldman's also behind the Liftoff IPO. So apparently there was this joke going around of Liftoff being like, that's our rocket, because our name is rocket related. Of course, it's not a rocket company, but they are going
What do you mean,
public.
of course, it's not a rocket company?
Sorry, you wouldn't know that.
I mean, I would have thought it was a rocket company or a mobile phone network operator.
It's the latter. And let's get into what the company is, because they're going public. The Blackstone-backed company is set to begin trading on the NASDAQ today under the ticker LFTO. It raised $437 million in a successful second attempt in going public this year. And let's bring in the CEO, Jeremy Bondi. Jeremy, so great to see you. And there are going to be a lot of questions of like, why IPO in the midst of all this? But maybe it would also be helpful just to describe to our viewers who don't know what Liftoff does, because it has a rocket name, but it's, not a rocket company.
Yeah, it's great to be here, Danny and Matt. Thank you so much for having me. There are indeed 2 rockets in the Goldman building this week. And we are honored to be sharing Rocket Week in New York with SpaceX. Our business was built to help businesses grow and monetize within the app economy. And we do that across every single category you can imagine. I heard you talking about Instagram a few moments ago. Social is one of the verticals that we engage with. We've been at it for about 14 years now, and we're really excited to be going public today.
So what exactly does that mean, though, monetization in the app economy? It's a good tagline. Well, maybe it's not a good tagline, because I still don't really get it.
Yeah, great question, Matt.
Does that mean you're doing marketing campaigns on Instagram?
Yeah, great question, Matt. So what we do is we help developers integrate advertising into their apps. So there's 4 million apps in the App Store today, and they currently can integrate our software developer kit to help show advertising to support their business. We also help every single category of apps that you can imagine. For instance, Knicks won last night. It was a great game. A lot of predictions being placed in sportsbook action. We work with players across the prediction market vertical as well as OSBs to help them find profitable users across the app economy. So it's growth and monetization that we do through advertising across this burgeoning app ecosystem. People spending 3.5 hours a day on their phone.
Well, Jeremy, I spoke with some of the Blackstone crew, and as you'd imagine, they are very pumped, and they did nothing but sing your praises and how incredible of a CEO you are. And you've been through a lot. I mean, it's tough, right, in the beginning of the year to think that you're going to IPO and have to pull it. What has this process been like to get it off the ground? Sorry for the pun. To lift off, actually, this time around.
Yeah, it had to come up. That makes sense. It's Rocket Week. Well, Danny, thank you for that. It's very generous from the Blackstone team. This has been a everyday labor for many, many years to build out this ecosystem, and we've been market making in advertising in the app economy since its inception. The business has now grown 10 consecutive quarters since our release of our new recommendation engine. And we think we're just getting started. We're really excited to start this new chapter. Market is early. We have a strong position, and we're really excited to go forward.
And Jeremy, just to remind our viewers who maybe don't, the first time around, the reason you didn't IPO is because it was in the midst of the SaaS apocalypse and comps are really difficult. But now it's a pretty difficult environment, too. There's a lot of attention going to SpaceX. We're going to be getting Anthropic and others soon. There's also this monster Alphabet offering coming into the market. Jeremy, isn't there a concern at all that you're competing for the same institutional capital by coming to market this week?
You know, the February roadshow that you're referencing was actually a phenomenal experience for our team in terms of getting investor enthusiasm and testing our thesis. And what we saw, as you mentioned, was pretty choppy conditions in the market. We went back, we delivered our 10th quarter of growth. We further reinforced the empirical evidence and the pattern that we've been showing the market. And we were excited to come back out here last week and we were met with even more enthusiasm. I think what investors are seeing is that this business is in the AI winner camp. It's a recommendation engine that's built on neural nets. And we hear a lot of conversation about action-based pricing, outcome-based pricing. This category was the first to bring that to market. So I think there's a lot of enthusiasm as we sift through who are the AI winners and maybe who will have to redevelop their foundation.
What kind of growth, by the way? I remember seeing some stats last year that you were up like 40% in your core advertising business. What kind of growth are you expecting now, Jeremy? If you could quantify
Matt, that's great research. We are a compounding engine, so we focus on growing quarter over quarter. As I mentioned, we've done that 10 quarters in a row now. We continue to feed our model with data. We get $160 billion of purchase data from our advertisers annually that feeds into that model, and we attempt to find breakthroughs with our model each quarter. And so we release a prudent guide to the market while we live to beat that guide. The market on a blended basis, we see growing at 11% CAGR. We expect to beat that. Everything above that, we certainly aspire to do, and the empirical evidence of the last 10 quarters at an average rate of 8% quarter over quarter, I think shows what's possible. But we want to be prudent and responsible as leaders of this business and grow confidence from our shareholder base.
Under promise and over deliver, dude. Thank you so much.
That's the goal.
For joining us. Liftoff CEO
really
Jeremy Bondi talking about Rocket Week. Coming up next hour, we talk about how mega IPOs are minting more wealthy private flyers with the president of VistaJet. That's next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Check on markets as we get to the top of the hour here. We're looking at continued losses, although they're slight on the S&P 500, 0.2%, 75.42 the level in the cash trade. The NASDAQ down much more, 1.3%. So much bigger loss. 30,184, still a pretty high level there. 10-year yield coming down, 445, 446 if you round up. And Brent crude also off about $3 a barrel to 94.86. In the next hour, we're going to hear from Sienna CEO Gary Smith, plus Catherine Board-LeMay from Goldman Sachs and the president of VistaJet on private jet demand.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
ABC News. I'm Sherry Preston. With Americans already paying record prices for beef, a recent arrival to the U.S. cattle supply threatens to push them even higher. ABC's Jim Ryan is in Dallas with more on the new world screwworm that's been detected on a ranch in South Texas.
The mere threat of a screwworm infestation has prompted a ban on imports of live cattle from Mexico, sending the average price for a pound of ground beef to nearly $7. And while infected animals can be effectively treated, the arrival of the pest on a South Texas ranch has grocery stores and butcher shops bracing for new price increases.
Agriculture Secretary Brooke Rollins says the screwworm is not a threat to the nation's food supply. Hezbollah has rejected the latest ceasefire agreement reached between Israel and Lebanon, saying anything less than Israel leaving Lebanon for good would be considered a surrender. The deal would ban Hezbollah from a series of security zones in southern Lebanon. President Trump calling the handful of Republicans who voted in favor of the War Powers resolution that passed the House on Wednesday grandstanders who are unpatriotic. ABC's Rachel Scott.
4 Republicans joining Democrats to support a War Powers resolution requiring the president to withdraw U.S. forces in Iran unless Congress approves military action. While the measure is an uphill battle, it's a sign of the growing fractures within the president's own party over his handling of the war.
More GOP frustration over the $1.8 billion fund to reward the president's political allies.
Several Senate Republicans now saying they will likely today support legislation to legally ban the president's so-called anti-weaponization fund. It comes even after Acting Attorney General Todd Blanche assured lawmakers this week that fund was dead. But last night, when asked if it was truly defunct, the president said he didn't know, adding, quote, ask the lawyers.
The president says he will nominate Blanche, who used to be his own personal attorney, to take over as attorney general. You're listening to ABC News. A concerning incident at a TSA checkpoint in Sacramento last weekend. As ABC's Pierre Thomas reports, a man tried to get on board a plane with an explosive device in his luggage.
The bizarre incident unfolding just after 9 p.m. on Saturday, with a suspect showing up at a TSA checkpoint at Sacramento's airport wearing a scarf covering his face and latex gloves. Authorities say when they checked the carry-on bag of Kamani Jones, they discovered an explosive device, a torch lighter, as well as a knife, scissors, blades, and zip ties.
We've learned a little more about the man who held 10 people hostage for 15 hours in Bakersfield, California, threatening to detonate a bomb. ABC's Alex Stone says the suspect was upset, apparently, about a past criminal conviction.
It was apparently this case where he was found to have had sexual relations with a child or children under 14 years old. He had apparently been angry about that case and had gone on social media and on YouTube arguing against it, and that he had problems with the way the prosecutors had talked about him and the allegations that they had made against him. And according to police, this was his way to go in there and try to be heard.
He was shot and killed by the FBI. The latest crisis in Havana, Cuba, after the U.S. cut off oil supplies to the island, garbage. People who've been living without power for weeks now are now dealing with mounds of trash and the flies, rats, and cats, they say, who are drawn to it. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live at Bloomberg.com as well. Scarlett Fu and Paul Sweeney with you. This is the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist. What's the Treasury market? What's that discounting tomorrow ahead of the big jobs report? We'll check in with Ira on that. Ethan Bronner, Bloomberg Israel Bureau Chief. He's based in Israel. He'll give us the latest news coming out of that part of the world. Kathy Entwistle, Morgan Stanley Managing Director, Private Wealth Advisor, give her thoughts on these markets. And we can figure out what's going on with global crude. I got WTI crude oil down about 3.8% to $92 here. We'll check in with Ellen Wald, President of Transversal Consulting. She's an ace when it comes to global oil. So we got a lot coming up over the next couple of hours. Let's kick it all off with John Tucker and the Bloomberg Business Flash.
All right, guys, good morning. And this Bloomberg Business Flash brought to you by IBKR, with the Fed raised rates by 25 basis points in June 2026. Trade your predictions alongside your stocks and options at ibkr.com/predictions. The last trading day is June 17th. Sell-off in tech this morning, led by semiconductors. Worst performing stock in the S&P 500. You guessed it, Broadcom after their results. Avalon will break it down in just a minute here. The Philadelphia Semiconductor Stock Index right now falling over 5% in the early going. And you see in the Dow higher, up 800 points. So, yeah, a bit of a rotation there. United Health Group, Norwegian Cruise Lines helping push the Dow higher right now. The lower oil, that's helping boost some of the travel-related stocks. Meantime, Max Kettner at HSBC isn't too worried about the valuations of the AI stocks.
They're generating cash. They're generating margins as if there's no tomorrow. So frankly, yeah, that AI bubble concern, it's a bit overblown to me.
The NASDAQ Composite Index 279 points lower. That's a 1% decline. S&P 500 down 16. That's down 0.2%. And again, the Dow right now up 794 points. Brent crude down close to 3%, 94.92. Also seeing yields lower. 2-year yield down 5 basis points, 4.02%. The 10-year down 4 basis points at 4.45. And a wake-up call for mattress maker Sleep Number. The company said to be laying the groundwork for a potential bankruptcy filing. And shares of Sleep Number right now down 70%. Yikes. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
And John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Getting some Supreme Court news today, some decisions. Red headline crossing the Bloomberg terminal. Supreme Court bolsters SEC's power to recoup illegal gains. We'll have more reporting on that coming up in just a moment. We're looking for some other notable decisions here, particularly, I guess, President Trump's ability to fire the Fed's cook. And that is at the Supreme Court. And that's something that people are looking at pretty darn closely. And
we've been waiting for that, and we may not get it until the end of July. And also birthright citizenship.
Yes, birthright citizenship. That is also one of the key things. So we'll keep you on top of that. John Tucker just reporting here. We got red and green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News. She joins us here in studio. Avalon, what are you looking at?
Well, we have to start off with Broadcom. That's ticker AVGO, currently falling about 15%. Most intraday since last January, and that's after the semiconductor maker forecast third quarter AI chip sales that fell well short of elevated expectations. Citi, though, is writing that the AI sales, while below estimates, they view the sell-off as an enhanced buying opportunity.
Enhanced buying opportunity. I like that. Very good.
Not just a buying opportunity, enhanced buying opportunity.
I have to agree with them. I mean, come on, what are we doing here? This is AI. We're first inning here.
Yeah, and of course, expectations got stretched because that's what's happening across the AI infrastructure. What's next on your list?
Petco, another one down, ticker WOOF, sinking 16% for its biggest intraday fall in about a year. That's after the pet health company's profit forecast fell short of expectations as well. Citi also writing that while industry outlook remains stable, recent data does suggest that there may be weaker dog adoption trends, which obviously would not bode well for a company like Petco.
Yeah, well, post-pandemic, and everyone has to go back to work, so the dog adoption craze has faded.
Yeah, I think so.
I was very tempted. I went into a Petco the other day. They had a ferret for $500.
Oh, a ferret?
A ferret.
What do you do with a ferret?
You let him run around the house. You let him do whatever he wants.
All right, he's a ferret. United Health.
Yes, United Health, that's ticker UNH, currently up about 5.8%, most intraday since April, and that's after Bank of America upgraded the health insurer to buy on improving medical cost trends. They say that United Health's bellwether status within managed care could lead to a broader rally if those utilization trends continue to moderate. Kind of important for health insurers that if patients are using their services more, then obviously their costs rise. And it seems as if those things are starting to shift. Also worth noting that Morgan Stanley did boost the price target for the stock as well. And that's making UNH one of the top gainers on the S&P 500
And it's really contributing to the Dow Jones Industrials today. The Dow's up 770 points. UNH accounts for 140 of those.
Yeah, that would explain why the Dow's such an outlier, right? Up 1.5% versus declines in the Nasdaq and the S&P. Avalon, thank you so much. Avalon Purnell is one of our Bloomberg Equities reporters. And for more conversations like what you just heard, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. You can find it on Apple Podcasts, Spotify, or anywhere you listen. Remember the great bond sell-off? I mean, I don't want to say that it's over, but it's definitely, yields have come down significantly from where they were before just a couple of days ago. Let's bring in Ira Jersey. He is our chief U.S. interest rate strategist. And of course, all of this is happening as we await the jobs report tomorrow. But it feels like the bond market is less concerned about the employment picture and obviously much more concerned about inflation.
Yeah, we're really trading on oil, right? When you look at the correlation between particularly front-end rates and the oil complex, whenever you get big moves downward in oil like we have today, you get a rally in treasuries, and the front end leads that, because that's really where these inflation expectations are going to show up most acutely. So you mentioned the bond market, great bond market sell-off. Now we're in the great bond market stabilization, I think, especially in the 10-year and the 30-year part of the curve. And that 2-year is just going to trade on oil until that stabilizes. We get a resolution in the Iran war situation. You're just going to have 2-year yields go up whenever oil's up, and 2-year yields go down whenever oil's down.
So what do you think is kind of is there a steady state of maybe a ex-war type of range for the 10-year? We'd kind of been hanging in that 4 to 4.5% kind of range. Is that still where the data suggests we should be?
Yeah, so most of our fair value models, and we just put out a note this morning actually with 6 different scenarios for if there's a prolonged conflict that kind of meanders on in low intensity, or if there's an early exit or an intensification, and what might happen in those different situations. So I think the 10-year yield in most of those scenarios is probably going to continue to be range bound between, say, 4.25% and 4.75%. So wrapped around 4.5%. It's really what goes on with the front end that will change that dynamic and that shape of the yield curve. A couple of reasons for that, and one of the big ones is that we do have a lot of debt, and the more debt that you create, the harder it is, right? Just simple supply-demand dynamics are going to suggest that it's going to be harder to see yields go down as significantly for any given level of growth. And then it's going to go significantly higher, and you're going to see more volatility on the as the Treasury market sells off, just because you have so much debt outstanding. And I think that we're in that dynamic now where you're going to see 10, 12 basis point sell-offs, but only 5, 6 basis point rallies. But it's still going to be very economic sensitive because the Treasury market is still the safest, most liquid bond market in the world.
In about 2 weeks, the Fed will hold its next policy meeting. It begins June 16th, and they come out with their decision on June 17th. Do you think we're going to get any sense of Kevin Warsh's thinking or any reporting on what he is doing behind the scenes there? Because right now, I mean, he's not going to be able to move forward with any kind of rate cut given the inflation picture, but we're all kind of waiting for him to frame his thinking here.
Yeah, I think it's going to be interesting. I think the press conference is going to could be very fascinating because if he gives an indication of how his relationship is with his with the fellow members of the FOMC, what his thinking is versus the overall committee, right? So the Fed chair, remember, in that post-meeting press conference, is supposed to be speaking for the whole committee, but you always get little nuggets about what the speaker themselves is talking about, whether that was Ben Bernanke, Janet Yellen, or Jay Powell. So I expect that he's going to be a little bit more coy about that and be like, well, given the inflation dynamics right now, it wouldn't be prudent to cut rates, but without the war, I think we should cut rates, and some of my fellow members agree and some disagree, right? And so Lori Logan out this morning, the Dallas Fed president, she was hawkish, but every single Dallas Fed president has been hawkish since I started in this seat 30 years ago, right? So really it's the, can you get those kind of middle members, so call it the neutral members, to go along with your thinking, and that's where Kevin Warsh is going to have to spend most of his time.
DOTS go, dots. Are the dots short-lived, or do you think they're going to continue to be a tool for this Fed?
Yeah, I mean, we're going to have a dot plot in June. I think that is something that might change under Kevin Warsh. I think that he and some of the other members know that there's limitations to how it's used. You have heard a couple of other members of the Fed say maybe instead of getting rid of them, that we should maybe highlight which dot goes with which economic forecast. So remember, we have the dot plot, but we also get the CPI and PCE deflator forecast, as well as GDP and unemployment once a quarter. And if you match those up, that might actually give some interesting information, and certainly to strategists and market participants, right? Because you want to say, okay, this person thinks that if you get X unemployment rate, you're going to have Y Fed funds rate in the future. And that's really something that could be helpful too. Now, I don't think Kevin Warsh will go for that, but I do think that he could push forward the discussion about how to change that kind of communication around the Fed's forecast.
Yeah, if anything, isn't the reporting that he wants to do less communicating than what the Fed has been offering?
Yeah, he'd like to get his fellow members to not speak as much. I don't know how he's going to be able to rein that in, but it's not impossible, right? And if you go back to the days of Alan Greenspan, back in the 1990s and early 2000s, Alan Greenspan spoke about monetary policy. Whenever other members of the Fed spoke, it was much more broad, and it wasn't specifically, here's what I think the economic outlook and the rate outlook is going to be. Alan Greenspan was the one who really spoke for the board.
All right, Ira, thanks so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist. Folks, the news of the day here is we had egg and cheese biscuits at Bloomberg.
About
John Tucker
15 minutes
graciously said, I'll go up and get you guys one. None left.
It was like
And at
throwing
the
a
same-
French fry at the beach at
Yeah.
the Jersey Shore. The seagulls attacked.
Exactly. It is rough around here, folks. All right, we're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages, quite a divergence here. You look at the NASDAQ, the tech-heavy NASDAQ, down over 200 points, and then the Dow up 743 points. The S&P 500, little change right now, down 4 points. Healthcare, best performing industry group right now. That's because of United Healthcare, and that's also lifting the Dow higher. United Health Group and your Norwegian Cruise Lines. UNH was lifted to a buy at Bank of America. Lower oil boosting some of the travel-related stocks. That explains the rise right now in Norwegian Cruise Lines. And, of course, back to the worst-performing stock in the S&P 500 right now, Broadcom, with that disappointing forecast for artificial intelligence chip revenue. Rutro Astro, Petco plunging 16%. The second quarter profit profit forecast, missing the estimates there. And then the data that we had this morning, applications for unemployment benefits rising last week. That was the highest level since February. The AI boom minting a swath of new millionaires last year. An extra 2 million wealthy individuals joining their ranks. The world's rich now overseeing almost $100 trillion. That's actually the world GDP, or just shy of it.
We haven't even gotten to the SpaceX IPO or the Anthropic IPO or the OpenAI IPO. I mean, there are not a lot of people, but the ones who are involved are going to have a lot of extra dollar signs to their net worth.
And it's also, being a millionaire is kind of relative, depending on where you live. Doesn't mean much around here.
In Silicon Valley out there, there's a
doesn't get you a house.
Exactly.
It doesn't get you much at all. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul Scarlett.
People my age that are in Silicon Valley still scarred by the dot-com bubble burst.
Yeah.
Because it took them a decade to get back the 80% of their net wealth that they lost. I mean, to this day, they talk about it.
Yeah, but the younger generation of engineers and programmers, they have no memory of that. And what they know is that they do make a lot of money, relatively speaking, but they can't find a house.
Yep. And it's just buy the dip. And speaking of buy the dip, Broadcom, if I were a portfolio manager and I owned Broadcom, I'd be buying hand over fist today. If it was a core position of mine, I'd be like, okay.
Be greedy when others are fearful, that kind of thing?
Yeah, I don't know. We'll see. All right, John Tucker, thanks so much. Appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. Lots of news coming out of the Mideast. The U.S. and Iran clashed overnight, with Kuwait and Bahrain caught in the crossfire of the most serious flare-up since the ceasefire went into effect in early April. Continues to be some unsettling news coming out of that part of the world. Ethan Bronner is our Israeli bureau chief for Bloomberg News based in Tel Aviv. Ethan, what's the latest here? We have rhetoric coming out of the president. Does not seem to match at all the rhetoric we hear coming out of Iran. What's kind of the latest thought out there?
Yeah, well, that's a pattern we've seen, isn't it? I guess I would say, Paul, that it looks like they are making a tiny bit of progress, even though the Iranians said nothing has happened lately. One little tiny bit of progress in Lebanon is that yesterday the Lebanese government, Israel, and the United States agreed to try to move forward in a kind of limited combat operation, as opposed to, I would say, ceasefire is a bit overstated, but the plan seems to be that Israel, which has taken over a large section of southern Lebanon, will start handing over bits of it to the Lebanese armed forces. And the first such handover occurred today. I think it's a pretty small space, but, we'll take what we can get.
So when it comes to any kind of discussions on a more permanent ceasefire, we know that the U.S. and Iran have been using mediators like Pakistan and Qatar. Israel is obviously involved here as the partner of the U.S. Is Pakistan and Qatar also negotiating on behalf of Israel in any way?
No, I don't think so. I think Israel is pretty much left out of this, except for the strong relationship between the United States and Israel. So the U.S. is passing its messages to these guys. And I think there is daily contact between the U.S. and Israel. But as we've said to one another in the past, the U.S. and Israel do not have exactly consonant interests. The United States is more interested in opening the Strait of Hormuz. This means very little to Israel. Israel wants to get rid of the aggressive capacity of Iran and its proxies. And so, and in theory, the Americans do too, but first they want to get the Strait of Hormuz open. They're worried about the global economy, the price of energy, the price of fertilizer. Those are things that Israel's less focused on. But in theory, after that starts, the United States wants to move to defanging Iran, and we shall see if that happens. And the Israeli argument is the Americans say they're going to do it diplomatically. Let's give them a chance to do so.
Ethan, yesterday we had the Republican-led House vote to halt the U.S. war with Iran. How was that news interpreted in Israel and in the Mideast?
I think the way it should be, which is that this is a very unpopular war in the United States, and that, he's on a short clock, the president, with what he's got ahead of him. There was a story in the Wall Street Journal in which he said he doesn't want to go back to war. Well, or he will go back to war only if American troops are attacked. Or maybe he just said he will go back to war if American troops are attacked. Maybe it's not only, but he's obviously eager to try to wind this down. And the Israelis, a little worried about that. I think the rest of the region is pretty happy about that. So we'll have to see.
Is Israel on a short clock? There are elections coming up later this year.
Yes, but the clock works in reverse here in a funny way, which is that the prime minister who's running for re-election wants to show his people that he is working to protect them. And the north of Israel, it does feel under attack, from Hezbollah. People are worried about Gaza and Hamas. People are worried about Iran. And some months ago, there was a feeling, well, these things are under control. Now there's less of that feeling. So a more aggressive stance, in theory, might help the prime minister in his efforts to get reelected. We'll have to see where that goes.
Ethan, thank you so much. Appreciate it. As always, Ethan Bronner, Israel Bureau Chief for Bloomberg News. He is based in Tel Aviv, giving us the latest reporting there. Again, looking at the market, we've got red and green on the screen here. Not a lot of direction. But let's break it down with Kathy Entwistle, Morgan Stanley, Managing Director in the Private Wealth Business for Morgan Stanley. Kathy, what's the conversation you're having with your clients these days? We see some sentiment data that suggests consumers are kind of antsy about the economy, antsy about inflation, yet stocks hitting all-time highs every day, it seems like. What are you chatting with your clients about?
Yeah, thanks for having me. We are definitely having a lot of conversations right now with clients about not just the K economy, but where the opportunities are with potential, higher for longer, for also inflation, inflation staying sticky, and opportunities that still exist for them in their portfolios that we can make changes now that can help them in the long term. That might include real assets, US, we still like US quite a bit, and also shortening the duration of some of those longer fixed income munis as well.
Okay, so it's kind of tweaking around the edges. I'm curious how alternatives fit into people's strategies right now, given that we have definitely some fear percolating in private credit. Blackstone now limiting redemptions from one of its funds, and fear in private equity as well. There's a firm, Partners, gating an evergreen fund. How are people thinking about private credit and private equity right now?
That's a great question, Scarlett. And certainly it's top of mind for a lot of clients because there's a lot of headlines in the news about it and have been for, a few months now. Private credit is no different than, public credit in the sense that there are some credits that are going to be strong and there are going to be some credits that are going to be challenging. So what you really need to consider is the underlying credit that's being invested. And if it's a strong credit, there should be no fear about it. They're still able to do what they are supposed to do when we put them in the portfolio. The issue is when you have a lot of people getting nervous and panicking, they might not necessarily understand the long-term nature of alternative investments, and that even though you can have liquidity, it's not meant for liquidity in the short term. So again, the fear is driving some of this dislocation in the private credit market.
Kathy, we're seeing a ton of equity issuance these days. We had Google with a follow-on offering this week, and of course SpaceX has filed, and we're also and some of the AI plays. Anthropic has filed confidentially. Are your clients calling into you saying, "Hey, I'm interested," or what are you hearing from your clients?
We are definitely having clients asking us and showing interest in opportunities in IPO markets and so forth. We also recognize that a lot of wealth is being created in companies now in the private markets, which is why we still like the private markets for our clients. And when we do get IPOs that are interesting or available and clients are interested in those, we certainly are happy to explore those areas with them as well.
Are people wanting to put new money to work when it comes to these IPOs, or are they looking to switch from maybe existing holdings in tech? Because putting new money to work in some of these IPOs means an even bigger bet on tech.
Yeah, that's a great question. And I think, with that kind of a question, it's more individual in nature, like what the client's portfolio already looks like and how they're positioned. But I would say generally, a lot of times in IPOs, you're not going to get a huge allocation. So we're thinking more about the concept of it versus the actual allocation of it. So if clients want to hold a certain position for themselves or their children or their grandchildren as more of a mark of, yes, we participated, or yes, this was something that was really cool that happened during this time period. I'm looking at it for some clients more like that, and other clients, looking at private markets to get into a lot of these type of investments early on is really going to pay off even more so.
How about more broadly defined, Kathy, with alternatives? What's the conversation you have with your clients about maybe an allocation of their assets to alternative investments?
Yeah, so we've definitely been adopters of alternative investments for our clients' portfolio. And when we think about it, typically alts are non-correlated assets, which, as you guys know, just means that it's not going to behave exactly like the equity or bond market. So it's good to have some differentiating factors in there. So we do allocate, 10, 20%, and sometimes more, depending on the size of a client's portfolio and their appetite for something like that. We also think with inflation being a little bit more sticky, that it's also a good time to add some commodities, real assets, energy, infrastructure, gold, and hedge funds to a client's portfolio.
When you talk about gold, how would people express that? Is it necessarily through ETFs? Is it through gold miners?
Yeah, it's actually, it can be through both. And it certainly is easy to, just to use the ETFs for that exposure, but we will also use gold miners.
Kathy, thanks so much for joining us. Always appreciate getting a few minutes of your time. Kathy Entwistle, she's a managing director in the private wealth group at Morgan Stanley, based there in Ridgewood, New Jersey. One of my favorite towns in the swamps of Jersey is Ridgewood. Heck of a golf.
I don't think they would call it swamps, though, would they?
I do. I'm born and raised, but Ridgewood's, yeah, they're pretty.
They're fancy there.
They're fancy there. Ridgewood Country Club. They love me. At
See,
Ridgewood
fancy.
Country Club. Yep.
Well, not
so, anyway.
Now that you called it a swamp.
Yes, exactly. And I'm going to take the New Jersey Transit, hopefully, through the swamps back to Jersey today. S&P up. You know what? S&P's unched. Dow up 700. The NASDAQ down 150. Go for it. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. So right now, the major averages, they're mixed. The Dow rallying, the NASDAQ selling off. The S&P 500 unchanged. United Health Group got a buy rating at Bank of America, so that's doing the heavy lifting right now in the Dow Jones Industrial Average. And of course, after the results, after the close last night, Broadcom, worst performing stock in the S&P 500, also the worst performing stock in the NASDAQ. And you know, despite the disappointing AI chip outlook, Angela Zeno, analyst at CFRA, has a buy rating on Broadcom.
They remain very entrenched in the key players out there within the AI ecosystem. And as a result, you know, I think this is a place you still want to be, acknowledging, though, that there are risks that are heightening.
NASDAQ Composite Index down 155 points. That is down 0.6% right now. The Dow up 691 points. That's a rise of 1.4%. And the S&P 500 pretty much dead flat at 75.54. We're looking at oil right now. The Brent contract down 2.6%. It's at 95.28. The decline in oil helping lift some of the travel-related stocks as well. Yields also lower because of oil. 2-year down 4 basis points. The 10-year is 3 basis points lower. And just to bring you that Supreme Court news from earlier, the U.S. Supreme Court reinforcing the SEC's power to recover illegal profits. They ruled, and there was no dissent here, that the SEC doesn't have to show investor harm in order to win disgorgement. And that's one of the more powerful tools at the SEC. Sellers pulling their homes off the market at near records. Nationwide, 5.8% of all home listings were taken off the market in the month of April. This is according to the real estate firm Redfin. Delistings on the rise, and they say largely because it's a buyer's market. But again, I would say it depends on which market you're in.
Yeah, I mean, certain places in New Jersey, Connecticut, New York are always in demand no matter what.
Yeah, because, you know, we're so exclusive, I guess. We check the markets for you all day long.
No, good schools and jobs.
Okay, that's it. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. Let's talk about oil. John had mentioned that oil is down today. You look at Brent, the global benchmark, and it peaked at about $118 back in late April, and now it's sitting at around $95 a barrel. So definitely lower. WTI, the U.S. benchmark, at about $93 a barrel. Ellen Wald is president of Transversal Consulting. She's also a senior fellow at Atlantic Council, and she joins us from Boca Raton, Florida. And Ellen, you say that oil prices are significantly lower than where they should be right now. What do you mean by that?
Well, if you look at how we've been draining the inventory stocks, we've been draining commercial stocks. The U.S. has also been draining its SPR at a very rapid rate. And so if you look at all of the oil that's actually off the market, you know, from the Middle East because of this stoppage, and then you look at the rate at which we're still using oil, we're draining our inventory stocks, really oil prices should be much higher. They're pricing in all of this expectation that there's going to be a peace deal, you know, right around the corner. And at a certain point, we're going to drain our inventories. They're going to be essentially gone. Okay, and then what are we going to have left to fall back on? And so at some point, there has to be some kind of a price rise to accommodate for that. And, you know, the question is really, when are we going to see that? I think we've seen Exxon and Chevron saying it's coming pretty soon. Other people say maybe July, maybe not until late July, definitely by August. But it does seem like there is a great disconnect here, and that because prices have really remained below 100, we're not seeing the kind of demand destruction that we would need to see given how much supply is actually off the market.
Ellen, is there an expectation that there will, I'm not going to say always, but for the foreseeable future, be a risk premium for any of that energy that comes out of the Middle East, that you just really cannot get comfortable with the Strait of Hormuz no matter what peace agreement comes?
I believe right now we are in we have fundamentally changed the way that oil flows out of the Persian Gulf at this point, because, if you just take the Bab el-Mandeb Strait, for example, and not even nearly that much oil actually went through the Bab el-Mandeb because the Suez Canal can't even handle the largest crude carriers. Marine traffic has never returned to where it was after 2.5 years after these Houthi attacks. Now we've got the Strait of Hormuz closed. That risk premium is never going to go away. Combined with the fact that we're now going to see Gulf oil countries, we're going to see them building more pipelines. They are going to see pipelines as a national security imperative, whereas before it was something that might be nice if you had the money to do it. Now it's a national security imperative, and so I do think that oil flows will be forever changed because of this. Because no matter what, there's always the idea that this could happen again.
When you say that pipelines are a national imperative, who is that good for? Who gets left out?
Well, so that's an interesting story because Saudi Arabia and the UAE have been in a relatively good position because they'd already built pipelines. They're definitely going to be building more at this point to bypass the Strait of Hormuz. But then you've got countries like Iraq, Bahrain, Kuwait, Qatar that are basically trapped. Iraq has a small pipeline that goes up to a Turkish port, but Iraq can start investing in pipelines. Iraq has more options. They can go, all the way to Syria. Potentially, maybe they could go through Jordan to the Mediterranean. And ship oil through there. You're going to have countries that are going to invest in oil storage all around the world just so that they can keep, commercial stocks available the next time this happens. But really Kuwait and I would say Kuwait, Bahrain, Iraq, and Qatar, they're really in the worst position, and they're going to have to work together. They're going to have deals with other countries, with Oman, with the UAE, potentially even with Saudi Arabia, to secure pipeline access so that their crude, or at least a portion of their crude and their natural gas, can continue to flow the next time this happens.
Is there a risk that whole part of the world, the Middle East, the 20% of oil that flows through the strait, that they lose market share to other producers around the world that, as a buyer on the margin, I'm not even going to talk to these guys in the Middle East?
So that's a possibility, but they always have the potential to lower their prices. Remember, these are big state oil producers. Yep. A lot of them are fairly well capitalized, particularly, say, the UAE and Saudi Arabia. And now there's an opportunity for these other producers to act in similar ways, to buy up storage capacity, to build storage capacity. Say, look, Saudi Arabia, Aramco, has storage facilities in Egypt, for example. They have storage in Japan. They have storage all over the place, and that provided them with a great buffer to continue to be able to supply customers. They can't necessarily change the price of oil, although they can act through OPEC to impact it, but they can make it so that they have more built-in redundancies to be able to continue supplying their customers with oil, which in turn then makes their revenue more secure.
What are the U.S. producers saying, Ellen, about their production goals in the short term and the longer term?
Yeah, that's a really great question. I think we've seen some growth in terms of more wells, but not a whole lot. The question is really, I think producers are looking at these oil futures prices, and they're saying, hey, look, these prices, yeah, they're higher, but how long is this 60% increase going to remain? Is it worth it for me to, diverge from this capital discipline that we've been practicing that has been so profitable, for them, and to expand in a mass way? Or are they going to be looking for incremental ways to, produce more and take advantage of higher prices right now without having to, say, lay out for massive new projects? And I think that really depends on where oil prices go, in the next couple of months. And also, once it becomes clear, say, if there is some kind of deal that reopens the Strait of Hormuz, it's going to be a long process. Things are not going to go back to where they used to be. But as that plays out, I think producers will have a better sense of how long they can expect, say, increased demand for their domestic oil in the United States, and whether it pays to invest more and drill more.
Ellen, thank you so much. We really appreciate your time. Ellen Wald, she's the president of Transversal Consulting and a senior fellow at the Atlantic Council, joining us from Zoom from Boca Raton, Florida. I don't know. I'm looking out the window. I'm saying our weather is as good or better than our friends down in Boca.
Oh,
right?
They got nothing on us.
Now, the only difference is I went in the ocean yesterday.
It's cold.
It's cold. It's 61 degrees, so we need needed to warm up a little bit. So I'm guessing our friends down in South Florida are enjoying like 75, 77 degree ocean temps. We got a ways to go there, but I saw some dolphins yesterday, so they're happy. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Boy, it's just all about equity markets, new issuance. We had that monster issuance of secondaries, or not secondary stock, but a follow-on offering from Google. Market just sopped that up, no problem. SpaceX hitting the road today for their IPO, looking to price arguably, ideally a week from today, and then trade next Friday. So let's see what's happening out there in the new issue market. Then we have the AI trades coming after that. Those IPOs are going to be monster as well. Bailey Lipschultz, he's busy these days, senior equities reporter for Bloomberg News, trying to make head and shoulders out of this whole thing. Bailey, talk to us first about SpaceX. I mean, there's so many aspects to it which are fascinating. A, it's space. B, it's Elon. C, the total magnitude of the underwriting, 75 large on a maybe a 1.8 trillion market capitalization. Where are we? Did they start the roadshow? Are they starting the roadshow today?
Meeting started today. Calls and first interactions with investors formally started today. It's kind of weird. They went a bit ahead of schedule. Normally, you need 15 days from the public flip to the start of marketing. Okay. They went yesterday setting a fixed price range. Our understanding is that teed them up to start engaging with folks in Australia and Asia this morning, as opposed to them being kind of stuck on a one-day delay. Okay. Because the deal is, again, a bit truncated, expected to price next Thursday. So they are talking to investors, this has been I'd call it worst kept secret in capital markets history. So they've had one-on-one meetings, they've had TTWs, they've been meeting with investors, they've hosted meetings at Starbase, they've hosted meetings out in California. So it's one of those circumstances where if you are surprised by anything you're hearing right now, you haven't been doing your work. So
I guess the issue is Elon part of the sales pitch? Because if I'm a portfolio manager, in my mind, it's 100% a bet on Elon. That's it. And if I don't hear and see and feel the vision from him, I'm not sure I can write that big a check. What do we know?
We haven't heard if Elon is or isn't part of these individual meetings now. What we do know is the 17-minute video that kind of roadshow was just CFO Brett Johnson. We do know that Brett Johnson and Gwen Shotwell will be meeting with Jamie Dimon for interactions around retail later this evening. Bank of America also hosting an event with those two. Again, our understanding is Elon is not part of those conversations. When we look back to the trip that SpaceX put together where they rented out, I believe, a 747 and took a few hundred of the biggest money managers down to Starbase, Elon did make an appearance. He spoke, from my understanding, for about 30 minutes, but for all intents and purposes, what we've heard from bankers is it's very much CFO Brent Johnson's show. Does that change? How does that evolve over the coming week? Will be interesting.
Interesting. Do we know whether they're going to, again, you're talking about Asia and Australia. Do we know their financial global hub?
The terms we've seen center on the U.S. The one thing to keep in mind is that, again, we know investors from around the world trip to Starbase. We know that Elon has had interactions. So the roadshow, again, they have a fixed price, they have a fixed valuation. From our understanding from bankers, it's really kind of the line is set, drawn in the sand, the stage is set. It's a question of how much you're in for or not in for at this point, as opposed to a more traditional IPO where, the CEO, CFO, management team is kind of jet setting around the world.
Interesting. One of the there's so many interesting aspects to this transaction, obviously, but one of them is kind of governance. If you're a public shareholder, you're basically handing over the keys completely to Elon Musk. Super voting stock gives him complete control of this company. I think he's probably learned a few things from Tesla in terms of that. Is there any pushback on that? Are we hearing any of that from investors?
We've seen pushback from, third-party entities. We've seen pushback and heard from different kind of groups that are, upset about things like the fast-track entry rule for the NASDAQ 100, the S&P 500 changing their rules. When I talk to investors, again, if you invested in Tesla, you believed in Elon Musk's vision for robots and autonomous vehicles. If you're investing in SpaceX, to your point, you're investing in Elon's vision. Is it a bit scary from some investors' perspective that you're kind of all in on a guy who is the only person who can remove himself? Yes. But if you've made billions of dollars on Tesla, it's hard to say you want to take your money and go home now.
Yeah, and one of the things, again, if I were a portfolio manager, one of the millions of questions I've had for Elon Musk is, where's your attention? Because it's wandered in the past, going into government with Doge and how do you allocate your time between Tesla and all your other things? I would like to think that this is the priority for Elon Musk. Is that something that we've heard from investors?
Investors have pointed to that, and the inevitable next point is, well, he now has super voting on SpaceX. This whole notion of merging SpaceX with Tesla some point down the road, Elon seemingly has endorsed it. What does that look like? Is that something that really comes to fruition? Again, the big question around SpaceX is not only the governance issue, but truly the CapEx needed for AI, for data centers in space, for this notion that they're going to mine asteroids is tens, if not hundreds of billions of dollars. How do you actually finance that? And what does it look like in the next year and even the next decade?
And what's the lockup again? Isn't there a unique lockup?
There's a unique lockup. Basically, more shares can be unlocked just after earnings. And then Elon is locked up for a full year. One of the things that was interesting talking to folks on the buy side is this whole kind of deal has come together was, well, Elon never really sold Tesla. And if his whole vision is to merge the two together, he's not going to sell a year or 20 years from now. But they have had some unique structures where it's tied to performance. It's tied to kind of expediting getting more shares available for trading.
All right. Very cool. I'm going to be, like everybody else, I'll be watching this one closely. Bailey Lipschultz, senior equities reporter for Bloomberg News, joining us here in our studio here. Again, they launching today, SpaceX, the roadshow in New York, looking to price next Thursday. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only digital global audio experience coast to coast 24 hours a day. Bloomberg Radio is on Sirius XM Channel 121. It's presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from Bloomberg Intelligence. We are live in the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Paul Sweeney, Scarlett Fu, and John Tucker bringing you the second hour of our program. And there's not a whole lot going on. If you look at the S&P 500 just on the surface, it managed to recover from yesterday's dip. But there is maybe some rethinking of the AI trade. I mean, at least a knee-jerk rethinking. We're going to dig into all of that. Mandeep Singh, he is our global tech research head here at Bloomberg Intelligence, will join us because Broadcom seems to be the one that is causing investors that opportunity to rethink everything about AI. Mike McGlone, our senior commodity strategist, will join us to talk about Bitcoin. It has been a bad week for Bitcoin. Bitcoin, of course, now down at $63,000. So it's gone through several key benchmark levels. Where does it stand and how low does it go? Adel Zaman is Wall Street Alliance Group partner, will join us to give us his outlook on the markets. And we're pleased to say that Gene Munster, managing partner at Deepwater Asset Management, will join us to talk about big IPOs, SpaceX notably, and then Anthropic after that. First, let's go to John Tucker for our Bloomberg Business Flash. John.
All right, guys, stocks that have, well, been AI winners, giving back some of the big recent runs. Information technology, the worst performing major industry group in the S&P 500 right now. That's home to the worst performing stock in the NASDAQ and the S&P 500. Broadcom's forecast for sales of its AI chips disappointing investors. Isabel Lee is going to break that down in just a minute here. Rotation to other stuff. United Health Group got a buy rating at Bank of America, and that stock is helping lift the Dow Jones Industrial Average higher. United Health Group is up close to 6% right now. Broadcom, that was down close to 15%. And you also have Treasury yields easing with oil prices today. The price of Brent crude, that is down right now. 2.5%, we'll call it. The 10-year yield down 3 basis points. 2-year is 4 basis points lower. And Chris Ferrone at Strategas keeping an eye